Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Very good morning. You're watching India Market Open, and it's setting out to be an exciting day for various reasons. So much news to cover, international, from the US court perspective. IndusInd Bank, a big order on Madhvi Puri Butch, the former SEBI chairperson, so much to encapsulate. But I think, folks, the biggest one is a federal court coming and telling the US president, enough is enough. Your tariff war is just not legal.
Yeah. I mean, it's not, sorry.
Yeah, no, in the world of news, there are days and then there are days.
And which is why it's not often that FOMC minutes take such a backstage that you feel that, hey, these are not even worth talking about today because there's just so much else to talk about.
Yeah.
But without a shadow of doubt, the Trump tariff ruling takes center stage.
And I'm just wondering why it took them so long, because all of this has been going on for a couple of months. So 5 businesses finally went to a court and said that, hey, we depend on imports, and this has just, torpedoed our entire business. And the court comes and says, this law does not make sense. So that's what's happening really this morning. You have to look at the Dow futures. That's where we'll start from, because that's where the entire story is. Dow futures zoomed nearly 400 points as a federal court has blocked Trump tariffs. 5 businesses had challenged these tariffs in a federal court. Dow futures, in fact, up nearly 500 points at this point. NASDAQ also up nearly 2%, 392 points there. So you're seeing the futures zooming. Here's what's happened. The court has come and said the worldwide and retaliatory tariff orders exceed any authority granted to the president by IEEPA. Remember, IEEPA was the rule, the law that Trump had cited for these retaliatory tariffs. The court now says that those rules do not allow you to regulate importation by means of tariffs. This is from the US Court of International Trade. Now, you can expect, and of course the White House has already come and said that they will challenge this, but that's where it really stands, which is why markets are up. Now, US President Donald Trump, on the other hand, rejects being called a chicken for backing off high tariff threats, calling to question nasty. This is when he was asked about the taco trade. Have you guys heard about the taco trade? This is I thought the cool one. This is Trump always chickens out. There's something actually called the taco trade where you bet that something he says he'll back off on. Here's his response to a question on that.
Mr. President, Wall Street analysts have coined a new term called the taco trade. They're saying Trump always chickens out on your tariff threats, and that's why markets are higher this week. What's your response to that?
I kick out?
Chicken out.
Oh, isn't that nice? Chicken out. I've never heard that. You mean because I reduced China from 145% that I set down to 100 and then down to another number? And I said, you have to open up your whole country. And because I gave the European Union a 50% tax tariff, and they called up and they said, please, let's meet right now. Please, let's meet right now. And I said, okay, I'll give you till July 9. I actually asked them, I said, what's the date? Because they weren't willing to meet. And after I did what I did, they said, we'll meet anytime you want. And we have an end date of July 9th. You call that chickening out? Because we have $14 trillion now invested, committed to investing when Biden didn't have practically anything. This country was dying. You know, we have the hottest country anywhere in the world. I went to Saudi Arabia. The king told me. He said, we have the hottest country in the world right now. 6 months ago, this country was stone cold dead. We had a dead country. We had a country people didn't think it was going to survive, and you ask a nasty question like that. It's called negotiation. You set a number. And if you go down, you know, if I set a number at a ridiculous high number and I go down a little bit, a little bit, they want me to hold that number, 145% tariff. Even I said, man, that really got up. You know how it got?
Now, in the middle of all of that, back to what's happened in the markets overnight. NVIDIA jumped 5% in post-market trade on very strong numbers, so which is why you had futures markets zooming. But in regular trading session, there was weakness in all key indices. It was a pretty non-eventful regular trading day. All the action started post-markets, 0.5% down on the Dow Jones, and likewise for all the major indices. Treasury yields, in fact, have risen after Fed minutes warn of inflation risk. Yes, minutes of the last Fed meeting have come in. They have warned of inflation risk. The 10-year at 4.51% as a result of that. The 30-year has actually come off the 5% mark to about 4.99. Now, OPEC Plus has decided to make no change to oil production. Brent is hovering over the $65 mark. And Asian markets also largely opened in the green as Trump tariffs were hit by courts. Let's see if we can pull up Asian markets. Look at that. Nikkei up nearly 1.5%. I want to pull up the implied open for India as well. Expect a decent start for us, nearly 100 points up, 72 points up in the green. But there's going to be a whole plethora of factors that we need to look at this morning, guys, including what a tough day it's been yesterday.
No doubt. And it's a continuation of what you've seen over the course of the last couple of sessions. Day before yesterday, you saw sharper cuts. But let's talk about the flows data first. And there's no doubt that there could be green on the screen at the start today, as you've seen by the implied open. But let me set the context for you. You saw considerable buying by both foreign institutions as well as domestic institutions in trade yesterday. And this is, again, a continuation of what we've seen in the recent past. But really, according to me, the big talking point, and Neeraj maybe will weigh in on this, is the volumes that we saw yesterday. Let's talk about what happened with the benchmark. The Nifty 50 shut shop at the bottom of a pretty narrow range, 127 points or thereabouts. The benchmark continues to trade well above all of its key moving averages, though, with the RSI hovering around that 60 mark. The Nifty 50's intraday move mirrored Tuesday's move, but with a much smaller range. So there was a drop from the high point, there was a recovery from that point, and once again, a little bit of a deceleration towards the end. 36 Nifty 50 stocks declined in trade, led by ITC's 3.2% fall. Of course, it traded ex-dividend, and it also saw that selling by BAT. The broader markets once again outperformed, and to the extent of the Nifty mid-cap index gaining just a tad bit, ending flat but with a positive bias, and the Nifty small-cap index going home with gains of about 0.4%. FMCG was the worst performer, understandably so, because of ITC. Defense continued to gain ground, ending as much as 0.9% higher. By the way, interesting number for you, the Nifty Defense has now gained 28% since the 28th of April, when this big run started. Overall, the market breadth was evenly split at the end of the session. Now, here's what I thought was interesting. The traded volume was actually considerably higher than usual. It was the highest in over a year. LIC stood out. I was looking at large cap stocks that saw significantly higher traded volume, and incidentally 43.5 times the 30-day average daily volume was traded yesterday, but the delivery percentage was only about 15%. Even that, though, was about 16 times higher than the 30-day average volume. A few more large caps where you saw a very significant increase that should not be seen as a percentage, it should be a multiplication. So it's 8.8 times the 30-day average. Bosch saw 8.2 times, Hitachi as much as 6.5 times, GSK Pharma about 6 times, and RCTC, which posted its results post-market hours, as much as 5 times as well. So interesting that there's a lot of trading that is taking place, a lot of shares exchanging hands.
Yeah, and today there will be a lot of trading volume, Alex, because it's the expiry day. So you will obviously expect a lot of fun and games, possibly towards the second half.
Thunder Thursday, as
Thunder
we see.
Thursday. Yeah.
Like the weather outside as well.
Yeah, thankfully it's a bit calm today relative to what the last few days have been. Yeah, but so the good part is that indices have been holding out on down days, viewers, and which is actually a very good sign. So every time we've kind of had a bit of a fall, I think the markets have shown the appetite to stay higher, which is actually a good sign. It is very likely that we close out the day quiet if the rollovers on the 24,800 to 25,000 strikes are high. So if a lot of positions are rolled over, and I think we'll be inclined to ask Puneet about what was the rollover picture yesterday. Remember, a lot of rolls happen a day prior to the expiry as well. Now people don't wait till the D-day. But I think I'll be very keen to see what's the extent of the rollover compared to the previous few expiries for the 25,000 strike, which was the key port of call really. So if the rollovers are high, then we close out quietly. If the positions are to be covered, then might be some upward pressure on the index. So keep an eye out for that. The optimism on metals continues, and in fact now people talk about how ferrous companies might participate with a lot of gusto. By ferrous companies I mean steel companies. So non-ferrous is the base metal companies like Hindalco, Nalco, etc. A lot of conversation around how steel companies might start participating strongly now, much better than before. So keep an eye out for that, and we have good results from SAIL, which we'll talk about. And viewers, multiple triggers for the Adani Group stocks, and it's definitely a set of stocks you want to watch out for. Standard disclaimer, of course, they own NDTV, Adani Group, and you're watching NDTV Profit. But just the fact that there are from between yesterday and I reckon in the next couple of months, there are a set of triggers for multiple stocks, including the New Bombay Airport, including more capacity set up at Khavda for Adani Green, etc., etc., etc. There's a brokerage note on Adani Power today, so keep an eye out. A clutch of cues out there, and you might want to watch out for this group as well.
Definitely, and the latest being what the Lokpal has said on Madhvi Puri Bhuj. So that has been a huge relief for the former SEBI chief. She had 3 key accusations, and they've said that there's no basis for any kind of an investigation against Madhvi Puri Bhuj. But one of them was also an accusation of wrongful investments in some Adani linked funds, which is why the claim from a Hindenburg of all people was that she is not fit to investigate any allegations. That has been found completely wrongful. So that's going to be a big booster as well for the group stocks as a whole. IndusInd Bank is the other set of stocks that I would look out for. I mean, it's just astonishing, the can of worms which keeps erupting on this. So that is one factor to see as well. Overall, from an India perspective or an India strategy perspective, I'm just going to pick up this note from Bank of America, who says that they see structural drivers for sustained growth and returns. 9 structural themes are likely to play out within India. Rapid infrastructure build out, productivity gains, digitization, financialization, household savings resilience, discretionary consumption shift, formalization of the economy and current account deficit to potential surplus, decarbonization as well. India ranks as the top country globally to provide high number of stock compounders, a trend we expect to continue. However, and this is the important bit, because this note from Amish Shah will also focus on this. They say, we are cautious on markets near term as valuations seem full and markets are ignoring risks of likely slowing global growth. Given the recent rally, we see no upside to our Nifty year-end target of 25,000. So that is 25,000 year-end Nifty is a more conservative target than others have had. If you're going to land up at 25,000 by year-end, that means expect some months of patchy consolidation. So that's the BOFA view. Having said that, let's take a look at some of the key results today, which are going to be on my radar. Of course, many of them which will be reporting today, but Alchem Labs, Ola Electric, Bajaj Auto, Lemon Tree, Mazagon Shipbuilders are some that come to mind. It is also the expiry day, and positive global cues, especially from Nvidia, could help Nifty to potentially break out of its recent consolidation range on the upside. Resistance levels around 24,900 to 25,000 could be retested or even surpassed early in the session. Now, sustained move above 25,000 would be a strong bullish signal. Support levels at 24,600 and 24,700 coming in. They would now act as stronger cushions on any dips. Bank Nifty, which showed some resilience on Wednesday, could also benefit from the positive sentiment. Key resistance at 55,900 will be crucial to watch. A decisive breakout above this trend would signal fresh bullish momentum and a potential move towards lifetime highs. For the Bank Nifty, support levels at 54,980 and 54,400 would remain important. But yes, like we've been saying, it's expiry day, and Puneet joining us for all the action.
Well, definitely, and we are expecting most of the contracts to be rolled over, but FIs have continued to build their short positions. We've also seen DIs also start adding a little bit to that aspect, and the range of trading is continuing to be lower. For the Nifty as well as for the Bank Nifty, we've seen the rollover data at 62%. My colleague Chinmay highlights that this isn't as strong as it should be, and hence basically it indicates that traders are on the sidelines. While most of the contracts have been rolled over to the next months, it does seem that traders currently are on the sidelines, and they will have fresh positions only later on as well. We've of course seen the June open interest increase materially, and that is subsequent because of the expiry today. When you also look at the Bank Nifty, also in terms of the rollover data is currently at 61%, and another similar percentage. The rollover data for the Bank Nifty is much higher compared to the Nifty, and that indicates the strength of that index at 55,500 as one of the key levels to watch out for. When you look at also the other key aspect of the long and short positions, the FIs, as mentioned, has continued to build shorts in the system ahead of the expiry day, and that's visible in the trade in the data as well. And in terms of the long short ratio, we highlighted that. Let's go across to the next frame. Roughly about 32 to 34%. That's actually slipped to 28% now, indicating a similar number. The net PCR is essentially again a very balanced number at around 1 to 1.07 range, and that is again a balanced number to watch out for. Finally, in terms of the open interest in terms of calls and puts, big huge candle again at 25,000 is one of the key levels for calls where the open interest has been built up. In terms of the puts, the 24,500 as well as the 25,000 level being one of the key ones in both these levels. And finally, if you can pull up the stocks as well, for open interest gainers and losers, we've largely actually seen the shorts being built up on both these stocks, and hence currently an implied open of 79 points, largely built up in terms of a very narrow day of trading and range, but essential, as you rightly said, Tamanna, of 25,000, a very subsequent breakout could be something that we can reach there.
Okay. All right. Thank you for that, Puneet. Nifty implied showing an 80-point uptick on open, but some stocks that are on our radar today, and we'll get into this in a lot of depth because it's a story that NDTV Profit has been on top of. But IndusInd Bank, clear thumbs down today. SEBI has barred former IndusInd Bank CEO Sumant Katpalia and 4 others from dealing in the stock market. The individuals have been restrained from buying, selling or dealing in securities either directly or indirectly in any manner until further orders. This is an interim order the SEBI put out last evening. Lot more details, including the kind of trades these 5 were undertaking while in a key position on IndusInd Bank. But we leave that to Vishwanath Nair and our other colleagues to take you through details on that. Suffice to say, thumbs down on IndusInd Bank this morning. Deepak Nitrite, the other stock on my radar, thumbs up here. Revenue and EBITDA have beaten estimates. Phenolics segment has delivered robust margins uplift. Operating performance has recovered in the 4th quarter. Advanced intermediate segment also saw sequential improvement, and demand for dyes and pigments has remained resilient. Company continues to maintain strong market share. Pricing pressure, though, has persisted in agrochem intermediates. targeted cost initiatives are supporting margins. Here are the core numbers. Revenue up 2.5% to 2,180 crores, better than estimates. EBITDA up about 5% at 317 crores, again better than estimates. Margins have improved slightly, 14.2% to 14.5%, but compared to estimates which were 12.8%, which is why the thumbs up. Net profit is down 20%, but that is also because there was an additional figure in the base year, that's Q4 of FY24, a one-time income which has inflated that, which is why you're seeing the net profit seeing a bit of a cut. So that's the Deepak Nitrite case. As far as Cummins is concerned, I'm giving it a thumbs down. Revenue was up about 7% to 2,428. EBITDA down 2% to 482.98 crores. Margins have come down from 21.6% to 19.9%, and net profit down 2% to 529.5 crores. Here's what UBS is saying. They've maintained a sell on Cummins with a target price of 2,700. They say exports remain stable sequentially. The miss in top line suggests best of earning upcycle is behind the company, which is why the thumbs down today on Cummins.
All right. I'm also sticking to earnings, and I have three stocks also that I've picked. Avanti Feeds, the first one. There's been quite a bit of chop and churn as these tariff conversations have taken place. But of course, the cue today and the trigger today is going to be on the numbers. The revenue increase is as much as 8% in the fourth quarter. And the EBITDA has gone up by 36.5%. And that's because of a pretty substantial improvement or an expansion in the margin for the quarter gone by. Margins have come in at 12.8%, and that compares with 10.1%. So there's a substantial improvement there. There's also an uptick of about 46% in the net profit. That has been bolstered to a certain extent by a 36% increase in other income, which stood at close to 50 crore rupees in the quarter gone by. But expect that this company will react positively to the numbers. They seem to be pretty positive. RCTC, it's a beat on all fronts, and it was a stock that was in focus in trade yesterday. Considerable volumes. Of course, it saw a downtick to the extent of 2%, but spiritual tourism and Mahakumbh taking place in the fourth quarter significantly bolstering the earnings for this company. The other income has doubled. Tourism income is up as much as 38%. Water business revenue is up as much as 16%, and ticketing business, or rather the internet ticketing business, is up as much as 9%. Take a look at the core numbers here. The revenue increase of as much as 10% on a year-on-year basis in the quarter. EBITDA is up as much as 6%. Margins have stood at 30.4%. compared with 31.5%. This has to do probably with the mix of business that they've done in the quarter. The net profit rising as much as 26% to 358 crore rupees. Remember, there was also an exceptional gain of 45.7 crore rupees in the quarter gone by, but all told, this is a very good set of numbers for the company. Bata Industries, the last stock on the list, and I've saved the worst for the last. It's a thumbs down. There's a revenue degrowth on account of demand constraints. This is a pretty well-told story at this point. The profit is down on account of an uptick in employee expenses as well as depreciation. The depreciation was higher on account of the addition of more company-owned stores during the quarter. Volume growth was seen for a second quarter in a row. So if you were looking for a silver lining, then there is that. But the numbers don't look very pretty. The revenue is in fact lower by as much as 1.2%. In fact, if you look at 3 years, they failed to show significant top line growth for 3 years, and that has to do, it's a commentary more than anything else on the demand and the volume picture for this company and for the sector. Very quickly, the margins have come in at 22.6%. That's not the issue. The PAT number is down as much as 28% or thereabouts. Really, the question mark is about when demand will come back.
Yeah, I mean, waiting for the good times to come, not quite coming for Bata for a long time, but SAIL and maybe metals at large, and we spoke about it, but SAIL, pretty healthy numbers. Revenues were up 19%. And margins were at 11.9 versus 8.3, so substantial beat on margin performance. All of that put together, remember volumes, the quarter 4 volume was 5.3 MT, which was up 17% YOY and 20% QOQ, much higher than the street estimate of 4.8. So volumes were up, margins were up, net profit up 393% at 1251 crores versus 253. Debt declined about 12% quarter on quarter, and the debt to trailing 12 months EBITDA ratio improved sharply to to 3.31 versus 4.42. The bugbear for sale always has been that how indebted it is. They've done really well here. JP Morgan though maintains a neutral with a target price of 112 because some bit of it has been priced in, but don't be surprised if there's a bit of an uptick today on the back of these numbers. Welspun Corp. Revenues were down, by the way, 12% at 3925 crores versus 4461, but margins improved 11.7 versus 7.4%. Net profit as a result 698 crores versus 269 crores. And you know, drill baby drill works beautifully for Welspun Corp. It's got this big US exposure on steel pipes, so keep an eye out for Welspun. And Insecticides India, well, high margin businesses contributed, as a result of which, while revenues up 31% is impressive, look at below that, 7.9% versus 3.2% EBITDA margin. What a bump up there, as a result of which profit after tax up 84% at 13.9 versus 7.5 crores. So 3 stocks, all of which could actually see an uptick this morning on the back of these results. So you want to keep an eye out for that. Just goes in with what we've been saying all along. Almost every single day when we look at the numbers, the number of stocks which have impressed and given a beat is much higher than the number of stocks which have been weak, even at the fag end of the earnings season, which is heartening.
Do you think so, or is it a little bit about how we are, the lens with which we are looking at the earnings?
No, just anecdotally, when you look at our all you need to know setup, I mean, some of the stocks that we get to choose, more often than not, the number of stocks which are beating is much higher.
And there are surprises.
And there are some positive surprises.
Yeah, no, we should do, and we will do a comprehensive review, maybe tomorrow or Monday, when we have all, you know, when
tomorrow on Nifty, Monday on mid-caps, maybe Tamanna.
Yeah, done, because then we will have all the data coming in, the official end to the results season Q4. But the big story this morning, and a bank that sees no end to its woes, frankly, is IndusInd Bank. SEBI last evening barred former IndusInd Bank Chief Executive Officer Sumant Kathapalia and 4 others from dealing in the stock market. This comes after a series of evidence found by SEBI revealed insider trading. But how did this entire fiasco unfold? My colleagues Vishwanath Nair and Harsh Saita join in to explain the timeline of events and these very, very serious allegations. Vishu, what is SEBI saying?
Right, Tamanna. So essentially, I'll just give a quick gist of the order. 5 people, Sumant Kathapalia, Arun Khurana, Anil Rao, and 2 others have been named in the insider trading allegations in this SEBI interim order. This is an ex parte order, which means that these people who've been named have not yet been spoken to by SEBI. They have time to respond to the details that SEBI has put out. Importantly, SEBI has also impounded 20 crore worth of funds in spread across the bank accounts of all of these 5 people. So this money cannot be used by these people. Essentially, this is money that they earned because of the insider trades that they executed. SEBI says that the management of the bank, the top management, which is Sumant Kathapalia and Arun Khurana, they were very well aware of the problems in the derivative accounting portfolio back in December of 2023, which goes against everything that we know in this case so far. So very important detail there. SEBI also says that Kathapalia, Khurana and the others acted on this unpublished price sensitive information and that these people then engaged in insider trading. I'm going to take you through a little bit of a timeline as to what exactly happened in this entire case. Things start off in September of 2023. That's where essentially the bank creates an interdepartmental team which will implement the RBI's accounting trading norms into the bank's balance sheet. Fast forward to November of 2023. There, the CFO has written to Arun Khurana and a couple of other people in this order, essentially saying that, listen, I have not yet received the impact analysis from your team about the derivative accounting. Please send that to me as early as you can. A day later, on the 21st of November, he says, we have done this exercise with KPMG in the past. We have data that comes into the system every 6 months. So I need to get this data right away so that I can ensure what is exactly the hit that is coming on the balance sheet, because pro forma basis, there's a large hit. 29th of November, the same request is made now by the head of the balance sheet and liquidity management team at IndusInd Bank to Khurana and the others, saying that, listen, we need this report ASAP. And Khurana and the others have not yet shared the details. Then on the 30th of November, I'm assuming that 29th, they received these details and an amount of financial hit is calculated. This is the first estimate of a financial hit because of the derivative trading, which is about 1,750 odd crore on the balance sheet. Come 4th of December, that's when Sumant Katpalia enters the picture, the MD and CEO of the bank at that point in time. He writes in an email to the CFO and Arun Khurana saying that, listen, we need to do the reporting of this number. It's a very, very big hit. Essentially proving that he was aware on 4th of December that there is going to be a large financial hit on the bank because of the derivatives accounting. A week later, 11th December, he says that the final number has been calculated. It's at about 1572 crore. Again, Khurana, Sumant Katpalia and the CFO, all three of them are talking to each other, exchanging emails, discussing what exactly is going on. Sumant Katpalia says that we need to get an external investigator into this matter, and the CFO says, yes, we are going to look at it. So 17th of December, the CFO says, we are looking into it. Come January of 17, 2024, essentially KPMG is appointed to look at this case and investigate what exactly is the financial hit. Their job is to validate what the internal team has found. And come February, KPMG says it's a 2,000 crore hit. So between December 2023 and February 2024, now the whole bank knows that there's a 2,000 crore hit on the balance sheet. KPMG says, listen, we need some time with the senior management, we need to sit down. We don't know if that meeting ever actually happened and whether a report was made to the RBI. SEBI says that there were talks about reporting to the RBI, but nobody knows whether a report has actually gone to the RBI or not. This is essentially the gist of what exactly happened over the course of 3 or 4 months at IndusInd Bank, clearly proving that the bank knew what was coming at least 15 months before the rest of the market found out. I'm going to get in my colleague Harsh Saita is going to take you through what exactly has gone, what exactly these executives did with this information and how they traded in shares to earn a profit.
Well, absolutely. Let's talk names first. Thank you so much for that, Vishy. Let's talk names first and, of course, designations and what the current status of these persons are. Those are the 5 names on your screen. Arun Khurana, Sumant Katpalia, you have Mr. Saurav, Mr. Jatana, as well as Anil Rao. All 5 of those which SEBI says have executed insider trades, or rather trades based on unpublished price-sensitive information. 2 of them have already resigned, 3 of them not yet. Now let's talk dates, because Vishy spoke about certain dates on which emails were exchanged, information was made privy to the management. And that's why I highlight some of these dates to you, along with the quantity of shares sold. 3.5 lakh shares sold by Mr. Khurana, who was the CFO back then, on the 4th of December, just when all of those emails were getting exchanged with regard to the hit being a large one, and acknowledging that. So again, something to keep in mind are some of the dates. Now let's talk about the numbers involved, right? In terms of how large the number is, the number of shares sold, of course, okay, step back. No shares were purchased during the period between 2023 December to 2024 February. Just to kind of cull that out, it's an obvious statement, but that's another of the observations that SEBI has made. Now let's talk numbers. In terms of how many shares sold and at what price, look at the sell value out there and look at the average selling price. These are the 2 numbers I'd like to highlight for you. 1520, between around 1265 to 1520 was the average sell price. Some of them obviously sold between 30th of November and 15th of December. And look at the sell value as well. 53 crore, 20 crore being the larger material ones made by Mr. Anil Khurana and Mr. Sumant Katpalia. That's the other piece I want to highlight. Let me quickly now look at how the stock price has moved post the disclosure. So stock fell 27% between the 3rd of March and the 27th of March. But on 3rd of March, the stock was already languishing at 979 rupees a piece. Mind you, a lot of the sale had happened between 1265 and 1570. So therefore, this is a far cry from that number. But the stock has fallen from 979 to 677, which is a 27% drop in stock price. And that's why let's talk about the value which got saved or the loss avoided. Mr. Anil Khurana, 14.5 crore. This is SEBI's quantification. Mr. Katpalia, 5 crore. 7.5 odd lakhs, nearly 7 lakhs, nearly 4 lakhs. That's how the breakup is. Now, I want to quickly also talk about what this means in terms of the overall number that they make annually. As per FY24 annual report, this is their remuneration, 5 crore and 7.5 crore. That is the quantum of loss avoided. I'm not even talking about the sale of shares, because sale of shares, they made 50 crore and nearly 20 crore odd. and therefore that number is 3x just in terms of loss avoided to the total remuneration that some of them have made.
I mean, so here's a simple way to put it. These 5 guys knew there was some problem in the bank. Instead of disclosing it, they used that opportunity to quickly dump their stock at a much larger value when the stock price was much higher, took their time with the disclosures, and that's when the stock tanked. I mean, this is an interim order. Expect perhaps disgorgement in the final order, and that's really the first question I'm going to ask. Hetal Dalal, President and CEO, Institutional Investor Advisory, with us on the show. So is Dipali Panjoshi, former Executive Director at RBI. Welcome to both of you. Thank you so much for speaking with us today. Hetal Dalal, I mean, it smells rotten, what we are seeing as per the SEBI order, and can we expect at the very least SEBI to say that, hey, all of these undue profits you made is something that you must give back?
Look, I think there's one argument to say that, insider trading, you need to claw back the profits or at least claw back the gains. But I think the larger issue is just misleading investors, right? You've held this information for effectively over a year. This is something you knew that was going to happen. Now, when you make that disclosure in March in 2025, it seems more like par for course. And I think that, to me, is a very serious issue. The other question really to ask is that if all of this was happening, there's a 2,000 crore hit on the balance sheet. And now we are finding out that this was in the know since 2023. How does the board allow the managing director and the deputy managing director to resign gracefully on moral grounds, right? This is and the board is now calling it a fraud anyways. The third question to ask is, if SEBI came out with a circular in September 2023, the least the audit committee would have done is just ask what is the implication of this letter, right? What does it mean for the balance sheet? And what is the kind of impact that this change in derivative accounting is going to have on the balance sheet? So lots of open questions. I think there is more to it than what we actually see. The disgorgement, sure, SEBI is doing it from an insider trading argument. I would argue that the RBI has regulations where the managing director has to have clawback and malice built into the remuneration contract. Has the board even tried to sort of therefore implement those clauses and claw back that kind of remuneration, right? So I think there's a larger issue of what is the kind of penalty that's going to happen, but also failure to discharge fiduciary responsibility and misleading investors, which is grave.
Important points that you're making. I want to get the lens of a former member of the regulator, the Reserve Bank of India. Ms. Pant, thanks so much for joining us this morning, and your perspective is going to be very crucial at this point. What about the board's culpability? Because at some point you have to ask that. They would have known certain elements, if not everything, that we're discussing today, and they should have come forward earlier, done something more. Would you agree?
Absolutely. We have been talking of corporate governance, and if the board had access to the information, the board has a chance to interact with the auditors. I am really puzzled and baffled as to why the board did not take the steps which it is supposed to take. There is an ethical and moral responsibility which revolves and devolves on the independent directors, and it was their duty to point out that this is something really grave. The conduct of these gentlemen is extremely questionable. They were working for this bank and they had no qualms about gutting the bank into the ground, letting its shares fall precipitately, letting the shareholders down hook, line and sinker just to subserve just for a few shekels. They should be ashamed of themselves morally. How is it that they could do this? And the clawback will definitely be there. The malice will also be there. It's a question of the fence eating the grass. Now, how will you have faith in the transparency of the markets if immediate action is not taken against these people? And I have previously on your show also pointed to the board and said that the first action should be to dismiss this board, because they were clearly not fulfilling their responsibilities. If you get a new man in, you need a whole set of new people in. Now, having said that, despite the activities of these people to the contrary, let me reassure the people who are there who are depositors of this bank that the financial position of this bank is sound. The bank is still in a position to repay its investors as and when their claims accrue. What has happened is a very big fraud on the bank because unpublished price-sensitive information has been used deliberately, callously, and with malfide intent to profit themselves by the topmost echelons of the bank. And it is a matter of very great shame that how were these people selected to be at the helm?
Yep.
Because the first thing we see is their ethics, that they are fit and proper persons.
Yes, most
they
certainly.
have misled investors.
Most
they have
certainly.
misled shareholders.
Most certainly,
They have
ma'am.
allowed so that means they had no involvement with the bank. They have no ethics whatsoever.
But
and they perpetrated
agree completely. But
a
you know,
known fraud.
most certainly, and Hital, which is I think very nicely encapsulated by Ms. Pant. But here's the pin. It's not just disclosure issues. It's also profiteering, if you will, from an imminent collapse that the people in the know knew was going to happen because they were aware of the fraud. Now, we know that there is one action taken by SEBI. What's next? Dismissal of the board, Ms. Pant said, is one of the things. What else happens? Because here's the thing. Now, you feel that because some actions have been taken, the impact on IndusInd Bank, the stock, and I'm not asking you to comment on the stock, of course, but the impact on IndusInd Bank, the stock, the future business, etc., might be decoupled from the actions being taken now on the former people in the know. What else happens, Hetal?
So look, I think the leadership and the board has lost trust of investors. So there needs to be, as Dr. Pant says, there needs to be a change in the board, and the new board will now need to re-earn the trust of investors. So therefore, you're going to see an internal focus, right? Most likely you're going to see a CEO from the outside coming in. I doubt that RBI will support any appointment which is internal. You will therefore see a significant degree of cleanup, and the bank will in the next 1 year be inward focused in terms of trying to clean up the operations. I think how far they go and what they sort of figure out as they go deeper and deeper certainly is open to question, and we'll know more as time progresses. The other piece I would argue is also this whole assurance function which seems to have failed. Internal audit seems to have failed. Even the statutory audit seems to have failed, because, if you have an RBI circular which talks about the fact that derivative accounting treatments need to be different, I fail to understand how nobody's really caught it, and for 1 year everybody's still trying to do an estimate. So I think some of these open questions will need to be addressed. There will be more light, of course, when SEBI does a much more thorough investigation and comes out with its final order. See, SEBI has looked at it from an insider trading lens. But the bigger issue, and that's, that is an issue, of course. But the bigger issue really is, how do you build the governance structures of this bank? And how do you go back and earn the investor trust?
Okay, thank you so much, Hetal, Dalal, Dipali, Pant, for joining in. This is a story that's going to continue to blow up, because will it end here? Will there be criminality which will be seen at some point? Will a disgorgement be enough? I mean, how can you run a bank, know there's something wrong with it, and your reaction is, let me sell my stock at a higher price and tell investors a year later? That's effectively what's happened. Very short break. I want to pull up the implied before we get into that break. We're going to be talking about all the stocks that should be on your radar. We're also going to be touching upon another very important story, major relief to former SEBI chairperson Madhvi Puri Buch, and how it's an exoneration of allegations against the Adani group. All of that after this break.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Welcome back. Well, in a major relief to former SEBI chairperson Madhvi Puri Buch, Lokpal has disposed of complaints against her in the Hindenburg matter. The anti-corruption ombudsman has further said that there is no material evidence to order an investigation against the former SEBI chief. My colleague Hiral tells us more.
Thanks. So clearly, this is a clean chit coming in for Madhvi Buch by the Lokpal. Now, let's quickly understand. 3 complaints were filed against Ms. Madhvi Buch, and this was primarily based on allegations from the second Hindenburg report dated the 10th of August 2024. And these complaints alleged corruption, conflict of interest and quid pro quo dealings connected to her role in SEBI and certain regulated entities, including the Adani group. Now, let's understand what the Lokpal of India has said. Firstly, there is no case for investigation, so no prima facie case has been formed over here. Apart from that, there has been no undue gain or corruption that has been proven as well against Ms. Buch. And SEBI's actions have been upheld by the Supreme Court. In fact, the report of Hindenburg, a known short seller, was deemed reliable or sufficient to base a corruption case. Moving on, the Lokpal of India has also said that all complaints have been dismissed. The allegations that have been called frivolous now and politically driven, and the complainants have been indirectly reprimanded. So those are the details that we've been picking up so far. Moving on, let's quickly understand the complete exoneration as well. What that means is there has been no bias or favoritism that has been found on number 1. Secondly, in terms of where SEBI has been vindicated, they've said regulatory integrity has been reaffirmed from here on. In fact, SEBI's investigation and regulatory decisions, particularly around the Adani group, have withstood scrutiny at the highest levels, which is both judicial, that is the Supreme Court, and quasi-judicial, that is the Lokpal. Apart from that, they've said that the Hindenburg report is not credible as a legal evidence. That's what the Lokpal has come out and said. And there is a clean record upheld by the top authorities where no market manipulation has happened from here on. Overall, if you see in terms of the media and political narratives that were given out, they have been debunked by the Lokpal. So the due process has been highlighted. And SEBI's ethical standards have been reaffirmed, which means the corporate governance has been upheld absolutely tight. That is what the Lokpal has indicated. Apart from that, very quickly, the opposition allegations against Buch as well as alleged links to Adani Group fully have been debunked. And the reason why we are highlighting this is because Mahua Moitra was the one who had actually highlighted the entire episode from the Hindenburg case. And that's the reason now this has been highlighted and put to rest as well. So a clean chit coming in for Madhvi Buch. Now let's quickly understand what is the Lokpal of India for the viewers. The anti-corruption watchdog who is working for public servants. Now they have been empowered to investigate complaints against ministers, MPs and bureaucrats. Apart from that, in terms of how they operate, it's an independent operation to uphold integrity in terms of governance as well as public institutions. And very lastly, if you see in terms of the current chair, it is Shri Justice Ajay Manikrao Khanvilkar. He's the one who chairs the Lokpal so far. But clearly, a clean chit coming in for ex-SEBI chairperson, and this is being highlighted because this actually started off from the second Hindenburg report in August 2024.
All right, Hiral, you've laid it out for us perfectly, and we're joined now by Bhumika Batra, who's partner at Crawford, Bailey & Co. She's joining us on the phone line. Ms. Batra, thanks so much for taking the time. The sequence of events draws attention to the fact that a short seller had certain allegations that were made. This was politicized and a group was targeted very clearly. And when those allegations did not hold water, they went after regulatory institutions and the office of the chairperson of the Securities and Exchange Board of India. All of that has been proven false. What, in your opinion, are the legal interpretations of the latest update?
Sure. Morning. You're able to hear me clearly?
Yes, very clearly. Please go ahead. Good morning.
Thank you. So, first of all, I must say that yes, the judgment has been written in thorough detail. I respect the judge for that. However, coming back to the question that you have raised on the going behind the regulatory authorities when the brokers could not, or that people could not think, I do not agree with that. Merely by saying that the allegations are made on the basis of presumptions and assumptions. If you read the judgment, it clearly uses the word. It's a bit dissatisfying to see that, for the simple reason that there are enough evidences. There are records proving the actions taken. There are transactions which have gone forward with it. So it's not that the allegations were made only on presumptions and assumptions. As far as the other points which are there out of the 5 allegations which have been made, so we can certainly dissect one by one. That's not the point. But coming back to the short point, giving a complete clean sheet on the basis of an argument to say they're not verifiable is not something which I agree with personally.
Thank you so much, Bhumika Batra, for joining us today. All right, let's get on to what's going to move the markets this morning. Nilesh Jain of Centrum Broking joining in, Neera Vasher of Latin Manharlal, and Shrikant Chauhan, Executive VP and Head Equity Research, Kotak Securities, with us this morning. Welcome to all of you, and thank you so much for speaking with us. Shrikant, let me start with you. Always great to have you on the show. What are the levels that you're seeing today?
Good morning, Tamanna. Good morning, everyone. Specifically, I think 24,600 is the level to watch out for. And on immediate basis, 24,850 is the level. Above that, we can expect again some upward activity towards 25,000 levels. The market is in the range, and it is holding above its equilibrium level of 24,700. So till the market is holding above this level, that should be our final stop loss for creating any long positions or holding any long positions. But I am of the view that next 10 days are the make or break level for the market based on the current technical formation. In case market manages to surpass the level of 25,100, which was its highest of the current rally, then in that case, the chances of moving towards 25,500 or 600 would turn bright. So that's the reason we need to be very aligned to the trend of the market.
Got it. The evidence seems to be that there are a certain amount of shorts that are building up in the system. Do you think that basis the updates globally overnight and the sentimental boost that has given to risk assets globally could result in a spurt at the start and the starting of short covering, which would bolster that rally through the course of the day? Is that possible? Today, of course, is monthly expiry. Shrikant, first to you.
Yeah, it's a monthly expiry, but we need to see, we are still far away from the breakout level of 25,100, which is too far. And if we consider the overall statistics of options, then there is good amount of call writing at 25,000, 25,100 and below 24,500 levels. But always whenever we have to see the overall sentiment of the market, then very first we need to see India's volatility index, which is trading at 18-19. That means there is like lot amount of uncertainty. And also we have to go through with the PCR. And PCR is at 0.65 something. It means that the markets are like uncertain, but at the same time, markets are deeply oversold. So in case if there is any uptick, then at least we can expect 25,000 or maybe 25,100 sort of level. But the real short covering will come only if it breaks 25,100, which is far away from current levels, and FIs are heavily short. So maybe in the next week, maybe next month, we can see that short covering sort of trend in the market.
Okay, let's go to Nilesh. Nilesh, very quick view on the benchmark, and let's also talk about the picks that you've given us this morning.
Morning, Alex. Morning, everyone. The outlook looks positive for the day on the back of monthly fin expiry. As you have rightly pointed out, a lot of short build-up can be seen in last couple of trading sessions. The call writers were active at 24,800 yesterday, where we have seen the build-up on the of the second highest OI concentration on the call side as well. So a break above 24,800 will open upside towards 24,900 to 24,950. That's the intraday levels. So today we are expecting Nifty to oscillate in the range of 24,700 to 24,900. That's the 200-point trading range from expiry point of view. And going forward, yes, the outlook looks positive. Nifty may revisit its recent swing high of 25,100. So overall, on the back of that, we have two buy recommendation. First of all, Container Corporation. This particular stock has given a good technically breakout yesterday. It has formed a good rounding bottom pattern as well on the daily time frame chart. And it's a 5 months consolidation breakout. The structure looks positive. So we can expect a follow-up move towards 801. That's the immediate target. 763 will be the stop loss. Now, the another sector that was buzzing yesterday, that was PSU banking space. So within PSU banking space, Can Bank, Indian Bank, Bank India, in fact, all these stocks are looking positive, also State Bank of India as well. But we have picked up Canara Bank, reason being yesterday, this particular stock has broken out from a flag and pole copybook style pattern. And this particular structure is indicating that the counter is likely to move towards 115. So that's the immediate target, and stop loss should be placed at 108.5.
Okay. Shrikant, what are your ideas for this morning?
Good morning, Neeraj.
Very good morning.
Yes, I think, see, the markets are in the range and we are seeing good amount of consolidation. So we need to look for adding those ideas which are relatively better in terms of positional trades. Because in a very short term, we can see some range bound sort of activity, and we cannot make the enough gains on those particular trades. So we should look for adding those stocks where we can see upside, and in that specifically we like ITC, which is around 420-22 levels. Here I am of the view that the stock has completed its corrective pattern of last almost 12 months, and now it is on the verge of crossing its previous swing high, which was around 450, and then we may even see the levels of 500. So that's the overall view on the ITC, but at this level the risk reward ratio is quite favorable. We should look for adding ITC at current levels with a short-term view also. We can keep a stop loss at 414 for the target of 435. The other stock which we like is Hero Motors, and in this week and month we saw good amount of buying attraction for this particular stock. Also, if we consider its weekly monthly pattern, then we can expect 4,500 sort of levels in next 1 or 2 days of time. So Hero Motors is also going to announce its monthly number, and this should help this particular stock to do well. We can keep a stop loss at 4,300 for buying Hero Motors.
Okay, fair call. Now, Nirav Asher, when we look at the set of results that have come out today, I think one of the numbers, and there are many, but one of the numbers that stands out is probably SAIL. The question only is the best in the price for the metal names, and if you have a view on SAIL, then SAIL in particular.
Good morning and thank you for the invite. As far as the steel sector is concerned, I think we've had a good set of numbers from the domestic side of operations. We've seen very good quality realizations. We've seen good quality operating profit margins. And I think considering the fact that most of these players have invested very heavily in backward integration, in improving the quality of their operations, operational efficiencies, etc., I think this performance is likely to sustain going forward.
Okay, so we'll talk more about of course, on the technicals and more stocks as well on the earnings front, but we have to slip into a very quick break. Nilesh, thanks so much for joining us this morning. Quick chat with you today, but look forward to the next one as well. We'll be back on the other side to talk about more stocks and take you through the pre-open session. We're minutes away. Do stay tuned.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest?
Welcome back. You're watching India Market Open. That's the implied open, but you are going to see the pre-open rates hit in just a couple of minutes. Shrikant Chauhan with us, so is Neera Vashar. Shrikant, I just want to review what your Nifty strategy is for the day, and we spoke about it about 15 minutes ago, but let's look at it just before you see the pre-open session. Is this a good day to sort of double down and build a long position on the Nifty?
No, there is no as such any need of double down the position because the markets are highly uncertain and volatile. And especially whenever we see India VIX quoting at 18 or 19 levels, we see good amount of fluctuation in the market. So it is better to be very on a lighter side, in fact, I would say. But in case market manages to cross the level of 25,150, then in that case, we need to be aggressive because I am of the view that the market has spent a lot of time within the range of 25,000 and 24,500. So crossing the important barriers will definitely help long traders or maybe short traders to trade accordingly. That's my view. So the strategy should be to look for adding position if we see the market is crossing 24,850 today because it's a monthly expiry and there is good amount of short building at 25,000 and at 24,800. So between this level we can see some activity in the market and the stop loss is now very clear. We should be very clear in terms of giving a stop loss at 24,700. In case market breaks to that, we need to exit out of that particular long position.
That stop loss needs to be ironclad today. First rates taking, wait for this to settle before we come to any conclusion on it. But Incred has also initiated coverage on Adani Power with a buy rating and a target price of 649 rupees. Varsha joins in with more details. Yes, Varsha.
Thank you so much for that. So yes, InCred has initiated ad on Adani Power now because they see it as a turnaround, strong turnaround story in the thermal power sector with significant growth potential, stable cash flows and clear path to deleveraging. Here's the breakdown of what InCred has said. Now, company is already the largest private thermal power producer in India with 17.55 gigawatt capacity as of FY25 end. The company has overcome past financial challenges through regulatory wins and improved operational efficiency according to InCred. Now, Adani Power has ambitious growth target. They have planned a 75% capacity growth to 30.67 gigawatt by FY30, adding 13 gigawatt through new projects. Now, this growth rate is notable and surpass some peers. The significant capex of 1200 billion is expected to be funded primarily through internal accruals. This will lead to substantial deleveraging, what InCred is highlighting. InCred has also projected an 11% EBITDA CAGR over FY25 to 28, driven by high plant load factors and power generation growth from new capacities. Lastly, a significant portion, this is what an interesting thing is, a significant portion, that is 87% of Adani Power capacity is tied to long-term power purchase agreements. This PPAs provide stable recurring EBITDA for the company.
Okay, well, interesting. Like we said, a lot of these Adani Group stocks could be in focus the next couple of days, weeks, months. But on news flow, that is, this is of course on a brokerage note, but the first rates are starting to trickle in. So just quickly mark what IndusInd is going through, if at all anything. But a lot of other names, right? The likes of SAIL, which will, IndusInd is flat, so keep that in mind. But SAIL might react. There might be Welspun Corp, Insecticides India, Avanti Feeds, Deepak Nitrite. All of these might have some reactions, strong or weak. But some initial reactions seem okay. Deepak Nitrite 2.5% as well. And Avanti Feeds, I thought the numbers looked okay maybe. So a lot of these stocks will have some reactions for sure on open. Well, we discussed SAIL for sure. Nirav Asher, I don't know if you track Welspun Corp, but it goes well with the Trump agenda of drilling. They've got US presence, they've got Middle Eastern presence. The numbers off late have looked okay. In this quarter, the revenues were down, but the margins look very solid. Any thoughts here?
Well, I think the company looks quite interesting considering the fact that they have a very strong exposure to the US markets. Plus, there is a huge opportunity in the US markets, and they have operations locally over there. So I think it definitely augurs well from a medium to long term point of view.
Okay, Shrikant, a Welspun Corp or any of, the pipe companies are not essentially similar to Welspun Corp because that's our PVC pipes, this is steel pipes, so the business is completely different. But I'm just using them unanimously right now. A Welspun Corp, an Astral, a Supreme. On the charts, any of these look interesting from here on?
Yeah, see, like from this space, we like specifically Supreme Industries, which is around 4,200 levels. This time the company has also reported decent numbers. Also, if we consider its technical pattern, then the stock has completed its correction at 3,500 levels. Although we saw the levels of 3,200, but broadly the stock has managed to sustain above the levels of 3,500 confidently. And now again, it is in the pullback mode. The strong pullback mode can lift the stock towards 5,000 or maybe 5,600 sort of level, which is a decent upside that we can expect from current levels. Similar sort of activity we can even see in APL Apollo, which is also trading very close to its all-time highs. And there also we are equally bullish. So broadly, I am of the view that yes, certainly we should look for taking a specific investment positional bets on these two companies, Supreme as well as APL Apollo.
Okay, some early movers this morning that we should look at. I wonder what's happening with IRCTC. Good set of numbers that we've seen. A Deepak Nitrite, decent set of numbers as well. IRCTC about 3.5% up. KEI Industries is buzzing this morning, as is ITI, second day in a row. Welspun Corp on our watch list. Neeraj just talked about this. That stock is about 2.5% up, as is Raymond and MMTC. I would say no major buzzers, but the broad view of the Nifty 500 right now from the first couple of minutes of the trade do look positive, definitely look positive. I'm just wondering, Nirav Ashar, if there is a taco trade in the Indian markets as well. Taco trade, of course, being Trump always chickens out. He hates that term. But the fact is that a reversal of any kind will see some impact. Do you see that happening? And is that what we're seeing in textile counters today as well, with the federal court coming in saying that you have no authority to levy all of these tariffs that you're talking about?
Well, I think Trump can always argue that all these things are being done, these tariffs are being levied in the national interest. And I think it is quite a debatable issue. So would be very skeptical if they would be able to block all these tariffs at this point of time. So this is our view at this point of time.
All right. We'll delve into individual stocks as well, but first let's go to our big brokerage call of the day. Jefferies has initiated coverage on Jindal Stainless with a buy and a target price of 800 rupees. The stock price is currently at 655 or thereabouts, up 1% in the pre-open session. Harsh joining in to tell you why they're saying that they're so positive. Harsh?
Well, they've initiated coverage, and 20% plus in terms of the possible return over the next 12 months is what they see. They say that Jindal Stainless, the number one stainless steel producer in the country, 40% market share is what it currently has. It has a 3 MTPA capacity, a strong presence in faster growing premium segments which are doing well. And in terms of its top line, around 85 to 90% comes from India, just 10 to 15% from export markets, North America as well as Europe. So more India facing as well. That's the other positive. India is growing at 2x that global rate in terms of growth for stainless steel. And there's also a large per capita gap between India versus the rest of the world. And therefore, that growth is set to continue. Now talking a little bit on the macros as well. The China spreads are at a 10-year low. There is room for the China spread to now go up. They're expecting those to start to kick through. So therefore, pricing should improve for a Jindal Stainless. They're also making a case why Jindal Stainless in this environment is better than some of the steel producers like a Tata Steel, like a JSW Steel. They say that the company has a lower EBITDA per ton volatility versus some of the other steel makers. So that's the one big positive. It also has a better balance sheet, better cash flows, better return ratios. In fact, the ROEs average between FY24 and FY20, or rather FY22 and FY25 is 19% versus steel makers of 5 to 8%. So this, despite the 9% volume growth, EBITDA has in fact declined because of pricing. They're expecting volume to pick up. They're expecting EBITDA to go up by 15% FY25 to 27, EPS of 21, EPS to grow 21%. They're valuing this at 11 times forward, which is a slight bit of a premium versus some of the steel makers.
Hey, Jindal Steel in focus, Adani Power, that Incred note also in focus on Adani Power this morning. Watch out for what's happening with the key result stocks. I also want to pull up Bajaj Auto and see what's happening with it ahead of the numbers. And Nirav, let me come to you on this. Is Bajaj Auto something that you look at closely for a pre-result declaration play?
Well, I think we've seen in the recent past that whenever Bajaj Auto has declared its numbers, there's been a breakdown in the stock. We've seen persistent correction in this stock, and I think this seems to be overdone at this point of time. So hopefully we should have a better quality of numbers. We should have better quality margins. We should see a margin improvement and a good commentary going forward for the company.
Okay. Well, pre-open rates as they have settled, it's okay. I mean, it's not too bad, about 0.25% higher for the benchmarks. Volatility is subdued. Nifty Bank about 0.25%. Not too many losers on the Nifty 500. That's the beauty really. The biggest loser is FDC, 2.5%, but not too many gainers either. The top gainer is Deepak Nitrite, which is 3.7%, and then IRCTC, aided by Mahakum. I think in Deepak Nitrite stays the fact that they've spoken about our FY26 with a lot of projects commissioning as well. So I think the guidance is good. Zentech is back to winning ways, by the way, 2.4% higher. And yes, SAIL does make it to the list of gainers. Nirav Ashar, would you buy a metal name now? Is this the right time of the cycle to buy a metal name? And would you buy, therefore, if you do, would you buy a steel company or would you buy a non-steel like a Hindalco, Nalco or some other?
Well, we've been looking at Nalco and Hindustan Copper. The numbers have been quite exciting. They've got, especially Nalco, the integrated set of operations with bauxite, aluminium, power, coal, all in the integrated complex, and the lowest cost operations as far as bauxite and alumina are concerned. So we are very positive as far as Nalco is concerned. And yesterday we had Hindustan Copper also declaring a very strong set of numbers. So I think we like both these stocks with a medium to long term perspective.
We've spoken in the recent past about IT playing tic-tac-toe. One day it's up, one day it's down. Shrikant, I'm just wondering, this latest update from the US, which has to do with tariffs and the futures going up, the US futures going up, including tech stocks, commentary from NVIDIA, all of that put together, lenses back on IT companies. Is there a trade in your opinion? Would you go long?
Well, for IT stocks, I'm of the view that they are still going to take time. There is no as such any specific pattern in any stock that on the basis of that we should look for taking any trade. So it is better if we stay away from taking any specific trade, at least for next couple of days. We need to see that whether they maintains at higher levels or not, because whenever we see rally in the stock, they again comes back to their support levels. So it is better to stay away. But yes, in that specifically, we like Coforge, we like Persistent System, and we also like Naukri. So these are the three stocks on which we are bullish. But otherwise, all these large cap companies, they are going to take some more time, and it is better to stay away.
Okay. Well, just about 3 minutes left for the markets to kickstart. Shrikant, the other set of names which are doing very well, and in today's session too, the PSUs, right? So IRCTC, for example, is the lone ranger in a very quiet morning otherwise, but the last few days we've seen a bunch of these PSUs do very well. Any PSU name that you're trading?
Yeah, in this space, we like NBCC as well as we like Hudco. These are the two stocks which are relatively doing much better than the other companies from the similar basket. And in that specifically, Hudco, which is currently trading around some 244, 245 sort of levels or 240 levels. There we are bullish. We are expecting stock to move towards at least 255 or 260 in the near term. NBCC, which is around 115, 117, there also I am expecting this stock to move towards its previous high of 140, 145. So broadly, these two stocks are relatively much better. But yes, PSU banks, there also we are seeing good amount of buying attraction, good amount of strain based on their oscillators and all. In that space, yes, we like Canara Bank and also we like State Bank of India.
A couple of stocks in the insecticide space, and I understand that they're seasonal as well. But Shrikant, very quick view on insecticides India, if you have a view, and maybe even Bayer Crop Science.
See, these are all like seasonal baits that we can take based on their overall performance as well as the news flow from the government or from the agencies. But Bayer Crop specifically, if we see the technical pattern, then there is a huge gap up opening in yesterday's trading session. Today also, if we consider the today also we can consider some continuation sort of activity. It is around 5,700 levels, but it is also in the pullback mode, and we can see the levels of maybe 6,500. So again, there is a decent upside from current levels for Bayer Crop.
Okay. Shrikant, I don't know if we asked this to you, but I'm tempted to ask this to you again. Even if you've given one, give us one more top trade for the day today based on the pre-open prices. Quick 20 seconds.
Yeah, see, like metal stocks are doing well, and in that space, we like JSW Steel, which is in fact also showing some performance in the pre-open. But if we consider its technical pattern, then it is forming some consolidation formation, and the overall oscillators are indicating us that the bullish strength is building up. The stock can again come back to the levels of 1,750. So JSW Steel looks good.
Okay, thanks Shrikant. Sorry I had to cut because the markets are starting. Watch out for JSW Steel. Shrikant Chauhan's top pick, but trading pick. But here come the first trades on what promises to be a very quiet day. Though anything but quiet on the Nifty. Not a bad start really, 0.4% higher. And banks are not it, or maybe just giving company. It is the IT index. Alex spotted it, 1% higher. Courtesy what's happening probably to the US markets. And yes, a term that we three are coining on the studio here, tic-tac-toe for the IT index. Up one day, down the next. I don't know if it's the right term for it or no, but nevertheless. Metals up 1% too, not bad at all again. And wonder what the mid-caps and the small caps are doing. 0.4% for the mid-cap index. Small caps, 0.4%. It's actually not a bad start. Much different than what the pre-open led us to believe. Let's get the heat map up on the screen and see what's moving on the large caps. Well, a lot of gainers, IT and metals, the global trade in picture. You know, we spoke about how the biggest news of the day was the blockage by the federal court on the tariffs, and I think that is what is playing out right now. Infi 1.6%, JSW Steel, Tata Steel, Wipro, Tata Motors, again, HCL Tech, it's all global. You could argue Adani Enterprises is global as well. Then HDFC Bank and Power Grid. So in some sense, I think that is what has played out. No, maybe not too many specific news, but I think everything related to the global trade has done well. There is some support that Reliance, L&T, TCS are also handing out to the index, and not too many losers. Tata Consumer, probably the lone ranger, down about 1%. I don't know if there were specific news or ex-dividend or what have you. Bajaj Finance, HDFC Life, iShares. So not too many losers. Clearly a green screen and very pleasing to the eyes, Tamanna.
The taco trade playing out. Yes. More than the tacos, this is not Trump chickening out, this is the federal court coming and saying enough. So that's very clear in the reversal you're seeing for metals, steel. Global recession brought on by a tariff war would have hit, reversal there. For IT companies, a tariff war means a depression in the US economy, consumers or customers pulling back. That's what's reversing there. Glad to see HDFC Bank participating, same for pharma. But let's look at the broader markets just for a second. The small cap and mid cap indices, 0.5% up on the mid cap, 150. That's pleasing to the eyes. The small cap index also nearly 0.5% up. Let's pull up the sectoral heat map if we can. Just for a second, Nifty IT, they're top of the pops. Nifty Metal also doing well. Defense holding up, and I suspect it's because of Zentech. Mazagon will also report today, so watch out for that. We will be speaking with Garden Reach on the show, so quick programming reminder there while we're at it. FMCG completely flat, Realty completely flat, but you know, you're on the verge of a full green screen at this point. I want to pull up the India VIX separately because that's an important indicator to look at. Where are we on the India VIX? And the plunge in the India VIX. This is an important factor to look at this early in trade on expiry day, that too on a monthly expiry day. You're nearly 5% down on the India VIX, heading to the 17 mark, which is a comfort zone for the street. So expect a good day going ahead. All right, let me just look at some of the results which are coming in, specific stocks that we identified for you this morning. Let's look at how they're pairing out. So let's start with the results impact. We're starting with SAIL, about 1% up. Decent numbers. Welspun Corp, also decent numbers. Deepak Nitrite was on my list. Good set of numbers for Deepak Nitrite coming in, about 4.5% up on that. IRCTC, the other one that we should look at. Let's also look at Som Distilleries and Avanti Feeds when we are looking at some of these numbers. Som Distilleries, bad set of numbers. IRCTC was decent. Avanti Feeds pretty decent as well. So you reap what you sow when it comes to your quarterly results and how the market is looking at it. Let's look at some other factors coming in, and that's results as well. IFB this morning, 3.5%. Not a bad set. I want to look at what's happening with IndusInd Bank because that SEBI hit will have some pain point over there, mildly down because the action is all on mostly folks who have left. But is there a bigger story here unfolding is the question. A block trade in Sagility this morning, so you have to look at what's happening there, and that will have some impact on Sagility, 0.5% down. Remember, the results weren't that great either. So broader markets looking good at this point, Alex, and it's a pretty decent Thursday morning.
You said it, and there are several stocks that are reacting to updates. You mentioned briefly Zentek, and I want to focus on that right at the start because what a run we've seen for the defense companies. And in fact, let's pull up the defense contributors as well, or the components of the defense index, just to drive home that point. I was talking about it this morning, 28% as of yesterday's close since the end of April when the conflict resolution started gaining traction. Zentek up about 5%, something like a Mishra Dhatu also doing well in trade. Garden Reach, Mazgon ahead of its numbers, up about 1.5%. Srikanth, I'm just wondering, there are several stocks that investors would have gotten into, not least of which we're talking about BEL as well. But at what point do you draw the line? At what point do you take money off the table? Because a lot of people would have made considerable gains over the course of the last few weeks.
Yeah, especially whenever we see a very expensive valuations, we need to be very, very careful. We need to keep a trailing stop loss for such type of investments also. Not only for the trading position, but also for the investments, because whenever we see expensive valuation, we see a good amount of volatility if something goes wrong in the market. But it is better if we keep a trailing stop loss, because right now the momentum is very high for all these stocks. Most of these stocks have crossed their previous highs, especially Bharat Dynamics, Bharat Electronics, even GRSE. They have crossed their previous highs, so we can expect further more activity. Based on technical formation, Bharat Dynamics should do well. I am of the view that the stock is heading for at least 2200 sort of levels. For Bharat Electronics, it is currently overbought, but its formation is suggesting us that we are heading for 420 sort of levels. So again, we can expect at least 10 to 15% sort of rally from current levels, and correction looks nominal. So in case if there is any correction, then again those who have missed the rally, they will come to participate in this particular correction. So I am of the view that it is better if we keep a view of buy on dips, and for investments, keep a trading stop loss.
Loss on the defense space. By the way, Nifty IT now 1.7% higher. Srikanth, we'll circle back to you on what the view is now. But before we do, Nirav, I'm tossing it to you on defense and whether or not. So, of course, Srikanth on the technical levels has said keep a trailing stop loss. If you got a longer term view, a lot of people did get in. Do you hold off on incremental investment just for a bit?
While it's important to be a little bit cautious, but I think defense is a theme which is going to play out in the medium to long term. This is a recurring theme, and every year we are going to see the allocations to defense go up. Defense budgets are going to go up. The amount of indigenization is going to go up. And there are several triggers. One is the emergency procurement programs for defense replenishment at this point of time. The second is the global interest in Indian weapon systems. So there is a huge potential for exports going forward. And I think the recent tried and tested what we have done in the Indo-Pakistan war, I think it opens up a lot of prospects for the defense sector. So I think the best is yet to come as far as the defense sector is concerned.
According to you, are your top 2 or 3 picks in the space still at this point though? Nirav?
We like Bharat Forge, we like Solar Industries, we like GRSE and Hindustan Aeronautics.
Okay, so defense there in focus. So is IT this morning. Srikanth, I'm just wondering, I'm going to come back to you just on the index because the early moves have been sharp and they have been smart. And you know, you spoke about very sharp stop losses. Now we're getting some clarity and the VIX has come off as well. You're feeling a little more comfort on the Nifty?
See, like even after crossing the crucial level of 24,850, if it is coming back, then we need to be very clear that we have to keep a stop loss, strict stop loss at 24,700. But broadly, I am of the view that the market is like now on the verge of heading, sustaining above the levels of 24,850 and then maybe 25,000 sort of level. So at this level, yes, there is like a lot amount of comfort and we can keep a stop loss at 24,700 for holding any long positions.
A quick update on the benchmark. It has cooled off from those relatively higher points, and I'll list out the stocks that have dropped if we can pull up the intraday charts for each of them. Bajaj Auto ahead of numbers, now trading in the red, down about 1.5% from the high point of the day. Apollo Hospitals has lost ground as well, now trading with cuts of about 1% or thereabouts. Shriram Finance, Geo Finance, M&M, all losing ground, all more than 1% lower from the high point. Hero MotoCorp as well from the two-wheeler space losing ground. Ultratech Cement down about 1% or thereabouts. Quite a few stocks losing ground very, very quickly in the early minutes.
A stock that you marked, Alex, Avanti Feeds, is up 6%. So pretty good moving out there, coupled with Insecticides India. The one that is standing out though is IFB Agro. I don't know if the volumes are suspect there, but if you can pull up IFB Agro, and I don't know if there's a news point that we missed, but sudden surge, and no, volumes are not suspect. 36,000 shares traded for that stock already in the first 10 minutes. 18% higher for this one. Nirav Asher, was there some news flow here?
No, I have not tracked this.
Okay, you don't track the stock also. Okay, fair call. Shrikant Chauhan, 3 or 4 of these names, I want to ask you for a Zentech, because, or maybe Alex has already done, but let's try and figure out the others. So IFB Agro, I'll throw in Avanti Feeds, Insecticides India, and maybe an MMTC, which is up about 9% as well, curiously. Any one of these?
Yeah, so in this space, IFB Agro today did like beyond the expectation sort of activity. In fact, it has crossed its all important levels at 650, at 630, 640 sort of levels. And the next level to watch out for would be its all-time high, which is around 850 sort of level. So again, the stock is into strong breakout formation. We can see the levels of 800 or maybe 850 in the near term. That's the overall view. So we should look for adding stock if there is any correction, not now. And for Avanti Feeds, I think it is very close to its immediate previous highest levels. So we need to be careful at these levels to buy for. But in case if there is any breakout sort of formation, then again, we may look for adding the stock on dips. But at these levels, we need to be careful.
Okay. Avanti Feed in focus. I'm just wondering, Shrikant, if you like any of the pharma plays. If you're looking at a reversal of the Trump tariff trade, then pharma is going to be in focus. You're seeing sharp moves today on an NATCO. GSK is not doing too badly. Look at some of the frontline ones are also decent performers. Do you think there's a potential upside in any of the pharma names that you're liking?
See, from the pharma space, we like Divi's Laboratories, we like NATCO, but other pharma stocks, I think they are losing their steam, which we saw in the past. But Divi's has already crossed its previous all-time highest level. It has spent a lot of time within the range of 6,500 and 5,700, 5,500 on the downside. But this particular breakout is a valid breakout, and based on that, this stock can move towards 7,000, 7,200 sort of level. So it's a buy at current levels. We like this stock based on its technical formation. We also like NATCO, which is consolidating. And the next level to watch out for would be 1,000, 1,050 sort of levels that we can expect from NATCO. We also like hospitals. Apollo Hospital is down today, but it is in the range. So in case if there is any further more correction towards 67, 66.50, then there it has a very strong support zone. There we should look for taking contra bets of buying Apollo Hospital, but we like NH, which is around 1,800, 1,750 sort of levels. NH looks very strong candidate to buy and hold, because the overall trend is suggesting us that the stock is heading for the levels of maybe 2,300 or 2,500. It will take some time. It's a positional call on the stock to buy for, but it's a buy at current levels. It is available at decent levels.
All right, and we spoke to the management not too long back as well. I'd invite you to check it out on our YouTube channels. We've got the realty pack in focus. It's losing a little bit of ground today for the second day in a row after gaining considerably over the course of 3 sessions. What's the play right now? And is that real estate story, particularly the residential space, intact? Will the momentum continue for the sector? Morgan Stanley has a report out with a fairly positive view on the sector. And Anushi is joining in to tell you about what they're saying here. Anushi?
Hey, morning Alex.
Morning.
So what we are looking at is in terms of rating changes for a couple of these counters, Morgan Stanley has now upgraded DLF to an overweight from an equal weight earlier. However, they've cut the target price to 900 from 910 earlier. Prestige also, we are looking at an upgrade rating from to overweight from equal weight, while for Godrej Properties, they have downgraded the rating to equal weight from overweight. Now, essentially what they are saying is that they are reintroducing net asset value as a concept, and your pre-sales remains a key factor to consider the future trajectory growth for these counters out there. Now, do note that DLF and Godrej Properties had beat the FY25 guidance in terms of the pre-sales which were there. So the real estate cycle remains intact, but some bit of late cycle in that cycle of growth that we are looking at. They prefer companies with a higher growth profile. That's why they've upgraded DLF, considering the attractive valuation that it has, along with the land bank, which also offers a little bit of margin protection for the company. Prestige, if we see now, FY25 was not a standout year for the business because of delays in a couple of projects. But for FY26, Morgan Stanley expects it to be a standout year in terms of a robust recovery, in terms of where the pre-sales are concerned, seeing a 40% of a growth year. However, for Godrej, now we have seen decent growth for Godrej Properties as well, but they've downgraded the stock, considering that growth may come at the expense of margin and leverage. So that is on the downside that we are looking for Godrej Properties. So overall, for other counters also, Oberoi, Macrotech, they've maintained the rating, but we are just looking changes in terms of their target prices concerned. But overall, pre-sales continues to be the leading indicator for the performance of some of these counters out there.
Okay, Anushi, thanks a lot for that. And with all of that perspective behind us, of course, thanks to our guests as well for joining us today on the show. Let's bring in Mahesh Patil, CIO of Aditya Birla Sun Life AMC, with his thoughts. Mahesh, great having you as always. Thanks for taking the time out. How constructive are you near term, Mahesh? I know your long term view would be good, but the near term, does the recent uptick from the lows of 22,000 capture the earnings growth momentum and the macro benefits that India has, or do you believe that there could be more in store?
Yeah, good morning, Neeraj. So, yeah, I mean, if you look at it compared to, say, 6 months back, and if you just fast forward to today, I think things are looking much better on the, on the macro side. When I say on the macro side means, on the overall liquidity situation, okay, which is there, is now fairly positive. The whole monetary policy also is now supportive for growth, and you've seen the rate cuts and also easing, right, by the RBI, relaxation for the banks so that they can go ahead and give more credit. So I think that is clearly positive, which should support growth in the coming quarters. And we are coming out from a period of slow growth last fiscal year, where the growth started to slow down from the first half, and we are seeing a recovery back into it. Also, I think this year you should see the rural economy doing much better than what it has been in the last 2 years. Again, supported by a good monsoon. We're having now early monsoons. Hopefully, it should be a good monsoon overall. But more importantly, the inflation, okay, which has now come down, and as a result, the real wages for the rural economy are now in a positive territory. So I think that should help a recovery in the coming quarters. Having said that, I think this first quarter of this fiscal year might face some challenges because there were some disruptions which were there because of various factors. One on the global front, because of the uncertainty around the tariffs which was there. So you might see kind of a slightly weak beginning in this quarter, but I think as we progress into this fiscal year, I think we should see the growth again coming back. And overall, we expect this year the earnings growth after a kind of a mid-single digit growth in the last fiscal year to again claw back to around 12-13% in that region. So given that, I think the market here now, after the recent rally, what we are seeing is looking fairly priced now. And I don't see a big near-term upside at this point in time. At the same time, also, I don't see any major risk, okay, for the market to really correct because a lot of those factors which were there, whether it was the uncertainty around the tariffs, again, on the US side, the geopolitical risk, what we saw, the escalation intentions, I think those have kind of now eased off. So I think market should now look at slowly inching up. again, it will probably boil down to more stock specific this year, because we don't expect a big move in the market in a near term perspective.
Hi, good morning. Tamanna here. Why the hesitancy, you think, on a very fundamental basis? Because there's no reason for the hesitancy we're seeing in the markets per se. Do you think it's the valuations? But then, one could argue that valuations were looking much steeper when you were closing in on 26,000. Most of the headwinds seem to have receded. Where do you think the underlying issue is?
So you're right. I think most of the headwinds are now kind of looks to be behind us. So given that, I think the path for the market from here on, should be much smoother than what it was in the last 6 months. And I think the hesitancy, I think, is just because we are coming out from a low growth period, right? Last 3-4 quarters, we have seen both earnings growth as well as overall economic growth was weak. There has been a downgrade to earnings. We've seen in the last 3 quarters, we've gone through a big downgrade cycle, right, compared to what it was in the prior 3 years. And that is, I think, giving the hesitancy to see that the recovery, what we are likely to see, how robust it is, how sustainable it is. At the same time, on the global front, I think there is still while Trump has the tariffs, there is some amount of easing over there. But I think the US, if you look at economy, is still prone to some risks over there. And we've seen the US market has also been kind of weakish. So I think there is some hesitancy coming in on the global front. On the domestic side, I think most of the headwinds, as you rightly said, are behind us. So I think as we see signs of stable growth coming through, I think market would slowly start to move up.
In terms of the global uncertainty that you spoke about, Mahesh, interested in knowing what you made of the overnight development and how crucial do you think it is when a federal court has come and essentially blocked the Trump tariff war, saying that the enabling provision that you used in law is not what allows you to do this. Now, obviously, there will be a legal challenge, it will go through the paces, but at first sign, do you think it's a significant pushback to what has been the biggest uncertainty in the last couple of months?
I think it is to some extent challenged what Trump is trying to do, in terms of kind of imposing these tariffs, which are kind of unilateral in a sense, right? And I think, but I don't think that, again, to some extent, I think the fears over tariffs, I think when the markets corrected around 2 months back, I think it's kind of bounced back. So, I mean, it's not like the markets are still reeling under the pressures of the initial time when the tariffs were imposed. They have now moved up. Incrementally, I think this news probably puts to some kind of rest of any further kind of, I would not say uncertainty, but any kind of dynamic or a big kind of news from the US, any major tariffs, which he's known to do that, which can shock the markets. So I think to that extent, it will put to rest those fears. But again, this legal battle and this thing, I don't know how long it will move on. But I think, it would give some relief, but I don't think the market should really react too positively, because I think some of the fears which were there because of the tariffs, I think the markets have already factored in and actually already come out from those fears to a large extent.
Mm-hmm. Okay, Mahesh, what's the downside to a bullish thesis? Because a lot of people, in fact, the opinion around earnings for FY26 is split right down the middle. Some people saying that earnings in Q4 also were not great, and FY26 will probably drift down. And some are of the opinion that the first half base will ensure that the growth in percentage terms will look good per se, because the first half last year was a bit of a damp squib. Which side are you on? What is your assessment of earnings growth?
No, I think, again, if you look at in this fourth quarter numbers, while on a real headline numbers they look, but more important thing to note is that were there any major downgrades after the fourth quarter result? We saw that after the second quarter and the third quarter results of last fiscal year, where there was significant downgrades to both FY25 as well as FY26 earnings. But after the fourth quarter numbers, I think we've seen that the downgrades are not really that much. So that shows that there is some stability now coming in terms of the downgrade cycle. And I think I would be slightly more optimistic in this fiscal year because a couple of factors which impacted growth last year, which was the sharp slowdown in the government spending, which we saw in the first half, that is clearly now normalizing. We've seen that coming back. Second is the tighter monetary policy, which was there, which was kind of constraining growth and also impacting the overall credit growth into the system. That is now kind of easing off. So the monetary and the financial conditions are now better, which will support growth. And thirdly, I think consumption, which has been weak, as I said, rural consumption, I think that is likely to do better. At least the expectations is that this time it should pick up. So given all these factors and the fact that we have already seen downgrade to earnings, I think we should see FY26, if not a very strong year in terms of earnings, but at least kind of clawing back to around the kind of a low teens kind of a growth, which has been a kind of a long-term average growth for the earnings.
Mahesh, you said stock-specific is the approach. Give us some sense into what you're thinking right now is. Are you looking at large caps? Are you looking at IT, HT, and companies like HDFC or private banks really, which haven't participated in the recent up move? Where are you looking at with interest?
Yeah, so I think we've been more biased towards large caps over the last 6-9 months because that's where the valuation comfort was there. And again, in an uncertain environment, okay, these are the stocks which provide more stability. And these are the area which have also seen a huge amount of selling from FIs and a kind of under ownership which was there, which is actually played out well in the last 6 months or so. Having said that, I think on the mid and small cap side, we are seeing now market kind of stabilizing. We saw a sharp correction there in that space in the last 6 months since June, July onwards. And there are now pockets of opportunity which are coming in the mid cap and small cap space. I think this is a market where besides focusing not so much on broader themes or the sectors, we'll be looking at companies and stocks which are especially good companies which have gone through a pain period in the last 1 year where because of the broad macro conditions and seen a correction in their valuations and growth and could recover in the coming quarters. I think that's an area which we are looking at. So kind of a contrarian play in the sectors and even at the stock level. And by that logic, I think some of the sectors, banking was one sector, okay, which kind of played out in the last 3 months or last 4 months, which was kind of underperformed, under-owned, went through a kind of a pain period, and now we are seeing recovery. Not so much on the earnings side, but more on the macro conditions, as I said, right, in terms of the tight policy from RBI, which was there. I think that is kind of easing off. But other sectors like consumer sectors, as consumer discretionary, retail, which has again gone through a pain last year, where we saw a slowdown over there. We are seeing signs of recovery over there. Sectors like building materials, okay, which have been weak for the last 2 years now. Again, the whole real estate cycle which has played out, I think the last leg off would be driven by the building materials, where I think you should see a recovery in this fiscal year. Sectors like chemicals, again, which have again underperformed last year and also seen a kind of earnings downgrade cycle for the last 1.5, 2 years, are seeing now stabilizing, and we expect their recovery. And the investments which have been done should start to yield results. So I think playing a contrarian in this market, I think, is going to be the thing which can probably give the extra returns in a kind of a more range-bound market.
Okay, thank you so much, Mahesh, for joining us today. Mahesh Patil there on how to pick the right stocks in a range-bound market, and that's really, the very, very risky part as well as challenging part right now. But let's put the spotlight on Granules India as it reports in-line earnings for the fourth quarter. Before we bring in management, I am joined by Varsha, my colleague who tracks the space, with key highlights of the company's results.
Thank you so much for that. So yes, as you rightly said, broadly company gave inline kind of numbers. Now the finished dosage growth was offset by decline in their API and intermediate business due to persistent price erosion. EBITDA margin impact that you're seeing is due to increase in the professional expenses due to consultation for remediation of their US FDA observation for Gagillapur facility. The Q4 output was also impacted due to slowdown of operations in Gagillapur facility. Now note that Gagillapur facility underwent US FDA inspection in August 2024 and was classified as official action initiated and was issued a warning letter. Net profit is up due to exceptional items because of insurance claims of 30 crore. The interesting point over here is if you see North America business grew 14%, Europe had a negative growth of 50%, India grew 64%, LATAM grew 6%, while rest of the world had a negative growth of 39%. Now the overall current trend in pharma is GLP or the obesity drugs, which Granules has entered into this high growth peptide market through acquisition of Sen Chemicals.
Thank you for that, Varsha. Krishna Prasad Chigurupati, Chairman and MD of Granules India, joins us this morning. Thank you so much, sir, for your time to us. Let's just first get your take on the numbers. Slight impact on EBITDA margins, nothing too great, but is what we're seeing this quarter the last of the pain on the whole Gagillapur facility?
Thank you. Gagillapur facility, the remediation is ongoing and it will continue for a few more quarters, maybe Q1 and Q2. We expect to go back to the FDA in about August and then invite them for a reinspection. So it will definitely continue for a little while. However, we had some good launches in the US and also the GLS facility at Genome Valley, which we have commercialized recently, will contribute to some production slowly, some in this quarter and again in next quarter. So we should be able to make up. But once the Gagillapur facility is back on full stream, I think things should be much better.
Penciling that in possibly for Q3, Q4 of this financial year?
It will be a steady improvement as the remediations are being done. The production will slowly ramp up. And I think Q2, Q3 we expect to be normal. You're right.
Mr. Chigurupati, good morning. Neeraj here. The price erosion in API, PFI essentially kind of paid to upticks in the quarter because of finished dosage, right? How long does this continue, sir? Possible to predict that?
It's mainly paracetamol that we've been hit, and also the reduction in percentage is not only to price erosion and lesser sales, but it also due to using more of the API for in-house production of tablets. So both have contributed. And on the price erosion, I think the price increases may not happen as we have seen in the past, and we have to live with this. But sales revenue will increase, margins will be a little less on APIs, but we expect to compensate it more from converting the APIs into FDs.
Okay, well noted. The other thing is this entry into with is it Sean or Sen? But Sean Chemicals acquisition, right? Please do pronounce it correctly for me as well, sir. But it's interesting. I mean, are you adding a different vertical via this entry into CDMO? Is this a long-term strategy of trying to make CDMO a fairly large piece as well? Because a lot of your peer sets are talking very highly about the growth prospects for CDMO operations for the next 3 to 5 to 7 years.
First of all, Neeraj, let me correct you. It is Sen Chemicals, not Sean Chemicals.
Okay, fine. Thank you.
And we got into this acquisition. It all started with us wanting to get into the peptide space, especially GLP-1s. And we were getting a project where the product was being developed by Sen Chemicals. So as we saw the capabilities they had, the skills, we thought this will give us a jump start into this peptide business. So the idea is they develop the product there and we put up facilities in India and start the manufacturing of GLPs and get into formulations of GLPs by contract manufacturing, which we are already in the process of working out the contracts. So When that's why we thought it's a good idea to acquire the company and grow more. It so happened that they were a CDMO company. The target for us was not CDMO. However, since they are in CDMO, we would like to build on that platform. But the basic platform we are interested in is in peptides. And not only GLP-1s, there are many other options. And GLP-1s, I don't have to mention, the growth is going to be tremendous. It's about $50 billion today, likely to go to $150 billion by 2030. So that's a platform we cannot afford to miss. And now we believe we have a jump start.
Okay. So, sorry, did I hear you say, sir, that what you would do is while Sen continues, because it's Switzerland based, you would set up operations in India. And does that give you a cost advantage to the existing Sen Chemicals clients as well? And if the market size is so large, how much do you, let's say, aim to reach within, let's say, the first 5 years of this acquisition?
We do not expect to do CDMO manufacturing in India. It will continue in Switzerland. However, the GLP-1 APIs, we will set up manufacturing facilities in India.
I wanted to follow up with you on that, Mr. Chigurupati, the enthusiasm on GLP-1. The question is that there are so many players already there, many who are coming in. The moat is not high. Everyone wants to be in it, and I understand it's a huge space. It's the hottest thing right now, right? Anti-diabetic, anti-obesity. I'm just wondering if you're seeing that kind of an upside with increasing competition.
When you say 150 billion and all, that's not going to translate into actual revenue for generic companies. It'll be far less. Still, there is a great opportunity still. And our target is just not GLP-1s. GLP-1s is a start. There's so many other peptides and so many areas you can go with these capabilities. From peptides, again, you could go to oligonucleotides. There's so much that is happening in the world today, and we just cannot afford not to be there.
Fair enough. You don't afford not to be there. How much of a driver of growth do you see the peptide space?
Well, the next big genericization is going to happen into 2031, and we want to be there. Meanwhile, we would be getting into ROW markets with obviously semaglutide. Liraglutide, we are not greatly interested. And of course, work on the future things. It is definitely going to contribute quite substantially to our profit margins and revenues from this base. I'm not saying after a certain while it may not be great. Maybe 4 years from now, 5 years from now, starting from next year.
When you talk about region-wise growth, and let me come to this part, because North America growth has been good for the last financial year and the last quarter, but with all of the uncertainty on tariffs, lack of clarity there, what is the conversation you are having on ground and your sense of where the whole situation is moving when it comes to one of your largest markets in North America?
The situation, we have been having talks not only internally, we have been talking to customers for a long time. And I see the concern coming down with customers and many other people. And we believe that even if tariffs are going to be imposed, we would have to pass on the cost to the consumer, to the distributors, and they in turn will try to pass it on to the consumer. There's no other way. And we are already in our type of products, we are already at the bottom. There's no more scope for absorption of this. And our customers are not reluctant. They're quite okay with this. The feeling we get is it should not really impact us. But let us see where these tariffs go.
Sir, I'm inclined to ask this and press this a little because both me and Tamanna asked you. The market size is very great, because of which you've gone in. You obviously will have a small portion of that overall market size, but is there some estimate that you can give about what is it that in terms of market size will you have? Would it be X $1 million in 5 years? Anything at all?
Once the product is genericized in the US, definitely we see upward of about $100 million at least going forward.
Okay, and then that takes what, sir, about an X number of quarters or years for that to happen?
It's 5 years at least,
5 years. It's a bit of a long game, but the rewards at the end are pretty good. Okay.
And meanwhile, we'll be developing a lot of other capabilities, and we'll also be building up the CDMO business.
Okay. Well, wishing you all the best for that and more. Thanks so much for joining in, and all the best for FY26.
Thank you, Neeraj.
Well, that's Granules India. I wonder what the stock is doing. The acquisition is interesting. They're pretty kicked about what it can do over the longer term. It's not usual that you see an Indian company going out buying a Swiss-based company, but they've done this. So pretty interesting. Okay, we need to slip into a break. On the other side of the break, more news and updates lined up. Stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on
Back with India Market Open right here on NDTV Profit. Let's give you more news and updates. Tata Sons will be holding its board meet today. Sajid Johnson with what's to be anticipated from this and what's expected to be on the agenda. Sajid, why is this important?
A couple of things which is why Tata Sons current board meeting is going to be important. One is they're going to mull on the financials for the financial year of FY25. Remember, Tata Sons is a holding company and the revenue that it gets from on its balance sheet is primarily in form of sale of investments or participating in buybacks or the dividends that are paid by the listed companies or the associates of Tata Sons. So one of the agenda items would be the approval of financials for the financial year 24-25, which comes into play. The second thing is the review and announcement of dividend to its shareholders, which is primarily the Tata Trust and to the preference shareholders. That would be there. Tata Sons has been maintaining a constant rate of dividend there, so that's not a big dividend that's going to come in from there, because a lot of income that Tata Sons earns through dividends is used to plow back into new ventures. In the last 2 years, we have seen Tata Sons investing into semiconductors, batteries, and there are many capex capital-led programs which are underway and which should be operationalized in the next couple of years, which is there. The third thing which is in the agenda is the review of the Tata Capital IPO. Remember, Tata Capital is an upper layer NBFC and they are required to list by September of 2025. They've already filed a confidential filing with the market regulator SEBI and that approval is pending. Also, the fact that the Tata Motors Finance has already been merged into Tata Capital on May 8th. So the consolidated numbers for the Tata Capital would be something which will be looked at, as well as how much of the OFS would be will constitute Tata Sons offering shares in the IPO. Remember, Tata Capital is raising through fresh issue as well as OFS in the IPO as and when SEBI approval comes in. So these are some of the things. Apart from that, just to give a color on the kind of revenues which Tata Sons could have. Last year, the total revenues that it earned was around 43,000 crores. This time, this is going to be a little tad lower, and that's primarily because buybacks was lower in the last financial year. But the biggest revenue chunk would come in from TCS, where it owns more than 71% stake, and it got nearly 33,700 crores in dividend from TCS alone, followed by Tata Steel at 1,400 crores, Tata Motors and 887 crores, and Tata Power 289 crores. So a total of 38,000 crores coming from listed companies. Roughly around 2,700 crores of dividend will come from the associates, and there will be some other income. So it will almost be at par with FY24 numbers, or slightly below that in terms of top line.
Okay, Sajid, the one key thing that you would watch out for in this meeting? One key thing?
The key thing would be any update coming on the Tata Capital IPO, as in what will be the timeline. See, the normal timeline for, because this is a confidential filing, they will wait for SEBI approval to come in. SEBI normally takes up to 90 days to come out with its comments. Once the confidential filing is approved, there is a 30-day period where it has to be kept in public, and thereafter the IPO comes into place. So, as in when the confidential filing is out and the SEBI approvals are in, there would be there. But it's safe to say that by July, August is when the Tata Capital IPO is going to come in, and important to note how Tata Sons will be offloading some of its shares in the OFS in the Tata Capital IPO. One important thing just to mention that Tata Sons is also under the scanner with respect to listing. They've already applied for reclassification of their status as an upper layer. RBI is yet to take a decision on that. So of course that would be one of the discussion points, but not much is going to come in terms of any release or something from them.
Okay. Thanks for that, Sajid. Shifting focus to Bajaj Auto, and that stock is expected to report a flattish Q4 performance weighed down by weak domestic volumes. Puneet Johnson with the street expectations. Puneet.
Well, thank you for that. So, three key things expected that should be anticipated from this result. One is, of course, the result itself. Revenue, EBITDA, as well as profits are expected to rise just 5% in this particular quarter. Margins are expected to be maintained at 20%, and that will be something, while Street is banking on it, it is one of the key aspects to look at. The other aspect was that in this particular quarter, the domestic sales again were very weak. Domestic sales, two-wheeler sales specifically, were down 8%, and they've reported negative two-wheeler growth in terms of sales for the last 7 months now. And that's one of the key negatives for the stock, because TVS, on the other hand, has been reporting stellar double-digit growth in terms of two-wheeler sales in the domestic market. So definitely that is one of the aspects which needs to be addressed again. And the other final aspect is, of course, of the acquisition of KTM. Now, Bajaj Auto is set to invest 800 million euros through its subsidiary in KTM. Out of that, $200 million has already been invested via equity in the month of April, and the rest 600 million euros will be the debt that the company has taken. Now, May 23rd was the day where KTM was expected to have a restructuring plan in place, and we did see exchange notifications from Bajaj Auto that they will be taking on debt of over 600 million euros to invest in a subsidiary. This will be, of course, paid off to its creditors of KTM on the basis of what the resolution happened in February of 2025. But there could be some cost that could be upfronted, and this margin number could be impacted because of that as well. But the acquisition, while there is some near-term risk to it, it does augur well in the long term, because do note that in the export market, currently Bajaj does not manufacture anything for KTM. It's only the operations in India that Bajaj has hold of. So this acquisition is very meaningful. And on the other hand as well, TVS has already acquired Norton brand 5 years ago. That will come on stream in this year. So it needs that competing power with the likes of TVS, Norton, as well as Royal Enfield in the export market. So long term, there is maturity in this acquisition, but near term risks does sustain. That could be something to watch out for. And major commentary here is one of the key things in this result.
Certainly watching out for that. Puneet, thanks, and keep us updated with the developments as they come in. Bajaj Auto viewers will come out during market hours. Just a quick check. The markets have cooled off a little bit, but the Nifty IT is rock solid. I think 0.87% higher still for Nifty IT. So certainly off the highs of the day, but 0.87% is no mean feat. IFB Agro, from amongst the broader market stocks, IFB Agro, small cap, tiny tune actually, but up 20%, locked on an upper circuit. Federal Mogul up about 13%. There is strength in India Pesticides, a company which came out with numbers day before yesterday, up 9%. Then there is strength in Welspun Corp. We spoke about it early in the morning. There is strength in Good Luck Industries, the management that we spoke to day before yesterday. That's up about 7%. And then stocks like Castrol, Forgings, etc. are doing well for themselves, both on the price and I think on the volume front as well. So keep an eye out for a clutch of these names. What is not doing well? NR Agarwal down about 8%, Sandur Manganese down about 8% too. And there is weakness in V2 retail yet again, 4% lower. I really thought the numbers were okay, but something's been amiss, because of which the stock is down 3% again today after being down 5% yesterday. Okay, more news and updates. Turning attention to the insurance sector, the finance minister recently reviewed the financial and operational performance of the PSU general insurers. Shimi, who's tracking the story, joins us now for more. Shimi, what are the key takeaways?
High-level review meeting convened on Wednesday evening, where Finance Minister Nirmala Sitharaman met heads of state-run general insurance to evaluate their operational and financial performance. Some of the key takeaways include that the total premium being paid collected by these insurance companies have increased to 3 odd lakh crore in FY25 compared to 80,000 crore in FY19. The meeting also discussed the insurance penetration, which remains low at 1% of GDP compared to 4% global average. However, there is an improvement in the insurance density to $25 by FY23. They also discussed the incurred claim ratio, which have been moderated post-pandemic. However, there is no direct discussion on the solvency ratio as one of the key parameter of the health of the insurance company that will remain below 1.5 mark prescribed by insurance regulator, and certain exemption already been given to some of these insurance company. The FM suggested these insurer to have and leverage the artificial intelligence and data analytics in the claim settlement system to have more innovative products in line to combat the emerging risk like cyber fraud, and to have a strategic partnership with some of the fintechs in order to have more price discovery and risk modeling. Now, this review is important because it's coming ahead of two important events. One is the GST Council meeting, which is expected to take up the taxability on the premium paid on the health insurance, which is one of the major part of the general insurance. And the second event is that insurance amendment bill is expected to be cleared in the upcoming monsoon session, and that will have a clear impact on these companies, where they have to redraw their strategies and product line. More sector will open up as the FDI will be increased up to 100%. So this space is definitely watch out for that, how these events will impact the entire insurance industry.
Insurance has been a hot space. She's talking about general insurance, but even LIC after its numbers yesterday. Let's see if it's holding up actually. If an HDFC Life is holding up, if an ICICI Lombard is holding up, if GIC. LIC definitely not holding up, about 0.5% down. Yesterday was the day if you had to, at least get your IPO rate back. Yesterday was the day for LIC. SBI Life not doing too badly. All right. The big story that we're also tracking, and this was an NDTV Profit exclusive. TRAI has released a draft consultation paper confirming our exclusive, our May 22nd news break. The proposal looks at changing spectrum pricing to help expand 5G and improve rural broadband. It also suggests moving to a pay-per-use model instead of the current revenue sharing system. Aishwarya joins in with all the details.
Right, Tamanna. The Telecom and Regulatory Authority as well as the DOT have proposed significant changes in this draft. Now, as you mentioned earlier on, they had a sharing model, revenue sharing model. And now what they've done is that these high frequency spectrum bands will be utilized by telecom operators. But what they're proposing is that instead of charging them for the whole area, they will be charging them on a tower to tower or usage basis, or bandwidth will also be tracked in terms of how much data was used in these terms. So what that would do is kind of rationalize the rates for them and also minimize their costs as well. What the government aims to do by this is they're lowering costs and improving rural backhaul. So tower to tower is the term that is also known as backhaul. This will also help in expanding 5G reach and will sort of give an improved data connectivity to users, is what the government is saying. Now, the government has asked the stakeholders to bring in their comments as well as their views by June, and by July, they're looking to close all of this. So stakeholders like Jio and most of the telcos will be giving in their comment. As we mentioned earlier, now, when we talk about high frequency bands, we're talking about bands between 6 gigahertz to 21 gigahertz, which are also referred to as microwave bands, and ENV bands are the ones that enable faster speeds, are also referred to as ultra high speed spectrum bands. So this is the update as far as TRAI's proposal and consultation is concerned.
Okay. Thank you for that, Aishwarya. Just let's get a perspective on the impact for the telecom sector. Balaji Subramaniam, Vice President Research, IFL Securities, joining us now. Thank you so much, Mr. Subramaniam, for your time. Just two perspectives to it. One is TRAI's recommendation on the spectrum charges, and the other is the entry of a Starlink and the impact it has. Let's go with the TRAI recommendations first.
So for the first matter, it all looks good on paper. We'll just have to see, where exactly things head. While it is definitely good to have lower charges for operators from a rollout perspective, at the end of the day, it will all depend on whether it makes business sense, connecting a particular area. But at least, it's a step in the right direction. That's all I would say.
So just want to understand, even from a Starlink entry point of view, because we've been reporting that the decks are getting cleared for Starlink's entry. How much of an impact is it going to have on current listed telecom players? How do you see that panning out?
My sense is that it will be, fairly limited, because if you look at, the satellite broadband technology, I'm not going into the technology details, but at least as things stand today, there are capacity constraints, simply because, unlike lakhs and millions of towers that you can have in terms of satellites, Starlink has maybe a little over 7,000 satellites, and if you include the others, the satellites that are dedicated for providing broadband services may not be more than 8,000-9,000. And let us, not forget that this is the global satellite count, and at a given point in time, the number of satellites that will be orbiting above India will be a small proportion of that. So maybe, not even 100 satellites at a given point as of today. Over a period of time, whether that increases, that will definitely increase. But now, I think, unless there is a material technology improvement that happens, the capacity of satellite will remain constrained. And as a result, if you don't have a lot of capacity, you don't have you can't use pricing as a tool to kind of get more subscribers, because at the end of the day the capacity is a constraint. So I think as things stand today, I don't see a lot of impact coming in from Starlink. And even if you look at the kind of plans that they have launched in Bangladesh, they are pretty expensive, at starting at 3,000 rupees per month, and on top of that you also have to shell out 35,000 rupees as a one-time fee for the terminal, which means that it will probably be limited to certain niches of the market in the foreseeable future.
So let me just segue a little bit. How do you see the current listed players, and how would you see their ranking? Impact on RIL, yes, no, if anything at all? How are you looking at it from the telecom business perspective, of course, from Bharti Airtel as well? How are you looking at some of these players going ahead?
Nothing at all. Absolutely nothing at all. In the next,
in terms of whether you like them as stocks right now, you like them as companies right now. Let's keep the Starlink bit on the side for a second.
So if you look at the industry, see, we are having a situation where the tariff hikes have just flowed into the numbers, and we have Vodafone Idea, which is still completely not out of the woods. They have their own sets of problems, and both Bharti and Reliance Jio are gaining revenue market share. I think that should continue, and maybe sometime in the next 12 months we could see another round of tariff hikes, which will be another driver of ARPU growth. Then as far as FWA is concerned, there the rollouts are happening, and Bharti and Jio are adding close to 0.6, 0.7 million subscribers per month. So there things are progressing, and at some point I think the 5G plans also will start getting monetized if the telcos decide to impose some daily limits on the data usage. So that is still some time away. I don't see that happening in the very near future, but these are some of the levers which one can look at. And the capex is also coming off, because most of the heavy lifting in terms of 5G rollouts is done, which means that we are looking at a scenario where there is revenue growth, the associated operating leverage also starts kicking in, and FCF generation also improves because the capex intensity comes off.
Okay, thank you so much for that. Balaji Subramaniam, VP Research at IIFL, tracks the telecom sector very closely. The big takeaway, Starlink is not going to have an impact on any of the major players at this point. Now, let's talk about Garden Reach. Defense stocks have been in focus. Garden Reach actually turned out with a spectacular set of numbers. Stock is buzzing today as well, about 3.5% up. Before we speak to the management on the quarter gone by, let me go across to Puneet, who's setting up the numbers.
Well, thank you for that. Definitely a very strong quarter for the company. Revenues up 61%, while the EBITDA as well as profitability has gone up over 100% compared to the same time last year. The margins also at 13.5% versus 8.9% is a really strong beat. I just want to discuss the company's order book right now, because the position stands at over 22,000 crores for the company. This will be, of course, executed. The major orders will be executed over the next 3 to 4 years. And the order book of roughly 9 projects also consists of around 40 platforms. And within the major order book of roughly 22,000 crores, almost half of that, of 11,400 crores, is the frigates division of the company. And they have anti-submarine watercrafts as well. That's roughly almost 4,000 crores of the order book. So definitely a key aspect will be the order book, as well as it provides revenue visibility going forward. The key aspect will be execution timeline, as well as the new order that the company has gotten, where they are in L1 for 5 next generation corvettes for the Indian Navy. These are some of the key discussion points going into this chat today.
Absolutely. Thank you for that, Puneet. In fact, let me welcome on board Commodore P.R. Hari. He's the CMD of Garden Reach. Commodore Hari, thank you so much for speaking with us and joining us today on the show. Let's first go through your numbers, which have been very, very robust for the full year and for the quarter as well. Now, this is before all of the events of the last couple of months that we have seen from a defense perspective. Do you see you building on the kind of revenues that we've seen post Operation Sindoor?
Thank you, Tamanna. And yes, our numbers have been very strong during the financial year 25 and also specifically quarter ending 31st March 25. Yes, we are riding on a very, very strong order book and with more orders on the anvil. As it was just mentioned that we have been declared L1 for a very high value order for the Indian Navy for the next generation corvettes. So considering the existing order book and also the orders on the anvil, we are in a strong position and we are very confident that the growth trajectory is going to be even steeper in the coming quarters and years.
Guidance that you can give us for revenues and for margins, because revenues have jumped up now to 13.5% versus 8.9%. Is that the trajectory that you're seeing going ahead for FY26 and revenues at this pace as well?
Revenue definitely, because the major project that we are executing, almost 50% of our order book is from the P7 Alpha frigate project, and with the first ship expected to be delivered in a couple of months. So we intend delivering the ship in July, and with the second and the third ship at a project maturity stage where maximum revenue accrual is expected, our revenue is expected to maintain a similar momentum in the coming years. Definitely the margins would be steady. Considering we have interacted before also, shipbuilding, we are well beyond the conservative profit margins, and we intend maintaining similar margins in the future too.
Margins, so you're saying margins will continue in the 13% bracket or so, 13 to 14%. Just want to get your perspective, sir, on news recently of Bangladesh cancelling a $21 million order, and is that sort of a fallout of what you would expect as the geopolitical situation and the regional situation evolves? What is the kind of hit you see from this, if at all?
Interesting question. Bangladesh, I'll give a broader perspective. We have executed 2 projects successfully for Bangladesh over the last 2 years. One is from one of our other business verticals, that is the portable steel bridges, that is against LOC, and also a project for the Inland Water Transport Corporation, 6 petrol vessels. These have already been completed. Currently, 2 projects in hand, rather one project in hand, a dredger project for the Inland Water Transport Corporation. The project is moving on fine. We do not envisage any issues with that. Coming specifically to the project which the contract has been mutually cancelled very recently, the order value is minuscule. It is just 177 crores. Forget about the next generation corvette order which we will get. The contract is expected to be signed a few months from now. Keep that apart. In our existing order book, this constitutes just 0.8%. The impact is nil. And to re-clarify and reiterate, the cancellation is the culmination of a mutual divorce. It is a graceful exit for both the parties. It is a very small project with nil impact on the overall financial performance of the company.
Important point. I just want to reiterate on the mutual bit. Can you give us any reasoning or rationale behind why this was exited mutually by both parties? Or what was your perspective on this, at least?
Our perspective is this project was again to be undertaken through a line of credit under the line of credit scheme that did not take forward, and therefore the cancellation.
Yeah, so they have to pay for it, and that payment has to be clear. That brings me to the next question about how you see revenue recognition in this space for shipbuilding, because these are of course long-term orders. It's bulky in the way revenues flow in. So how do we understand this?
See, we got an order book of 22,680 crores as of now. As per the current build strategy, which is in line with the contractual timelines, all these projects are expected to complete by FY29. The major project, the P7 Alpha, will get completed by FY27. That means by mid of calendar year 2027. And the balance projects, the anti-submarine shallow water craft by end of the next calendar year, and the next generation offshore patrol vessels by FY28. And the non-defense projects, we are executing a project for a German client, multipurpose vessels, 8 multipurpose vessels. This project will get completed by FY29. Perhaps that is the last of the projects that will get completed from the existing order book. So we will be accruing revenue in a very steady manner. Now, after the P-17 Alpha is completed and the other naval platforms reach a mature stage, to mitigate the dip, we already have the next generation corvette project. We have been declared L1. It's a very high value project. We expect our share of the project to be plus 25,000 crores. The revenue accrual from this project will start 2 years from the time the contract is signed. So what, in a nutshell, the revenue growth is likely to be steady over the next 5 to 10 years. That's what I can expect.
So, just to get a sense, Commodore Hari, on this L1 declaration, 25,000 crore order for 5 NGCs, order size of course is 40,000 crores. What are the details that you can share with us? When will this contract be signed? Is there a further process that we need to wait for? What's the execution timeline? Anything that you can add on this?
At this juncture, all I can say is that taking a conservative timeline, I expect the contract to be signed by end of the calendar year. That is 2025 itself. Then starts the pre-production activities as per the project RFP. A 2-year period has been provided for pre-production activities, and the project, as said, mentioned, the total project is for 8 ships, 5 by us and 3 by the L2 shipyard. The project completion would be by 2034-35.
When would the revenue recognition begin or the revenue flows begin for this?
2 years from signing of the contract. So again, putting a conservative timeline, that would be from FY27 onwards.
Okay, so this flows onto the balance sheet from FY27 onwards.
27.
Okay. Yes. You spoke, sir, about your non-defense segment. Can you give us a sense, what is that size of the segment and how much of a focus is there on the non-defense segment right now?
Yes, non-defense segment constitute about 12% of our order book. This comprises of export projects, 2 export projects, one for a German client. It's a 8 multi-purpose vessel project, and 2 very interesting 2 projects that we are executing for construction of specialized research vessels. One for the Ministry of Defense and one for the Ministry of Earth Sciences, and one more contract we will be signing in another couple of weeks for 2 coastal research vessels. The order value could be to the tune of around 500 crores. So since you asked what is the visibility with respect to non-defense segment, I expect a similar percentage, that means around 10 to 12% of our overall order book coming from the non-defense segment. This is purely because of the fact that the defense orders are high value orders. The one single order from a corporate project is to the tune of 25,000 crores.
Sure.
So the proportion we would like to maintain similar, that means 10 to 12%.
Okay, and just getting a sense of the export, kind of space. I mean, the broad idea is, of course, make in India, now make in India for the world. Do you see that as a growth driver?
Absolutely, absolutely. And most of the European nations are now looking at India as a shipbuilding destination, and we see opportunities there. Actually, we are getting market leads, almost a lead per week. We are taking a calibrated decision, and it is with this intent that we have enhanced our shipbuilding capacity. I see huge opportunity not only for GRSE, for the entire Indian shipbuilding industry towards export of commercial vessels.
Fantastic. Thank you so much, Commodore Hari, for joining us, speaking with us. I mean, we've seen the prowess of the Indian defense sector recently, and it's made us all very, very proud. That's Garden Reach Shipbuilders for you. Stock is up about 3%. Excellent set of numbers in Q4. Well, that's all we have time for on India Market Open. We're leaving the markets in a bit of a range at this point. Come off the highs of the day. Just want to pull up the Nifty intraday before we sign off. Yeah, I mean, just about 38 points up in the green, still in the green, holding, not quite holding to the 24,800 mark, unfortunately. So watch out for what happens. It's going to be a volatile session. Remember, it's monthly expiry day, which is coming in today. So expect some volatility there. Well, that's all the time we have, but stay tuned. Ask Profit is up next.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready.
You're watching Ask Profit. I am Mahima Vachrajani. With me is Alex. Well, in terms of the markets, it's fairly a better day as compared to yesterday, definitely for the markets. In terms of the benchmark indices, Nifty 50 is trading flat at around 0.04% higher. In terms of the bank Nifty, that's under pressure, down by about 0.2 odd percent. The broader markets are doing fairly well. The small cap 250 is up around 0.1 odd percent. The mid cap 150 is flat at the moment. In terms of the Nifty 50 heat map, let's pull up that and see what counters are buzzing in trade today. Well, it's almost even Stevens there in terms of the advanced decline ratio. There's Tata Consumer, Jio Finance, Shriram Finance, Bharat Electronics, Bajaj Finserv, some counters that are under pressure, some counters doing well. There's JSW Steel, Zomato doing well, up by about 1.5 odd percent. IndusInd Bank, despite of the negative news inflow, it's up around 1 odd percent. Infosys, Trent, Tata Motors, some counters doing well in trade today. In terms of the sectoral heat map, let's pull up that and see how our sectors faring in trade today. Well, in the morning it was the Nifty Realty and Nifty FMCG which was under pressure, but right now Nifty PSU Bank, the Nifty Finance, the Nifty Bank all have turned towards the red and are seeing pressure in trade today. Nifty Metal is leading the entire pack, is up 0.7%. Nifty IT is also up around 0.8 odd percent. Nifty Auto doing fairly well in trade today, up by about 0.4 odd percent. In terms of some stock specific action, let's pull up the BSE 500 and see what are the counters buzzing in trade today. Well, a couple of counters that are buzzing today. There's something like Avanti Feeds on the back of its earnings. Good set of numbers this particular quarter, doing well in trade today. MMTC also on the back of its earnings, up 12%. Welspun Corp also doing well. Strong guidance by the management that's pushing the stock overall higher. There's Asai India, ITI saw significant gains yesterday as well on the back of its earnings, doing well today as well. There is Polyplex Corp, which is down by about 5.7 odd percent. Suven Pharma, FDC, RH Magnesia also had its earnings today, down by about 3 odd percent. So all of these counters under pressure. In terms of any particular stocks, Alex, that is standing out in the entire space for you, are you seeing any particular stock that's buzzing?
So a few stocks in insecticides. India was on my list. It's doing, or it was doing well. I wonder if it continues to do so. Yeah, there you go. So it's up about 5% or thereabouts. And Bata was under pressure at the start of trade on the back of another weak quarter it continues to be there, though it's been a bit of a choppy day of trade for Bata overall. Welspun Corp, and this is a pipes company, remember, and it has quite a considerable amount of revenue that comes through from overseas, from the US. And metal pipes is what it sells. It's a very good quarter for the company, up about 9% in trade today. And all of those stocks in focus, of course. We've spoken about IRCTC as well in the past couple of hours, and another good set of numbers. And it's lost ground. Of course, remember that this is a counter that has been in focus in the recent past as well. Let's see if that continues to gain. But we've got Mr. G. Chokalingam, who's the founder and managing director of Economics, joining us this morning, as well as Kush Bora, founder of kushbora.com. Gentlemen, thanks so much for taking the time, and good morning to you. Kush, I'll come to you first. Since it's monthly expiry, how would you trade this at this point, or would you wait on the sidelines while there is some semblance of direction that you find? Because we've seen quite a topsy-turvy couple of sessions where there's a ping-ponging, if you can call it that, intraday for the benchmark at least.
Sure. First, very good morning, everyone. I think for the day, it's not a bad idea to stay on the sidelines. Like we saw yesterday during the closing session, the 24,800 straddle is very much at play, but the call concentration is practically double of what's there on the put side, and hence you're seeing some cooling off from the opening highs that the markets have made. As far as the medium-term outlook goes, I think that still remains bullish. As long as we hold on to the 24,500 and the 24,600 support zone, what we've seen today and perhaps in the last couple of days could be impact of some global volatility, and also the expiry that we are seeing today. I think this is a good opportunity to create positional long trades. The risk-reward ratio is now fairly favorable. 25,000 remains the first target on the upside. Also, a very strong resistance zone. But once that is taken out, you're looking at a 25 to 50 kind of level also on the upside. So all in all, from a medium-term perspective, I think this is a good opportunity to start creating longs. Today, because of the kind of concentration that we're seeing around the 24,800 mark for both calls and puts, it's a possibility that the expiry could be in a range of about 100 to 150 points from there.
All right, so that's a view. Stay on the sidelines today if you have a relatively shorter term perspective. In any case, in the long term, the India growth story, I don't need to tell you about that, and neither do my experts today. We've got Rahul calling us from Chandigarh and asking about Godrej Properties, I believe. The first caller of the day, Rahul has called us on the number that you see at the bottom of your screen, and you can do that as well if you want to speak to us. Alternatively, you can send us a message on the number on the top of the screen. Rahul, very good morning to you. How can we help you today?
Good morning. I have 2 shares of Godrej Properties at 2250.
Right.
And I am looking to invest more or add more, but I'm not sure what are the right levels to invest, because the stock has been falling down since last couple of trading sessions.
Okay. So let me get you an update. By the way, I don't know if you watched our earlier shows, but we discussed a note that came through from Morgan Stanley on the real estate space, and it speaks about a few stocks in which it is overweight. It's changed its positioning on that. It's equal weight on Godrej Properties. It was earlier overweight, and it has cut its target price to 2,400. Let me go across to Mr. Chokalingam on this one. Mr. Chokalingam, on the real estate space as a whole as well, but specifically on Godrej Properties, the question is whether the momentum that they saw in FY25 can continue into FY26. Certain tailwinds exist in the form of the rate cuts that have taken place, as well as the next rate cut that could be in the offing in the month of June.
Yeah. So it is possible to maintain the momentum in growth, but only concern is that even with this current momentum, the valuation looks quite stretched. My personal preference is for DLF, because DLF has got a lot of land on its own, which can take care of development for at least for another 2, 3, 4 years, and I would prefer DLF.
Let's say with regards
Rich property stands. The next question is from Narendra, who's writing in from Surat. He's a senior citizen and he's bought 10 shares of Trent at 7,500 a piece from a longer term perspective. And he's saying that he wants to buy more at the current market price and wants to know if that's the right thing to do or not. He's sitting on a loss of 18,000 rupees. The stock is currently trading around the 5,600 odd levels. Mr. Chokalingam, I'll again come to you on this one. What's the outlook like for Trent? Do you think he should add more and average out at the current levels?
At best, I would give a whole recommendation for two reasons. One, valuation is quite stretched, and secondly, the structural change which is happening, shifting the sale of goods, from physical store to online. Ultimately, it will have some impact on Trent as well. So I would prefer, the sectors like banking, within that PSU banking stock like SBI, where I get the confidence that the business as well as the profit can grow in double digit in FY26. Even beyond that. So therefore, I would prefer banking stock like SBI to Trent.
Okay, preferring SBI over Trent is the view coming in from Mr. Chokalingam. Our next caller, Ravi, is calling in from Hyderabad. Ravi, a very good morning to you. How can we help you?
Yeah, very good morning.
Hi, Ravi. Go ahead with your query. Yeah.
My query is on Canara Bank.
Okay.
So is it a good time to buy Canara Bank and I can hold for 1 to 2 years, or shall I wait for a couple of days for a correction?
Okay, got your point. I'll take this up with Kush. Kush, what are the charts indicating for Canara Bank? Do you think this is the right time to make an entry?
Sure, it is not a bad move at all on this one. In fact, after SBI, as Mr. Chokalingam already mentioned, after SBI, if there is one stock that I like in the PSU pack, it is actually Canara Bank. The stock's had a good run. It's had a sustained up move. Major and minor averages also taken out. But what it's also done in the last couple of sessions is that it's taken out the resistance near the 107, 108 mark and is comfortably trading above it. I think from a year to 2 years perspective, about 125 to 140 are the targets that we could look at. And on the downside, 100 is a good support zone, not only a psychological one but also a technical one. So maybe just under that, about 99, 98 thereabouts is where he can place a stop loss for it, for an investment bet as well. So for targets of 125, 140, Canara Bank, after the kind of moves that it has made, is still a good buy.
Kush, coming back to you on a question from Pakshal Jain, who's writing in from Bellary, and asking about BEML, which he's bought at levels of 4,400 rupees per share. 15 shares are bought, and the stock is trading below the buy price at 4,260. He's got a time frame of 1 to 2 years, so not a very short-term time frame. What are the key levels that he should watch out for, and should he hold on to this?
Yes, he must hold on to this one. The reason being that, the stocks recovered rather well. Now, the only small issue that, I see here is that 4450, 4500, close to his buying price or maybe just above it is where the resistance sets in. In fact, if you see for this week, what's happened so far is that the high is also close to the 4430 mark. But on the whole, the momentum has been good. The volume action this week has picked up dramatically. So I think he could very well continue holding on to this one, keep trailing stop loss near the 4050 mark. Once this 4500 level of resistance and the supply zone is taken out, I think the stock could see a further sharp up move to 4650 and 4800 levels as well. So I think this is a good turnaround story that we are seeing from a price action perspective. Keep a strict stop loss, but continue holding on. Momentum will pick up after 4500 is crossed.
Okay. All right. So that's the view on BEML, and hopefully that answers your question. Binod is calling us from Chennai. Very good morning, Binod. How can we help you today?
Hey, hi. Yeah, I have Tata Chemicals for quantity of 300 at the price of 892.
Okay.
So I just bought it for fundamental view. Like I see there is a huge value considering the Tata Sons holding.
Yes.
So what is I would just want to know the view of the experts on the fundamental and technical view for the near term for 6 months.
For 6 months, okay. So, but fundamental view is something that you would need to hold for slightly longer than that. Are you comfortable holding more than? Yeah. Okay. So Mr. Chokalingam, Tata Chemicals, a whole array of products, and the question really is whether you think that the chemicals pack and Tata Chemicals specifically has gone past the troubling phase. And if I remember correctly, the Q4 numbers weren't great for Tata Chemicals.
Yeah, you are right. I think valuation is stretched, and the chemical business, commodity business will continue to have more stress, at least for another 2-3 quarters. That's my strong view. So at best, I would give a hold rating on Tata Chemical. I would suggest a buy only if stock falls at least about 10% from here.
That's with regards to where Tata Chem stands. Our next caller, Saif, is calling all the way from Saudi Arabia. Saif, how can we help you?
Yeah, hi, good morning. Wanted to talk about the shares of delivery.
Okay.
I'm holding around 620 shares at the average rate of 371.
Okay.
And I have got very long-term perspective about this share, maybe around 5-10 years,
Okay.
since I firmly believe in this company. My question is it a good time to add more aggressively, or should I add slowly, gradually? This is what my question is.
Okay, I got your question, Saif. I'll take this up with Mr. Toklingam. Mr. Toklingam, first of all, your view on delivery, considering how it did in terms of its FY25 performance, and your take on entire logistics space, because the entire sector has seen significant headwinds. What's the view like?
Yeah, Delivery is a great company, no doubt. The great team with a lot of experience in the logistic came and set up. But it has been quite a great struggle to, show any meaningful growth. And if you look at, the earnings, which is just around 2 rupee for full year of FY25, it is trading at an extraordinary high valuation. So I would prefer to give a premium valuation to stock like, Blue Dot rather than to delivery. So I would prefer, Blue Dot. And also this space I'm quite optimistic because oil price is down about 22% from the 52-week high. I believe that oil price is likely to remain weak, at least around 20% lower than the 1-year high. And that should also be positive. And also the e-commerce, many other things which are happening, structural changes, also positive for this kind of business. So I'm positive on the sector, but I would prefer Blue Dot to delivery.
All right. All right. So let's take the next question. It's from Vijay, who's writing in from Shillong. And Vijay, I must say that I love your name. Orchid Pharma is the name of the counter that Vijay wants to know about. 1,160 is the price that he's bought it at and is looking for a 1-year time frame. Should he add more, hold or sell is the question. The stock is at lower circuit as things stand right now, so selling is not really an option as we speak. But what's the view, Kush, on the charts?
Well, I'm afraid I'll have to give him the bad news. The structure's not looking great. The stock's actually fallen off a cliff, at the start of this year, and ever since has seen, sell at any kind of price. As you rightly said, right now the stock's locked into, a lower circuit, so selling will not be an option. But the broad view on Orchid Pharma would be an exit. There is considerable selling pressure that is ongoing, and as I said, every rise has been taken as an opportunity to exit out of the stock. So Orchid Pharma at the moment is a very clear sell.
Charts looking structurally weak for something like an Orchid Pharma. The next caller, Govind, is calling in from Hyderabad. Govind, a very good morning to you. How can we help you?
Yeah, very good morning, madam. Very good morning, Alex sir, and all of the team.
Good morning.
Sir, actually, I have invested 10 lakhs rupees for Coromandel International.
Okay.
I think the company fundamentals are strong, and this is also agro business, and the monsoon is also correct. What is the technical view, madam? Is it right time to enter or a little bit expenses? Because of this is the 52-week high company actually there. Last 6 months the rally is going on. Is it right time to enter, ma'am? I can invest 10 lakhs, ma'am, for 1 to 2 years.
Okay. Just want to understand, Govind, this 10 lakhs might be a significant part of your portfolio, right?
Correct, ma'am. Already my portfolio size is maybe 60 lakhs actually.
Okay.
This is also new interest to invest actually.
Okay, got your point, Govind. I'll take this up with Kush. Kush, do you think investing 10 lakh rupees out of a 60 lakhs portfolio right now is advisable to invest in something like Coromandel International?
So firstly, I believe that, this is a slightly high concentration of one stock, in the portfolio. So that's something that, he should look at or reconsider. But given that he's already made up his mind, what I would suggest is accumulate in a staggered manner. While yes, I completely agree, and even we've initiated a call on Coromandel a few times, and the targets have been hit more in more cases than not. The medium term and the long term structure for Coromandel remains fantastic. It's just that from a near term perspective, as you're starting to see, there is some cool off from 2500 odd levels, some negative RSI divergences, and the momentum indicators pointing south. So there could be a possibility that the stock could dip to about 2300, maybe even 20 to 50 kind of zones. So my suggestion would be to start accumulating Coromandel in a staggered manner, and within the 20 to 50, 2300 zone is where he could start deploying, and then as the stock rises, he could gradually keep adding on more in an SIP format than anything else. But on the whole, the structure looks really strong for Coromandel. Near-term profit booking cannot be ruled out.
Some profit booking cannot be ruled out, but the structure looks positive is the view coming in on where charts are concerned for the counter. All right, the next question is from Pradeep, who's writing in from Bengaluru. He's also a senior citizen who's investing for the next 3 odd years. He's holding 100 shares of Berger Paints bought at 500 a piece and wants to know if he should hold or book profits right now. Mr. Chokalingam, I'll come to you on this one. In the entire paint space, Berger Paints is the one which is outperformed significantly, even in terms of volumes, pricing, plus gaining in terms of market share as well. What is the outlook like? Should he continue to hold from now?
See, paint industry as a whole is going through a difficult time, as all of us know. The only saving grace is that, as I mentioned earlier, the steep fall in the oil prices, which has helped. If you look at a comparative valuation, yes, Berger Paint has done well, but it is trading at around 54 times the trailing PE. And if you look at the recent deals also in terms of EV to sales, they are whatever the media speculated about the deal which is open in the media, it's around 3 times EV to sales, whereas the Berger Paint is trading at around 5.5 times EV to sales and over 50 PE. I think it is more than priced. I would be a seller of Berger Paints. I would not be able to suggest a buy.
Okay, you would sell right now. All right, so that's a fair call based on the fundamentals. There's quite a bit of pressure, competition coming through in the paints space. Viral is calling us from Mumbai, I believe for the second time, if I'm not mistaken. Hi, good morning,
yes,
Viral.
I did. Hi,
yes.
Good morning.
And if I remember correctly, you did ask about Reliance Infra the last time as well.
Correct, I did, yes.
Yes. Okay, so can you, I don't have that good a memory, Viral, but can you tell me the last time you spoke to us, what was the price that we spoke about?
I think it was 290, 288, something like that.
Yeah, so in the interim, you've made a lot more money. What would you like to know about?
I would like to know now, henceforth, what the company had issues, all that is the past. Now, henceforth, going forward, what with the debt going down, and a lot of things have taken place in the company. So, what do your analysts think about the future of the company?
Okay, so Viral, I'm going to ask Mrs. Chokalingam. I'm not sure if he has coverage, but Mr. Chokalingam, very large quantity of 153,000 shares held by Viral, and if I remember correctly, the argument that he had was that he studied the land bank, he studied the value of the assets, and on the basis of that, he has decided to take an overweight on this, and it has borne dividends for him. In that, the stock has done well for him. He's gained quite considerably. He's sitting on a profit of more than 1 crore. So if you looked at the fundamentals, what would you have to say about this?
Frankly speaking, it is very difficult to make a quick research and give view. This kind of companies needs at least about 4 to 6 hours, which I have not done. So I'm very sorry that I am not able to give any view on the stock.
That's not a problem, sir. And I appreciate your frankness and honesty. But Viral, what I'll do then is I'll try and get you Kush's view on the charts. Kush, he's bought at levels of 244.4. That's his average holding. But he's got 153,500 shares specifically. And he's sitting on a gain of more than 1 crore. What is the advice going forward?
Well, I think he could very well continue holding on to this one. Since the last conversation, from there up until now, also the stock's actually gone up. There isn't, any kind of overheating. In fact, in the last 2 to 3 weeks, the accumulation on this one has been fairly strong. The volumes have crossed the weekly averages of the last 20 odd weeks averages as well. So I think the story seems to be intact. On the way up, it is now coming up to a resistance of 330. Beyond that, you would see a rounding bottom formation breakout, and the stock could further accelerate to about 350 and then to about 365 odd levels. So at the moment, no overheating. In fact, some signs of accumulation. So all in all, and I mean, it's got a few things going for it technically as well. But as I generally do, I would suggest a trailing stop loss near the 295 mark. That's the support. If indeed it does fall to that, not a bad idea to at least take some money home book partial profit.
So that's with regards to where Reliance Infra stands. The next question is from Sanjay Trivedi, who's holding Syncom Formulations at 22 a piece and wants to know as to what should be the next course of action for this particular counter. It's fairly a small company, 2,000 crore market cap, and is a global pharmaceutical company that manufactures healthcare products. Kush, I'll come to you on this one. What are the charts indicating and what are the resistance and support levels that you're seeing?
So the stock's seen a good run up in the last 3 weeks. Some momentum seems to be waning off, on account of profit booking. But as you rightly said, a fairly small stock, not a very active track on this one. What I would suggest is a stop loss near the 19.5 mark, and keep or rather you might want to exit the stock near 24 partially and 26. Those are the levels on the upside where you want to exit. But given the nature of the volatility that the stock has, 19.5 should act as your strict stop loss. So hold a 19.5 stop loss and exit around 24 and 26.
Okay, so that's it with regards to where Syncom stands. The next caller, Dheeraj, is calling in from Hyderabad. Dheeraj, a very good morning to you. How can we help you?
Good morning, ma'am. My query is regarding NetWeb Technologies.
Okay.
I'm holding 87 shares of NetWeb Technologies at 2014.
Okay.
Where I bought these shares today.
Okay.
So, should I hold on to this position or should I shift to something like TCS at current levels?
Okay.
Is my query, ma'am.
Okay, I got your question. I'll take this up with Mr. Chokalingam. Mr. Chokalingam, what's your view for something like a NetWeb Technology, and should he shift to TCS instead?
Network, even after the crash, it is definitely quite stretched in valuation. So I would sell if it improves further, even 5%. But option of shifting to TCS, yes. If investor is a very, very defensive in nature, then TCS is a good buy from defensive perspective. But then the export of IT services are expected to grow only in over 2 to 3 or 4% in dollar term. I don't think large IT companies like TCS is going to create any significant wealth even in the medium to long term. So I would recommend other sectors like M&M in auto or SBI in banks or DLF in real estate, where these three sectors, in my view, give a strong outlook for the growth.
Next caller then. Harish is calling in from Visakhapatnam. Harish, a very good morning to you. How can we help you?
Good morning, madam.
Good morning. Go
I'm
ahead with
having
the query.
300 shares.
Yeah.
300 shares of REC Limited
Okay.
at 495.
Okay.
Can I average at this rate, today's rate, 404?
Okay. Okay, I got your point. Harish, I'll take this up with Kush. Kush, I know you're not a very big fan of averaging out, but what's the view like where REC is concerned?
I think you'll have to prize me for consistency, at least if nothing else, right? So no averaging recommended. The reason being that while the stock is starting to show some positivity, it's rebounded from 365 odd levels. But if you see on the weekly basis, the 20-week falling trendline resistance is acting up. The stock's not been able to cross that, and you're seeing some selling coming around at every rise. So unless and until it crosses the 450 mark, which I know is still some distance away, but that seems to be the near-term resistance for the stock. Unless it crosses that, I think the sideways momentum could continue, and he'd be deploying his capital and blocking it up for some amount of time. So any fresh additions should be considered above the 450 mark. It'll probably distort his buying price from the current levels, as in if he averaged now. But no, I believe averaging on the way up is way better than averaging on the way down. At the moment, the stock seems to be in a consolidative phase. I will give a hold view on this one. with a stop loss near the 380 mark, and any fresh buying or averaging should be considered above the 450 mark.
Okay, hold is the view and average out if the stock moves beyond that 450 mark. All right, with that, it's time to slip into a very short break, but we'll be right back answering more queries on the other side, so do stay tuned.
That's huge. That is a biggie. It's on.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve.
Welcome back. You're watching Ask Profit, a show that gets all your stock related queries answered. For viewers who are just tuning in, you can either call us or WhatsApp us on the numbers that will be flashing on your screen right now. All right, the next question is from Vijay, who's writing in all the way from UK. This question is for you, Mr. Toklingam, particularly. He wants your particular views on Cyient Limited and wants to know if the fundamentals are attractive enough to make an entry right now. Mr. Toklingam, what's the view like?
Yeah, definitely. We have a buy recommendation on Cyient. In fact, Cyient is one of the few stocks in which I have extraordinary conviction. I may be wrong, but I believe that it's a fabulous stock at the current price. I personally do not own. We have not invested in the stock, but we have recommended to our clients. Why I am so confident is that, first of all, the stock is down close to 38% from 52-week high. Of course, that doesn't guarantee the return. But if stock is good, such a steep fall makes the valuation also attractive, because valuation is a function of both price and earnings. The second most important fact is that in terms of comparative valuation, this is the cheapest stock. I also look at, apart from PE, the enterprise value to annual revenues, because a lot of deals which happened from 2014 to 19, they happened around 3.5 times enterprise value to annual IT revenues, and this stock is trading at less than 2 times. In terms of PE multiple also, it is one of the cheapest among the peers. And the third reason which I like is that, at a consolidated level, it has got 3 business verticals. Apart from IT services, it has got an engineering business through Cyient DLM. It also started 100% subsidiary for semiconductor business. So it's quite diversified across technologies, which is very rare to see among many mid-sized IT companies. And because of these reasons, and also considering its balance sheet, I like this stock most. I feel it is one of the most high conviction stocks in our research coverage.
Okay, so buy is the view on Cyient Limited from Mr. Chokalingam. All right, let's shift focus and pull up TVS Supply Chain and see what the stock is doing in trade today. It came out with its earnings and revenue was up 3%, EBITDA up 2%. Margins took a slight hit and net loss came at around 3.9 odd crores. To discuss as to how Q4 has gone by and how and what is the outlook for FY26, we're joined by Ravi Vishwanathan, MD of TVS Supply Chain, and R. Vaidyanathan, Global CFO of TVS Supply Chain, joining us. Welcome to both of you, gentlemen. Mr. Vaidyanathan, I'll take the first question with you. Considering how FY24 has fared, because when I was seeing the trend of your financial, your CAGR growth has been at around 10% where your top line is concerned. How has the performance been like in your opinion? Was it up to your expectations, and how much of an improvement are you expecting in FY26?
Yeah. FY25, we finished with a loss of profit of about 29 crores as compared to the loss of about 9 crores in FY20. That's a significant turnaround in our operations. And if you look at Q4 specifically, we reported a profit of 13 crores as against loss of 15 crores. There's a huge improvement in our profitability in Q4. And we expect this trend to continue. As we said, one of the divisions, which is called Integrated Final Mile, has turned around the operations and we made an operational profit in Q4. So we expect this trend to continue in FY26 as well, and that is very good for us from a long-term perspective. Apart from that, we are also looking at a lot of other options in terms of right sizing and right shoring of operations, taking significant costs out from the business. So this will help in increasing the profitability as we move to FY26.
Okay, I understand. There was a bit of a contraction in the margins. I'm just trying to understand what the implications are for the current financial year as well. Just to give our viewers and your investors also a sense of what to expect. Mr. Vishwanathan, can you take us through why that occurred? What are the pressures that you're facing, and does that ease up in the first quarter?
I think it's again, I just want to stick with the fact that we see very strong growth drivers. We have had 9% growth year on year, 24 to 25. We see a very positive momentum going forward because we have significantly swung in the Q4, and Q4 as we exit, we are exiting with a very strong momentum. We spoke last quarter about a potential large deal that we were going to sign. We are very happy to announce that we did sign that with a very large UK retailer. It's about 1,000 crore over a 3-year period. So, large contracts keep coming in. We have last year signed up with 24 Fortune 500 customers as our new customers. Our Fortune 500 clientele has gone up from 78 to 91. So I think all of those indicate a very strong revenue trajectory. Why we spoke specifically about a lot of the opportunities when it comes to right shoring, right sizing, a lot of things that we have already initiated in Q4. And you would have noticed that we have charged about 5 crores towards redundancy in Q4. We expect that initiative to continue in Q1 and Q2, and we would see the benefit of that approving Q3 onwards. So from a growth story or from a margin expansion position, we are extremely well placed as we exit the year and enter the FY26. And I think we are very confident that as we continuously grow on the PBT trajectory, we will be able to get to a 4% PBT in the near term.
And the point that you made on the big client wins and the new business added in the fourth quarter is well made, sir. Can you give us, therefore, a projection or some indication as to how you see top-line growth based on what you've said? And sure. While you were talking about what your expectation was for the fourth quarter, that did pan out. And so, therefore, can you give us a sense of what's going to happen in the first half in terms of new client addition, new business that you're trying to achieve?
Typically, we get about 10 to 11% of our revenue coming from out of new businesses that we have won, and we see that trajectory only improving based on the orders that we have signed the later part of this year. This particular contract that I spoke about, that will start yielding revenue from the second half of the year, when the program will get beyond its startup phase. So we aim for a double-digit growth in revenue, Alex, and we'll continue on that trajectory. We are very bullish about the fact that we will hit the double-digit revenue growth in FY26 and beyond.
And Mr. Vishwanathan, can you give us a range of that double-digit growth?
I wish I can. The only thing that is constraining this is you're all aware of the headwinds that are potentially with the tariff situation, right? There is huge volatility in the global freight business, which is a very about a 25% component of our revenue mix. We are not able to quite see because the winds are blowing both ways. We saw significant dip in volumes and in pricing in the last quarter, but we see that volatility right now with a surge in volume, but also a mismatch in terms of capacity and containers because there is a moratorium on the tariff and people are rushing towards shipping, I guess, in one of the lanes, specifically China-US lane. So there is a concentration of containers and shipping, I would say, capacity that lane. And we are seeing constraints. We probably may even witness a surge in container price, which has been actually on a steady or decline over the last few quarters. So that probably, precludes me from putting a number on it. But look, I think the key is when I look at the pipeline, when I look at the orders that we have won in the last quarter, we are very confident that we will be double digit, hopefully, upward of the mid-teens. But, I will hold that prediction until I see the wins from the global freight business and the macro, especially on the tariff-based trade policy shifts.
Fair enough. Mr. Vaidyanathan, my next question is to you. You have a diverse customer base, but almost 70% of your revenue comes from industrial, automotive, and tech. Just wanted to get a sense as to how the margins are different in these three segments. And are you planning to increase concentration in any particular segment where margins are higher?
I think integrated supply chain solutions, which is our primary segment, we have a healthy margin. We generate about 9.5-10% there, and our focus will be on integrated supply chain solution segment. The network solution segment, which is the integrated final mile, as I said earlier, become profitable in Q4, and we'll start seeing the profitability in FY26 as a sequential.
Okay. All right. Mr. Vaidyanathan and Mr. Vishwanathan, thank you so much for joining us at NDTV Profit, and all the best for FY26.
Thank you.
All right. With that, let's move on with Ask Profit. Our next question is, the next question is on BEL. Lucky from Ahmedabad is holding around 150 odd shares of BEL, bought at 285. Wants to know if he should partially book profit, and the view is from a longer term perspective. Mr. Oklingam, I'll come to you on this one. What's the outlook like for BEL?
I think it is a very good price to book profits. Valuation company is not there at all. So I would give a strong sell call at the current price.
Do you concur, Kush? And I appreciate, Mr. Choklingam, that you've taken that call, because the run-up that we've seen in these defense stocks has been furious. The index as a whole from the 28th of April going up by nearly 30%. So, Kush, would you concur?
Absolutely. In fact, I would perhaps suggest that, book partial profits. The only reason for that is that, while they are overstretched, as Mr. Chokalingam mentioned, on the valuation front, they are overstretched on the technical parameters as well. It's just that, there is no sign of the momentum abating. So while the momentum is still strong, you might want to perhaps, ride it out. So yes, book 50% right now. But what you could also do is hold the rest of the position with a trailing stop loss near the 375 mark. Even if it dips to that, you'll still exit in a profit. But if there were a further upside to 400 levels or higher, you might get an opportunity to ride that.
All right. So we've got Hariom Karnal from Haryana who's asking with a smiling face. And I appreciate that. Thank you so much for the kind words. Whether he should pick up Vatek Wabag at the current price for a period of 1 to 2 years. Kush, on the charts, what's the view?
Looking fairly strong. There has been a fair degree of consolidation around the 1250, 1300 mark. The stocks actually started to move up. There were multiple resistances near the 1500, 1550 mark. This week it's taken that out on the back of fairly good volumes. I think this momentum is here to continue. I wouldn't be surprised to see the stock head to 1780 odd levels in the coming next few weeks. Once that is taken out, perhaps 1900 also. So a good positional bet. You're seeing a golden crossover of the 50 and the 20 DMA, suggesting that the near-term strength is very much picking up. Positional stop loss for this one comes close to the 200-day moving average at 1500. So yes, looks like a good entry point for VA Tech Wabag from a positional standpoint.
Okay, the next question is from Mani. He wants to know the target price, he or she wants to know the target price of KNR Constructions. Bought 359 odd shares at 220 a piece. Kush, I'll come to you again for this one. What are the charts indicating for KNR Construction?
You know what? It'll not be a bad idea to actually exit it right now. The stock's actually not going anywhere. Any bounce that came about till 235, 240 has been sold into multiple times. And, even when the market is showing any kind of jump, this stock is actually not participating. So since, there is still some bit of profit, I'm assuming, or very close to the buying price, it's perhaps a good time to exit at the moment. So KNR Construction would be an exit from my side.
All right. With that, let's cut across to CI, AGM and Annual Business Summit of 2025.
I now invite Mr. Sanjeev Puri, President CII, to present the memento to Mr. Rajesh Kumar Singh, Defence Secretary, Government of India. I request Mr. Baba Kalyani to present the memento to the Vice Chief of Army Staff. And may I now request Mr. Chandrajit Banerjee to present the memento to Secretary Defence and R&D and Chairman DRDO, please. May I now request the Honourable Minister and all the other dignitaries to please stand up and come forward for a photo opportunity.
Right, that was the CI AGM Annual Business Summit 2025. With that, let's move on and take the next question. Nitish Kapoor is holding 100 odd shares of PFC at 420 a piece and wants a 3-month view on this one. Kush, I'll again come to you. PFC, what are the charts indicating?
Well, he could hold or perhaps buy afresh if he hasn't already, with a stop loss near the 385 mark. The only small concern here is that the stock is going flat for some time now. The momentum indicators are also flat, but the bias is mildly positive. So yes, from a 3-month perspective, with a stop loss around the 385 mark, for targets of 430 and about 445, PFC can be considered for a long trade.
View on Suzlon Energy, if you bought at levels of 63, would you hold on or add more units? This is a question from Shrikant. Kush, what's the view?
No, don't add more. You could very well continue to hold on to this one. Keep a stop loss near the 59 mark. I think the momentum's just starting to pick up. I see the first resistance coming in at the 69 mark. Once that is taken out, I think there are further upsides to be had up until 75. So yes, continue to hold. Keep a stop loss around the 59 mark. Don't add more. because it's coming up close to the resistance zone. So once it takes that out, is perhaps you could add some more for for the last bit of momentum play.
Another company that's buzzing on the back of its earnings is GIC. My colleague Harsh spoke to the company's chairman and MD. Listen into what they had to say about the quarter gone by.
I want to first start off by understanding how Q4 has gone from your lens. What were the takeaways and how is the strategy playing out?
Sure. So I think when you look at Q4 by itself, it does look as if, we did not do as well as we did last year, which is a fact. But the fact remains that, in our kind of business, looking at it quarter to quarter, honestly doesn't work. Simply because you may get a loss or a catastrophe happening in a particular quarter, which did not happen last year, which probably happened in a different quarter last year. Which is why I've always, tried to tell analysts and people with whom I discuss these things that when it comes to insurance and reinsurance companies, you must actually look at us from an annual perspective. So to come back to your question, one, whether the Q4 was better or bad compared to last year, yes, it was definitely worse. But then that was due to two reasons. One, you would realize that there was a catastrophe that happened in Los Angeles in the US, which had wildfires in the first week of Jan. So obviously we had some losses from that. But then we've also provided for it just to ensure that, later on these losses don't develop, which normally in the US market, there's a tendency to happen. So even though the loss figures that we have is close to $38 million today, we've actually provided for $150 million of losses. So I believe going forward, we will get some releases in the year 25-26 from these losses. Second, where we changed was in the life business, where we again increased provisions. The losses haven't gone up, but we have increased the provisions, keeping in mind how these losses will play out in the next few years. Because life is a long-tailed class, it goes on for 25-30 years. So rather than taking a shock in the later years, we have provided very conservatively this year. And looking at how the business pans out in the next 2-3 years, we will decide whether to strengthen it or have releases in the business. But honestly, on an annual basis, I think we are very, very happy with the way the year has gone. Last year, in April, when I had spoken to analysts, I had given them an advisory that after 3 years of consolidation, where we shed our business, loss-making businesses, we have started our growth journey. And I said that we would grow by about 10%. Actually, we have done better. We have grown by about 10.72% for 24-25. More importantly, when investors and analysts wanted to know how we would reduce our combined ratios down closer to 100, I had said that this is not a one-year thing. This is a journey. It will take a few years. And we would strive to bring down our combined ratios by 2% every year for 3 years, and then by 1% for the next 4 or 5 years. And actually, we've done much better. Our combined ratios have come down by 3% this year. Loss ratios have come down by 4%. And if you look at our profit before tax, it's actually at around 8,765 crores, which is a record for GIC in its 53 years of existence. So honestly, the way the business is panning today, I think the glory days for GIC is ahead. I think we should be bettering ourselves year on year going forward.
Right. So I'm going to try to unpack this a little bit. First you spoke about how you've increased provisioning in life insurance. Talk to us about what has changed. What has made you take that step?
See, basically what happens is we look at how the market is behaving, the loss ratios in the market. Especially post-COVID, we have been looking at it very, very carefully to see whether there are any spikes coming in. Today, a lot of life insurance companies also do health. So we need to be careful to understand that whether the business that we have taken on board, whether we have provided for it enough. Because in the insurance and reinsurance industry, provisioning is very important. Especially if you look at something like life or motor third party, for instance. These are all long tail classes. The claims will come and hit you possibly in motor third party, maybe 6-7 years down the line. In health, it could, again, long tailed health, it could be longer. In life, it is, typical policies are 20, 25, 30 years. So you need to ensure that you have provided enough for it today, for the business that you write today, so that 15 years down the line, if there is a loss, you have enough money left to pay for it. You're not paying from the money that you're earning at that point of time. You're paying it from the money that you've actually got for the business that you've written. So that is where on the provisioning side, GIC especially has been very, very careful. Like I told you about the Los Angeles wildfires. If I go purely by the losses that have been advised to me by my business partners in the US, it is currently at about $38 million, and that is completely booked in our system. But then actuaries look at it differently, saying that going forward, so we look at some of the past events that have happened in the US. Has it, has the provisioning gone up or has it come down? When initial figures were, say, 38 million for a similar loss earlier, did it go up to 50? Did it go up to 100? Or did it come down to 20? Because at this point, we have not paid any money out for the Los Angeles wildfires. They are all kind of, the outstanding losses in our books. So I think provisioning is important. And within GIC, we are very, very clear in our mind that our provisioning has to be proper. And we ensure that, these kind of losses don't come back and hit us 2 or 3 years down the line.
So completely taken. In terms of life and motor, I wouldn't expect a reversal, but would you expect a reversal with regard to the Los Angeles number? Because if you've over provided, then likely next year your number will be much better than expected. That's the first part of my question with regard to loss. The second part with regard to loss is life and motor is this going to be the regular run rate now, or have you provided for past periods also and you've upfronted it in this year? What exactly has happened there in terms of quantification?
Yes. So to come back to your point on the other two, the later questions that you brought out on motor and life, I think the kind of shock is done. We've kind of looked at it afresh for all the years that we are writing, and we have taken a call. So these are not really, so in life especially, this is not for the business that we wrote in 24-25. The provisioning is more for the business that we wrote possibly 10 years earlier, where suddenly now we possibly over the last 2-3 years saw that the loss ratio for that particular treaty or for that particular piece of business suddenly went up. It could have been for many reasons, but then we said that, ideally we should be provisioning for it, keeping in mind the higher loss ratios that we have seen in the last 2-3 years, so that going forward, that doesn't affect our profitability anymore. Coming on to the Los Angeles thing, this is my personal view based on, the discussions I've had with some of the business partners that we have in the US, that ideally it should be well within $100 million for our losses. Like I said, we have already provided about $150 million. Whether the release will happen in 25-26 or it will happen in later years will honestly depend on how the claims get paid in the US for the Los Angeles fires this year. If it happens fast, then the releases will be faster. If we find that it is taking a little more time because, surveyors are taking a lot more time to understand the loss and paying it, then obviously we will keep our reserves till the time we are clear in our mind that we don't need to provide for it anymore.
All right, so that was the management of GIC speaking to NDTV Profit and laying out the path going forward. And that brings us to the end of this edition of Ask Profit. Mahima and myself, of course, from both of us and the team that put this show together, thank you so much for watching. Up next is Know Your Company. Do stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The markets move fast,
and so should your portfolio. Expert insights, real-time stock picks.
do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research. Shine. Hello and welcome. You're watching KYC. I'm Harsh Saita. With me today is Varsha Chandani. We're going to try and break down MedPlus Health Services Limited. It's a very strong set of numbers, frankly, in Q4 that MedPlus clocked, right, Varsha? Their margins went up closer to 9% now. And you're seeing good traction, therefore, on profitability. Top line growth also looking fairly healthy, double digit in that sense. And therefore, the stock was doing very, very well in trade through this week. And that's why in focus. But more importantly, what I really want to know about MedPlus Health, and this is where it starts to get fascinating. So it's obviously a health, it's a retail health chain. And what they're doing currently to increase margin is they're doing private label scale up. They're doing their own products, their own labels, and they're trying to scale up that business, which is better margin, right, Varsha? And if that were to continue, you could well see margins inch even higher. Whether that actually happens or not is something I want to ask, and therefore, where should the realistic margin number lie as private label scale up is to happen? So sustainability of this margin number at 9%, or how much more can it go up by? That will obviously aid the return ratios as well, Varsha, because you will see profitability go up. The other piece is with regard to quick commerce. Now, they of course have retail stores. If I could equate MedPlus's business to the business of a noble chemist or of any chemist near your house, they don't just sell medicines and products relating to health. They also sell other products, things like waters, things like chewing gum. And those also kind of add up in terms of their top line as well as margins. But quick commerce is taking that away, and therefore, can they sustain the kind of competition that's coming through quick commerce will really be the question. Yes. The last one is top line growth. What's next? Can they continue to grow at double digit for the foreseeable future? We were just talking, Varsha, 4,700, 4,800 odd stores. They're doing 100 stores a quarter. They are expected to expand their store count by 600, which is a 15% odd growth when you're looking at it over the next year. And therefore, implied 15% growth should come straight through to the business. You would want to see whether they can do even better on the top line.
Actually, on that, Harsh, with respect to MedPlus, it's your focus should be more on EBITDA and bottom line.
Correct.
Considering the increase of private label contribution to their business.
Yes.
So that would be really interesting how they're going to grow their, EBITDA and bottom line for that matter.
Yeah, absolutely. And we will look at the numbers, and that will give us a sense as to how those numbers are taking shape. But first off, with regard to the business itself, let's break this one down. Let's start off with the products. So it's a pharmaceutical and wellness products business that they are in. They are retailing. They are basically a retailer of these products in India. They are the second largest pharmacy retailer in India, which kind of underlines the depths to which they've gone with regard to expansion, as well as their seriousness with regard to the retail business in India. They added 100 stores in this quarter. I did speak about it. They have a total store count of around 4,800 odd stores now. What do they sell? I'll start with medicines, of course, but outside of that, they are also into personal home care, toiletries, baby care, soaps, detergents, sanitizers. They are into a whole host of products, FMCG as well, along with the pharmacy products that they obviously sell as a core pharmacy business that they do. Let's look at so those products coming up on your screen slowly and steadily. But let's look at the sales mix now. And that's where it starts to get interesting. Varsha, you want to take this? You want to explain this in absolute layman terms?
Sure. So let me start with, branded pharma, the typical drugs that you see in any medical. So in Q4 FY24, it was almost 69%, which they've reduced to 63%. Well, there's a reason for that. That branded non-pharma means your FMCG kind of everything, which doesn't include your, drugs or medicines. So that has also decreased. Now over here, private label is the thing which is of interest of every investor. The private label has increased from 8.5% to 13.6%, and that's the reason, you have seen that margin improvement. And that's the reason you have not seen that much of, growth in top line, because this is a low volume and high margin business. Then private others have also increased. So these two are basically the reasons why you're seeing the, EBITDA growth or EBITDA margin growth. And others include just Harsh was saying, your Lay's, your water bottle, and, your chocolates. So that has, I would say it's flat at 3.4%. So this is basically the sales mix that a company has. So interesting part here is private label and private others, which has the contribution has increased and which has led to EBITDA margin expansion.
Yeah, so that's what's driving margins. Let's look at the sales. So we've looked at the sales mix. Let's look at the store level revenue. This has been on a declining trend, Varsha. Why is that so?
So what happened, Harsh, that because as I said, that your store level revenue growth is expected to decrease. And this is going to be at an inflation rate that the management has said. And one of the reasons is because as your store matures, the growth subsides, your sales growth, your SSG growth subsides as your store matures. So this is one of the reasons why you're seeing this, going down, and you'll see this go down as and when the store matures.
Okay, so is that a good sign, Varsha? Is that a bad sign?
I wouldn't say it's a good sign, of course, because
but that's the nature of the business.
Yeah, that's the nature of the business. You can't do anything of that.
Okay, fair point. Now we're talking about store level EBITDA. Now it came off in Q1, but thereafter we've seen it climb steadily towards 11.5, much in line with the way in which we've seen private label grow as well.
And you'll see this kind of range, like 10 to 11% kind of, store level EBITDA margin in future also. So no much surprises here is expected.
So, sorry, if I can just wind it back one slide and, look at the store level revenue growth. This has come off, but now with a pickup in the store count, which is anticipated, this should get better.
Yes, they should get better.
Perfect.
And that's the reason, so see, in Q4 FY24, you had a good store revenue growth. And as and when your the number of stores coming up goes down, you're going to see this kind of trend. But once that store, growth picks up, you're going to see a good amount of store revenue growth, that SSG growth. But overall, for a longer period of time, you can expect like 4 to 5% of growth when it comes to, SSG growth. Yeah.
Perfect. So that's how your store level growth will likely be. We've spoken with Mr. Madhukar Reddy, who's the Managing Director and CEO at MedPlus Health Services, and we'll get you that conversation that we had. But first off, with regard to the KYC metrics, we'll break down the company, try and see what they've done over the last 3 to 4 years to make this more meaningful for you in terms of how the conversation goes. Let's start off with all the metrics that we look at. We'll start off with the income statement, the balance sheet, the cash flow and return ratios. Thereafter, we will look at street cred, street coverage, shareholding and valuation. So we'll look at all of those 8 metrics. We'll see how this one stacks up on each of those, and thereafter go and speak with the management. Varsha, income statement, do you want to go?
Yeah, thank you for that. So let me start with income statement. If you see, the 3-year CAGR when it comes to your revenue is at around 18%, while interesting part is EBITDA. 3-year growth is almost 21% because of the increase in the margin, because of increase of contribution when it comes to private labels, and this will increase in future also. If you see, net profit is at 18% CAGR growth. Now over here, if you see, the interesting point and what I think is, going forward, your EBITDA and bottom line growth will be more than top line growth, because as and when your private label contribution grows, your top line will not increase that much, because private label is a low volume, high margin business, but your bottom line and your EBITDA will increase substantially in next few years. So overall, when it comes to income statement, we would give a thumbs up, because overall it's the financials looks good.
Right. So decentish growth on the top line, your EBITDA margins getting better, scope for it to continue to expand really will be the question, and we will take the management's view with regard to that, and therefore you've seen a decent surge in profitability as well. Clear thumbs up with regard to that one. Let's look at balance sheet therefore. Now when you're looking at the balance sheet, first off we need to keep in mind that the market cap of this company is 11,000 crore. The book value is just about 2,000 crore or maybe 1,800 crore, and therefore the book value to market cap is obviously extremely stretched in that sense. So your price to book value, as one would call it, is quite strong. When you're looking at the borrowing number, all of that borrowing number that you're looking at is lease liabilities. Essentially it's a lease based business, and generally we don't count lease liabilities in your debt. But that borrowing number as of right now, just wanted to reflect, that is completely lease liabilities, and therefore no concern whatsoever with regard to that borrowing number. Let's look at cash balances, which is sitting at 367 crore as we speak. It's a cash generating business, right? The only possible working capital requirement there within that balance sheet will likely be on the inventory count, because as store count climbs, you need more and more inventory to sit on that balance sheet of yours, and that's probably where some of the working capital requirement is going. But outside of that, it's sitting on a healthy cash balance versus the total market cap, and you're seeing zero debt. So clear thumbs up with regard to the balance sheet. Varsha, cash flow?
Yeah, so when it comes to cash flow, good growth from FY23 to 25, of course, because of higher profits. And also, if I were to compare FY24 versus 25, in net cash flow, if you see, there was a negative 137 crore in FY24, while for FY25 it's negative 5 crore. Why this much of change is, one of the reasons is, in FY24 your huge cash was actually deployed in inventory, which dented your cash flow from operations. So in FY24, 196 crore of cash was deployed in inventory, but in 25 around 5 crore only 5 crore was deployed in inventory, and that's the reason you're seeing that spike from negative 137 crore to negative 5 crore. So this is one of the good things when it comes to cash flow from operation, because now your money is not stuck in inventory versus in FY24 where it was stuck. So overall, yes, good show when it comes to cash flow.
So good show on the cash flow. Let's look at return ratios. Therefore, they've been climbing on a consistent basis, given the fact that you have better profitability which is coming through. Why is there better profitability? Because there's margin improvement, but a 10% return ratio is obviously too small. You want to see a better return ratio number when it comes to any business, and therefore asking for more. But because it's on an improving trend, we've given this a neutral. Let's quickly look at shareholding pattern, Varsha.
Yeah, so very interesting thing. So because this is a more kind of consumer-based company where FIIs and DIIs are interested, that's the reason FIIs share has increased from 14.7% to 15.6%. That's a very good sign. Even DIIs has, so there's a little bit of a downside when it comes to DIIs stake from 27.9% to 26%. But overall, I mean, good show when it comes to FIIs, but DIIs stake has been reducing. So we would like to give a neutral kind of rating.
Yeah, that as well as the fact that promoters holding 40%. Generally, we've seen Indian promoters hold far more. And that's why the slightly more cautious rating. The last piece is with regard to number of shareholders, and this is something that stands out. I've not seen too many companies where the number of shareholders remains flat over the last 3 years, and that has been the case with this one. 82,000 shareholders in FY22, 74 in FY23, 75 in FY24, and 83 in FY25. So no real substantial chop and change with regard to number of shareholders, which kind of shows stability as well. Doesn't show too much of over-excitement that the street would generally see with regard to some of the retail businesses. Something again to keep in mind. Very quickly on street cred, I want to mark out that the stock has done ever so well. It's up 38% in the last year, 27% in the last 6 months, 14% in the last maybe year-to-date period or so, and therefore it's clearly been an outperformer. We've given this a thumbs up just given the way in which it's moved, and therefore street cred brushed away. Let's talk about street coverage.
Yeah, so there are 7 analysts who have given, all have given buy call. 0 has given hold call and 0 on sell call. So basically everyone is bullish when it comes to MedPlus, considering the EBITDA margin growth expected and considering the good business model overall, if you see. But the upside potential is only 4.5%, Harsh. So, not good upside left considering the high valuation or premium valuation that the company has been given.
Yeah, absolutely. So, so that's something to look out for, that there's not much upside left. Let's look at the valuations, therefore. Begs the question as to how it's valued. You look at the price to earnings multiple currently sitting at 77 times, trailing 12 months. Even if I look at the 1 year forward, it's 58.5 times with a lot of execution which needs to be done. And then you're looking at FY27, which is at 47 or rather 43 times. So what it's calling for at 43.2 times FY27 is plenty to do with execution to get there, and therefore we're a little bit cautious on this one. As a pure play retail pharma business, you would want this to be valued slightly in a more reasonable fashion, given that some of the other retailers are also available maybe at a slightly lower valuation when it comes to FMCG core. So maybe some more to be desired from a valuation perspective, of course not in the company's hands in terms of stock price action, but that's something that's part of our analysis. But what we'll do is let's shift focus to the management. Before that, let's look at the ratings very, very quickly. In terms of how they stack up: income statement, balance sheet, cash flow, return ratios. That's how it stacks up. Remember, return ratios on increasing trend, just about reached double digit. The only concern here is with regard to valuation. All of the other metrics are okay, and therefore we give this a 5.5 on 8. Let's quickly go across to the management. Varsha earlier spoke to the managing director and CEO, Madhukar Reddy, who talked about the company's growth trajectory going forward. Listen in to a slice of that.
Mr. Reddy, private label, which is the highlighting factor when it comes to MedPlus and which is actually the interesting point. What is the target that you have set, say, for next 3 years? Because you've done a lot of, I would say you've done a big transition in terms of product mix, but how are you thinking when it comes to next 3 years? Because I believe currently it contributes almost roughly 14% to the top line. So where you want to take this private label contribution?
Sure. So let me actually put that in the right perspective. Our private label, we sell on a MRP of 100 rupees. We sell it at around we sell it around 45 to 50 rupees versus a brand which we sell at 80. So when a brand is substituted, you will see a top line dip out there. So the right way to look at it is, match the MRP sales to MRP sales so that you actually get the volume sales out there. If you look at it that way, 20% or 21% by MRP was, contributed from the private label side in the last month of last quarter, actually. So if you look at it, from 0 in June 23, we have now come to almost 20-21%. And this is, mind you, 20% of the 80 which we sell in medicine. So if you look at it, 25% of all the medicines which we sell today come from the MedPlus brand. So pretty steep, growth curve, I would say, on that side. But now that the early adopters have come in and all, I expect that the growth will be slightly slower. We expect that we'll grow only at around 1% every quarter kind of stuff. Q1 could be slightly weaker on that side because I think we've probably taken in some extra sales in Q4 of last year. So 1% every quarter is the number we are guiding towards on the growth of private label. That's one. But that is for the next 6 to 8 quarters. At some point, I believe, as, let us say, more and more customers understand that all the medicines which are made in India are more or less generic, and all you need to do is pick the right manufacturer and get the right price. I think people will start switching towards the generics more and more, and we could actually see, I would say some kind of a tipping point at some point of time. That will be aided by what the government is doing on educating people about generics. What I believe my competition will also, sooner or later come around and basically start selling this stuff. So when everyone starts talking about this along with us over a period of time, I expect that the entire country will, at least this medicines will get completely genericized. So I don't see any, I would say, cap on the amount of sales. But in the near term, I would expect that, we'll probably grow at the rate of around 1% every quarter.
Got that point. Also, on the store expansion, so last year you opened around 305 stores, and if I'm not wrong, this year you're targeting 600 stores for FY26. And I believe you have around, 400 crores of cash, so you won't be requiring any external funds, right? So, how will your margin shape up considering the store additions that you have for, FY26?
So the 600 stores will have a small lag, let's say, on the drag down on the margin, but not very significant because now it is going to be on a base of nearly 4,700 stores. So I don't really expect it to be a huge drag, I would think, but there will be some. As you rightly said, we have the money in the bank. We don't have any debt at all. So we could basically borrow if necessary. But I don't think it'll be necessary given that we are adding only around 600 stores this year. That should not take us more than 170, 180 crores to actually open, and that includes the inventory and all. So cash-wise, we are, good. Growth-wise, we should, come back once our warehouses and all are in position and we start doing things the right way on the back end. And once we align our front-end staff also more towards a top-line growth rather than just only towards a private label growth. And and on setting up the store itself, I think, we're more than capable of doing that. Although we did only 300 stores last year, that is kind of a small, I would say a dip for us. And we were just, kind of going slow to make sure that the back end was all in place for future growth. So yeah, I think we're good on both capability as well as money side. And I don't think that effect on margin will be too big. The drag will be too big, yeah.
Understood. Also, sir, so in last 3 years, if I were to see about your, revenue CAGR, you have grown at like 18% CAGR in last 3 years. Now, I believe that the increase in private label will actually, drag your top line. So just wanted to have your view, what is the target that you have set when it comes to sales growth, for FY26?
So I would say high single digits is what we're thinking at the least, right? I don't think it's going to be less than that. But profit-wise, I think we'll actually become much more profitable as we go forward. So it's not going to be only about, top-line growth for the existing stores. It's also going to be about adding new stores. It's also going to be making each of the stores more profitable for us. So I think, I would be comfortable in saying high single-digit growth on our stores. At least that much.
Got that. So, okay, so not concentrating on the revenue growth, I understand that point, sir. But then what is your estimate when it comes to EBITDA growth and profit growth? Because I believe that because of the increase in the private label, you might grow over, 20-25% of percent. So, am I right on that track?
Pretty possible. Yes, I would think so. Given that private label continues to grow, I think our growth in profit should be higher than the growth in top line.
Got that. Also, you also talked about your same store sales growth, sir. Now, what is the plan when it comes to your same store sales growth? How much are you targeting? Because I believe in the last few quarters you have grown like in 4 to 5% kind of same store sales growth you have seen. So what is the outlook there?
Similar, I would say, given that our focus will continue, while we will, start targeting a top line growth slightly more than what we have done in the last 1 year. I think, the bottom line, though, we'd still be focused on private label. So I would think our growth will probably be around the same number. As I said, the 600 new stores, I said, will grow by around high single digits or slightly, maybe in the low double digits kind of thing for the entire company. But a lot of it will come from existing stores only. I don't expect that the 600 new stores are going to add significantly because they'll be spread, their growth, their opening will be spread right through the year. And they do tend to go slow when they actually start off. So most of the growth, whatever you see, will come from the existing stores. So you could take that as SSG, I would say, for the entire company.
Understood. Now, Mr. Reddy, talking about competition, let's say a competition from quick commerce. You have this sort of trend going wherein, all the medicines are being delivered at home in 2 hours. Now, if you were to start, I believe you have started the services in few of the cities, but if you were to start these services, considering no delivery fees, what is the kind of drag in margins you can expect from this kind of trend going on, and what is the competitive scenario that you are seeing when it comes to quick commerce?
So quick commerce or medicines may be slightly tougher, mainly because the number of SKUs are so large and the SKUs which sell in each zip code completely vary from other zip code and all. So see, there's always going to be a trade-off between fill rate and speed. If you want the full fill rate, you cannot really get it in 10 minutes or 20 minutes. So we will watch the overall situation as it unfolds very carefully and see if the customer preference is for, let us say, a really, really quick delivery, in which case we can easily do it. Given that in each of the cities in which we are present, we have more than 450 odd stores, it is easy for us to convert a portion of them into delivery points for doing the quick commerce delivery. Customers, I believe, if they really want quick commerce delivery, I think they are more than willing to pay for the delivery cost. A lot of them do it right now. So we even today charge 20 rupees per delivery. So we'll probably increase it slightly if the speed has to be increased. But I don't see that as a big lag. If there is any benefit, it'll probably come from, some of the general goods, which we'll also end up selling along with the medicines. And that will be additional sales when we actually do it. So I'm not really too worried about the actual lag, which that kind of operation can entail, but we're still not quite sure if, the trade-off between fill rate and speed is going to be favorable towards speed by the customers. If it is, then we will definitely do that.
All right, Varsha, there was one more question you spoke to him about recall.
Yeah, so I was actually speaking. I actually asked him if he can quantify, the number, because he has not quantified the number. So, but he said that definitely the bottom line will grow much more than top line, much faster than top line, and they're gonna continue the growth trajectory that they've seen in the past, especially when it comes to profits.
Okay, so that's the outlook with regard to MedPlus. Hope you found this helpful. From Varsha, myself, everyone puts the show together. Thanks so much for watching. Stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
welcome to NDTV Profit. You're watching Markets at 12. I'm Hiral Dadia, and the big story for today that we're watching out for is the clean chit that has been given to Madhvi Buch by the Lokpal. But first, let's quickly understand what's happened. 3 complaints were filed against Ms. Madhvi Buch, and this was primarily based on allegations from the second Hindenburg report dated the 10th of August 2024. And these complaints alleged corruption, conflict of interest and quid pro quo dealings connected to her role at SEBI and certain regulated entities, including the Adani Group. Now, all of these have been refuted. What the Lokpal of India says is, further, there is no case for investigation from here on. No undue gain has been seen or corruption proven against ex-SEBI chairman. In fact, the past investments and consultancy incomes were adequately disclosed, legitimate, and outside the scope of corruption statutes. And the report of Hindenburg, a known short seller, was not deemed reliable or sufficient to base corruption case. After that, if you see in terms of where Lokpal of India's final ruling goes, all 3 complaints were dismissed is what they've indicated. The allegations were termed frivolous and politically motivated attempts to sensationalize regulatory matters from here on, and the complainants indirectly reprimanded. Moving from there on, if you see in terms of the complete clean chit, if you have to talk about that, what they've said is no bias or favoritism was found. Apart from that, the Lokpal's order affirms that the allegations of regulatory favoritism involving the Adani Group were completely baseless. Now, if you have to look at the regulatory part of it as well. Now, Hindenburg has been dismissed. They've said it is not credible as a legal evidence from here on. Overall, if you see in terms of the market manipulation, they've clearly said there has been no market manipulation. The record is clean and upheld by the top authorities as well. Overall, if you see in terms of the due process that was highlighted, media and political narratives that did come in, they have been debunked as well, and this is what the Lokpal has come out and said. Overall, the corporate governance also has been upheld, and they've said that SEBI's ethical standards have been affirmed, and this is by reiterating that SEBI's institutional integrity and rejecting conflict of interest charges. The order sends a strong signal that India's capital markets are robustly governed. Moving on, now let's understand in terms of the opposition allegations against Madhvi Buch and alleged links to Adani Group have been fully debunked. And this is basically what Mahua Moitra had actually come out and lodged a complaint with Lokpal against SEBI chief, alleging quid pro quo arrangements which potentially threatens national interest, and this was done back then in September 2024. In fact, she had also earlier demanded that SEBI chairperson should be suspended. All of the above have been refuted by the Lokpal, and this is what is the big story. In fact, let's quickly understand what is in the purview of the Lokpal as well. It is the anti-corruption watchdog for public servants. It is empowered to investigate complaints against ministers, MPs and bureaucrats. So that's what is their purview. Apart from that, if you see how it operates, it does operate independently to uphold integrity in governance and public institutions. And the current chair is Shri Justice Ajay Manikrao Khanvilkar. He is the current chair as well of the Lokpal. So clearly, a big relief for former SEBI chair Madhvi Buch, where she has been given a clean chit by the Lokpal as well. In fact, let's also look at what TMC MP Mahua Moitra's allegation said, that Madhvi Buch as SEBI chairperson had favored Adani Group, and that has been demolished. That's the allegation that has been demolished. And clearly it has failed to recuse herself also, and that has been allegation of Buch failing to rescue herself, I beg your pardon, has also been shattered. So that's the news coming in there. Now let's also welcome in our guest Sriram Subramaniam, MD and founder at InGovern, to tell us more. In fact, Sriram, good afternoon and welcome to the show, and a pleasure to speak to you. My first question coming to you is your first initial comments, because This is something that you have spoken about earlier as well, clearly defending former SEBI chair.
Yeah, I think the allegations did not have substance in the first place. The Hindenburg report pointed out each one of the categories. One is it has to be understood that Madhvi Buch and her husband both are professionals. The Hindenburg report had specific dates also of investments done by Madhvi Buch in some entities in Mauritius, etc., when she lived in Singapore. So all those, in fact, Madhvi Buch and her husband put out a detailed point-to-point rebuttal to each of the allegations by Hindenburg. So there didn't seem to be any substance because the investments done by Madhvi Buch at that time was about 10 years old, or in 2017-18, when she would not have even known that she was in contention for a role at SEBI, and let alone a role as subsequently chairperson at SEBI. So it is, and Madhvi Buch, and even the Hindenburg report says that the investment was wound down in 2018 or immediately after Madhvi Buch joined SEBI. So from that perspective, the amounts also were fairly insignificant. The Hindenburg report points out that the investment was about $500,000 or about 4 crores. So all those amounts were frivolous, or for a person of a stature or experience of Madhvi Buch and her husband who are professionals, I would think the amounts invested were inconsequential. The timing was completely off because they had invested as professionals in their professional careers much before she joined SEBI, and so those were the cases. On the other hand, allegations that her husband favored REITs, Brookfield, because he was an advisor here. The REIT changes in REIT regulations that came out was a demand by everyone in the marketplace. I mean, including other market participants, including bankers, including all investors, etc. So there is no specific allegation or specific this one that points out to the fact that this one changes happened due to the nature and favored one particular market participant. And more importantly, the Hindenburg report never even talked about any undue gains for Madhvi Buch or her husband. So there was no gain attributed at all by Madhvi Buch. There were just assumptions and linkages made to Adani Group where absolutely there was no direct specifics, no specifics was mentioned in the Hindenburg, or no gains were attributed at all, even by them. So from that perspective, it was fairly obvious that the Hindenburg report was at best a witch hunt or an allegation against the SEBI chairperson at that time.
Mr. Subramaniam, good afternoon. Thanks so much for joining in. It's Puneet this side. And you made some very important and fair points. I just wanted to ask you on this, that now that this clarification and this big relief has now come in, does that essentially does this mean that this is the end of it? That now that everything is out in the open, do you see that this is the final nail in the head?
Yeah, I mean, as far as allegations against Madhvi Buch goes, definitely yes. Could SEBI again tighten some more norms? Probably yes. In fact, SEBI has floated a discussion paper, and the new chairperson has talked about some changes which will come up for whole-time members as well as the chairperson to disclose their holdings ahead, probably in the public domain, their assets in the public domain. If they do that, then obviously that process will be much more robust and prevent any allegations in future by anybody for senior executive at SEBI. In fact, another point which I had made is that even other regulators, be it RBI, be it IRDA, etc., don't have these statutes where assets of these people who are appointed or at senior levels are disclosed at all. So from that perspective, I think there should be much more transparency for these regulators, because they can be subject to allegations I mean, the senior executives can be subject to allegations in future too, because they may be favoring any regulations, may be favoring any specific business group, or they could be seen as so changes in regulations could be seen as favoring any business group.
Sriram, another aspect I want to ask you is, in terms of the order that actually indirectly acknowledges that the Adani Group was being targeted through politically motivated complaints against a regulator, does this mean that, in terms of corporate India, they do become a collateral damage in a scenario like this? And I mean, and then to maneuver over this from an investor perspective becomes really difficult. How do you deal with that?
No, definitely the business group in question here, the Adani Group, was in the political storm right from the first Hindenburg report of January 2023. So from that perspective, it took almost 1.5 to 2 years. They continued, the opposition parties and everybody piled on to the Hindenburg report, and then tried to sort of even include the SEBI chairperson in those allegations. But it was examined by the Supreme Court Special Committee. So there were other factors which were there. Investors like GQG sort of put out their support in favor of the Adani Group by buying shares, etc. So investors obviously know that this is a one-off case, that there is always going to be political issues around any, I would say, large business group or this one. This is a global thing, not just necessarily in India. Investors are more worried about other structural factors in India or company-specific matters than this. Is the integrity of the Indian markets compromised? Definitely not. Does the allegations on Madhvi Buch as the SEBI chairperson so compelling that investors will lose faith? No. The amounts talked about are fairly insignificant for a person of the stature. If anything, the corruption or anything of that sort, a person of that position or role could actually, if there is intent, ill intent, malintent, it could be in multiples of hundreds of crores,
Right.
not just a few lakhs or crores.
Right. And Sriram, my last question coming to you by reiterating SEBI's institutional integrity and rejecting the conflict of interest charges. Do you think this actually sends out a really strong signal that the Indian capital markets are robustly governed? Does this show strength?
Yes, but at the end of the day, this is also just a test case, you can say. I mean, there will be moments even in future where the robustness of the institutional mechanisms will be tested time and again, be it in fraud cases, be it conflicts of interest, be it individual integrity, etc., etc. So it's not that everything will be hunky-dory in future, right? I mean, there will be moments where all these elements will be tested for sure.
Right. And my last question, Sriram, coming to you is the opposition allegations that were made against Buch. And, we spoke about the linkage already. What happens to such cases? Because it was TMC MP Mahua Moitra's allegation that, Buch had favored Adani Group, and that has been completely demolished, right? And Moitra's allegation of Buch has, failing to recuse herself has also been shattered. Any comments on that front?
No, I think the opposition parties obviously have a forum to air their allegations, and it is for then the regulatory authorities, whoever the government appoints or whoever is doing the investigations, to come out with whether the allegations are true or false, and that is what has happened in this case. So I think obviously everybody reads into what is the essence of the allegations, how deep or this one it is, not just Mahua Moitra's, subsequently Congress government under Pawan Khera's press conferences, etc., also aired out a few things. So it's, I think, come to think of it, it's not just SEBI, but any other cases also. People read into, investors will read into what is fluff and what is actual substance.
Absolutely, very rightly put out, Sriram. Thank you so much for joining us on the show at NDTV Profit and putting out your views as well. So that's with regards to the conversation we are having on the clean chit that has been given to ex-chairperson at SEBI. And clearly, if you see in terms of Madhvi Buch as well, that clean chit does mean a lot of things from a markets perspective, corporate governance perspective, and the kind of collateral damage, Puneet, it does to corporate India as well on the back of wrong allegations.
Well, definitely. And, we've been on top of the story since yesterday, and so have you been. So thanks so much for bringing us all those details. Let's first look at how the markets are doing, because, we've seen the benchmarks being slightly under pressure this week. Let's pull up the Nifty, largely trading down about 18 points, but it's off the day's high of about 24,889, so definitely about 160 points off the day's high. Let's look at the sectoral heat map as well, because we've seen indexes like the auto as well as the Nifty IT being slightly under pressure, and we've seen that today as well. At least the IT has now reversed its losses from yesterday, now in the green of by 0.6%. The PSU Bank as well as the Nifty Finance as well as the Nifty Bank. So the financial index is largely leading the losses. And since the morning, we had seen pressure on the Nifty FMCG index. That is continuing as well. Let's look at the mid cap and the small cap index as well, because yesterday we did say that outperformance to the benchmark. Today as well, while not materially, it's still in the green, and that's a huge positive sign for both the mid cap and the small cap as well, up 0.32% for the small cap 250. Let's also look at the BSE 500, because we've been speaking about this, that a lot of individual stocks are moving on the back of earnings as well as news flow. MMTC is definitely one huge earnings growth reported in this particular quarter. The results did come yesterday, and really strong results that came in. Cummins as well in the green, and while the results were largely okay, I think it's the commentary from the con call that's come in. It happened today at 10 a.m. where we are seeing that positive growth, while on the other side, some selling seen in Polyplex, some more in Suven Pharma, as well as some of the key ones that are down in trade today because of that. But let's look at also one other interesting stories, as which are the companies that have actually enriched their shareholders with dividends in quarter 4. My colleague Hira is still with us, bringing us some key details on this. Hira.
Thank you. Clearly, FI dividend yield stocks, and an interesting top 5 list that the research team, specifically Chinmay, have prepared on this one as well. But let's understand first, what is a dividend yield? Clearly, a financial ratio that shares actually or shows how much money a company pays its shareholders as well in the form of dividends per share, and this is in comparison to the stock price performance. So that's what a dividend yield is, what it means. Now let's understand companies which have reported more than 5% dividend yield in FY25. In total, 15 companies, out of which 4 are large caps, 3 mid caps, and 8 small cap companies. So that's what that list looks like. Now let's understand the top 5 of them. Now Vedanta, a dividend yield of 9.71%. If you see in terms of the total dividend, 43.5 is what they announced. Second on the list is MSTC, 8.3%, 45 rupees again is what you're looking at. DB Corp, Chennai Petro, All Cargo, all in that range of 7 to 8%. And the dividend amount obviously will be as per what the share price is as well. Now, let's understand individual company wise. Let's pick up a Vedanta first. Now, this leads the large cap stocks in terms of the highest dividend yield. Secondly, if you talk about their FY25 dividend as well, what is that reflecting? A strong cash flow generation. They had a total payout of around 13,474 odd crores. And the strong Q4 performance supports this high dividend policy as well in terms of Vedanta. Now, if you see in terms of number 2, you have MSTC. They've actually declared 6 dividends since 2023. If you talk about their 5-year average payout ratio, that is approximately 38%. It's growing, but the dividend policy itself is absolutely volatile for this company. Now, what is the issue is they lack sufficient free cash flow to cover the dividends, and that's the reason why you're seeing that kind of volatility. The FY25 payout ratio has been extremely high for this company, which is indicating lack of sufficient free cash flow, and that is what is raising concerns with regards to sustainability. Moving on, if you see in terms of number 3, you have a DB Corp. Now, the company has declared 6 dividends since again 2023. And it's the strong cash flow that is actually supporting the dividend payout for them. And this is in spite of having a very conservative dividend policy. If you talk about their operational performance as well in the last couple of quarters, that has supported their dividend payout. Though if you see this time, your top line and bottom line was weak, but your payout ratio is indicating some bit of sustainability. Moving on number 4, you have a Chennai Petro. Now the company again, 4 of the last 5 years is where the company has declared a dividend. The track record in terms of dividends for this company is extremely strong, but it is volatile. Now, why the volatility? That is because of the cyclicality that you're seeing in terms of the business, and that is what is getting reflected as well. If you talk about their payout, that has been, it's a low ratio. That is what is giving you confidence that there could be some bit of sustenance on that front. Though your declining profits and the margin volatility that you see from the oil business, that is what could probably pose some bit of a risk in a Chennai Petro. And very lastly, if you see in terms of all cargo logistics, that's on number 5. They have declared dividend 25 times since 2006. In fact, FY24 was a year where they did not see any dividends, and that was mainly on the back of the restructuring that happened at the company. Their FY25 payout ratio has been low, which is again indicating sustainability, unlike what we are seeing with regards to Chennai Petro and Vedanta. Low profits, no FY24 dividend, that is probably raising some bit of concern with regards to consistency. And the lower yield and earnings volatility probably makes it less attractive as well as a stock. So those are the top 5, but let's quickly just take you through the historical dividend yield trends as well. Vedanta from a 4.15, it's varied, it's gone up to almost 29.15 and again come down to single digits in FY25. Apart from that, if you see in terms of the other names, MSTC, no dividend in FY21, but it's been a volatile ride. It's the highest in FY25 if you have to see in the last 4 to 5 years. If you have to look at a DB Corp as well, again, nothing in FY21, highest in terms of FY25. Chennai Petro, again, if you have to see, again, highest at 8% in terms of FY25, and all cargo as well is absolutely interesting with not the lowest, but the second highest. FY21 was around 8.3%, FY25 has come in at 7%. Now, do all of these stocks make it to the analyst list is the key. Vedanta, a 14.5% return potential from the current market price is what it has, and 11 buy calls. So that again is there. MSTC has no coverage. DB Corp, it's just 3 analysts covering it, but out of the 3, 2 have a buy call, so it's a 9.5%, so it's slightly skewed. Chennai Petro, 2 have a sell call out of the 3, 5% upside, so again a skewed number. And if you talk about all cargo as well, 3 analysts are covering it, but 2 have a buy call with a 28% upside. So it's mainly Vedanta out of the 5, which is really a well-covered stock. A return potential of 14.5% is what you're seeing. The others as well do see some bit of an upside, so probably whether a dividend play you want to get into or not, this will tell you the story.
Well, thanks for that, Hiral, getting us the detailed view of dividend yield stocks as well as what's the return potential from analysts. But now let's quickly take a look at a slew of stocks which are in focus on the back of strong earnings. My colleague Varsha joins in with the list. Varsha.
Yeah, thank you so much for that. So let me start with Deepak Nitrite. You know, on the face, the numbers look good. Now, but if you see revenue and EBITDA beat estimates due to the incentive received to the company. So government incentive income for the companies in this quarter stand at around 161 crore. Excluding this, if you see EBITDA is 25%, which is below estimates. Operating performance though has recovered sequentially in Q4. Demand for dyes and pigments have remained resilient, and company continues to maintain strong market share. Well, there has been a pricing pressure persistent in agrochemical industries or agrochemical intermediates, and but despite miss on the EBITDA, why the stock is still up? Because today is the last trading day of company in F&O, and position might be getting squared off. This may be one of the reason why you're seeing uptick in the stock. Next on the list is Insecticides India. Good numbers. Now the premiumization has led to the profit growth. EBITDA margin expansion that you're seeing is led by value-added products. Now the whole story when it comes to Insecticide India is, diversification, or rather moving towards value-added products, which has given strong margins to the company. So overall, if I were to talk about 4 numbers, revenue was up 32%. EBITDA margin was at 8% versus 3.2% last year, while net profit was up almost 85%.
Well, thank you for that, Barsha, but that's all the time we have on this edition of Markets at 12. Stay tuned to NDTV Profit for more.
That's huge. That is a biggie. It's out of there.
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask.
Hello and welcome to Profit Buzzers. This is Hiral Dadia. Let's quickly take a look at how markets are panning at this hour. An interesting day of trade, pretty flattish moves is what you're seeing. Nifty 50 as well, hovering around that 24,750 mark. I think 25,000 is that key resistance that everyone is watching out for. It is that psychological rounding off number. The moment that is crossed, there could probably be some bit of a momentum that we could pick in as well. Let's quickly look at Bank Nifty, and apart from that, let's look at the sectoral indices post that. There you go, the pressure building in terms of Bank Nifty, where you're seeing cuts of around 0.4% coming in there. If we can just have the sectoral heat map, real estate is interesting, 0.7% higher. IT is seeing some smart moves, pharma trading in the positive as well. Metal probably is regaining its momentum, and that's what it is looking like so far. Auto is also up in trade as we speak. But what's losing is the PSU Bank Index, which is down 0.7%. FMCG is also continuing to be under pressure. Bank Nifty we already spoke about. And apart from that, the Consumer Durables Index is pretty much on the borderline. Let's quickly look at the individual components in terms of contributors to Nifty 50 to understand what is it that is pulling Nifty lower and what is it that's keeping Nifty afloat. Infosys, Sun Pharma, Trent and Zomato, these are the ones which are trying to be in the positive, but it's the heavyweights, HDFC Bank, ICICI Bank, Kotak Mahindra Bank and ITC. Banking and ITC is what is trying to keep Nifty under check as well. If we can also have the Bank Nifty components to understand the similar trend in terms of contributors. IndusInd, interestingly, I think it seems that the overhang, the cleanup is something that the street was watching out for, and that is what is keeping IndusInd Bank afloat. 1.2% up move on that one. Axis Bank in the positive, but apart from that, all of them, all of the others are trading under pressure. Broader markets, let's quickly pull up that one on the screens as well. You have the mid cap and the small cap index, which are slightly outperforming the benchmark indices in trade. If you can have the small cap index as well, as if we can just pull that one, there you go, 0.4% higher. And in terms of individual stocks, you have MMTC, 12 to 13% up move. Wellspun Corp again reacting to numbers. Cummins India reacting to numbers. KIOCL, which is trading in the positive. Jyoti Structures trading under pressure. Astro Micro is now seeing some bit of profit booking, Puneet. So that's the market structure that we are looking at right now.
Well, definitely. And another one company that I would just want to pull up is something like a Suprajit Engineering. Let's see what's that doing in trade, because the company came out with its Q4 earnings. We've also now joined with the management with Ajit Kumar Rai, who's the CMD of Suprajit Group. Mr. Rai, good afternoon and thanks so much for joining in. It's Puneet this side. Before I get into the quarterly numbers, I just wanted to start off first with SCS specifically, because that's been one of the key news flow items for Suprajit. And also in terms of the company's presentation, I just want to say a very detailed one. So thanks so much for that as well. For SCS specifically, you reported the FY25 revenue as well as the EBITDA loss. Revenue of about 170 crores and about a 49 crore loss in terms of EBITDA. But what's the current progress that has happened for SCS in this particular quarter? Because you were going to move a lot in the Hungary warehouse. The Moroccan operations were expected to be stabilized. Any kind of update that you can give both of what's happened in phase 1 as well as phase 2 for Canada and others? Has there been any delay in terms of execution for that aspect as well?
Good afternoon and thank you for having me on your channel. Regarding SCS, let me give a little larger background to you. SCS assets have been purchased from insolvency. So that means they have been losing significant money and that's why they went insolvent. But we have found that the assets in terms of their manufacturing plant in Morocco and China and some of the management team, we found that they have a very high value as far as our global strategy is concerned. That is the reason we made the acquisition. So you are right, for the first 9 months of the year, there has been that kind of a numbers that you just mentioned, which is very correct. But after we have taken over, it has happened in 2 tranches. One is the European side and one is the China-Canada side. The European side was concluded. So we have, in the process, are now operating out of Morocco as far as the manufacturing is concerned. So the significant amount of losses were happening in the European part of it, whereas the China-Canada part is a profitable business. So this part of the business has now been restructured or in the process of being restructured. We're in the final phase where we moved all the manufacturing to Morocco. We reduced the number of people in Mexico. We are shutting down Poland, which is the earlier manufacturing location. And we have moved all the warehousing to very close to our Seofolk plant, which is an existing facility, so that the whole these assets undergo a major restructuring. The reasoning for those losses is exclusively because of that losses of operations of the past and also this restructuring. Now, coming to the first quarter and Q2 onwards, we have our excellence team sitting in Morocco as we speak, and the operations are slowly and steadily coming under control. The shift of the warehouse is almost completed, another month to go. And Poland is basically shut down, but there are some formalities to be done. And Germany has been also scaled down. So going forward, in the next couple of quarters, you will see a distinct change in the numbers in terms of the performance. That is number one. Number two, in terms of the SCS China and Canada is concerned, I think there has been certain outstanding issues to be resolved by the seller. I think it's all now coming to a final stage. We expect to close this deal in the next, week or two, even earlier maybe. So with that, which is the profitable part, when you look together a couple of quarters down the line, I think things will look much different. So that is the background about the SCS.
Just a follow-up also on this in terms of FY26. Are you expecting SCS to be profitable on the EBITDA side for the full year of FY26? And also in the near term, do you see that cost will be inching up again in the next quarter as well?
I think a couple of quarters of European arms will continue to make a couple of quarters of losses because we have now come out from the major part of the restructuring, but still there is something left. So it will be there. What we have sort of given a guidance is that by Q4 of this year, on SCS as a single entity would be a bit accretive. I think that's what we are aiming at, which we are expecting to be happening as we go forward in this year.
Got that, Mr. Rai. And I also want to, let me bring the conversation back to the existing business now. The SCD, which is one of the major verticals, has been doing very well as well in this particular quarter. But you also included in the presentation a few new products, the braking as well as brake release. Now, I know you used to do cables for braking, and now you've gone ahead a step and now offering braking as a whole solution. So all these new verticals, the digital cluster sensors as well as actuation systems, which segment are you reporting this as? Is this in the electronic division or is this coming, some of those products are coming in SCDs? If you can give a clarification on that. And have you already started getting orders for the complete braking system solutions as well?
In terms of the reporting, I think the braking products being still not significant in size, it's a recently initiation of our company. It is being reported within the domestic cable division. Whereas that actuation part of it, some of it comes under the Suprajit Controls division, some of it comes from Suprajit Electronics division. It depends upon where it is made. So right now they have been doing it. Right now we have a cable division, a lamps division, and the electronics division. I think the braking division will be hived off as a separate division in terms of financial reporting, maybe next year, not this year, because it's still in the process of scaling up. That is number one. What we are currently offering to customers, the vision of the company is to provide complete braking solutions to, two-wheeler or EV customers as a complete product, which very few people do in India or in the world. So in that direction, we have the cables, we have gone into levers, we have gone to CBS, we are able to offer, the brake pads and the brake shoes. And we are also, as you know, signed a, licensing agreement and technical collaboration with the Blue Brake of Italy, who has a very good ABS under development. So the idea is to provide the total solution, but at the moment, we have taken that journey and it's in the initial stages.
Mr. Rai, good afternoon. This is Hiral on this side. Two quick questions. One is in terms of the significant decline that we've seen in terms of profitability, and that's happened in the second quarter and in the fourth quarter as well. Clearly, what comes out of it is the challenge in terms of margin management as well as the integration of the new businesses. Sometimes when new businesses do come in, you see that operational pressure that comes in, which eases out over time. If that is going to be the situation for Suprajit as well, what is your outlook looking like in terms of 26 and 27? And do you expect profitability to return to the levels that you've seen earlier? And two, in terms of margins as well, where do you see it stabilizing?
We have sort of said, you are right in terms of the profitability coming down from the Q2. It is again simply because of because of the SCS acquisition, which, as I said earlier, explained why those losses are. That has been sitting on top of it. That's why the overall, when you look at the consolidated basis, including SCS, the profitability appears to be lower, which is correct. But if you look at the individual division, whether it's controls division or whether it's the braking of our domestic cable division or electronics or Phoenix lamps division, on those divisions, ex SCS, they have done much better than the previous years. So in terms of the overall margins, we have given a projection that we will do 5 to 10% better than the industry, I think, which is what we are in terms of the top line. And we have given a guidance that our EBITDA margins on an operational basis, without, of course, SCS, for the year will be between 12 to 14. That has been our guidance even before we acquired SCS. That continues without SCS. But with the SCS, once we become, EBITDA accretive in Q4 of this year, from next year, even with that in the basket, I think we should be hitting those numbers for the next financial year.
Mr. Rai, clearly high margin products, the kind of EV exposure that you're sitting on, the partnerships that you've spoken about with Blue Brake and Shuo Spring, do you think these are the levers that will position you for a long-term growth? And your focus is going to be the two-wheeler and the EV market, is that a pivot?
See, if you look at our overall business, I think we have, again, if you segregate it out, the automotive part of the business is about 37-38%. Two-wheelers is about 28-29%. Non-automotive is about, I think, 15-16%. And aftermarket is about 17-18%. That is our basket. Within that basket, we have got multiple levers to grow our business. Blue Brake is bringing a new technology for a part of our overall braking strategy. It is a niche, pitching in for making our entire product range complete. Similarly, Chuo Springs, I think the idea of Chuo Springs is to get into a couple of these leading Indian, Japanese OEMs who we do not have much of a direct business. So that through this JV, we are hoping to fill that gap. So they are all actually, in a sense, niche filling areas, but the core growth will happen in our businesses, which is already established. Our cable divisions will do extremely well, whether it is in EV space or otherwise. The actuation is taking traction. We are doing a very good business in electronics division, which will continue to grow. And globally, in this consolidation of supplier base initiative of customers, we expect to get we already have got significant new contracts, but that trend also will continue to grow with our ability to supply onshore to customers, near to shore to customers, as well as offer them low-cost production out of India or China. So that is our real story for going forward in terms of growth and profitability.
Gautam, Mr. Ryan, just one follow-up question on SCS. You did mention it a little earlier as well. In terms of this acquisition, do you feel that because the company was in liquidation, there was a lot of function that you had to do post acquiring it? Was that something that you had already planned on doing once acquisition? Was that expected, or do you feel that the acquisition has been a little bigger to chew than what was expected for you specifically? And also in FY26, what is the kind of revenue that we can expect? Because I'm sure that you must have started getting a few orders, at least, of the conversation going for SCS as well. So for FY25, you mentioned 170 crores in terms of revenue. Can that go somewhere between 250 to 300 crores in FY26?
In terms of the acquisition, I think we knew it very well that it is an insolvent company. So we understand the requirements or the initiative that we need to do to manage a insolvent company. So it was nothing new. It was well known, and we also knew that we got it for a very good price, and then we had to put some more money in to make sure that operationally and from the working capital we need to rejig the entire operation. So for us, cable is our core business, and we are the top 2 in the world in terms of cables, and we understand that business very well. So I don't think there is any concerns at the time of acquisition, nor there is any concerns at this moment. In terms of the size of the business, I think SCS is supplying mostly to Europe from Morocco and to US from China. The underlying markets are, as considering various geopolitical and other issues, are not really growing. But having said that, I think we have got a we are expected to do about a 40 million kind of a business this year, which, from what the number you said, it would be a much bigger number than what you mentioned.
Right. So, Mr. Rai, quick one. In terms of the tariffs as well, our read is that majority have been transferred to customers. But would you see any impact in terms of a lag effect in the first or the second quarter of FY26? That's number one. And the clear understanding is that any tariffs that come in will be charged to the customers' accounts from here on.
Yes. See, tariff is a very fluid situation, and nobody is able to make out what would be tonight's tweet or what is the effect of it tomorrow morning in the business. So, unfortunately, we are not able to understand what would be a steady state tariff. Once we'll actually know better what is going to be the effect on the businesses. Having said that, we have approached all the customers. We have said that this is it. We will not be able to absorb this. So, whatever is on the pipeline, which has gone before, we are okay. For the rest of it, customer will have to pay.
So, anything that comes in, customers will have to pay. And what about the restructuring in North America? I think it's scheduled for FY26. So, what's the kind of balance sheet or P&L impact that it could have?
We have not taken the final call on that. So in terms of that, because we have 3 manufacturing facilities out of North America. We have in Wichita, in Kansas, ORS, as well as in Matamoros. We are currently in discussion mode as to what is the best way so that we can restructure better, be more efficient and productive, and at the same time offer better value to customers. Once we take the decision, we'll see what would be the cost. All I am saying is that this all will be part of an on-structuring cost. It is nothing earth-shattering in terms of numbers. So, those costs will be absorbed as and when it happens.
Right. So I think lots to watch out for as well. Thank you, Mr. Rai, so much for joining us on the show.
Thank you.
And sharing your views as well. So that's the management of Suprajit Engineering. If we can just quickly pull up the stock on the screens and see what the counter is doing in trade. It has recovered from the day's lows of 413, but still trading with cuts of almost 1.3% as we speak. But another stock that is in focus is a Cummins India. Let's quickly pull up that counter on the screens at the day's highest levels with gains of 7.2% coming in there. Firstly, I'm joined by Anushi, my colleague, to decode this for us. Anushi, what has worked for a Cummins India? If you could set that context for us and the viewers.
Right. So firstly, what we are seeing is while revenue growth of around 6% was on a side of a miss that we are looking at, the margins in particular, in which we are looking at a beat which is there. Now do note that last year there were some one-offs which led to this kind of which led to the beat in the estimates that have taken place. But margins came in better than expected, and this is due to the gross margins as well. Net profit, if we see, they were down about 7%. Now, in fact, we just were listening to the conference call and where the management expects a double-digit revenue growth in FY26. What remains interesting to watch out for is how the power gen segment is expected to continue. So, to talk to us more about these developments and what's the outlook forward for FY26 and how the year has panned out, we're joined in by Shweta Arya, the Managing Director at Cummins India. First of all, welcome Shweta to the show. My first question to you is on the fourth quarter performance of the company. Now, EBITDA and the margins were clearly a beat this quarter. There were some one-offs that had taken place last year. Want to get your sense on overall the margin picture that is expected to continue in FY26, and where can we see the revenue number heading towards? Because if we see the fourth quarter, revenue was a slight miss on in this quarter.
Thank you for the question. So from a full year perspective going forward, we do see, and if I will draw your attention first even to the last year, that overall our margin performance for the last year has improved. So as you rightly said, there were some one-offs. And from an overall demand perspective, for our power gen business, for our industrial business, for our aftermarket business, we continue to see domestic demand in the market. Exports have performed well for us in the last year, and we continue our efforts in the direction to grow the exports. So from an overall financial year perspective going forward, we are holding on to double-digit guidance from a revenue growth perspective.
Right. Shweta, this double-digit revenue growth guidance that we are looking at, can you give us a more detailed outlook in terms of where this double-digit revenue growth is, from which areas are we seeing more of this growth coming from? And are we seeing a mid-teen to a late teen kind of a growth, if you can emphasize more on that point as well?
So let me first go to the domestic business. From a domestic business perspective, power generation business across different segments is showing demand. So be it the data centers, infrastructure related segments, residential realty, commercial reality. So we are seeing demand, broad-based demand in the power generation segment, domestic business. We are also seeing good acceptance of our CPCB 4 Plus products and customers seeing the value of the product. From an industrial business perspective, rail is showing good demand, and construction business is holding on to demand that we saw in the last few quarters. Aftermarket business has done well in the last year and continues to grow. Our service contracts and rebuilding the engines in the market, we are seeing some good orders come in, and all of those will contribute to the growth in the next financial year. And then exports, like I said, we are continuing our efforts to grow the exports. You have seen exports growing in the last few quarters. Definitely, there is uncertainty from an exports perspective on how the trade deals will work out, how tariffs will settle in. So that's what I can say from an export perspective. With domestic business, we are seeing demand coming from power generation, from some segments in the industrial business and our aftermarket business.
Now you've talked about the power gen segment. Like last year, there was a pre-buying effect which took place, because of which we are seeing this dip in terms of where the revenue is concerned. Now, going forward in FY26, just want to understand your outlook in terms of where the power gen segment is, considering these new emission norms which are there. What's the kind of volume picture that we are building up going forward in the next few quarters?
So as of today, as we speak, CPCB 4 Plus volumes have still not caught up completely to the CPCB 2 volumes that we had seen before the emission changes. Given how our economy is growing, our country's GDP is still predicted to grow at 6.5%. Our government's spending on infrastructure related segments continuing. And our business in the power gen segment is quite related to that economic activity in the country and government expenditure. So from that perspective, we believe that power gen business will continue to see demand.
And what's the kind of pricing environment are we looking at in terms of where the CPCB 4 Plus emission norms are concerned? Because there has been increase in competition as well. So just want to understand the dynamics in terms of where the pricing is concerned.
So pricing, definitely competitive intensity in the last quarter did increase, and pricing, we believe, will take another quarter or two to settle down. And we have been able to hold on to our pricing till now. But like I said, competitive intensity has increased, and we will be watching how this plays out in the next few quarters. It will take a quarter or two at least to settle down.
1 to 2 quarters is what we are looking at. Sharon, just on that note, I want to get an overall sense of the order book which is there. If you can quantify, what is the current order book that we are looking at, and what are the kind of inflows that we saw in FY25?
So going forward, we do see a healthy order board in power gen and in industrial business. Industrial business, as you will appreciate, is tender-based business. So the order book keeps getting built through the year. What has already been built, we see a healthy order board. Aftermarket also continues to build throughout the year. So we do see velocity in terms of inquiries and orders, not completely across all industrial business segments. We do see it in power generation, we do see it in railways and construction business holding its order board.
Good afternoon, this is Hiral on this side. If you could help us quantify in terms of what is that number that Cummins is sitting on in terms of the total order book currently, and what are the kind of inflows that are expected over the year?
Hiral, I won't be able to quantify exactly the order board that we are sitting on at this point in time. It continues building through the year.
No, correct. But any reason why we can't quantify it? Reason being is just helps us understand in terms of what the revenue trajectory will look like, because 100% order book is not going to convert into revenues in FY26 itself, right? But taking the trajectory into consideration, the number becomes important from an investor perspective.
Yeah, like I said, I can't give you an exact number. I can tell you that our order board is pretty healthy across power gen, and industrial and aftermarket is still building. That is what I can share with you. It is already we are in the season for power generation, and even now the order book is building. So the number I give you today will change tomorrow. So it's very difficult to quantify it and give it to you today.
So Shweta, I mean, this change in terms of the company not giving out an order book has happened in the last couple of quarters. Any reason why that shift that has come in?
Hiral, the only thing is that we're being very cautious because from a domestic business perspective, we see inquiry and order board building every day. There's a lot of velocity, and especially this is season time for power generation. So it's difficult to pin a number on it. And from an export perspective, different markets are not showing us clear trends. Our efforts continue, but even the orders, given the current geopolitical situation, changing lead times, changing trade agreements, keeps changing. So this volatility in orders has definitely come in the last year or so, which is why it makes it difficult for us to pin a number on it.
Shweta, would it be right to say that, probably orders which do come in, but a lot of times they do get cancelled right now, and that's the kind of uncertainty that the industry is looking at, and that's the reason why you're not really sitting on a fixed order book number so far, because that's the worry. And on top of that, the management guidance that was given by Cummins Inc., they have withdrawn it as well for 2025, right? Anything that you would want to add from an India perspective as to what the guidance can be?
So, Hiral, just from an order book perspective, closing out on that question, it is right shifting of orders that we see, and sometimes preponement of orders, right? Which is why it's not order cancellation as much, but right shifting of orders that happens. So it does come in, but when it comes in, becomes a challenge. Then from our parent perspective, yes, they withdrew the guidance, mostly because by the time they went to the market, notifications were still coming in, and it needs careful evaluation and deep evaluation to say how that situation will impact the demand and hence the outlook. For that reason, they did not give the guidance. From our perspective, the segments that we operate in India, the domestic business, we are seeing the demand. And for that reason, we continue to hold double-digit revenue growth guidance for the India business.
Okay, so double-digit is the kind of growth that we are seeing for the India business. But coming to the other side of the business, you spoke about the data centers, which is an emerging trend for the company. And along with that, even railways, where we are looking at more safety-related works now. I just want to get your idea in these two segments. What is the kind of growth picture that you're building in going forward?
Data centers definitely is a growth segment in India and in rest of the world. Our product is very well accepted in the data center market, and we have been focusing on that segment, working with our customers to fulfill their specific demands from a product perspective and also the aftermarket perspective. So we are quite focused, and we are seeing that demand in the market, and it continues to grow. From an overall perspective, I will say we will still see growth in the data center segment coming up in the market.
Right. So I think lots what we'll have to watch out for as well. But thank you, Shweta, so much for joining us on the show and sharing the view. So Anushi, clearly, an interesting play from here on. Double-digit growth is what Shweta is saying that the company is watching out for in terms of the India arm. Uncertainty, I think that's the key that I've picked up over here as well in terms of global markets and the domestic markets as well, though it's not an order cancellation, but a shift that keeps happening, and that's the reason why the strategy of not declaring the order book.
In terms of the exports, what we are seeing higher growth over here. So that is something interesting that we should be watching out for, especially for the domestic segment. Now the focus remains on the power gen segment because last year there was a pre-buying effect. So what could be the impact of this going forward? So that is something that we'll be seeing over there.
Right. So interesting conversation here, but let's quickly slip into a short break. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The markets move fast,
And so should your portfolio. expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations?
Markets are off the day's low now, but in the red. The Nifty is trading pretty much flat, muted reaction to Trump's tariffs being mixed by the Supreme Court. Metals continue to shine. Nifty Metal leads the sectoral gainers. Jefferies' bullish note enthuses investors. The brokerage firm maintains a buy call on Indian steel companies like Tata Steel and JSW Steel. And IndusInd Bank once again in focus. In the latest update, SEBI bars IndusInd Bank's former CEO Sumant Katapalya and 4 other officials from the securities market. Agriculture-facing stocks like Insecticides India and Avanti Feeds gain in trade post a strong Q4. Insecticides India sees a 85% jump in net profit, while Avanti sees a 46% rise. India's top anti-corruption watchdog for public servants gives a clean chit to SEBI's ex-chair Madhabi Puri Butch in the Hindenburg case, calls all allegations frivolous and politically driven. Welcome back to Profit Buzzers. You're watching NDTV Profit, but clearly, let's just once again reiterate what the markets are doing in trade. They're pretty much on the borderline as we started off the show, trying to go towards the positive, but that flattish tone does continue. 24,758 is where Nifty 50 is trading at. Bank Nifty is the one which is actually putting pressure. It's the heavyweights like an ICICI Bank, Kotak Mahindra Bank, HDFC Bank. They are the ones which are taking Nifty 50 lower as well, along with ITC. In fact, the broader markets, there is some bit of an outperformance coming in from there. You have the mid cap and the small cap index, both of them trading with gains of around 0.3 to 0.4%. In fact, the mid cap 150 is trying to slightly inch higher as well. And a lot of stock specific action is what we are seeing on the back of an earnings reaction. But will markets see a gradual growth soon is the question. In fact, we did speak to Mahesh Patil, CIO at Aditya Birla Sun Life AMC, and he says that the markets are looking fairly priced going forward. Would this be an opportunity to buy? Let's listen in.
You might see kind of a slightly weak beginning in this quarter, but I think as we progress into this fiscal year, I think we should see the growth again coming back. And overall, we expect this year the earnings growth after a kind of a mid-single digit growth in the last fiscal year to again claw back to around 12-13% in that region. So given that, I think the market here now, after the recent rally, what we are seeing is looking fairly priced now. And don't see a big near-term upside at this point in time. At the same time, also, I don't see any major risk, for the market to really correct because a lot of those factors which were there, whether it was the uncertainty around the tariffs, again, on the US side, the geopolitical risk, what we saw, the escalation intentions, I think those have kind of now eased off. So I think market should now look at slowly inching up. Again, it will probably boil down to more stock specific this year because we don't expect a big move in the market in a near-term perspective.
Well, that's the view coming on market. But on that note, let me also invite our guest for the show. We have Mahesh Oza, who's the Assistant Vice President of Research and Business Development of Hensex Securities, and Osho Krishnan, who's the Chief Manager of Technical and Derivatives Research, Angel One. Welcome to the show, gentlemen. Mahesh, what's your view when it comes to markets?
I think market is fairly bright, but what is the running in market? The RBI action, taking a lot of action. That is the driven market. So in midterm, we can see some consolidation. But yes, we are ready for new high. I think 25,200, 25,250 level. What that should be watchable. After that, what we are ready for new high. I think so.
Osho, how's your view? How are charts looking for Nifty?
See, overall, very good afternoon, everyone. Well, firstly, looking at the overall technical setup, I expect that currently we are going through a consolidation phase in the benchmark index, but the time we surpass the zone of 25,000 on a closing basis, which I expect to happen very soon, because coming back to the banking space, Bank Nifty is having a very strong technical setup, and I'm expecting that in the short-term period, there is a possibility of breakthrough. So 55,600 is the zone that I'm expecting the breakthrough to happen in the Bank Nifty, and once it does, then followed by Nifty will be having a kind of a positive momentum going ahead. So 25,000 is the first resistance for Nifty. Once it surpasses the zone, then 25,300, which is also the 78.6 retracement zone of the fall that we have seen. So I'm expecting approximately 300 point of rally on immediate basis for the markets, and afterwards there can be a possibility of even further highs. But as of now, the undertone is positive, and dips should be utilized to look for buying opportunity.
Buying opportunity, 25,000 is the key resistance that you should be watching out for in terms of Nifty 50. But moving on to individual stock-specific action, couple of stocks that reported numbers. You have a Deepak Nitrite, an interesting one to watch out for because the revenue and the operational performance is a beat. The stock is nearly trading at the day's highest levels with gains of 5.5% coming in there. Overall, if you see, this is on the back of the incentives that they received that you're seeing this outperformance. Around, if you exclude the incentive, the EBITDA is almost 25% below the street estimates as well. Now, why is the stock still up? That's because it's the last trading day for the company in the F&O segment, and I think that's the reason why you're seeing this kind of an up move on this counter. And the positions also might be getting squared off, and that I think Osho will be able to tell us better. Apart from that, if you see market share, that has remained strong from a fundamental perspective. The demand with regards to dyes and pigments, that has also remained resilient, but pricing pressure has persisted in the agrochemical intermediaries, and that is what your consolidated numbers are telling you. The premiumization is what has led to the profit growth, and the EBITDA margin expansion has been led by, sorry, that's for Insecticides India, but that's, I'm coming to an Insecticides India, wherein the premiumization has led to the profit growth. Your EBITDA margin expansion has led to value, has been on the back of value-added products. So if you talk about the revenue, a growth of around 32%, margins have expanded and come in at 7.9% versus a 3.2%, and a 84% jump in terms of profitability. In fact, first, let me go to Osho to understand with regards to Deepak Nitrite. Osho, what is Deepak Nitrite indicating from an F&O perspective as well? Because I think the last trading day in terms of F&O, are you seeing positions that are being squared off, and that's the reason why the stock is up in trade, because numbers do not support it?
Yes, definitely. If we have to see about the technical perspective and derivative perspective, then again, yes, the counter has been seeing some kind of buying traction on that news. But overall, if I have to say on the technical front, then this counter historically have taken support from the zone of 1800, which in the year of 2022, 23, and now in 25 has been a very strong support for the counter. So it is into a very strong time-wise corrective consolidation zone, where 1800 to 1850 is a very strong support zone. And on the higher end, 2400 is the resistance for the counter. So I'm expecting that it should hover within the range with a positive outlook from here onwards. And once it breaches the zone of 2400, then we can look for higher opportunities also. But as of now, it is into a consolidation zone. There can be some kind of volatility in the near period, in the short-term period. But overall, the outrun is positive, and I'm expecting dips towards the zone of 2000 should be auguring well for the buyers. And on the higher end, 22 followed by 2400 will be the target from short-term perspective.
So that's Deepak Nitrite. Mahesh, your view in terms of Deepak Nitrite as well as Insecticides India, how are you looking at both these counters from a fundamental perspective? Are you seeing any buying opportunity, or do you think they should be completely avoided?
I absolutely agree with you. There is a exclusion, so we have seen some upside, but the incentive number are good. And if you're looking on a company fundamental basis, management working is very good. I'm tracking from very low level. So I think some consolidation can't deny 2050, 2040 level could be a range where one can look for adding further. And in the upside zone, 2280 to 2300 level could be a shorter term upside zone. So I think it's a good opportunity if anyone getting nearby in downside 2050 level. So any downside is a buying opportunity as per my view. And from insecticide, I think a margin expansion is a very good perspective. I think that could be a much more trigger for a insecticide. So I think it could be a buying opportunity from these level also. I think 980, 1000 level could become in near term also.
Got that view. Thank you for that view. Now shifting focus to earnings today, Bajaj Auto is expected to report a flat Q4 performance weighed down by weak domestic volumes. Punit joins us for more details.
Well, thank you for that. So, three key things expected that should be anticipated from this result. One is, of course, the result itself. Revenue, EBITDA, as well as profits are expected to rise just 5% in this particular quarter. Margins are expected to be maintained at 20%, and that will be something, while Street is banking on it, it is one of the key aspects to look at. The other aspect was that in this particular quarter, the domestic sales again were very weak. Domestic sales, two-wheeler sales specifically, were down 8%. And they've reported negative two-wheeler growth in terms of sales for the last 7 months now. And that's one of the key negatives for the stock, because TVS, on the other hand, has been reporting stellar double-digit growth in terms of two-wheeler sales in the domestic market. So definitely that is one of the aspects which needs to be addressed again. And the other final aspect is, of course, of the acquisition of KTM. Now, Bajaj Auto is set to invest 800 million euros through its subsidiary in KTM. Out of that, $200 million has already been invested via equity in the month of April, and the rest 600 million euros will be the debt that the company has taken. Now, May 23rd was the day where KTM was expected to have a restructuring plan in place, and we did see exchange notifications from Bajaj Auto that they will be taking on debt of over 600 million euros to invest in a subsidiary. This will be, of course, paid off to its creditors of KTM on the basis of what the resolution happened in February of 2025. But there could be some cost that could be upfronted, and this margin number could be impacted because of that as well. But the acquisition, while there is some near-term risk to it, it does augur well in the long term, because do note that in the export market, currently Bajaj does not manufacture anything for KTM. It's only the operations in India that Bajaj has hold of. So this acquisition is very meaningful. And on the other hand as well, TVS has already acquired Norton brand 5 years ago. That will come on stream in this year. So it needs that competing power with the likes of TVS, Norton, as well as Royal Enfield in the export market. So long term, there is maturity in this acquisition, but near term risks does sustain. That could be something to watch out for. And major commentary here is one of the key things in this result.
Right. Thank you so much, Puneet, for all the details. Mahesh, what are your expectations when it comes to Bajaj Auto's Q4 and any other picks that you can give us from auto sector?
From number perspective, I'm not much more positive on Bajaj Auto, but yes, from acquisition perspective, I think that's a good acquisition from Bajaj perspective. We can see longer term positive impact on Bajaj Auto. From this particular space perspective, I'm bullish on TVS Motor. That could be gaining much more market share in two-wheeler space. So TVS Motor, if anyone getting near any downside in TVS Motor, that could be a good opportunity to add in any lower level for TVS Motor.
Point. And Osho, how are charts looking for Bajaj Auto?
See, again, Bajaj Auto has tried to give a kind of a resurgence from the lower zone, but again, on the higher end, the 200-day simple moving average is still perceived to be a very strong resistance. So approximately the zone of 92 to 9300 is a very strong resistance zone for the counter. and any breach beyond the zone, then only we can see some kind of positive momentum coming back. As of now, the near-term outlook is positive, but I'm expecting there can be some kind of consolidation followed by positive momentum that can be seen. On the lower end, the support is approximately around the zone of 86 to 8500, and on the higher end, 92 to 9300 is the resistance zone for Bajaj Auto.
Right. Thanks, Osho, for that view in terms of a Bajaj Auto goes. But Tata Sons, they will be holding their board meet today. In fact, Sajid Mangat joins us with what's expected to be on the agenda. Sajid, what are you picking up and what should the street be watching out for?
A couple of things which is why Tata Sons current board meeting is going to be important. One is they're going to mull on the financials for the financial year FY25. Remember, Tata Sons is a holding company and the revenue that it gets from on its balance sheet is primarily in form of sale of investments or participating in buybacks or the dividends that are paid by the listed companies or the associates of Tata Sons. So one of the agenda items would be the approval of financials for the financial year 24-25, which comes into play. The second thing is the review and announcement of dividend to its shareholders, which is primarily the Tata Trust and to the preference shareholders. That would be there. Tata Sons has been maintaining a constant rate of dividend there, so that's not a big dividend that's going to come in from there, because a lot of income that Tata Sons earns through dividends is used to plow back into new ventures. In the last 2 years, we have seen Tata Sons investing into semiconductors, batteries, and there are many capex capital-led programs which are underway and which should be operationalized in the next couple of years, which is there. The third thing which is in the agenda is the review of the Tata Capital IPO. Remember, Tata Capital is an upper layer NBFC and they are required to list by September of 2025. They've already filed a confidential filing with the market regulator SEBI and that approval is pending. Also, the fact that the Tata Motors Finance has already been merged into Tata Capital on May 8th. So the consolidated numbers for the Tata Capital would be something which will be looked at, as well as how much of the OFS would be will constitute Tata Sons offering shares in the IPO. Remember, Tata Capital is raising through fresh issue as well as OFS in the IPO as and when SEBI approval comes in. So these are some of the things. Apart from that, just to give a color on the kind of revenues which Tata Sons could have. Last year, the total revenues that it earned was around 43,000 crores. This time, this is going to be a little tad lower, and that's primarily because buybacks was lower in the last financial year. But the biggest revenue chunk would come in from TCS, where it owns more than 71% stake, and it got nearly 33,700 crores in dividend from TCS alone, followed by Tata Steel at 1,400 crores, Tata Motors and 887 crores, and Tata Power 289 crores. So a total of 38,000 crores coming from listed companies. Roughly around 2,700 crores of dividend will come from the associates, and there will be some other income. So it will almost be at par with FY24 numbers or slightly below that in terms of top line.
Right. Thank you, Sajid, for all the details. Well, moving on, telecom space is in focus after TRAI has released a draft consultation paper confirming NDTV Profit's May 22nd news break. Now, the proposal looks at a changing spectrum pricing to help expand 5G and improve rural broadband. Starlink is also ready to beam in India. So the question is, where is the telecom space headed? We spoke to Balaji Subramaniam, who's the Vice President Research of IIFL Securities, about what lies ahead for big telcos going forward. To listen in.
If you look at the industry, see, we are having a situation where the tariff hikes have just flowed into the numbers, and we have Vodafone Idea, which is still completely not out of the woods. They have their own sets of problems, and both Bharti and Reliance Jio are gaining revenue market share. I think that should continue. And maybe sometime in the next 12 months we could see another round of tariff hikes, which will be another driver of ARPU growth.
Well, Mahesh, let me come to you. Your view when it comes to Airtel and Vodafone. So, do you track this, and what's the fundamental analysis behind this?
I have no doubt. Airtel is a very good company from a fundamental perspective, and it could be much more beneficial than any other company from a telecom particular news. So I think Airtel has a much more scope of upside. I think Airtel has potential to go up to 2050, 2100 level in the medium term also. So in particular sector, if you are asking for any particular pick, then Bharti Airtel could be a preferred pick from my perspective.
Got that point. And also, so Osho, how are chart looking for Vodafone and also for Airtel?
See, firstly for Airtel, then this counter, obviously, we all have the same opinion that it is looking very positive, and there is a positivity that it can be driven towards the higher zone. But on technical front, the immediate target that can be seen is around the zone of 1920 to 1950. That is the immediate higher resistance for the counter. On the lower end, approximately 1800 to 1760 is a very strong support. So accordingly, one should have their trade set up in Bharti Airtel. Overall, the outlook is very positive. Now coming to Vodafone, then this counter is very volatile, and as of now, I'm expecting that it will be having its quarter 4 earning result also. So there can be volatility that will be there in the counter. But overall, looking at the trend for the counter, near about the zone of 7 and 6.8 is a very strong support on the technical perspective over a longer duration chart. And on the higher end, near about 8.4 to 9 rupee is a resistance. So any breakthrough above the zone of 9 rupee can only give some kind of positive momentum in the counter. For that time, I think one should stay sidelines from the counter because there is a lot of volatility that can be seen in the coming period.
Right, got that view. Thank you so much. Now, moving to Garden Reach. Now, this is in focus after posting their Q4 results. We spoke to Managing Director PR Hari about company's order book position and execution plans going forward. Do listen in.
The major project that we are executing, almost 50% of our order book is from the P7 Alpha frigate project, and with the first ship expected to be delivered in a couple of months. So we intend delivering the ship in July, and with the second and the third ship at a project maturity stage where maximum revenue accrual is expected, our revenue is expected to maintain a similar momentum in the coming years. Definitely the margins would be steady. Considering we have interacted before also, shipbuilding, we are well beyond the conservative profit margins, and we intend maintaining similar margins in the future too.
Well, this is the outlook that Garden Reach has when it comes to FY26 and few years ahead. Mahesh, considering the order book, how are you seeing this counter to fare in? Because so management is also expecting to maintain the growth and margins. What is your view when it comes to this counter?
If you are looking on a fundamental, then we can see some, let's say, overvalued. But if you are looking from a longer term perspective and current fiscal and current order book, we can say some more upside could come in the near term also. That could be near 3,400 to 3,500. From a longer term perspective, I'm still optimistic for much more upside in particular sector and particular GRSE. So I think from a longer term perspective, one can hold the counter for a upside term.
That view. Osho, how are charts looking when it comes to Garden Reach? Good time to buy?
See, overall, this counter have surged almost 55% in the month. So there is a possibility of some kind of profit booking. Although because the technical parameters have also reached the overbought terrain, so there is a higher possibility of profit booking. But as of now, the momentum is still persisting in the counter, and I'm expecting till the time momentum is there, one should stay put with their investments and try to trail their profits on the higher end. As of now, 2750 to 2800 is the support zone for the counter, and I'm expecting if it comes or cools down towards the zone of 2700, then that will be an apt zone to re-enter into the counter for a higher target of nearly 32 to 3300 on immediate basis. So overall, it is very positive, but the momentum is still continuing in the counter. So one should stay cautious with their investment, should not be hurrying or buying this counter in FOMO that whether it will be missed out at current levels or not.
Right. Thank you, Mahesh and Osho, for joining this conversation. Pleasure to have you. Well, moving on, Adani Power is in focus after InCred has initiated a report and gave it a ad rating because they see this counter as a strong turnaround story in the thermal power sector with significant growth potential, stronger, stable cash flow and clear path to deleveraging. Now, here's the breakdown what InCred has says. Adani Power is largest private thermal power producer in India with 17.5 gigawatt capacity as of FY25, and the company has overcome past financial challenges through regulatory wins and also improved operational efficiency. That is what InCred is saying. The company do have ambitious growth targets, so they plan a 75% capacity growth to 30 gigawatt by FY30, adding 13.12 gigawatt through new projects. This growth is notable and surpasses some peers. While this expansion directly addresses India's projected 5 to 6% of annual power demand growth and peak demand of 458 gigawatt by FY32. Thermal capacity additions have lagged targets recently, creating an emerging undersupply scenario that Adani Power is well positioned to fill as per InCred. Now, the significant capex of 1200 billion is expected to be funded primarily through internal accruals, and this will lead to substantial deleveraging. InCred has projected an 11% EBITDA CAGR over FY25 to 28, driven by high plant load factors, power generation growth from new capacities as well. A significant portion, that is 87% of Adani Power's capacity, is tied to long-term power purchase agreements. This PPAs provide stable recurring EBITDA for the company. So this is what InCred has to say when it comes to Adani Power. Well, before saying goodbye, Waaree Energies have got an order for supply of 586 megawatt solar modules. This is one of the huge orders that company has received. Company will supply solar modules to US client from FY27, and recently Waaree Energies have got a slew of orders. Now this order is worth $176 million for solar modules as well. So this is the all time we have, viewers. Stay tuned to NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Soumit Sarkar, and my co-anchor Puneet. Well, Puneet, not much of an action in markets. It's largely flat, but we seem to be strongly holding the 24,700 levels.
Well, definitely, and it is one of the key levels to watch out for in trade, that 24,700. On the Nifty, we've slightly turned in the green. At around 12 o'clock, we were in the red, hovering around that mark of about 24,700. From there, we actually made a new low for the day at 24,677. But then again, back in the green for now, while minusculely. Let's also look at some of the key sectors first and how those are doing, because within that we've seen the IT pack today was in the red. It's in the green actually, and now also it's continuing with that momentum. We've also seen something like a Nifty Metal up. Nifty Realty is also holding up pretty well. Nifty Realty actually started the day as one of the key sector losers along with FMCG. It has now turned very positively in the green, while we've seen the Nifty FMCG still continue to be in the red. The Nifty PSU Bank has also slipped now in the red as well, and now is the biggest Nifty loser. While let's also look at the defense pack for now, because we've seen some strong movements on that. Let's see the composition also, some key stocks in the defense pack. Unimec is up 10% in trade, and that's probably after results came a couple of days ago, doing very well. Zentech also, it's now up 5%. Garden Reach, we also spoke to the management today, doing very well in terms of order books for about 22,000 crores for the company. While something like a Mazgon also up in the green. Mazgon expected to report results today as well. On the negative, just some selling pressure seen on Astra Microwave. The stock has actually done pretty well post reporting Q4 earnings, but largely right now 4.6% down in the red. And Zentech also is a very interesting one, because the stock did hit a low of about 950 to 1,000 odd levels. It's almost doubled from that level in just about 2 to 3 months. So a very strong recovery seen. If you can pull that stock up very quickly, Zentech, and just show a year-to-date chart or a last 6-month chart for something like a Zentech. That's today. Let's also look at the last 6 months for Zentech, and seeing that positive momentum across that chart up 11%. But you see how the kind of move that has happened. We were around the 2,600 odd levels. From there we had a steep decline to 1,000, back up again now. So overall, we've seen that the index is now defense pack taking the growth as well. But let's also welcome in Vaibhav Vidwani, who's the fundamental research analyst at Bonanza Portfolio. Vaibhav, good afternoon. Thanks so much for joining in, and good having you today. Over the last couple of days, we've seen, and actually over the last week itself, we've seen the mid cap and the small cap index largely outperform the benchmark indices. Do you also hold a view of that continuing with as we go into the fag end of earnings for Q4?
Yeah, can you say it once again?
Sorry, my question was largely on mid and small caps, largely outperforming the benchmark indices. Do you see that continuing as we come into the fag end of earnings?
Yes, I think so. Still, our mid cap and small cap have that potential to deliver robust numbers in upcoming quarters. And there are so many mid cap stock and small cap have delivered robust numbers. So because these mid cap and small caps have lower PATs and lower revenue, so they have high potential to deliver robust growth in upcoming quarters. So yes, my view regarding mid cap and small cap stocks is still optimistic.
Right, moving on to the most interesting news of the day. Well, it's an 80 crore company which is looking to raise close to 6 crore from investors, or in fact they have raised close to 6 crore from investors to invest in Bitcoin. Well, what does the company do and how much Bitcoin does it own? Let's get in Mahima, who has done all the hard work to get all this data.
Right, so as you rightly mentioned, it's a micro cap. It's hardly an 80 crore company which has raised around 6 odd crores via preferential issue. And in their filing, they've said that they've raised this money to invest in virtual digital assets and mainly in Bitcoins. Now, the company is basically specializing in hardware, networking and digital courses. It has around 150 training centers across India, Nepal as well as Southern Asia, in terms of Southern East of Asia. In terms of its current holding for virtual digital assets, as of 28th May, it is holding around 21 Bitcoins in its portfolio. They've acquired this these Bitcoins in multiple phases, and the average buying price is around 64 lakh per Bitcoin. The Bitcoin is currently trading at around 92 lakhs. In terms of their approximate value of holding right now, that stands at around 19 odd crores. So it's an interesting story. An 80 crore market cap company raising money to invest in Bitcoins.
It's a 80 crore market cap company which has around 19 crore worth of Bitcoin. Now viewers, do remember that this news bit was covered just to give this information because it was interesting, and this was not any form, in any form, this was not any recommendation to buy or sell the stock.
Well, got that. And very interesting to say the least, because we've seen this as a play, Swami, in the global markets in US also, a lot of companies doing that. But largely the first in India for sure. But there's another very interesting note that's come from Morgan Stanley actually on India's real estate sector. They are largely putting out a fairly positive view on the space. And what would be some of the key interesting picks? My colleague Anushi is joining in with some key highlights as well as top picks from the report. Anushi.
So what we are looking at is in terms of rating changes for a couple of these counters. Morgan Stanley has now upgraded DLF to an overweight from an equal weight earlier. However, they've cut the target price to 900 from 910 earlier. Prestige also we are looking at an upgrade rating from to overweight from equal weight. While for Godrej Properties, they have downgraded the rating to equal weight from overweight. Now, essentially what they are saying is that they are reintroducing net asset value as a concept, and your pre-sales remains a key factor to consider the future trajectory growth for these counters out there. Now, do note that DLF and Godrej Properties had beat the FY25 guidance in terms of the pre-sales which were there. So the real estate cycle remains intact, but some bit of late cycle in that cycle of growth that we are looking at. They prefer companies with a higher growth profile. That's why they've upgraded DLF, considering the attractive valuation that it has, along with the land bank, which also offers a little bit of margin protection for the company. Prestige, if we see now, FY25 was not a standout year for the business because of delays in a couple of projects. But for FY26, Morgan Stanley expects it to be a standout year in terms of a robust recovery, in terms of where the pre-sales are concerned, seeing a 40% of a growth year. However, for Godrej, now we have seen decent growth for Godrej Properties as well, but they've downgraded the stock, considering that growth may come at the expense of margin and leverage. So that is on the downside that we are looking for Godrej Properties. So overall, for other counters also, Oberoi, Macrotech, they've maintained the rating, but we are just looking changes in terms of their target prices concerned. But overall, pre-sales continues to be the leading indicator for the performance of some of these counters out there.
Well, thank you for that, Anushi. Vaibhav, let me come to you on the real estate space. What do you think of the sector as a whole? And do you have some top picks to watch out for?
Like if we see in this particular segment, earlier we have seen very good growth in pre-sales number. Then we have seen a sideways trend for the pre-sale number. Then there was a little stress. So because of these things, we can now find these companies at a very attractive valuation, and so many companies are taking very good initiatives for those things, and they are coming with new projects. So these new projects and demand as per the different locations like Gurgaon and such type of areas, Bangalore. So these means projects as per the location also impact the pre-sales number. So as per that, there are some good pockets available in this particular segment, like DLF, Prestige are one of our the stocks that we can look for, and Oberoi Realty is also one of the good stock because they are taking such initiatives. They have good plans for the upcoming quarters, which will support their pre-sale number.
Right, let's move on and focus on Deepak Nitrite. It's one of the top F&O gainers in trade, and this is the last day for Deepak Nitrite to trade in the F&O basket. And how were the Q4 numbers? Let's get in Varsha with more details on the same.
So let me start with Deepak Nitrite. On the face, the numbers look good. Now, but if you see revenue and EBITDA beat estimates due to the incentive received to the company. So government incentive income for the companies in this quarter stand at around 161 crore. Excluding this, if you see EBITDA is 25%, which is below estimates. Operating performance though has recovered sequentially in Q4. Demand for dyes and pigments have remained resilient, and company continues to maintain strong market share. well, there's been a pricing pressure persistent in agrochemical industries or agrochemical intermediates, and but despite miss on the EBITDA, why the stock is still up? Because today is the last trading day of company in F&O, and position might be getting squared off. This may be one of the reason why you're seeing uptick in the stock. Next on the list is Insecticides India. Good numbers. Now the premiumization has led to the profit growth. EBITDA margin expansion that you're seeing is led by value-added products. Now the whole story when it comes to Insecticide India is, diversification, or rather moving towards value-added products, which has given strong margins to the company. So overall, if I were to talk about 4 numbers, revenue was up 32%. EBITDA margin was at 8% versus 3.2% last year, while net profit was up almost 85%.
Yes, thank you for that. Vaibhav, coming to you firstly on Deepak Nitrite, I guess the Q4 numbers were not that strong if you remove the incentives. How are you looking at overall as a sector and chemical space currently?
If we see Deepak Nitrite have delivered, means numbers are not that much good, but as per the expectations, number are I will say better. And in upcoming and in this particular market also they were able to protect their market share. So in upcoming quarters we can expect improvement in this particular stock and the improvement in the revenue of this particular stock, because they have that ability to protect their margins and revenue growth for the upcoming quarters. So that's why view is quite optimistic for the Deepak Nitrite.
Got that, Vaibhav. Meanwhile, the brokerage from Jefferies has actually initiated coverage on Jindal Stainless with a buy and a target price of 800 rupees per share. My colleague Harsh joins in with some more details on this.
Well, they've initiated coverage, and 20% plus in terms of the possible return over the next 12 months is what they see. They say that Jindal Stainless, the number one stainless steel producer in the country, 40% market share is what it currently has. It has a 3 MTPA capacity, a strong presence in faster growing premium segments which are doing well. And in terms of its top line, around 85 to 90% comes from India, just 10 to 15% from export markets, North America as well as Europe. So more India facing as well. That's the other positive. India is growing at 2x that global rate in terms of growth for stainless steel, and there's also a large per capita gap between India versus the rest of the world, and therefore that growth is set to continue. Now talking a little bit on the macros as well, the China spreads are at a 10-year low. There is room for the China spread to now go up. They're expecting those to start to kick through, so therefore pricing should improve for a Jindal Stainless. They're also making a case why Jindal Stainless in this environment is better than some of the steel producers like a Tata Steel, like a JSW Steel. They say that the company has a lower EBITDA per ton volatility versus some of the other steel makers, so that's the one big positive. It also has a better balance sheet, better cash flows, better return ratios. In fact, the ROEs average between FY24 and FY20, or rather FY22 and FY25 is 19% versus steel makers of 5 to 8%. So despite the 9% volume growth, EBITDA has in fact declined because of pricing. They're expecting volume to pick up. They're expecting EBITDA to go up by 15% FY25 to 27. EPS of 21, EPS to grow 21%. They're valuing this at 11 times forward, which is a slight bit of a premium versus some of the steel makers.
Well, thank you for that, Harsh. Vaibhav, how do you see, I'm not sure if you have coverage on Jindal Stainless, but what's your view on the stock, and if not, what's the view on the space as well?
Okay. So if we see our government recently imposed duties to protect the margins of the domestic player. So these duties were near about 12%. So there is always a margin stress created by China at international market. So China provide HRCs at I will say attractive rates at international market, which reduce the spreads for these domestic players. Now our government imposed duty which will protect the spreads for the domestic player and also support the profitability. So I will say that we can expect good growth in the metal segment right now, because I think so metal prices are already bottom out. and there are now chances that we can see improvement in China infra space and worldwide also. So that will support the demand of metal and prices of HRC, which will support the revenue growth, EBITDA and net profitability of all these companies.
Right. Moving on to the other news space. Before moving on to the other news space, the TRI data for the month of April has come in, where Reliance has managed to add close to 26.4 lakh mobile subscribers. Bharti Airtel has managed to add close to 1.7 lakh subscribers. Vodafone Idea, yet again, they have lost close to 6.5 lakh subscribers in the month of April. And BSNL also this time has lost close to 1.6 lakh mobile subscribers. In fact, this is for the first time since June 2024 that we are seeing a decline in the subscriber base coming in for BSNL. Well, any view on the telecom data that has come in, Weber?
For the telecom segment, I will say if we see long term, I'm very optimistic for the Airtel and the Jio, these two companies rather than the Vodafone Idea. Because in upcoming years we will even see the infusion of 6G. So because other countries are entering into that part. So I think so that we should not look for the near term. We should for the long term perspective for these companies, as requirement of data will increase because of AI usage and these things. So all these things give a positive view for the Bharti Airtel company.
Right, Cummins India is the other stock that has been focused, in fact one of the top gainers in F&O after posting its fourth quarter numbers and positive commentary coming in on the conference call. Let's get in Anushi with more details on the same.
Well, thanks for that, Samit. So now what we are seeing post the con call, a particular surge in prices, what we are seeing. Now the management did speak that they want to continue with the double-digit growth guidance for FY26 as well. However, if we talk about the overall export side of the business, now while we have seen recovery, it's a mixed sort of a picture that we are looking at, because management still remains cautiously optimistic considering the increased geopolitical developments along with the implications of what Trump's tariffs could bring for the business orders which are there. Other than that, they also talk more about the power gen segment. Now this is an important area. Last year we did see a dip in terms of where the volumes were concerned. So the management did say that they'll need a 1 to 2 quarters more to stabilize in terms of volumes which are there, and then may exceed the velocity at which the CPCB2 norms were given. So it's the new engine norms which are expected to increase in velocity going forward. Pricing, if we see, there has been increased competition here, but they do expect that pricing for CPCB 4 plus compliant products to settle as well in the next 1 to 2 quarters as well. Now, when asked about the data center business, they did say that they are not seeing any slowdown. In fact, they are seeing more inquiries. So how that as a segment shapes up is something we should keep an eye out for. Also, let's also talk about the capex. Now, capex, they did specify that it is expected to be in the same range as last year. Quickly walking through the key numbers. Now, in fourth quarter, what we saw was a revenue growth of 6%, which was a miss in terms of where the estimates were concerned, but it was the EBITDA and the margins which are a standout. Despite the degrowth that we are looking at, do note last year there were a couple of one-offs which led to the higher number in terms of where the profit and the margins were concerned. So, net profit came in at 21.2%, beating the estimate of 19.4%. Net profit also did beat the estimates which were given. The focus now would remain on power gen cells, as the management expects more recovery coming from this side of the segment that we are seeing. Also, the contribution in terms of where the orders are is majority from this segment as we speak as well. So that's the overall picture that we are seeing for Cummins India, and why it is in focus. Overall, a positive set of commentary that we are looking from the management.
Right, Vaibhav, do you think that an 8% move warrants post the Q4 numbers that we have seen coming in from Cummins?
For Cummins, I think so that at domestic level, demand will be little stressed, and at international level, demand will be good. Their exports will be good. So they are into the power generation engines. So I think so that can impact their revenue growth in near term. So for near terms, we should be little cautious. While for long term, they will be able to maintain their numbers. So means for the near term, we should be little cautious. We should look for the numbers in the upcoming quarter. Then we should take our decision.
Right. We also spoke to the management, in fact, the managing director, Shweta Arya, about the growth outlook for FY26. Listening to what she had to say.
From a domestic business perspective, power generation business across different segments is showing demand. So, be it the data centers, infrastructure related segments, residential realty, commercial reality. So, we are seeing demand, broad based demand in the power generation segment, domestic business. We are also seeing good acceptance of our CPCB 4 Plus products and customers seeing the value of the product. From an industrial business perspective, rail is showing good demand, and construction business is holding on to demand that we saw in the last few quarters. Aftermarket business has done well in the last year and continues to grow. Our service contracts and rebuilding the engines in the market, we are seeing some good orders come in, and all of those will contribute to the growth in the next financial year. And then exports, like I said, we are continuing our efforts to grow the exports. You have seen exports growing in the last few quarters. Definitely, there is uncertainty from an exports perspective on how the trade deals will work out, how tariffs will settle in. So that's what I can say from an export perspective. With domestic business, we are seeing demand coming from power generation, from some segments in the industrial business and our aftermarket business.
Well, that was the management of Cummins India, but a clutch of auto names will be in focus on the back of earnings. Actually, today there are a bunch of them. Bajaj Auto, Samvardhana Motherson, Amar Raja, Ola Electric, Landmark Cars, Varroc, as well as Lumax Auto. All these companies will be reporting results today. I just want to focus on Bajaj Auto for now because it's going to be a very interesting set of earnings. Not because of the traditional business, but about the news flow about KTM. Now, in terms of revenue, the revenue EBITDA as well as profitability is expected to largely be between a growth of 4 to 5% for the company. EBITDA margin is largely expected to be around 20%, but there could be some impact of KTM, but it's too early to say for now. So we'll have to wait for the actual results to come in, as well as some commentary for the management on that. In this particular quarter, the domestic sales were very weak in terms of motorcycles, at least down 8% in this particular quarter at roughly 5 lakh units. And this has been almost the 6th consecutive month for the company where they've reported a fall in sales in the domestic market. That continues to be a concern for both Bajaj as well as Hero MotoCorp. Overall, in the export market, the two-wheeler sales are up 19%, and that will give pivot to the margins going forward. And finally, in terms of KTM, because the company did put out on exchanges on May 23rd that they will be investing roughly 800 million euros in its one of its international subsidiaries and eventually in KTM. 200 million euros have already been invested via equity. The rest 600 million euros will be invested via debt, and the company is already raised debt from 3 to 4 financial institutions. So the key aspect is that KTM was going through a liquidation. In February of 2025, the ruling did come that the company will have to pay 30% of that $2 billion debt that they have. And that's roughly about 600 million euros. And now that we know that Bajaj Auto has gone ahead and taken the stake will increase to 37%. It's going to be a very interesting space because on one side we have TVS, which has acquired Norton 5 years ago, so they already have one of the key brands in the international market, and Royal Enfield has a very strong proposition itself in the international market. So this could be a very interesting opportunity for something like a Bajaj Auto in the long term, but there could be some near-term risk to margins as well as elevated cost because of restructuring of KTM as a whole. Let me go across to Vaibhav now. Vaibhav, on Bajaj Auto specifically, what is your view? Because we've seen the domestic market not be in terms of show any growth in the last 6 months, and we've seen something like that for Hero as well. What's your call on the two-wheeler maker?
First of all, I think so that there will be a modest growth in their results, and the KTM deal of the 800 million euros. So that will provide them access for the global distribution network and the premium segment models. So which will increase their competitiveness at international market. So in near terms, we can expect stress, but access to the international market and the premium model will improve the competitiveness and revenue growth in upcoming years. So for long term, my view is very positive on this Bajaj Auto.
Vaibhav, thank you for joining us and giving us your perspective about the markets and the stocks that we discussed. Moving on, RBI released their annual report. The balance sheet has expanded by nearly 8% on a YOY basis to 76.25 lakh crore rupees, driven by increases in gold reserves, domestic and foreign investments. My colleague Pallavi joins us with more highlights from this annual report.
Right, so Amit, like you said, the RBI balance sheet has expanded by about 8.2% on an annual basis to 76.25 lakh crore rupees. That's for the year ended March 31st, 2025. Now, the increase on the asset side was largely led by gold, domestic investments, as well as foreign investments, whereas on the liabilities side, expansion was because of the increase in notes issued, the revaluation accounts, and other liabilities. Now, what was noteworthy was also the RBI gold holdings, which rose by 57.5 metric ton on an annual basis to climb to 879.6 metric tons. There were also some key highlights which the RBI focused on in terms of the macroeconomy and the health of the macroeconomy. The RBI said that despite what's happening in the global macroeconomic and financial scenario, the Indian economy continues to remain resilient and it's expected to keep its status as the world's largest, fastest growing major economy at 6.5%. That is the GDP growth figure we're looking at for FY26. This at a time when inflation is expected to align with the central bank's 4% target through the course of the year. The economy is supported by private consumption, healthy balance sheets of banks and corporates, as well as easing financial conditions and the continued thrust by the government on capex. The easing of supply chain pressures, softer global commodity prices, as well as higher agricultural production because of the expectation of an above normal southwest monsoons all bode well for the Indian economy.
Well, with that, it's a wrap on this edition of Top Trades. Stay tuned and keep watching NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome. You're watching NDTV Profit and this is India Market Close. I'm Harsh Saita. Let's look at how the markets are shaping up for today. It's another flat day of trade. It's been a difficult week as well. We've seen a largely consolidative move on the index, on the Nifty 50 index. You're seeing the Nifty Bank also under a bit of pressure, and that's keeping a lid with regard to the Nifty moves as well. Let's look at the intraday chart on the Nifty 50. Of course, we were in the green at the start, but we very quickly gave away all of those gains. We're off the day's lows now, of course, but flat line on the Nifty. Let's look at the Bank Nifty in similar light, and that's very similar to the Bank Nifty trajectory as well. So this is what's really keeping a lid with regard to how the Nifty is moving in trade today. Let's look at the heat map on the Nifty 50. Let's look at some names. IndusInd leading the pack, at least in trade today. You also have something like an Eternal, Zomato, which is up 2% odd, a Trent, which is doing fairly well for itself. Among the losers, you're seeing a Tata Consumer, a Bajaj Finance among the losers, but again, nothing material on either side, the gainers or the losers. Let's look at the sectors very, very quickly, and within that sectoral basket, the Nifty Realty is leading the gains, along with the Metal Index and the IT Index. The IT Index, in fact, has fallen well from the day's high. It was up 1.5%. It's currently sitting just about 0.5% higher, and I'd want to at some point in the next minute or so look at that IT index intraday as well. The Nifty Bank is one of the worst performers in trade today, largely led by the Nifty PSU Bank. The Nifty FMCG index is down again for a second straight day. It's one of the top losers sectorally among indices. Let's look at the Nifty IT index now in terms of the intraday chart. And what we're seeing on that is, again, a very similar chart structure to how the Nifty has played out. Now, in the sense, when you're seeing these kind of moves on the Nifty Bank and the Nifty IT, you will likely see that reflect on the Nifty 50 index, and that's exactly what's playing out. So that's on IT. Now, let's quickly zoom into how broader markets are doing. Let's look at the advanced decline first, and we'll see how flat that is with regard to the breadth. It's absolutely even, Steven, and has been so pretty much all through the day. Rarely have we seen days like this, but today is one such day. And we saw plenty of volatility in this over the last couple of days as well, hinting to the fact that there is some bit of consolidation which is at play. Today it's absolutely flattened, 1:1. Let's also quickly look at how the Nifty mid-cap and small-cap indices are doing. And the Nifty mid-cap index is up around 0.1% thereabouts, and the Nifty small-cap index also outperforming 0.33% higher with regard to the Nifty small-cap index. But let's take it across. We have Jay Bala with us to give us perspective on how markets are doing. Jay, good afternoon. Welcome. Good having you. Give us some perspective. What's your sense with regard to markets? It's been extremely range-bound. What should a trader do at this point, and what is your take on the Nifty and the Nifty Bank?
Ash, good to be here. This is a bullish consolidation for the markets, and the fact that the markets aren't dropping even below the shortest support at 24,462, that's that's more bullish. I would personally want the markets to drop somewhere to about 23,825. That's my first line of support for the markets. But if the market were to take out 24,116 without breaking 24,462, then we can see an upside acceleration for the markets. So watch the support lines at 24,462, 23,825, and I anticipate this to be a shallow correction for the markets. As you can see, the US markets today, the futures are up quite substantially. So there is a case for the markets to rally about 24,116, even without coming to the support at 24,462. But personally, I would want the markets to drop to 23,825, but the markets doesn't always oblige. So let's see what the market is doing. Follow the trend.
Okay. And what about the Nifty Bank? Any trend playing out over there, Jay? How should one play that?
See, the banking index is slightly weaker compared to the Nifty, but it's still bullish, and there are pending price objectives on the upside for the banking index. It needs to satisfy about 58,500 to 59,000, but it could first drop to support levels closer to 53,480, and then recover to higher levels. But as long as the index stays above 52,063, the trend still remains up, and as long as HDFC Bank can hold up about 1880. That will be a positive for the banking sector.
And your picks therefore, Jay, in this market, how should one play it?
Yeah, I'm bullish on the capital goods space, and so I have two picks from the space. One is Schneider Electric. Schneider Electric, it's been up for the last couple of sessions, and it's pulling back today. That's a good sign. I'm anticipating the stock to touch record highs. So a stop loss at about 600 is essential for this. And the second pick from the capital goods space is Cummins India. Cummins India at 3186. It's breaking out of an inverse head and shoulders pattern. I'm anticipating the stock to rally in the medium term to somewhere about 4200 plus, and a stop loss of about 2700 is essential for the stock.
Okay. Jay, I wonder what you make of the big theme that's played out over the last couple of weeks, defense, because that's been a place where there's been a significant short-term rally. Where to from here?
Yeah, so most of the defense names are looking quite interesting, but they've had a sharp run. They have consolidated even from the December levels. If you take something like a Masgo and Dock, we are bullish on it on the stock and to clock record highs from December itself. And the stock has come to record highs, and there is still room left for the stock. But rather, you might want to play different stocks that overlap within the capital goods space. So something like a BEML, BEL. They might also be attractive at current levels. So the rally is a little bit mature, not completely mature. So watch for pullbacks to come through. Not attractive at current levels from a trading perspective. Risk rewards are slightly skewed. So allow the stocks within the space to pull back substantially, something like 10-12% or 10 to 20% from current levels. Then they'll become base for the next leg of the rally.
Okay, you have a quick check with regard to electronic marts. There's a fire incident at their Andhra go down, due to which there's going to be some disruption in operations. No impact on the stock price per se, at least not reflecting as of now. The other one in focus is an Alchem Labs, where let's quickly look at what the stock is doing. The revenue is up around 7% EBITDA is down around 2.5% margins are at 12.5 versus around the 13.7% number same time last year. You have profited net profit, which is up 4% on a YOY basis. So that one in focus as well. So those couple of counters. Jay, I wonder if you have a view with regard to something like an Alchem, because there's some choppiness in that counter. What at this point do you expect in terms of Alchem? Is this an opportunity?
The stock isn't doing something outrightly bullish, but it definitely is trending up. If you look at the charts of the stock from the mid-March lows, it's clocking higher highs and higher lows. So as long as the stock can stay above 48.50, it remains in an uptrend. But this is looking like a corrective bullish ascent for the short term. So it's not the most bullish stock, but it's definitely trending up. So so possible higher upsides to work with, but not medium-term upsides that would possibly take out the October, November highs. It registered about 6,400. So in an uptrend, as long as it stays above 48.50.
Got it. Jay, I wonder what the take with regard to IT is, because there's been some bit of movement on that index, considerable bit of movement, in fact, on that index today. What's your take with regard to IT, and what are your favorite bets in that space at this point?
IT is an avoid for me. I just know this is a problem pocket, and I've not been able to figure out if the sector is going to play spoil sport, or it's going to prove the price structure wrong. But I'm neutral here within the space. But I'm, the 38,500 on the Nifty IT index is important resistance. 38,500 to 40,000 is the counter trend rally's maximum potential. But if the index were to take out 40,000, then I will relook at the sector in a different fashion. So right now I'm watching TCS very closely and Tech Mahindra quite closely. And my picks will generally be outside the frontline space if I were to turn bullish. So within the mid-cap, small-cap IT names, I like the mid-cap name Persistent and Tata Elxsi. but all of them are just on a wait and watch. None of them are bullish outright, and none of them needs to have a trigger pulled for them, because the IT sector as such is a puzzle for me. That could probably be a wet blanket for the whole market. So watch out for the resistance at 40,000 on the Nifty IT index. Then we can have opportunities to decide what to do, which stocks to pick.
Okay, so Jay Bala clearly cautious with regard to IT. That's essentially one theme he's actually being cautious on. Let's quickly move focus though. Let's take a quick view with regard to how the longer picture is looking with regard to India, both the economy as well as markets, and where those pockets of opportunity could well be. We have with us Keyur Majumdar, who's the managing partner and CIO AIF at Bay Capital, to speak to us. Keyur, good having you. I want to first start off by understanding from you what are the key themes that you're looking at this point, because there's plenty of moving parts. So within the economy, what's the key theme that you're liking at this point?
Great. First of all, thanks for having me. So interesting times, as you mentioned. From our perch, essentially we are more bottom-up oriented. But that said, there are 2 or 3 broad areas that are of significant interest to us from a long-term perspective. So the first is the entire digitization opportunity, as we describe it, right? Which is that over the last 3 or 4 years, if you've seen, many of these consumer internet stroke digital first businesses have started to get listed. At this point of time, there's roughly 40 odd of these companies. Over the next 3 years is likely to be twice as many. And we just think that structurally that's a very, very significant opportunity. And I think many of these businesses are not necessarily well understood because they have these sharp J curves on profitability. So that's one interesting space. There's also pockets of opportunities in the broader BFSI segment. So that's again an area that we sort of like longer term. And I think given the market environment, we would think that the BFSI pack selectively is where still there is some value, because valuations are still not out of whack as they are perhaps in many other sectors. And the third is really some parts of the consumption sort of basket, right? Where you're seeing many of these tier 2, tier 3 players which cater to rural demand, the demand from the hinterland, those starting to sort of come back. So those are the sort of 3 broad areas which are deriving our interest at this point of time.
Okay, Keyur, I'll start off with the third one, the consumption theme, rural hinterland and ancillaries. How would you play that at the current juncture, and what is the opportunity, at least in the near term, looking like? Because of course the weather gods are supporting us, at least till now, touch wood. But what could therefore the risks be, and what pocket do you like within that basket?
Yeah, so again, I think what's happened is that a lot of the macro headwinds that existed, for example, 5 or 6 quarters ago with respect to that particular space, which was in essence persistently high inflation and sort of tapered to moderate income growth, right? So in many ways that was a sort of a double whammy, which was affecting a whole pack of segments which cater to the rural hinterland. And I think both of those are starting to get addressed, right? So for instance, you obviously seen the broader inflation numbers sort of leveling out. They are decisively lower relative to 3 or 4 quarters back. And as you described, of course, as the rain gods sort of bless us, as the rural economy starts to come back, then you're going to see that filtering down into consumption. So again, one needs to be very, very selective. I would think that rather than the traditional staples businesses, it's more likely the consumer discretionary businesses which are focused on the tier 2, tier 3, the rural hinterland that are likely to do relatively better. So as sort of more disposable income comes in, as there is a optical wealth effect because inflation is sort of leveling out, you are likely to see the discretionary kinds of segments doing relatively better. So that's certainly an area of interest for us.
Before I come to what within discretionary, Keyur, I want to understand how one views the consumption theme, because valuations certainly don't add a lot of comfort with regard to the growth number plus the valuation doesn't give us too much comfort, right, from an investor perspective. So I want to understand, what is it that you're seeing? Where are the profit pools going to come from? You spoke about new age tech as one of those other verticals that you're looking at. You're suggesting that some profit pool will go there as well. Now there's a limited amount of profit pool available. So you're going to see some profit pool being taken away from these names and going towards the new age tech. Is that how you see it? And how do you therefore justify valuations?
Correct. So I think, when we speak about sort of consumption, right, one of the standard ways of thinking about consumption is, the traditional staples businesses, right? And it's an interesting point that you brought up, right? Because, as the markets have evolved, the intersection of many of these segments, right, are providing, the most powerful opportunities, if you will, right? So you think about consumption and technology, right? So you have businesses that are at the intersection of both of these larger themes, if you will. You have, businesses that are at the intersection of the entire larger theme of financialization and the entire digital stroke consumer internet opportunity, right? So there are businesses out there which are intersecting, at or rather between the digital space and the consumption space, right? And there, we would make the argument that the markets are just waiting to be created, right? And if you're able to sort of understand and identify the winners who are creating these profit pools as the businesses are scaling and evolving, then those are likely to be outsized winners, right? So I think one needs to sort of think about the entire consumption sphere in a slightly different way. That said, of course, as I said, on the traditional consumption pack, value fashion retail, for example, apparel, footwear, all of those segments have gone through a pretty, bad period over the last 6, 7, 8 quarters, right? And, again, being, stock specific or opportunity specific, if the risk reward on these, become interesting, then that's also an area to look at. But I think the more interesting longer term structural opportunities are really at the intersection of some of these larger themes that are playing out. And so digital plus consumer is something that is particularly powerful as we think about it.
Okay. And Keyur, would you therefore in such a basket ignore valuations altogether?
No, of course, valuations are important. So, if there's one thing that, this entire, market cycle, up and down has shown, is that, not every business is good at any point of time at any price, right? So, I'm not even making the case that we should ignore valuations. I think valuations need to be seen in the larger context of the growth opportunity that exists, right? And if you were to take a 4 or 5 year view, would we be willing to pay a slightly higher price now for a high quality business that can compound earnings at north of 20 and 25%? I think the answer is yes, right? So one needs to be mindful of the underlying growth opportunity and then balance it out really with the price that you're willing to pay for it, right? One of the other things that we do is also try and identify some of these foundationally solid businesses which are going through transient problems, right? And what that transient problem leads to is for valuations to compress and correct. And so if you have a structurally solid business going through a temporarily bad period, valuations have come off, then the risk reward becomes a little bit asymmetric, right? So, those are some of the businesses then that become, that much more interesting.
Point taken. Are you alluding to the QSR space, Keyur?
Yeah, so I think QSR. If you think about it, right? I wouldn't want to get into sort of specific stocks, but if you just take the instance of Jubilant FoodWorks, right? It's a name that we sort of looked at. So again, if you think about it, last 5, 6, 7 odd quarters, foundationally very solid. Gone through a perfect storm of problems, if you will, right? Where you have competition, where you have inflation, where you have the entire sort of ecosystem going through a demand slowdown, and then you overlap that with all of the actions that the business has taken through that particular period, right? And then you sort of look at where the business is today, right? Where in that entire pack you've had Jubilant, which is clocked up double-digit SSG for 2 quarters in a row, right? And that's far better than any of their peers, right? So it's those pockets of opportunities that I'm alluding to. So one needs to be very, very selective. One needs to be mindful of valuations. But if you have these asymmetric opportunities that are identified, then those could end up doing extremely well for you.
Keyur, within banking, financial services, insurance, you've tried to kind of cover the entire financial services, the third big pillar of the theme that you expect to play out. How would you play it? What's the best way? And I'll first break it up. Within banks, PSU, private, small, how would you play banks first? Thereafter, I'll look at NBFCs and insurance.
Right. So I think the pecking order would be private. Philosophically, PSUs are pockets that we don't look at for a variety of reasons. So private is where our interest is directed. And then again, in private, it's a combination of some of the more larger frontline, well-established ones, and then pockets of opportunities on the emerging names, right? Where again, these are businesses foundationally solid, got phenomenal franchises and brand value, but going through temporarily, transient issues. And then putting in place all of the right things that will allow them to come through this period that much stronger and that much sharper, right? So I think that's where our sort of focus remains, right? So private sector banks, some of the larger frontline ones, and then some of the more smaller ones which can go on to take up the number 5 and number 6 space, taking out the top 4.
Point taken. And with regard to NBFCs, other lenders, whether that's AMCs or otherwise, would you like that or would you stay away? Of course, it's an interest rate falling environment, which is positive tailwind for all of these, but you will likely see some of those also translate to the customer or the consumer, right? You will see those rates transition and get pushed through to the consumer. So I'm not so sure as to how much of those rates they'll be able to hold on to, and hence coming to the question, how do you view that?
Correct. So again, on the NBFC side, one needs to be extremely selective. So again, the top tier, where valuations have sort of moderated, growth rates have moderated as well, right? But if you look at the top 2 or 3, you still see the commentary around AUMs growing at north of 20 or 25 odd %, right? So from even that scale and size, the penetration opportunity is fairly significant, right? And then when you drill down, we see niche NBFCs that are focused on specific product segments where there's really limited competition, right? And again, that's where our attention and energy is focused, right? Where you have growth of north of 20, 25 odd %, where you have very, very specific niche focused players where, credit quality is not an issue and where, the businesses have been extremely calibrated in the way that they've managed this entire cycle over the last 2 or 3 years, right? Both the up cycle and the down cycle with respect to interest rates and with respect to credit quality, right? So you still have some of those businesses where the growth remains and where valuations still are fairly comfortable relative to the earnings growth that can materialize for these businesses.
So within the entire lending basket, you still prefer the larger private sector banks, it seems. That will still be your first port. And thereafter...
That would be the first port of call.
Yes.
Absolutely.
And thereafter, some of the smaller names. What makes you constructive that the cycle will turn for some of the smaller names, Keyur?
Yeah. So I think it's, again, going back to what I said, right? So you have a foundationally solid business which is going through a transient period where, there's issues. And then you overlap that with the fact that you are very, very certain that the management, the CEO, the management team is executing on the right set of strategies to come through and address those problems, right? And so what that does is that, over 2 or 3 quarters, obviously the business goes through a little bit of a choppy period. But if you were to then zoom out and, take a 3 to 5 year perspective, then, you end up, seeing the business in a very, very different way, right? So, foundationally solid business, temporarily bad period, compressed valuations, management team doing all of the right things, is a pretty interesting setup if you were to have a 3 to 5 year view. And some of these sort of, tier 2 private banks, if you can call them that, certainly, display these characteristics.
Okay, thanks so much, Keyur, for coming in and having that quite comprehensive chat with regard to Indian markets and your preferences. Interesting to get that from you. You know what? While we were having that chat, we've had a slew of numbers which are coming through. Let's quickly update you on some of them. Campus Activewear flashing at the bottom of your screen, 7% higher on the PAT number. Street not enthused, but believe the stock is up around 1% or so. The other one is Samvardhana Motherson. Q4 numbers came out as well, maybe a short while ago, around 15 odd minutes back. Plenty of fluctuation on the stock. Puneet's here with a lowdown with regard to those numbers. Puneet.
Well, Harsh, thank you for that. It's definitely a weak set of numbers for Samvardhana Motherson. While they were able to maintain their margins at 9%, it's a fall from the previous year, and that's largely led by the company's couple of verticals, which is the Vision Pro vertical of the company. So let me go through the top numbers. Revenue grows 6% at 29,317 crores, while the EBITDA is actually down 1.6%. That subsequently dragged the margins by 70 basis points to 9%, and the net profit has come in at 1,000 odd crores in this particular quarter. The key aspect is that they have various plants under construction. 14 green plants are actually currently getting constructed around the world. 9 will come on stream in FY26, but because of that, the capex is elevated at 4,400 crores. In terms of key verticals about the company, while the wiring harness, which is a key mainstay in terms of revenue, is up 5%, the vision systems vertical is down actually 6%. So is the integrated assembly vertical, down almost 7% in this particular quarter. Now, there were some elevated costs that were expected to come into this particular quarter because in FY25 they've started to have some plants come on stream. Because of that, the employee cost is inching up, and the other key negative was the commodity cost. Copper has stayed elevated again in this particular quarter. We got a glimpse of that in the Motherson wiring numbers as well, but largely it seems to be that the numbers are largely weak. The only key positive I can pick out is the emerging businesses. The revenue is actually coming at 3,200 crores, and that's up 41% compared to the previous in the same time last year. Essentially, they've also mentioned that the aerospace business, which is now part of the emerging business, revenue has actually gone up 1,700 crores versus 338 crores last year. So that might be the only positive outcome coming out of this, the emerging business. They've also operationalized one new plant which has seen some sharp ramp up. That is in the consumer electronic business, and what that is it makes the screen essentially. It's a display module business for Apple, which is used in iPhone manufacturing. So the company is trying to, go into the non-auto side of the business, and I think some commentary there will be helpful. But largely, the auto business has dragged the margins this quarter, and that's visible in the numbers as well.
Okay, so that's a comprehensive view with regard to Samvardhana. Stock now perked up 1.5%. Puneet, not too happy with the numbers though. What we're going to do is we're going to slip into a very short break. On the other side, we'll get you all the chatter from dealing rooms in our segment Heard on the Street. And of course, we'll start taking up individual names and start getting a crux of all that's happening in terms of individual buzzers in the market. Stay tuned.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Well, not much activity in markets, frankly, today. It's been a flattish kind of a move on the Nifty 50 index. We're absolutely on the flat line at this point. Just a slight hint of green on that screen, at least on the Nifty index. The Bank Nifty, though, 1/3% lower. So that's where some of the pressure is being built up. It's also keeping a lid on the Nifty 50 since it's a heavyweight. Within other sectoral indices, I want to quickly mark out the Nifty Defense Index. It's had such a stellar run. Not a bad day at the office today either. 1/3% higher, building on the gains that it has clocked. But, that time of the show where we bring in Somit and he gives us all of the chatter that's playing out in dealing rooms. Somit, always interesting. What do you have for us today?
Well, a couple of fundraisers what the buzz is on the street today. Firstly, on IRDA, dealers are indicating that the company will soon launch its fundraise and it could be via QIP as well. So keep an eye out for that stock. The company had earlier enabled the resolution for fundraise, but the announcement for that could come in very soon. Walchand Nagar is another stock that has caught the eye of multiple dealers on street because they are indicating that an influential investor has started to accumulate this counter at lower levels. So keep an eye out for this counter as well. Sigachi, there's the another stock where there could be a potential fundraise. Now the buzz on the street is that the company will soon announce a fundraise via private placement, and these shares of company might be issued to these private investors at a premium as well. So keep an eye out for Sigachi. Torrent Power, now dealers are indicating that that the company's bid to acquire the assets of JP Power, it might be successful in that front, and this announcement could come in anytime soon for Torrent Power. And lastly, Godrej Properties and IGL. Now, for Godrej Properties today, if you remember, Morgan Stanley had downgraded the counter. The stock was down in trade, but dealers are indicating that there are strong buy flows on both these counters, that is Godrej Properties and IGL, and that is one of the major reasons why both these stocks are up more than 2% in trade from their day's lowest point. So keep an eye out for Godrej Properties and IGL as well. For IGL, the delivery volumes could also be on the higher side, as we have seen for the last couple of sessions.
Okay, thank you so much for that, Somit. We'll let you go on that note, but let's bring in Vineet Bolinchkar and also have with me Tamanna Inamdar joining us in studio right now. Let's quickly bring in Vineet. Vineet, any views with regard to some of the names which Somit has thrown at us? One is a Walchand Nagar, where there's some bit of interest, if I can call it, buying interest that we're seeing, and anything you're liking. Would you track this counter firstly? Are you liking it? Second is Sigachi. That's the other one that stood out for me. Views?
I think Walchand Nagar is pretty much held on to its overall gains, since last time that it went up, it had gone to a high, has seen a high of about 400 plus. Now it's kind of consolidated and coming back up. But I think that, in defense, industrials are the way to go. Walchand Nagar has got very, very good industrial capabilities, and it can be a very, very good play in this sector given its stronghold that is there. So while they do not talk too much to people, I still feel that there is interest out there. Having said that, we don't have any concrete research on that counter as such.
Any take, Rajesh? First off, good afternoon. Welcome, both of you. Rajesh, your take with regard to something like an IGL. It's up almost 2.5%. What Somit was saying from the lows of the day. The other one is with regard to Godrej Properties. In fact, the real estate index is doing very, very well in trade today. Your take?
Good afternoon, Harsh. Good afternoon, everyone. So IGL is looking promising. The way stock is now negotiating with its multiple supply zone on the weekly chart, it clearly shows that there is a possibility of breakout above 216 level. Once this breakout happens, I think we may see a good rally towards 228 to 232 kind of zone for IGL. So stock is looking bullish for near-term perspective. On the daily chart, stock is comfortably holding about to all its near-term moving averages. So I think one can buy and accumulate this stock with stop loss of 209. As you spoke about Godrej Property, yes, this stock is also looking promising, as whole real estate basket is also looking promising. Godrej Property is now almost trading near to its multiple supply zone of 2250, which is immediate resistance for the stock. Looking at the activity in last 10-15 week, stock is now showing sign of bottoming out after the consolidation. And once this breakout happens about 2250-60 zone, I think here also we could see a rally to unfold towards 2150 to 2200 kind of zone, or 2400 kind of zone. So I think this stock also one can look to buy with stop loss of 2200.
Okay, Rajesh, before I throw open the house and ask more questions, let me take your view with regard to the index first. What's the index call? We've seen some bit of consolidation at these levels. What's the take like? What's the outlook like? We're closing in today, of course, on the index pretty much flat, maybe an hour or so to go. What's the take, and what's the outlook for next week looking like? If you can give us your view.
Sure. So for intraday perspective, as we are on expiry day for the May series, so I think very tight range would be there throughout the day now. 24,800 is likely to act as a resistance zone because most of the call writing activity has been witnessed on that strike only. If any move comes before expiry about 24,800, then yes, there could be some short covering may trigger, and then possible another 50 to 100 point up move can be there. But it will be purely expiry adjustment only. On the downside, the major put base concentration is placed at 24,700, 650 zone. So I think this level is likely to act as a major support area for intraday perspective. So I think expiry would be around 24,800 plus minus 20 point, looking at the data till now. For Bank Nifty, 55,400 is the key hurdle for intraday perspective. Here also the major writing on the call side is visible at 55, 400, 500 zone. So I think this may act as a steep resistance for intraday perspective. So for Bank Nifty also, I think it may expire around 55,400 kind of zone on a expiry day. And for coming week, our view is bullish as broader market is showing good strength. Nifty is consolidating ahead of this expiry. We believe that there could be a breakout in the June series, and once we able to cross about 24,850, 900 zone, I think rally can extend towards 25,300 to 400 zone also. So market is consolidating, and I think in the first week of June series, I think we may see a higher level above 25,000 level. At this juncture, we are keeping our stop loss towards 24,600 to hold and accumulate the Nifty.
Okay. Hi, Rajesh. Hi, Vineet. Tamanna here as well. Rajesh, let's hear your stocks for this afternoon. What's on your radar?
So Tamanna, good afternoon. So two stock ideas. One is Chennai Petro. The way stock has managed to give breakout on the weekly chart of its inverse head and shoulders sort of pattern, we believe this stock can continue further more upside and possible really towards 760, 770 we may see in the near term perspective. So this stock one can buy with stop loss of 714. Another stock that we like is Adani Port. This stock is showing strength, and the way stock is now trading near 1430 mark, I think this is the highest point for this series. We believe that continuity of uptrend would be there in the new series also. Adani Port can extend its gain towards 1470, 1480 zone. So one can buy Adani Ports with stop loss of 1408.
Okay, stay on for an NDTV Profit exclusive. And this is a story that we've been on top of right from the get-go. Now, in the wake of insider trading revelations at IndusInd Bank, the government is pushing for a fair and independent inquiry. In fact, there might now be a police complaint. Shrimi Chaudhary joining in for more exclusive details.
Yeah, very important piece of information coming in where the government is pressing for fair and independent inquiry in the IndusInd Bank insider trading case involving former executives of IndusInd Bank. Sources tells us that bank board has been advised to file a police complaint in the case, following the SEBI ex parte interim order, barring 5 notices, including ex-CEO from markets. Sources tells us that after police complaint, being filed, the federal agencies could look into it, whether this case is fit under the criminal provision. So accordingly, they will take up the matter. On the other hand, SEBI, which is, the investigation is already underway. The quasi-judicial authorities, led by whole-time member, is expected to hear the submission and objection of IndusInd executives, which is there in the list of order, and based on their submission, they will pass a final order in the matter, which could include, disgorgement and penalty. In fact, some steep penalty is the indication we are getting. Now, sources also tells us that that in the insider trading case, typically the penalty range between 10 lakh up to 25 crore or the 3 times of the profit, whichever is higher. So two aspects is clearly emerging here. One, from the SEBI side, where we could see the final order in the case after submission and objection of the IndusInd brass, former brass, and the other, we could see some action from the criminal aspect as well, as far as criminal proceeding is concerned.
Thank you for that, Shrimi. Now, IndusInd Bank and the stock performance today is just astonishing to say the least. The stock is actually close to its day's high of 84.90 at 822.35, up about 2.5%. Vineet Bulinshkar, what is the view on IndusInd Bank? Is this a sense that whatever dirt is now coming out is attached to people who are not sitting on the bank's board anymore, and the bank's board will come out unscathed? Is it a feeling of worse is over? What's the trading call here on IndusInd Bank?
So I think we have to look at it as that whatever fraud or whatever negative is already priced in, the bank has recognized it and put it behind them. So from here, I don't see any negative outcome coming from this. The other thing is that this histrionics will keep playing out now. They'll keep dragging on. It's just newsy stuff, not having any bearing on the stock. And, the market will be looking for who will be the new CEO and what will be the strategy. I'm sure strategy will be more of the same. And the bulk of the effort of the bank would be to keep their existing depositors intact, which they've to a large extent succeeded if you see in the Q4. And so with very little downside risk from these current levels, I think the stock becomes a contra buy from my point of view.
It's a contra buy. What are the levels you're seeing for it, Vineet? Then I'll come to Rajesh on levels as well, but I know that this is something maybe you have a view on.
I think, we will see a gradual pickup because, the banking industry itself is strong. Credit growth is very, very vibrant. And there should be no reason why it should not mimic the industry trend to the bare minimum. So getting 10 to 12% CAGR growth in advances should be what the bank should be doing. I think it can head to 1,000 plus in the medium term.
Plus in the medium term. Rajesh, you have a view on IndusInd on the charts?
So again, on the near-term perspective, yes, I do also have a bullish view on the stock, looking at the price behavior, which we have witnessed in last couple of weeks. The way stock has recovered from the 750 kind of level, despite of multiple news flow was there for the counter on the negative side, but stock has absorbed all the supply pressure around 750, 770 zone, and now stock is comfortably holding about 20-day, 50-day moving average. The way stock has moved up above 800 mark in last couple of days, I think if it continues to trade above 805 zone, I think there is a possibility of 860 to 870 in the near term for IndusInd Bank.
870 to 880. Interesting. It's a contra call right now that the street is seeing on IndusInd Bank. I mean, whatever happens on the investigation side of things is going to be separately. But time to talk about stock of the day. And this is a really interesting one because Cummins India is on the radar. If you look at the numbers by themselves, they weren't great, to be honest. There was a dip on pretty much all metrics, including the top line. In fact, UBS says that what they've seen on revenues this quarter says that the best is over. Despite this, a smart up move and nearly 6.5% up. Anushi is joining in to tell us why. Anushi, what did the management say in the con call that this morning that seems to have enthused the street?
Right. Firstly, when we just look at the numbers in their own sense, now what we've seen is a 6% of a revenue growth, which was a miss in terms of where the estimates were concerned. But what worked out for the company were the margins this quarter. Now, margins, despite seeing a downtick in the quarter, they were above what the street was estimating. So that is why we are looking at some bit of that positivity for the stock coming in. Now, if you look at the margins, they were down about 234 basis points to 21.2% as compared to 23.5%. However, the estimate was for a 19.4%. So what worked out was better than expected gross margins. Along with that, why the margins were down, there were some one-offs in the last year's quarter which resulted in this higher base effect for the company as well. So margins and profit were lower on these higher one-offs as we speak. In terms of where the management FY25 guidance was concerned, in terms of the double-digit growth guidance, they did meet that FY25 guidance with a 15% of a revenue growth. In fact, if you look at the management commentary forward, they did state that this is what they expect to continue forward for FY26 as well. So they're anticipating a double-digit revenue growth. When asked about whether this should be in the early teens or late teens bracket, They did not get into the specifics of that, saying that they remain cautiously optimistic in terms of whether geopolitical developments, in terms of whether tariffs are concerned for the business. Now, the key, or rather the important segment for the business is the power gen sales. Now, they were lower due to the effect of pre-buying last year. So now, going forward in FY26, this is something that we should be watching out for, considering the new emission norms which are there, that's CP/CB 4+ norms. They expect the velocity to catch up to the earlier norms, at CP/CB 2 norms, in the next 1 to 2 quarters. Even in terms of where the pricing dynamics was, that was one aspect that the street was looking forward to because of higher competition here. So management does expect some bit of stabilization in the next 1 to 2 quarters as well, over here as well. In terms of where the other segments are concerned, now they are saying that they are not seeing any sort of slowdown in where the data center markets are as of yet. In fact, they're seeing a lot more inquiries coming up. Even in terms of railways, they've started seeing more order inflows flowing through. So that is something that we should be keeping an eye out for. Capex now is expected to remain in the same range as last fiscal. So no surprises there in terms of where the Capex is concerned. So that's as far as where the overall outlook is for Cummins India. But in fact, we also spoke to the management earlier today, wherein she talked about the FY26 outlook. So do listen into that as well.
From a domestic business perspective, power generation business across different segments is showing demand. So be it the data centers, infrastructure related segments, residential realty, commercial realty. So we are seeing demand, broad-based demand in the power generation segment, domestic business. We are also seeing good acceptance of our CP/CB 4+ products and customers seeing the value of the product. From an industrial business perspective, rail is showing good demand, and construction business is holding on to demand that we saw in the last few quarters. Aftermarket business has done well in the last year and continues to grow. Our service contracts and rebuilding the engines in the market, we are seeing some good orders come in, and all of those will contribute to the growth in the next financial year. And then exports, like I said, we are continuing our efforts to grow the exports. You have seen exports growing in the last few quarters. Definitely there is uncertainty from an exports perspective on how the trade deals will work out, how tariffs will settle in. So that's what I can say from an export perspective. With domestic business, we are seeing demand coming from power generation, from some segments in the industrial business and our aftermarket business.
Okay. So Cummins was an interesting story. Vineeta, I don't know if you saw the numbers, heard the con call and had a call on what's happening with Cummins. Was it seeming like a good story to you?
No, absolutely. And recently there were reports that Asia is falling short of, power generation given the demand coming from AI and data centers. And to my mind, then this becomes a veritable, company that you cannot live without. So I think India has also become a very sourcing base. So all these things point to very good times for Cummins going ahead.
Do you like Cummins on the charts, Rajesh?
Definitely. So technically, stock managed to give breakout of last 3-month consolidation range. So looking at the near-term structure, yes, there is a breakout, and I think if it continues to trade above 3100 mark, I think we could see furthermore follow-up buying action in the counter, and possible target towards 3250, 3300 we may see in the coming days. So yes, Cummins is looking attractive to buy and accumulate at this juncture with stop loss of 3100.
3100 stop loss is a buy on Cummins for Rajesh Palvia. I think Waaree Energies is the other one that I want to look out for, having a rebound after quite a bit. This is the taco trade. In my view, what we are seeing with Waaree Energies. And for those of you who've not yet heard the term, I think it's the word of the day, Harsh. Trump always chickens out. Have you heard this term, the taco trade?
No, I wasn't aware
I even have a soundbite from Trump on it, if we can pull it out, if our producer Suhana can pull it out, because he gets asked this question in the White House, that what do you make of this term, the taco trade? The taco trade is basically Trump always chickens out. He's going to say, I'm going to do this, and then reverses it the next day. And so that stock goes up. So that is the taco trade. It's a real thing, and you're probably seeing it on Waaree Energies as well. In fact, I think they've pulled up that sound clip for us. Let's listen in to what Trump said.
Mr. President, Wall Street analysts have coined a new term called the taco trade. They're saying Trump always chickens out on your tariff threats, and that's why markets are higher this week. What's your response to that?
I kick out?
Chicken out.
Oh, isn't that nice? Chicken out. I've never heard that. You mean because I reduced China from 145% that I set down to 100 and then down to another number? And I said you have to open up your whole country. And because I gave the European Union a 50% tax tariff, and they called up and they said, please, let's meet right now. Please, let's meet right now. And I said, okay, I'll give you till July 9. I actually asked them, I said, what's the date? Because they weren't willing to meet. And after I did what I did, they said, we'll meet anytime you want. And we have an end date of July 9th. You call that chickening out? Because we have $14 trillion now invested, committed to investing when Biden didn't have practically anything. This country was dying. You know, we have the hottest country anywhere in the world. I went to Saudi Arabia. The king told me. He said, you got the hottest we have the hottest country in the world right now. 6 months ago, this country was stone cold dead. We had a dead country. We had a country people didn't think it was going to survive, and you ask a nasty question like that. It's called negotiation. You set a number. And if you go down, you know, if I set a number at a ridiculous high number and I go down a little bit, a little bit, they want me to hold that number, 145% tariff. Even I said, man, that really got up. You know how it got? Because of fentanyl and many other things, and you added it up. I said, where are we now? We're at 145%. I said, whoa, that's high. That's high. They were doing no business whatsoever, and they were having a lot of problems. We were very nice to China. I don't know if they're going to be nice to us, but we were very nice to China. And in many ways, I think we really helped China tremendously because, they were having great difficulty because we were basically going cold turkey with China. We were doing no business because of the tariff, because it was so high.
So that was the long explanation of why it's not a taco trade, but clearly the street doesn't agree. And what you're seeing with Wari Energies is a taco trade, probably what you're seeing with a lot of pharma stocks as well. I don't know if Vineet Bulinjkar has a view on this, the taco trade, and what from the Indian perspective could be here. Is it some textile plays, some pharma plays, some auto anchors that could see a reversal of mood if there is a stop to what Trump is trying to do, and which has happened today with the federal court coming in saying that no, you cannot have these reversals, you cannot have these tariff trade wars.
So, what I feel is that if the court has its way and Trump does not, then I think there will be massive cooling of the inflation. It will lead to a little sanity on the yields out there, and that could spiral the IT stocks purely as a play on a rebound trade. Textiles are going to do extremely well because even Trump does not plan to bring textiles in manufacturing in the US, and we've got business deals with the UK trade deal works very positively for us. We are taking market share from China. We are taking market share from Bangladesh. So that the textile trade definitely looks positive, and so will pharma.
Okay. All right. So that's with regard to everything that's playing out global, especially on US tariffs. But let's switch focus domestically. We've got 3 earnings in focus, as we always do. Varsha's here with the 3 top stocks which are moving in trade today on the back of numbers. Varsha.
Yeah, thank you for that. Let me start with Welspun Corp, wherein numbers are in line with estimates. Pipe sales volume was down though 13% year on year, but order book stands at around 19,500 crore versus 15,100 crore. That is quarter on quarter growth. Now, what the highlighting point is the management guidance. Now, revenue growth for FY26 is projected to grow at 25%. EBITDA growth is projected at 18% rather, and ROC to be more than 20%, and net debt EBITDA is projected to be below 1. I think that's one of the reasons why stock is buzzing. Next on the list is Insecticides India. Very nice numbers, especially from the EBITDA front, because premiumization has actually led profit growth. EBITDA margin expansion that you're seeing is led by value-added products, and that's one of the key growth driver for the company even going forward. Last on the list is Avanti Fits. Again, great numbers. Revenue is up almost 8%. Net profit is up 45%. 25%. Margins were at 12.8% versus 10%. Now this one of the reasons is operating leverage playing out for the company, and also significant inventory was sold this quarter is the other reason why you're seeing good kind of numbers.
Okay, so those are three numbers, or rather three stocks where numbers have dominated today, frankly. 3% higher on Avanti feeds as well, and yes, strong numbers. Vineet, what do you make of a Welspun Corp? Because stock is up 10% on the back of the numbers. Give us a perspective on one, the numbers, two, the move. Do you think warranted?
Definitely, and if any kind of positivity plays out in the US, I think things are going to shape up very well for this company. We have a target of 950 on this stock. It's one of part of our conviction list, and I expect this stock to do very well going ahead.
Anything else you're liking in textiles right now, Vineet? Textiles or pharmaceuticals, really?
So textiles is a better play. Textiles we've got a strong hold on this sector. I think we will do well. So Vardhaman has been not that great a performer, but I think it will definitely do well going ahead. So entire pack should do well. In this, our pick is Welspun Living. The tile segment in the US has been seeing a lot of bullishness, and that should also move up for the flooring industry as such. So Welspun Living should also perform well because of that.
Okay, Welspun Living in focus. We have to take a look at another stock today, and for the next couple of days at least, we're at the complete fag end of the results season. You'll see it wrapping up by tomorrow or Monday max if there are a couple of results. So big one going to come after market hours is Bajaj Auto. But another one which actually I would say surprised on the positive is Deepak Nitrite. Let me pull up Deepak Nitrite for you, and 5% up was on my watch list this morning with a thumbs up. Because of the numbers. Some of the numbers, the net profit was down because of a base effect and a one-time expense that they had, or a one-time income that they had in Q4 FY24. But having said that, there are always two sides of the story. This entire space is one that the street has been waiting for a turnaround for at least 6 quarters. Varsha joining us for the bull versus bear segment that we do. And Varsha, that's the big question. Right, apna time aayega, they say. Has it happened for chemical stocks and for Deepak Nitrite?
Well, I would say no, technically, because agro demand is going up, but there's still pricing pressure which is actually affecting all the chemical companies. But having said that, Deepak Nitrite, if you see revenue and EBITDA growth beat estimates, but that is because of the one-time, or rather I would say a government incentive that has been received by the company. Excluding this incentive, the EBITDA was down 25%. It was below 25%. According to estimates. Now, if I were to talk about the bull case, what went right for the company, the demand for dyes and pigments was resilient. This remains resilient, so this is one of the good things that happened with the company. But continued margin pressure, particularly in the agrochemical intermediates, has affected company a lot, and this is true for every other chemical company. Company saw strong rebound when it comes to phenolic segment, which is the bigger chunk for Deepak Nitrite, but advanced intermediates also saw quarter-on-quarter improvement. But on the other side, if you see, the advanced intermediate was subdued. The segment was subdued year on year, and that has also impacted the realization for the company. A company is moving towards 14,000 crores of investment, aggressively expanding into new products, which includes your value-added derivatives also, which should aid margin for the company. But on the downside, if you see, majority of this capex is aligned to phenolic segment, which is into a volatile segment. So majority of capex when into phenolics will create volatility pressure for the company, which may impact margins in the future. But despite all this, if you see, the stock is up almost 5%, because now one reason is today is the last trading day when it comes to companies F&O segment, and the position might be getting squared off, and this may be one of the reason why, despite EBITDA below estimates, the stock is up almost 6%.
Right, Varsha. Varsha, you have a great pulse of chemicals. Talk to us about what is currently keeping a lid with regard to stock performance as well as with regard to numbers. Is it still inventory which is keeping a lid to pricing?
Yes, absolutely. So all the con calls that I've been hearing when it comes to chemical companies, all are saying that agro demand is back, volume. They're seeing uptick in volume, but still pricing pressure persists. Even Aarti Industries says that they are habitual when it comes to pricing pressure that is still existing, and they are continuing to see this pricing pressure over the next 1 year. Even the innovator company, your big global agrochem companies and pharma companies are expecting this pricing pressure to persist in calendar year 2025 also, which might impact your chemical companies which are the generic chemical companies in India. This may not impact specialty chemical companies or the CDMO companies like you have PI Industries or Naveen Fluorine, but the companies which are into commodity chemicals may get impact because of the flat performance expected by global pharma companies.
Point taken. Thank you so much, Varsha. Vineet, let me come to you with a quick question. So what do you do in this scenario? You wait and watch? Do you enter? Because the markets will play lead and lag. You will first see stock moves, and thereafter you will start to see commentary as well as likely numbers start to play out. So there will be a lead with regard to how markets will move, or some of the stock prices will move on this one. How should you play this?
I think there is very little downside risk at current levels, and there's a nice, it has held the ground very well. So I think the stock can, break out from here. We can get those moves ahead. So risk reward is very much in favor of Deepak Nitrite, and I think it should do well going ahead.
Okay, so that's Deepak Nitrite. Anything in the chemicals you're liking, Rajesh?
I think SRF would be our preferred choice, as stock is, after a strong release, stock is now consolidating, and in this consolidation, again, stock is available near to its multiple support zone, which is placed at around 2800, 2820 zone. So I think risk to reward for trader is more attractive on SRF. So this stock will continue the momentum on the higher side, and possible target towards 3,200 we could see in SRF. Again, from chemical basket, yes, Deepak Nitrite has also managed to give breakout in today's up move. So looking at the breakout on the near term chart, this stock also can be looked at for near term trading perspective. One should keep stop loss towards 2060 for trading point of view, and then on the higher side 2140, 2150 would be the immediate hurdle where one can book profit.
Deepak Nitrite, you would say book profits at current levels, Rajesh? Is that what you said?
2140, 2150 would be the level where one should book profit.
Okay, 2140, 2150 to book profits. Now, I just want to talk about something that really caught my eye, Harsh, and this was, topic of discussion in our newsroom, only because it's telling you about what's happening in the market right now, and it's no comment on the company per se. Jet King is a micro cap. It's an 80 crore top line company, but they put out an exchange notification today saying that they're raising funds. So it's an 80 crore market cap, company size.
Yes.
6 crores is what they want to raise to invest in Bitcoin.
Yes.
They've actually
and they already hold
this.
Bitcoin.
Okay.
They hold Bitcoin worth 12 crore on books, and that Bitcoin is now worth 18 crore. So that strategy, if it is one, seems to have worked. And suddenly it seems that if Bitcoin were to rally, this will become a deep value stock if it only does, just out of pure jest, frankly, viewers. But see, yes, it's a fascinating story.
No, it's fascinating because what does a company actually do? If you think about what Jet King actually does, it specializes in hardware, networking, digital courses. They have training centers in India, Nepal and Southeast Asia. So it's a very different business. Abhi side mein, unka Bitcoin ka chal raha hai. My question is, if the notional value might be 18 crores, if they sell it in India, 30% tax.
Yes, that's true.
So what are they going to do with it? It's just giving me a bit of a sense into how much froth has perhaps come into this market?
It has, and that, Tamanna, in fact, also, if I were to just sidestep this story, the number of promoters selling that we've seen in recent weeks, the fact that IPOs have come back in recent weeks, all of that kind of points to the fact that we're back in a very buoyant environment, if I can call it that.
Buoyant is one word for it, but this is, I don't know, this is Delulu or what, I don't know what you guys call it nowadays, but you know, Vineet Bolinchkar, did you see this story about Jet King? And we're not like saying anything about the company, each to their own, but they're going out and they want to raise public funds to buy Bitcoin.
So I think, Bitcoin is in the news because that's the way that the US government is looking to siphon the demand for precious metals away from that because there's a shortage of that. And Bitcoin is supposed to go up, right? So I don't know. I wouldn't count on this, but can't say much on this.
And Vineet, sorry, do you think that some bit of froth that's starting to build up because we've started to see promoters sell maybe a little bit of their stake, trim their stakes? We're starting to see IPOs come back. And do you believe that this is back for good? Is this a sustainable trend? Something that we can continue to see?
See, you know what, we saw what the Trump tariffs did. But, it has not really trickled down to addressing the elephant in the room, and that is the fiscal deficit and the debt as such. So I believe that, with the government, with the courts warding off Trump, and if companies, if the imports resume in the US, then we might have some kind of a dip on the interest rate scenario, and it pushes the can down the road a bit. And that is positive for markets as well. So we could see that play out. But the fiscal deficit situation in the US and the way the Japanese rates are going up, they are turning out to be a very hurdle for the markets globally for equities. And we are finding it very difficult to cross 25,000. So to be bullish on these markets, 25,000 is what we need to see take out. And then only I would be more comfortable.
I also, quickly want to mark out the Nifty Bank. And I want to quickly look at that chart. They've seen a sharp rise on the Nifty Bank. We're now up 0.25% on the Nifty Bank. Let's pull up all the constituents. 140 points up, obviously, from the flat line. But from those lows, it's over 200 points up. And what we're seeing, of course, IndusInd as is, but you're starting to see some of the larger banks. If we can quickly pull up the intraday charts for them, Kotak and ICICI and HDFC, just want to see where those spikes are coming from. There you go. And Axis seeing a bit of a spike, Kotak as well. And there you go. And ICICI also seeing a bit of that. Rajesh, your quick technical take with regard to this one?
I think yes. So this is an expiry move which is coming in the Bank Nifty, and now Bank Nifty crosses 55,500. That's the major call concentration, and some covering is visible in the data. So I think if it's hold 55,500, yes, a rally can extend further. And as we are bullish for the coming week, also for the June first week of this June series, we believe that if it's hold above 55,500. The next target for Bank Nifty would be around 55,800, even 56,000 for Bank Nifty. So yes, I think the expiry trade has played out on the higher side, and we see that this bullish momentum may extend further in the coming day also.
Okay. All right. Let's talk about the statement which has come in from the sidelines of the CII AGM, big event in the national capital today, where you've had the who's who of corporate India also coming in. Bharti Enterprises founder and chairman Sunil Bharti Mittal spoke about crypto and AI, highlighting that having a regulatory framework, especially for crypto, could be the need of the hour.
I only saying that things have started to move very fast on crypto. And of course, AI, we already discussed, is moving very fast. And this is an area where the government will have to start applying their mind on how to ensure that the right regulatory framework is available for India to make full use of AI, crypto, whenever the time comes. I don't know, CI has been very strongly pitching for it. It made a presentation to President COVID Committee as well. All I was saying was this is an area where I think the chamber must play its role. I think they're progressing very well. I think that Mr. Goyal is doing a great job going back and forth. I am very hopeful.
Okay, so that was the take from Sunil Bharti Mittal on AI as well as crypto. On AI, Harsh, so I had the opportunity to speak with Sunil Bharti Mittal once, and he gave this very interesting anecdote about how the head of his Middle East business received a phone call, and from him, ostensibly, would say that please transfer so and so money to my account. And he thought it was weird. So he called back Mr. Mittal and said, did you ask for this money? And he said, no, it wasn't me. And he made him hear the recording, and it sounded exactly like him. Even he couldn't make out it wasn't him. So he was like, this is what AI can do, the deep fake aspect of it. Of course, there's so many positives,
it's a huge risk.
But this is there as well. So
yeah, and we have this latest trend of people lending their voice by recording it for a minute and thereafter lending it. So that kind of this kind of adds to the risk.
Lend it where?
To any platform, for books, for audiobooks, for various other.
Do it at your own risk.
Various other means.
Yeah,
so
yeah.
yes, that's a risk.
Yeah,
yes.
From AI to autos. So we're having a great afternoon here on India Market Close, where we're taking you through to the end of trade, which is honestly fairly quiet. But all the action will be after market hours with the Bajaj Auto numbers. That's something that we're waiting to watch. A flat Q4 performance is expected, weighed down by weak domestic volumes. Puneet tracks the company very closely. Puneet, stock is completely flat but in positive territory. What will you look out for from the numbers?
Well, largely numbers are expected to be flat, just about a 5% revenue EBITDA as well as net profit growth. But one of the key things that I will be looking out for is from what comes out of the KTM as well as the news around that acquisition. Now, the key aspect is that the company didn't have any kind of growth in this particular quarter, just 3% sales growth, and the domestic market actually has fallen in terms of sales performance by 8% in this particular quarter. They've now recorded negative sales growth in this year for the 6th consecutive month. So they did highlight about some of the key aspects of new product introduction as well as the market maturing, but there seems to be a systematic problem, at least for both Hero and Bajaj, and that will be some of the key questions they would want to answer. In terms of KTM, the company is looking to invest roughly 800 million euros in KTM for now. 200 million euros in terms of equity has already been invested in the month of April, and on May 23rd the company did come out with an exchange filing. They will be raising 600 million euro of debt from various financial institutions for funding this acquisition. Now, for some context, KTM went into liquidation back in November of 2024. And in February this year, they did come out with a plan of paying off at least 600 million euros by May 23rd. That has now been done. So it could possibly be that the company could go ahead and acquire KTM in the future, and that will have some near-term impact on EBITDA as well as profitability. But it could boost its long-term potential to become a global motorcycle player. On one side, we have Royal Enfield that has its very strong presence there, and TVS also acquired the Norton brand from UK back in 2020. So this could be a long-term opportunity, but has some risk, at least in the short term. So definitely some commentary there will be something to watch out for. But FY26 seems to be a tough year for the company. So this could also be a double-edged sword, to say the least. But a key result in the auto space today, amongst the others that are expected to come out, because we're also expecting results from Ola Electric as well. That one's also going to be a tough one in terms of losses on the EBITDA side. But largely for Bajaj Auto, a very, very important quarter.
Clearly, a very, very important quarter for Bajaj Auto at this point. I just want to pull up numbers for Engineers India and that intraday chart as well. Let's look at Engineers India. Numbers have just come. You're seeing that sharp vertical spike, nearly 4% up. So here's what the numbers are looking like. Net profit at 280 crores versus 115 crores. Revenue is from 805 crores to 1010 crores. They will be paying 2 rupees dividend per share. EBITDA at 77.4 crores to 301 crores, and margins have gone from 9.6% to 30% nearly. I mean, this is astonishing, and I think, Harsh, you've been looking at the details.
Yes, so I want to quickly mark out a couple of numbers that are really standing out within this company's results. You're seeing technical assistance and subcontracts, which used to account for 285 crore, rise by just about less than 20%. So keeping in mind that your top line has gone up by 25%, this number is far lower than that and therefore is aiding the margin number. The other one is construction materials and equipment. That has actually come down 25% on a YOY basis. So despite the top line going up 25%, you've got around a 25 to 30 crore delta there. And then you have other expenses where the largest delta comes from. 90 crore number last year, this year just about 11 crore. So you're seeing an 80 crore delta there. All of that adding to the EBITDA along with that growth in the top line. And therefore what you're seeing is very strong tailwind on the margin, which is leading to profitability. Very strong surge. That's how it's playing out.
Vineet, are you looking at this company, Engineers India?
No, I don't track it, so difficult for me to comment on it.
Okay, no issues. On the charts, Rajesh, have you been seeing Engineers India chart? Sharp uptick there.
Yeah, so stock is looking bullish on the weekly chart, and the way stock has moved up in last couple of weeks, there is a higher high-low formation on since last 3 weeks. So it shows that there is sustained buying action is happening in this counter, and I think now stock managed to view breakout of its December swing high. So looking at the breakout on the weekly chart, we believe that till stock is holding above 214, I think trend is likely to exhibit on the bullish side, and furthermore upside towards 225, 228 we may see in the near-term perspective.
Okay. Rajesh, while we are at it, your BTST, STBT trade?
So two BTST, one is Jindal Steel and Power. Stock is looking bullish. The way stock is now closing near to the day high, we believe that 995 would be the next target for the stock on the high side. We feel that metal space can do well in the coming days, so Jindal Steel and Power can be looked at to buy with the stop loss of 955. Another stock is Oil India. Here also we are witnessing a breakout of falling channel on a weekly chart, and there is a sustained buying action is taking place in this counter. So looking at the breakout, we believe that Oil India can extend its gain. 458 to 460 would be the next target. Keep your stop loss around 439 to buy Oil India.
Give us your take, Rajesh, with regard to a Force Motors. What's up with that one? 6% higher.
Yeah, so stock is looking bullish, and the way stock is now trading near to it at all-time high trajectory, I think we could see further more traction towards 12,500 to 600. Buy and accumulate would be the strategy. Stock is bullish across all time frame, so any minor dip should be used as a buying opportunity. Keep your stop loss around 12,100. Next target is 12,500 to 12,600.
Would a Force Motors interest you from a fundamental perspective? Been very strong in terms of its performance. Also, the new product looking very interesting.
Yeah, I think the company is doing really well, and they don't talk to analysts, but I think it's a good company doing very well and should be rewarding shareholders immensely going ahead.
Okay, let's take a look at some of the defense plays that have been buzzing today, including Garden Reach. We spoke with Garden Reach today. Yeah, over there you have the defense plays. Unimech doing really well. Garden Reach 8% up. We've seen a nice spike in the last couple of minutes on Garden Reach. I'm not sure if some news has come in, but the quarter has been fantastic. We also had a great conversation with the management today who's talking about a robust order book only growing and keeping up with margins that they've seen as well. Listen in to what Commodore P.R. Hari, the CMD of Garden Reach, had to say.
The major project that we are executing, almost 50% of our order book is from the P7 Alpha frigate project, and with the first ship expected to be delivered in a couple of months. So we intend delivering the ship in July, and with the second and the third ship at a project maturity stage where maximum revenue accrual is expected, our revenue is expected to maintain a similar momentum in the coming years. Definitely the margins would be steady. considering we have interacted before also, shipbuilding, we are well beyond the conservative profit margins, and we intend maintaining similar margins in the future too.
How are you feeling about Garden Reach and the defense story, Vineet?
See, I am extremely positive on the defense sector, primarily for some reasons that I'll just share with you. I think you cannot buy US equipment because it's very expensive. US won't allow you to buy Russian defense because they will sanction you. Israel and the European manufacturers are busy, drawn down, and global inventory is at minimal of 10 years. And India is reaching out to 100 countries. We have proven our technology. And, if you see the size of these companies, they're very, very small, tiny compared to the global place. So I think there's a huge TAM for us, not only from domestic manufacturing, but from international exports also. So very bullish on this sector. Having said that, valuations remain a concern, but the momentum is very strong, and I am very positive on future growth outlook.
Would you think, Vineet, a lot of that story has been priced in? Are the valuations making you, do you have comfort with the valuations right now in some of these companies?
No, so I think, like Garden Reach, there's an order book of some 70,000 crores going to come out for the shipping industry. Today they're doing 20,000 crores. How many players can reach out to that 70,000 crores? There are very few. So I think, the order book becomes very, very abundant, and you have got long-term visibility, and that is what the market is baking in.
What are the names that interest you, Vineet, from a risk-reward perspective? What's looking favorable?
I think BDL looks very interesting. Zen Technologies looks very, very strong. Drone plays are going to do very well. So among the large counters, I think these are the two that should be doing well going ahead.
Also a spike seen in something like a Paytm. Rajesh, do you have a quick view? What's happening there?
Yeah, looking bullish. The way stock is now negotiating with its falling trend line on the weekly chart. I think the today's close is very interesting. Now, if stocks continues to trade above 875 mark, I think we could see a rally towards 930, 940 also. The way stock is now giving breakout on the weekly chart, I think we could see traction in this counter on the higher side. So yes, one can buy with stop loss of 868 for Paytm.
Vineet, do you continue to like Paytm? 880 bucks a piece?
It's heading to 1300. That's been a target, and we're consistently bullish on that.
Yeah, Vineet, I wanted to hear your point on this, because you are one person who has stuck your neck out. You've said that right from much lower levels on Paytm. You've said that that's the up move you're going to see. Let's pull up the 52-week chart for Paytm while we're talking about this. Vineet Bullinchkar has said 1300 bucks on Paytm a while ago. Let's see if we get there on that chart. I just want to pull up another set of numbers, Lumax, while we're at it. Yeah, it's been tough this year for Paytm, although. All right, let's just pull up Lumax very quickly if we can. Numbers have just come in. I'm trying to pull up the numbers as I saw them on screen. But looking sharp, huge uptick on the Lumax Auto stock, 6.5%, 8% up. Let me see if we can get those numbers up for you as well. But I saw a hefty bump up, at least on profits coming in. Auto Anks, Vineet, do you like them?
I think with the US court ruling, I think Auto Anks will also rebound. There could be plays out here, and Lumax Auto is very well straddled between ICE and your EVs, so looks positive there.
49.6% up on revenue, 30% up on profits, EBITDA up 70.5%. I mean, this is not just Auto Ank in terms of Trump. This is a great set of numbers, Harsh.
Yeah, it's a fabulous set of numbers, it seems. Of course, we'll break it down, but we're just a minute from close, so a bit distracted in that sense. Let's look at the Nifty 50 index and quickly see where we're zeroing in. 0.5% higher on the Nifty 50 index, where for a large part of the day we were languishing at the flattish point. This is of course an expiry move that we're seeing on the index. By the way, apologies, but thank you both of you gentlemen, Rajesh as well as Vineet, for joining us this afternoon. Let's quickly look at the intraday chart on the Nifty 50, and such a fabulous move at the end that we've seen. Of course, entirely expiry day, very, very likely. Let's look at the Nifty Bank as well in similar breadth in terms of how the intraday chart is shaped up. There you go, led by the Nifty Bank. Let's pull up the Nifty IT index as well. 0.6% on the Nifty Bank, 0.8% on the Nifty IT index. Largely flat, but we've seen slight bit of improvement from those 0.5% levels where we were for a large part of the day where the Nifty IT index is concerned. Let's look at now the heat map with regard to the Nifty 50. We've closed for the day and that's how it's shaped up. The breadth has turned positive and solidly well positive, at least on the Nifty 50 index. A few losers, of course, Tata Consumer leading the pack there. But outside of that, very few consumer names. ITC there, Asian Paints there, but outside of that, very, very few consumer names here. Hero MotoCorp, slight marginal negative. And Eternal sits right up at the top there, 2% higher. You're also seeing an IndusInd Bank 2.5% higher. A Trent up around 1.7 odd percent. Again, no major movers that we're seeing, but the breadth is just slowly swayed towards the green. Let's now look at sectors and quickly try and zero in on which ones have really buzzed today. The Nifty Metal has seen a late surge, 1.4% higher on the Nifty Metal. The Nifty Realty Index is up 1.3% as well, so you're seeing good traction there. You're also seeing a decent move on the Nifty Pharma Index. Losers far and few, just the Nifty PSU Bank and the Nifty FMCG Index in the red at this point. Let's look at the advanced decline. Let's see how that has shaped up through the day. That's pretty much flat. So I would reckon that the Nifty mid cap and small cap haven't made any major moves, and 0.5, 0.6% higher on the Nifty mid cap. So we have seen a move there, and the Nifty small cap as well, around 0.5% higher. So largely in line with the way the Nifty has moved with regard to both of those indices. Last off, the BSE 500 top gainers, top losers. Before we switch focus to tomorrow, and MMTC is up 20%, a Welspun Corp up 10%, and ITI, well, it's been a fabulous week for ITI. It's one of those stories that's really played out well. Believe will be one of the top gainers this week on the BSE 500. That's the one. Cummins India on the back of numbers, of course, and then you have a Deepak Fertilizer also on the also up 5% odd. Some other losers, a Suven, a GSK Pharma, Polymed within the pharma basket, and you also have a Coromandel International, which was down 4 odd percent. Let's quickly look at what to look for tomorrow and what to look out for, keep our eye out on. Some numbers on the macro front, more so US GDP growth rate. That will be the one which everyone will track. Where are we at with regard to, are we looking at a recession or are we not? That's one, of course, one of the main numbers we'll look for. Let's also switch focus to corporate developments in India. What should we look out for? There you go, interim dividend on 3 of those. Nothing major again there, but something to look out for if you hold those shares. Dividend on some of the others. So the dividends will start coming in thick and fast because we are in that season and it's that flavor. Fed Bank Financial, Fedfina, shares, 20% of the shares lock in to expire tomorrow. So keep your eye out on that one. Stock has been under pressure since the time of listing, and some names which we'll look out for, and Apollo Hospitals will be the pick of this pack here. But outside of that, I'll have my eyes on a TCI Express. Again, interesting because logistic play. You have a FEM Industries within the auto play, which will be interesting as well. A Titagarh Rail, can that growth number continue to sustain will be the question. And within the infra basket, of course, you have a PNC Infra as well. Commentary on that front also will be interesting to watch out for. So those are just some, along with the Vodafone Idea, of course, which we will all look out for, and commentary which we will wait to hear as to what is in store going forward. But with that, all the time we have on India Market Close, from Tamanna, myself, everyone who puts the show together, thanks so much for watching. Market Express will take all the action forward. Stay tuned.
markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
lifetime
ICICI
CDSL
CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
lifetime
ICICI
CDSL
CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims?
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. Viewers, Nifty Sensex turned positive during the last leg of trade, supported by strong corporate earnings. Now the indices closed 0.5% higher. ITC and Reliance Industries also dragged the most. While most sectors ended the session with gains, Nifty FMCG and PSU Bank declined. Nifty Realty and Metals also led the bulls, but the advanced decline ratio concluded half distributed between the gainers and the losers. Rupee closes weaker against dollar. The Indian currency weakens by 16 paise to end at 85.53 against the greenback. Walk Hard posts a net loss of 25 crore rupees for Q4, significantly improving from last year's 169 crore loss. Now revenue sees a 6.1% rise to 743 crore rupees, up from 700 crore year on year. EBITDA also turns positive at 64 crore rupees, reversing the previous year's 103 crore loss, while margins stand at 8.61%. The results signal a steady recovery for the pharmaceutical company. Samvardhana Motherson's Q4 earnings reported a 6% jump in revenue, 1.6% rise in EBITDA and over 19% surge in the net profit. The board also recommended a bonus issue of 1 share for every 2 shares held. IndusInd Bank once again in focus. In the latest update, SEBI bars IndusInd Bank's former CEO Suman Katpalia and 4 other officials from the securities market. SEBI also claims that they were all aware of this unpublished price-sensitive information about the lenders' derivative trades. Now, the evidence analyzed during the preliminary examinations reveals that these individuals traded in the scrip of IndusInd Bank while being insiders.
India's top anti-corruption watchdog for public servants gives a clean chit to SEBI's ex-chairman Madhvi Puri Butch in the Hindenburg case, calls all allegation frivolous and politically driven. The anti-corruption body absolved Butch from various accusations, including having investments linked to the Adani group, quid pro quo disguised as rental income, undue gains from ICICI Bank, ESOPs, and a pretense of recusal from certain cases. Vari Energy's bags order worth $176 million for supplying 586 megawatt solar modules to an American client. The company is expected to begin supplying from these solar modules from FY27. Last week, the company's board approved the acquisition of Kama Transformers for 293 crore rupees. Welspun Corp's fourth quarter results stood in line with the estimates, revenue dipping by 12% and net profit jumping by 3 times. While volumes of pipe sales declined, the order book increased from 15,100 crore to 19,553 crore rupees on a quarter-on-quarter basis. Now, margins have improved from 7.4% to 11.7% on a consolidated level. Suprajit Engineering stock falls as Q4 consolidated net profit shrinks by over 50%. Despite this, revenue from operations rises by nearly 12%. Looking ahead, the company projects double-digit revenue growth for FY26, excluding SES, with EBITDA margins expected to range between 12 to 14%. Cummins India's stock sees a sharp rise after delivering robust Q4 results. The company remains confident about its prospects, projecting double-digit revenue growth for FY26 despite the ongoing global uncertainties. Now, during its conference call, management maintains a cautiously optimistic stance, acknowledging geopolitical challenges but also emphasizing resilience in the key markets. Capital expenditure is also expected to stay in line with last fiscal year, with no signs of a slowdown in the data center segment, which continues to show strong momentum. UBS reiterates its sell stance on Cummins, setting a target price of 2,700 rupees after the latest earnings report. Now, the firm highlights that the exports hold steady sequentially, but overall revenue falls short of expectations. UBS suggests that Cummins may have already seen the peak of its earnings cycle. Investors now focus on the potential catalyst as market conditions continue to evolve. Deepak Nitrite stock rises today despite a mixed quarterly performance, likely fueled by its final trading session in F&O. Investors appear to be squaring off their positions, creating buying momentum. The company's strong market presence and the steady demand in dyes and pigments add to the positive sentiment. Additionally, government incentive income boosts financial performance, further supporting the stock's upward movement. Insecticides India surges after delivering robust Q4 of FY25 results, bolstering investor confidence and driving strong buying interest. Although it pulls back slightly from its intraday peak, it still holds a notable gain. Now, meanwhile, the broader market trades flat, underscoring the stock's independent strength in today's session. Avanti Feed rallies following impressive Q4 of FY25 results, with profits soaring nearly 40% year-on-year. Higher revenue, lower raw material cost, and improved overhead absorption fuel the growth, the boosting investor confidence and driving heavy trade volumes. Amid broader market movements, Avanti Feeds emerges as a standout performer, drawing attention with both its robust financial performance. Bajaj Auto is also expected to post a flat Q4 performance impacted by weak domestic volumes. Revenue is projected to rise 5% year-on-year. Performance is expected to remain steady, with EBITDA margins staying flat despite weak domestic volumes. Favorable product mix and currency factors are likely to support margin stability quarter-on-quarter. Mahesh Patil, CIO of Aditya Birla Sun Life AMC, believes that markets are fairly priced moving forward. He notes that FY26 could be a strong year for India Inc., with strong specific opportunities likely to emerge. While volatility remains a factor, Patil does not anticipate any major risk leading to a market correction. However, he tempers expectations, stating that a significant market move in the near term is unlikely. The telecom sector is in focus as TRAI releases a draft consultation paper aimed at revising spectrum pricing to accelerate 5G expansion and enhance rural broadband connectivity. Meanwhile, Starlink also prepares to enter India, adding another dimension to the industry dynamics. Now, according to Balaji Subramaniam, Vice President Research at IIFL Securities, tariff hikes could actually significantly impact the sector. Vodafone still faces challenges, while Bharti Airtel and Jio continue to strengthen their revenue market share. Another round of tariff hikes over the next 12 months could actually further drive ARPU growth, shaping the industry's near-term trajectory. Jefferies initiates coverage on Jindal Stainless with a buy rating and a target price of 800 rupees, citing its leadership in India's expanding stainless steel market. The company also benefits from a lower EBITDA or a per ton volatility and a stronger balance sheet compared to peers. Looking ahead, Jindal Stainless is projected to achieve 10% volume growth with robust earnings per share and a healthy return on equity over FY25 to 27, reinforcing its long-term growth potential. InCred initiates coverage on Adani Power with a buy rating and target price of 649 rupees, highlighting its turnaround efforts and expansion plans. As India's largest private thermal power producer, the company is executing a 13.12 gigawatt capacity expansion to meet the rising demand. Additionally, 17% of Adani Power's sales volume comes from merchant power, enhancing revenue flexibility and positioning the firm for sustained growth. Morgan Stanley maintains a positive outlook on India's real estate sector, noting that the cycle remains intact despite being in a late-stage phase. The firm also favors high-growth companies, upgrading DLF for its strong brand, land bank, and margin protection. Prestige is also upgraded with expectations of a robust recovery in FY26 pre-sales. Meanwhile, Godrej is downgraded over concerns that growth may come at the cost of margins. Jefferies stay positive on Indian Steel, maintaining a buy on Tata Steel and upgrading JSW Steel with higher target prices. Keeps its buy rating on Coal India, while also Hindalco is downgraded to hold due to muted earnings and rising debt. The firm expects 8 to 10% volume growth for steel over FY25 to 27, with safeguard duties aiding profitability and historical trends suggesting favorable risk-reward at the current levels. Granules India faces challenges as US FDA observations affects its Gagilapur facility, leading to a decline in the API and PFI segments. However, Chairman and MD Krishna Prasad Chigurupati remains optimistic about the recovery in the coming quarters. He acknowledges the impact of the inspection, but also emphasizes that operations are expected to stabilize once the facility regains full strength. Now, the company also remains focused on addressing regulatory concerns while positioning itself for improved performance ahead. RBI's annual report reveals a 8.2% year-on-year expansion in its balance sheet to 76.25 lakh crore rupees, driven by higher gold reserves and domestic foreign investments. India remains the fastest growing major economy with a projected 6.5% GDP growth, supported by strong private consumption and robust corporate and bank balance sheets. Finance Minister Nirmala Sitharaman is reviewing PSU general insurers, highlighting their premium surge to 1.06 lakh crore rupees from 80,000 crore rupees in 2019, with all the firms profitable, including United India Insurance for the first time in 7 years. The FM pushes for digital transformation, AI-driven claim processing, new products for risks like cyber fraud and fintech collaborations for broader reach, directing time-bound implementation and regular reviews. The Telecom Regulatory Authority of India releases a draft consultation paper proposing to charge telecom companies for high-frequency bands to boost 5G and rural broadband. Confirming NDTV Profit's May 22 report, TRAI suggests revamping spectrum pricing with a pay-per-use model, replacing the current revenue share system to lower cost and expand 5G reach. The government also seeks stakeholder comments by June's end and proposes auctioning E and V bands, enabling ultra-fast internet but potentially raising telco costs. Kinetic Engineering's EV unit sets the ball rolling to re-enter India's two-wheeler space, and this time in an electric avatar. Now, EV unit inaugurated a new manufacturing facility in Ahmednagar. Now, the facility has also automated assembly lines for EV manufacturing. It will serve as the production base for Kinetic's electric mobility solutions. The company also envisages export ambitions as part of its wider revival strategy. Monthly TRI data was released today, and Reliance Jio was a clear winner with the numbers of addition to the network. Now, the service added more than 26 lakh subscribers, more than 4 lakh in numbers compared to last month, followed by Airtel, which added more than 1 lakh subscribers in this month. A surprise element this month was the loss of subscribers in BSNL, as a service provider lost more than 1 lakh subscribers for the first time after June 2024. Garden Reach Shipbuilders posted their Q4 results, where the company saw an increase in the revenue and EBITDA margin. We had a conversation with the CMD PR Hari, CMD GRSE, who also said that the present order book stands at more than 22,000 crore rupees. He's confident of the company's revenue as it seems steady for the next 5 to 10 years. JetKing Infotrain, a micro-cap IT training firm with an 80 crore rupees market cap, is raising 6 crore rupees to expand its Bitcoin investments. As of May 28, the company holds 21 Bitcoins, acquired at an average price of 64.65 lakh rupees each, now valued at 19.3 crores, with Bitcoin trading at 92.2 lakh rupees. Now, this bold move positions JetKing as a pioneer in corporate crypto adoption in India. Prime Minister Narendra Modi visits West Bengal, addressing a gathering in Alipurduar district. He also inaugurates development projects worth over 1,000 crore rupees and takes aim at the state's leadership over the Murshidabad riots. With West Bengal set for elections next year, his visit holds political significance, shaping discussions ahead of the polls. A shocking turn in the Pune Porsche crash case. Dr. Ajay Tavare, already jailed for evidence tampering, is now arrested in a kidney transplant scam. Authorities allege that he facilitated illegal organ transplants at a private hospital in Pune. As investigations widen, more arrests could follow, exposing deeper medical malpractices. This also latest twist intensifies scrutiny on the corruption within the healthcare system. The centre has greenlit 7,000 crore rupees worth of infrastructure projects across Maharashtra, Madhya Pradesh and Andhra Pradesh, marking a major push for connectivity. A key highlight is the construction of a 4-lane 108-kilometer Badvel-Nellore corridor on NH67, designed to cut travel time to Krishnapatnam port. Now, these projects aim to enhance regional mobility and boost economic growth. The approval underscores the government's continued focus on large-scale infrastructure development. A joint operation by UPSTF and Delhi Police results in the death of Lawrence Bishnoi gang sharpshooter Naveen Kumar in Hapur. Now, wanted in over 20 serious cases, Kumar fired at officers before being neutralized. Despite being rushed to the hospital, he was declared dead. Authorities view this as a significant setback for the gang's activities. A federal court rules against former President Donald Trump's tariffs, stating that he exceeds his authority under emergency laws. The 3-judge panel determines that the International Emergency Economic Powers Act does not grant unilateral power to regulate imports through tariffs. The White House swiftly responds, signaling an appeal. Now, this decision marks a significant setback for Trump's trade policies, with broader implications for global commerce. US President Donald Trump rejects being called a chicken for backing off high tariff threats, calling the question nasty. The term taco trade, or Trump always chickens out, is to describe his pattern of imposing steep import taxes and then retreating. Trump explains that he sets high tariffs initially and then lowers them during negotiations, denying any weakness. Elon Musk announces his departure from the Trump administration, marking the end of his tenure as a special government employee. In a post on X, he thanks former President Donald Trump for the opportunity to lead the Department of Government Efficiency, which spearheaded efforts to reduce federal spending. His exit follows a month of controversial budget cuts and layoffs, with Musk previously expressing frustration over the resistance to his cost-cutting initiatives. Now, the DOG mission, he states, that will continue to evolve despite his departure. A terrifying natural disaster in the Swiss Alps, a glacier collapse, has buried almost 90% of the village of Blatten. Thankfully, most residents had been evacuated just days earlier, but one person is still missing. The mayor called it unimaginable, and the before and after pictures truly are. Wildfires are sweeping across Manitoba, Canada, prompting urgent evacuations. Around 17,000 people have been told to leave their homes, and the military is stepping in to help. Premier Wab Kinew says that shelters in cities like Winnipeg are ready. China successfully launches Tianwen-2, its first asteroid sample return mission, marking a major step in deep space exploration. The spacecraft, carried by Long March 3B rocket, lifts off from the satellite launch center and enters a transfer orbit towards its target asteroid. Nepal government has emphasized that its duty to protect the Himalayas from the risk of climate change and increasing number of climbers attempting to reach the summits, especially Mount Everest. Nepal's tourism minister reiterated their commitment to support mountaineering, ensuring climber safety and protect the natural beauty of the peaks. Concerns were raised about crowding and environmental impact. Veteran climbers described how traffic jams, unpredictable weather, and health risk made conditions difficult this year. Supporters of Bolivian leader Evo Morales clashed with police demanding his candidacy reinstatement. Former Bolivian president and his supporters clashed with police near the government palace, demanding his reinstatement in the upcoming August presidential elections. He was barred from running by a constitutional ruling and failed to register his candidacy. Now, he also faces an arrest warrant in a separate legal case. His supporters also argue that without him, democracy is at risk, blaming President Luis Arce for what they call a judicial plot. The ruling MAS party, which has governed for 18 years, is now fractured by this ongoing dispute. A major update in the conflict: Israel has confirmed that Mohammed Sinwar, Hamas's Gaza chief, was killed in an airstrike earlier this month. He was also the brother of former Hamas leader Yahya Sinwar, who also died in a clash with Israeli troops last year. Royal challenges Bengaluru to play Punjab Super Kings in the qualifier 1 today. The match will be played at Chandigarh. Whoever wins this game will straight go to the finals, which will be held in Narendra Modi Stadium in Ahmedabad on 3rd of June. From the world of entertainment, actor Kamal Hassan faces police complaint in Bengaluru over his remark that Kannada was born from Tamil. Now, the pro-Kannada group Karnataka Rakshana Vedika called the statement unlawful and harmful to the state unity. Hassan defended his comments, saying that it was made out of love. The controversy has triggered heated reactions from both sides, deepening linguistic and cultural debates. Well, with that, viewers, it's a wrap on Market Express, but stay tuned because I'll see you on the other side with Profit 360.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Benchmarks end higher after volatile session led by realty and metal stocks. Mid and small cap indices also close in the green. Lokpal comes down heavily on the complainants in the case against Madhvi Puri Butch, criticizing Mawa Moitra, Prashant Bhushan and Amitabh Thakur for their intent to sensationalize and politicize the matter. IndusInd Bank's board advised to file a police complaint against former CEO Sumant Katpalia and others. Sources say SEBI findings could lead to criminal proceedings against the former bankers. The good old Kinetic is set to re-enter India's two-wheeler market, but this time in an electric avatar. Inaugurates its new manufacturing facility in Ahmednagar. Bank fraud surged nearly threefold to 36,000 crore rupees in FY25. RBI's annual report says this even as the cases fell sharply after reclassification of several cases. Elon Musk steps down from Trump administration as the Chief of Department of Government Efficiency, or DOGE, a day after he criticized Trump's tax bill. Hello and welcome. This is Profit 360 on NDTV Profit and I'm your host Himakshi Bahugna. Along the next half an hour, we'll bring you the latest on the markets as well as national and international news. So viewers, markets closed higher as benchmark indices rebounded after a two-session losing streak. Now this jump was led by realty and metal stocks. All sectoral indices except for FMCG and PSU banks ended in the green. Harsh joins in with a detailed market roundup.
Well, the Nifty 50 index for a better part of the day was absolutely flat in trade, but a late expiry day move has led the index 0.5% higher to close well in the green. So that's what really played out. Let's look at the bank index move as well intraday, and it was again a very similar move to the Nifty 50, just that it was much better because the bank Nifty for a predominant part of the day was trading in the red. So thereafter moving in the green and doing very well for itself. So it was entirely a bank Nifty led move because the IT index was largely flat. In fact, the IT index fell from the day's high and thereafter just consolidated in around the 0.5 to 0.9% kind of level through the day. So that's where some big play was. Let's look at stock-specific action as well on the Nifty 50 counters, and the breadth was positive at close, which is again a big positive. The other one is an IndusInd Bank, which did 2.6% on a day when an investigation to some extent has been concluded and interim order has been issued. You also saw some consumer stocks at the bottom. Eternal was one which did well for itself, again 2% higher, but some consumer stocks outside of that were languishing at the bottom, and ITC was one of them, and Asian Paints was one of them. There was also a Tata Consumer, which was the top loser on the Nifty 50 today. So that was broadly the flavor. It was a banking-led rally right towards the fag end, and largely due to an expiry move. Let's now talk about the breadth of the market overall. It was absolutely flat, and it was fairly steady through the day. It was even Steven. The Nifty mid cap also got some bit of tailwind on the back of expiry. We saw that rise over 0.5%. The Nifty small cap also was up around 0.5% odd. So largely in line, the Nifty mid cap and small cap indices. Of course, we'll have to wait and watch for tomorrow as to post this expiry move, how markets react. In terms of sectors as well, the defense sector continues to trade in the green, so that's one positive, but two spaces which did well. One was the Nifty metal index, then you had a flavor of pharma which was up 1% as well, and you had real estate within broader markets which did well for itself, 1.3% higher on the Nifty realty index as well. What didn't do well was probably the FMCG index, one of the only two losers in markets today. That broadly sums up how we did. The BSE 500 maybe shows some movers on the back of news as well as on the back of numbers. So keep your eye out. It's going to be an interesting Friday tomorrow.
Absolutely, Harsh. Now, will markets witness gradual growth soon? We spoke to Mahesh Patil, CIO of Aditya Birla Sun Life AMC, who believes that valuations are looking fair as we move forward. He also remains optimistic about steady market momentum. Listen in.
We might see kind of a slightly weak beginning in this quarter, but I think as we progress into this fiscal year, I think we should see the growth again coming back. And overall, we expect this year the earnings growth after a kind of a mid-single-digit growth in the last fiscal year to again claw back to around 12-13% in that region. So given that, I think the market here now, after the recent rally, what we are seeing is looking fairly priced now. And I don't see a big near-term upside at this point in time. At the same time, also, I don't see any major risk, for the market to really correct because a lot of those factors which were there, whether it was the uncertainty around the tariffs, again, on the US side, the geopolitical risk, what we saw, the escalation intentions, I think those have kind of now eased off. So I think market should now look at slowly inching up. Again, it will probably boil down to more stock specific this year because we don't expect a big move in the market in a near-term perspective.
In a major relief to former SEBI chairperson Madhvi Puri Buch, Lokpal has disposed of complaints against her in the Hindenburg matter. The anti-corruption ombudsman has further said that there is no material evidence to order an investigation against Buch. Now, my colleague Hirals tells us more about this.
Thanks. So clearly, this is a clean chit coming in for Madhvi Buch by the Lokpal. Now, let's quickly understand. 3 complaints were filed against Ms. Madhvi Buch, and this was primarily based on allegations from the second Hindenburg report dated the 10th of August 2024. And these complaints alleged corruption, conflict of interest and quid pro quo dealings connected to her role in SEBI and certain regulated entities, including the Adani Group. Now, let's understand what the Lokpal of India has said. Firstly, there is no case for investigation, so no prima facie case has been formed over here. Apart from that, there has been no undue gain or corruption that has been proven as well against Ms. Buch. And SEBI's actions have been upheld by the Supreme Court. In fact, the report of Hindenburg, a known short seller, was deemed reliable or sufficient to base a corruption case. Moving on, the Lokpal of India has also said that all complaints have been dismissed. The allegations that have been called frivolous now and politically driven, and the complainants have been indirectly reprimanded. So those are the details that we've been picking up so far. Moving on, let's quickly understand the complete exoneration as well. What that means is there has been no bias or favoritism that has been found on number 1. Secondly, in terms of where SEBI has been vindicated, they've said regulatory integrity has been reaffirmed from here on. In fact, SEBI's investigation and regulatory decisions, particularly around the Adani Group, have withstood scrutiny at the highest levels, which is both judicial, that is the Supreme Court, and quasi-judicial, I beg your pardon, that is the Lokpal. Apart from that, they've said that the Hindenburg report is not credible as a legal evidence. That's what the Lokpal has come out and said. And there is a clean record upheld by the top authorities where no market manipulation has happened from here on. Overall, if you see in terms of the media and political narratives that were given out, they have been debunked by the Lokpal. So the due process has been highlighted. And SEBI's ethical standards have been reaffirmed, which means the corporate governance has been upheld absolutely tight. That is what the Lokpal has indicated. Apart from that, very quickly, the opposition allegations against Butch as well as alleged links to Adani Group fully have been debunked. And the reason why we are highlighting this is because Mahua Moitra was the one who had actually highlighted the entire episode from the Hindenburg case, and that's the reason now this has been highlighted and put to rest as well. So a clean chit coming in for Madhvi Butch. Now let's quickly understand what is the Lokpal of India for the viewers. The anti-corruption watchdog who is working for public servants. Now they have been empowered to investigate complaints against ministers, MPs and bureaucrats. Apart from that, in terms of how they operate, it's an independent operation to uphold integrity in terms of governance as well as public institutions. And very lastly, if you see in terms of the current chair, it is Shri Justice Ajay Manikrao Khanvilkar. He's the one who chairs the Lokpal so far. But clearly, a clean chit coming in for ex-SEBI chairperson. And this is being highlighted because this actually started off from the second Hindenburg report in August 2024.
Absolutely, that's a clean sheet for former SEBI chairperson Madhvi Puri Butch. And with that, Lokpal has also slammed the complainants in the case based on Hindenburg research report against former SEBI chief. Yesterday the anti-corruption body cleared Butch of all the allegations, giving her a clean sheet. Charu Singh is now joining us with the observations that Lokpal made in the case. Charu, over to you.
Hi, so a lot of allegations that were made against the former chairperson of Securities and Exchange Board of India were debunked, and she was given a clean chit and none of the allegations were found to be substantiable. However, now let's get into the nature of these complaints and what the Lokpal has said, tearing the complainants apart because of prima facie no case being made about Butch. Firstly, there were 3 complaints made last year to the Lokpal. These complainants included Trinamool Congress politician Mahua Moitra, the Supreme Court advocate Prashant Bhushan and another former IPS officer. What happened here is that one of the complainants, as per the order of Lokpal, tried to get the income tax return filings of the former SEBI chairperson, her husband, and an advisory firm that she started in 2013 after leaving ICICI Bank, Agora Advisory. Now, this was something confidential to her, which the parties tried to get access to, and what's worse, that Lokpal order also mentions that they then tried to circulate it in the media through press conferences. Another complainant, as per the order, tried to gain access to confidential SEBI documents and then tried to put allegations and all of this information on social media platforms, which again, the Lokpal found violates the confidentiality rights of the former SEBI chairperson. Now, apart from this also, the anti-corruption watchdog found out that the prima facie allegations cannot be substantiated because on the face of it no case can be made out against the chairperson. Apart from that, they also reminded the complainants that they too have the right to start proceedings against any complainant or any individual who tries to come forward with flimsy, fragile or vexatious allegations against the chairperson.
Charu, thanks for that. Now, Sriram Subramaniam, MD and founder of InGovern, has also stated that the allegations on Madhvi Puri Butch lack substance. He commented that Madhvi, along with her husband, released rebuttal points countering the allegations. Her investments also date far back at a time when she had no indication that she would be considered for a contingent role at SEBI. Listen in.
The allegations did not have substance in the first place. The Hindenburg report pointed out each one of the categories. One is it has to be understood that Madhvi Buch and her husband, both are professionals. The Hindenburg report had specific dates also of investments done by Madhvi Buch in some entities in Mauritius, etc., when she lived in Singapore. So all those, in fact, Madhvi Buch and her husband put out a detailed point-to-point rebuttal to each of the allegations by Hindenburg. So there didn't seem to be any substance because the investments done by Madhvi Buch at that time was about 10 years old, or in 2017-18, when she would not have even known that she was in contention for a role at SEBI, and let alone a role as subsequently chairperson at SEBI. So it is, and Madhvi Buch, and even the Hindenburg report says that the investment was wound down in 2018 or immediately after Madhvi Buch joined SEBI.
Viewers, now on to an NDTV Profit exclusive. Sources say that IndusInd Bank board has been advised to file a police complaint against Sumant Katpalia and others. Now, this comes after SEBI barred former IndusInd Bank CEO Sumant Katpalia and 4 others from trading in the share market. Now, my colleague Shrimi is joining us with more details on this one.
A very important piece of information coming in where the government is pressing for fair and independent inquiry in the IndusInd Bank insider trading case involving former executives of IndusInd Bank. Sources tells us that bank board has been advised to file a police complaint in the case, following the SEBI ex parte interim order barring 5 notices, including ex-CEO from markets. Sources tells us that after police complaint, being filed, the federal agencies could look into it whether this case is fit under the criminal provision. So accordingly, they will take up the matter. On the other hand, SEBI, which is, the investigation is already underway. The quasi-judicial authorities, led by whole-time member, is expected to hear the submission and objection of IndusInd executives, which is there in the list of order, and based on their submission, they will pass a final order in the matter, which could include, disgorgement and penalty. In fact, some steep penalty is the indication we are getting. Now, sources also tells us that that in the insider trading case, typically the penalty range between 10 lakh up to 25 crore or the 3 times of the profit, whichever is higher. So 2 aspects is clearly emerging here. One, from the SEBI side, where we could see the final order in the case after submission and objection of the IndusInd brass, former brass, and the other, we could see some action from the criminal aspect as well, as far as criminal proceeding is concerned.
Thank you so much, Shrimi, for bringing in those exclusive details there. Now, let's also turn to my colleague Harsh for more on how IndusInd Bank CEO Sumant Katpalia and 4 others carried out this insider trading and how much money was siphoned off.
Those are the 5 names on your screen. Arun Khurana, Sumant Katpalia, you have Mr. Saurav, Mr. Jatana, as well as Anil Rao. All 5 of those which SEBI says have executed insider trades, or rather trades based on unpublished price-sensitive information. 2 of them have already resigned, 3 of them not yet. Now let's talk dates, because Vishy spoke about certain dates on which emails were exchanged, information was made privy to the management, and that's why I highlight some of these dates to you, along with the quantity of shares sold. 3.5 lakh shares sold by Mr. Khurana, who was the CFO back then, on the 4th of December, just when all of those emails were getting exchanged with regard to the hit being a large one, and acknowledging that. So again, something to keep in mind are some of the dates. Now let's talk about the numbers involved, right? In terms of how large the number is, the number of shares sold, of course, okay, step back. No shares were purchased during the period between 2023 December to 2024 February. Just to kind of cull that out, it's an obvious statement, but that's another of the observations that SEBI has made. Now let's talk numbers. In terms of how many shares sold and at what price, look at the sell value out there. and look at the average selling price. These are the two numbers I'd like to highlight for you. 1520, between around 1265 to 1520 was the average sell price. Some of them obviously sold between 30th of November and 15th of December. And look at the sell value as well. 53 crore, 20 crore being the larger material ones made by Mr. Anil Khurana and Mr. Sumant Katpalya. That's the other piece I want to highlight.
Thanks, Harsh, for that. Now, earlier today, we also spoke with Dipali Pant Joshi, former Executive Director at RBI, and Hetal Dalal, President and CEO of Institutional Investor Advisory Services India, to get their insights on this IndusInd Bank insider trading case. Now, both have shared sharp perspectives on the regulatory gaps and the road ahead for the corporate governance.
We have been talking of corporate governance. And if the board had access to the information, the board has a chance to interact with the auditors. I am really puzzled and baffled as to why the board did not take the steps which it is supposed to take. There is an ethical and moral responsibility which revolves and devolves on the independent directors, and it was their duty to point out that this is something really grave. The conduct of these gentlemen is extremely questionable. They were working for this bank and they had no qualms about gutting the bank into the ground, letting its shares fall precipitately, letting the shareholders down hook, line and sinker just to subserve just for a few shekels. They should be ashamed of themselves morally. How is it that they could do this? And the clawback will definitely be there. The malice will also be there. It's a question of the fence eating the grass.
There's one argument to say that, insider trading, you need to claw back the profits or at least claw back the gains. But I think the larger issue is just misleading investors. Right? You've held this information for effectively over a year. This is something you knew that was going to happen. Now, when you make that disclosure in March in 2025, it seems more like par for course. And I think that, to me, is a very serious issue. The other question really to ask is that if all of this was happening, there's a 2,000 crore hit on the balance sheet. And now we are finding out that this was in the know since 2023. How does the board allow the managing director and the deputy managing director to resign gracefully on moral grounds, right? This is and the board is now calling it a fraud anyways. The third question to ask is, if SEBI came out with a circular in September 2023, the least the audit committee would have done is just ask what is the implication of this letter, right? What does it mean for the balance sheet? And what is the kind of impact that this change in derivative accounting is going to have on the balance sheet? So lots of open questions. I think there is more to it than what we actually see.
Viewers, despite a fall in fraud cases, the total amount of bank frauds in FY25 rose nearly threefold to over 36,000 crore rupees. We have Subhana Sheikh with more details on the same from the RBI's annual report for FY25. Subhana, over to you.
Yes, so the value of bank frauds have actually jumped twofolds, nearly threefolds to over 36,000 crore rupees in FY25. And on the contrary, the bank fraud cases have declined by 34% on year to nearly 23,000 crores and to nearly 23,000 in FY25. Now, the reason behind this is the reclassification of several fraud cases following the Supreme Court's judgment. Now, what had happened is that there were a removal of a fraud classification of about 122 cases, which totaled to around 19,000 crores. Now, these cases were re-examined and were reported afresh after March 27, 2023, which was after the Supreme Court's judgment. Now, this was the reason, and along with the fact that, there was a rise in loan default related frauds. So because of that as well, there was there is this disparity that we are seeing. And also private banks actually reported the highest value, the highest number of fraud cases. And on the other hand, public sector banks accounted for the largest share of fraud value, which was 71% of the total amount. And also loan frauds in overall also increased about 230% to 33,000 crores. And also the number of such cases, they nearly doubled to nearly 8,000. So this is the disparity that we saw.
So much, Subhana, for bringing us those details. Now moving on, Kinetic Engineering's EV unit, Kinetic Watts and Volts, has inaugurated a new manufacturing facility in Ahmednagar. Now the company is re-entering India's two-wheeler space. The new plant features automated assembly lines dedicated to EV production. Tushar is joining us with more details on this one.
Kinetic Watts and Volts, wholly owned subsidiary of listed company Kinetic Engineering, has inaugurated a new plant in Ahmednagar, which is actually the home of Kinetic Engineering to make electric vehicles. This in a way sets the stage for Kinetic's re-entry into India's two-wheeler space, this time however in an electric avatar. This facility is spread over 87,000 square feet with automated assembly lines for fast production of electric vehicles for both fleet operators as well as for personal mobility. That's what the company is telling us at this point of time. The inauguration actually comes close on the heels of about 10 crore rupees that Kinetic Engineering invested in Kinetic Watts and Volts, a company which was set up in 2022 to actually delve into the electric mobility space of India. This development is actually significant because it actually can mark Kinetic's re-entry into India's two-wheeler space. Remember, Kinetic was the creator of the Kinetic DX automatic scooter way back in 1984, which was the best-selling automatic scooter until the early 2000s, when Kinetic two-wheelers were actually taken over by Mahindra to be rebranded as Mahindra two-wheelers. Essentially, it's a re-entry of Kinetic. It seems like a re-entry of Kinetic into the two-wheeler space, but the company so far has not elaborated or told us what its exact two-wheeler plans will be.
Right, thanks Ashar for that. Now this microcap is also raising as much as over 6 crore rupees to buy bitcoins. As of March 31st of 2025, Jet King held 15.02 bitcoins, and now this company with an 80 crore market cap has increased its bitcoin holdings significantly. Mahima is joining us to tell us more about this one.
So as you rightly mentioned, it's a micro cap. It's hardly a 80 crore company which has raised around 6 odd crores via preferential issue, and in their filing they've said that they've raised this money to invest in virtual digital assets and mainly in bitcoins. Now the company is basically specializing in hardware, networking and digital courses. It has around 150 training centers across India, Nepal as well as southern Asia, in terms of southern east of Asia. In terms of its current holding for virtual digital assets, as of 28th May, it is holding around 21 bitcoins in its portfolio. They've acquired these bitcoins in multiple phases, and the average buying price is around 64 lakh per bitcoin. The bitcoin is currently trading at around 92 lakhs. In terms of their approximate value of holding right now, that stands at around 19 odd crores. So it's an interesting story, an 80 crore market cap company raising money to invest in bitcoins.
Right, thanks Mahima for that. Now viewers, in a drastic step, Elon Musk has stepped down as the head of the Department of Government Efficiency, or the DOGE. Now this dramatic tenure was marked by deep budget cuts and a rare public break with President Trump. Musk also announced his departure by thanking the president for the opportunity to reduce wasteful spending. The move comes just a day after Musk criticized Trump's latest spending bill, calling it counterproductive. Musk also said that a bill can be big or it can be beautiful, but I don't know if it can be both. At DOGE, Musk moved aggressively, slashing government jobs and departments, but they sparked a lot of backlash as well. And viewers, that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold CDSL for the long term?
Buy, sell.
Hello and welcome. You're watching KYC. I'm Harsh Saita. With me today is Varsha Chandani. We're going to try and break down MedPlus Health Services Limited. It's a very strong set of numbers, frankly, in Q4 that MedPlus clocked, right, Varsha? Their margins went up closer to 9% now. And you're seeing good traction, therefore, on profitability. Top line growth also looking fairly healthy, double digit in that sense. And therefore, the stock was doing very, very well in trade through this week. And that's why in focus. But more importantly, what I really want to know about MedPlus Health, and this is where it starts to get fascinating. So it's obviously a health, it's a retail health chain. And what they're doing currently to increase margin is they're doing private label scale up. They're doing their own products, their own labels, and they're trying to scale up that business, which is better margin, right, Varsha? And if that were to continue, you could well see margins inch even higher. Whether that actually happens or not is something I want to ask, and therefore, where should the realistic margin number lie as private label scale up is to happen? So sustainability of this margin number at 9%, or how much more can it go up by? That will obviously aid the return ratios as well, Varsha, because you will see profitability go up. The other piece is with regard to quick commerce. Now, they of course have retail stores. If I could equate MedPlus's business to the business of a noble chemist or of any chemist near your house, they don't just sell medicines and products relating to health. They also sell other products, things like waters, things like chewing gum. And those also kind of add up in terms of their top line as well as margins. But quick commerce is taking that away, and therefore, can they sustain the kind of competition that's coming through quick commerce will really be the question. Yes. The last one is top line growth. What's next? Can they continue to grow at double digit for the foreseeable future? We were just talking, Varsha, 4,700, 4,800 odd stores. They're doing 100 stores a quarter. They're expected to expand their store count by 600, which is a 15% odd growth when you're looking at it over the next year. And therefore, implied 15% growth should come straight through to the business. you would want to see whether they can do even better on the top line.
Actually, on that, Harsh, with respect to MedPlus, it's your focus should be more on EBITDA and bottom line.
Correct.
Considering the increase of private label contribution to their business.
Yes.
So that would be really interesting how they're gonna grow their, EBITDA and bottom line for that matter.
Yeah, absolutely. And we will look at the numbers, and that will give us a sense as to how those numbers are taking shape. But first off, with regard to the business itself, let's break this one down. Let's start off with the products. So it's a pharmaceutical and wellness products business that they are in. They are retailing. They are basically a retailer of these products in India. They are the second largest pharmacy retailer in India, which kind of underlines the depths to which they've gone with regard to expansion, as well as their seriousness with regard to the retail business in India. They added 100 stores in this quarter. I did speak about it. They have a total store count of around 4,800 odd stores now. What do they sell? I'll start with medicines, of course, but outside of that, they are also into personal, home care, toiletries, baby care, soaps, detergents, sanitizers. They are into a whole host of products, FMCG as well, along with the pharmacy products that they obviously sell as a core pharmacy business that they do. Let's look at, so those products coming up on your screen slowly and steadily. But let's look at the sales mix now. And that's where it starts to get interesting. Varsha, you want to take this? You want to explain this in absolute layman terms?
Sure. So let me start with, branded pharma, the typical drugs that you see in any medical. So in Q4 FY24, it was almost 69%, which they've reduced to 63%. Well, there's a reason for that. That branded non-pharma means your FMCG kind of everything, which doesn't include your, drugs or medicines. So that has also decreased. Now over here, private label is the thing which is of interest of every investor. The private label has increased from 8.5% to 13.6%, and that's the reason, you have seen that margin improvement. And that's the reason you have not seen that much of, growth in top line, because this is a low volume and high margin business. Then private others have also increased. So these two are basically the reasons why you're seeing the, EBITDA growth or EBITDA margin growth. And others include just Harsh was saying, your Lays, your water bottle, and, your chocolates. So that has, I would say it's flat at 3.4%. So this is basically the sales mix that a company has. So interesting part here is private label and private others, which has the contribution has increased and which has led to, EBITDA margin expansion.
Yeah, so that's what's driving margins. Let's look at the sales. So we've looked at the sales mix. Let's look at the store level revenue. This has been on a declining trend, Varsha. Why is that so?
So what happened, Harsh, that because as I said, that your store level revenue growth is expected to decrease. And this is going to be at an inflation rate that the management has said. And one of the reasons is because as your store matures, the growth subsides, your sales growth, your SSG growth subsides as your store matures. So this is one of the reasons why you're seeing this, going down, and you'll see this go down as and when the store matures.
Okay, so is that a good sign, Varsha? Is that a bad sign?
I wouldn't say it's a good sign, of course, because
but that's the nature of the business.
Yeah, that's the nature of the business. You can't do anything of that.
Okay, fair point. Now we're talking about store level EBITDA. Now it came off in Q1, but thereafter we've seen it climb steadily towards 11.5, much in line with the way in which we've seen private label grow as well.
And you'll see this kind of range, like 10 to 11% kind of, store level EBITDA margin in future also. So no much surprises here is expected.
So, sorry, if I can just wind it back one slide and, look at the store level revenue growth. This has come off, but now with a pickup in the store count, which is anticipated, this should get better.
Yes, this should get better.
Perfect.
And that's the reason, so see in Q4 FY24, you had a good store revenue growth. And as and when your the number of stores coming up goes down, you're going to see this kind of trend. But once that store, growth picks up, you're going to see a good amount of store revenue growth, that SSG growth. But overall, for a longer period of time, you can expect like 4 to 5% of growth when it comes to, SSG growth. Yeah.
Perfect. So that's how your store level growth will likely be. We've spoken with Mr. Madhukar Reddy, who's the Managing Director and CEO at MedPlus Health Services, and we'll get you that conversation that we had. But first off, with regard to the KYC metrics, we'll break down the company, try and see what they've done over the last 3 to 4 years to make this more meaningful for you in terms of how the conversation goes. Let's start off with all the metrics that we look at. We'll start off with the income statement, the balance sheet, the cash flow and return ratios. Thereafter, we will look at street cred, street coverage, shareholding and valuation. So we'll look at all of those 8 metrics. We'll see how this one stacks up on each of those, and thereafter go and speak with the management. Varsha, income statement, do you want to go?
Yeah, thank you for that. So let me start with income statement. If you see the 3-year CAGR when it comes to your revenue is at around 18%, while interesting part is EBITDA. 3-year growth is almost 21% because of the increase in the margin, because of increase of contribution when it comes to private labels, and this will increase in future also. If you see net profit is at 18% CAGR growth. Now over here, if you see the interesting point, and what I think is going forward, your EBITDA and bottom line growth will be more than top line growth, because as and when your private label contribution grows, your top line will not increase that much, because private label is a low volume, high margin business, but your bottom line and your EBITDA will increase substantially in next few years. So overall, when it comes to income statement, we would give a thumbs up, because overall it's the financials looks good.
So decentish growth on the top line, your EBITDA margins getting better, scope for it to continue to expand really will be the question, and we will take the management's view with regard to that, and therefore you've seen a decent surge in profitability as well. Clear thumbs up with regard to that one. Let's look at balance sheet therefore. Now when you're looking at the balance sheet, first off we need to keep in mind that the market cap of this company is 11,000 crore. The book value is just about 2,000 crore or maybe 1,800 crore, and therefore the book value to market cap is obviously extremely stretched in that sense. So your price to book value, as one would call it, is quite strong. When you're looking at the borrowing number, all of that borrowing number that you're looking at is lease liabilities. Essentially it's a lease based business, and generally we don't count lease liabilities in your debt. But that borrowing number as of right now, just wanted to reflect that, is completely lease liabilities, and therefore no concern whatsoever with regard to that borrowing number. Let's look at cash balances, which is sitting at 367 crore as we speak. It's a cash generating business, right? The only possible working capital requirement there within that balance sheet will likely be on the inventory count, because as store count climbs, you need more and more inventory to sit on that balance sheet of yours, and that's probably where some of the working capital requirement is going. But outside of that, it's sitting on a healthy cash balance versus the total market cap, and you're seeing zero debt. So clear thumbs up with regard to the balance sheet. Varsha, cash flow?
Yeah, so when it comes to cash flow, good growth from FY23 to 25, of course, because of higher profits. And also if I were to compare FY24 versus 25 in net cash flow, if you see, there was a negative 137 crore in FY24, while for FY25 it's negative 5 crore. Why this much of change is one of the reasons is in FY24 your huge cash was actually deployed in inventory, which dented your cash flow from operations. So in FY24 196 crore of cash was deployed in inventory, but in 25 around 5 crore, only 5 crore was deployed in inventory, and that's the reason you're seeing that spike from negative 137 crore to negative 5 crore. So this is one of the good things when it comes to cash flow from operation, because now your money is not stuck in inventory versus in FY24 where it was stuck. So overall, yes, good show when it comes to cash flow.
So good show on the cash flow. Let's look at return ratios therefore. They've been climbing on a consistent basis, given the fact that you have better profitability which is coming through. Why is there better profitability? Because there's margin improvement, but a 10% return ratio is obviously too small. You want to see a better return ratio number when it comes to any business, and therefore asking for more. But because it's on an improving trend, we've given this a neutral. Let's quickly look at shareholding pattern, Varsha.
Yeah, so very interesting thing. So because this is a more kind of consumer-based company where, FIIs and DIIs are interested, that's the reason, FIIs share has increased from 14.7% to 15.6%. That's a very good sign. Even DIIs has, so there's a little bit of a downside when it comes to DIIs stake from 27.9% to 26%. But overall, good show when it comes to FIIs, but DII's stake has been reducing. So we would like to give a neutral kind of rating.
Yeah, that as well as the fact that promoters holding 40%. Generally, we've seen Indian promoters hold far more. And that's why the slightly more cautious rating. The last piece is with regard to number of shareholders, and this is something that stands out. I've not seen too many companies where the number of shareholders remains flat over the last 3 years, and that has been the case with this one. 82,000 shareholders in FY22, 74 in FY23, 75 in FY24, and 83 in FY25. So no real substantial chop and change with regard to number of shareholders, which kind of shows stability as well. Doesn't show too much of over-excitement that the street would generally see with regard to some of the retail businesses. Something again to keep in mind. Very quickly on street cred, I want to mark out that the stock has done ever so well. It's up 38% in the last year, 27% in the last 6 months, 14% in the last maybe year-to-date period or so, and therefore it's clearly been an outperformer. We've given this a thumbs up just given the way in which it's moved, and therefore street cred brushed away. Let's talk about street coverage.
Yeah, so there are 7 analysts who have given buy call. 0 has given hold call and 0 on sell call. So basically everyone is bullish when it comes to MedPlus, considering the EBITDA margin growth expected and considering the good business model overall, if you see. But the upside potential is only 4.5%, Harsh. So, not good upside left considering the high valuation or premium valuation that the company has been given.
Yeah, absolutely. So, so that's something to look out for, that there's not much upside left. Let's look at the valuations, therefore. Begs the question as to how it's valued. You look at the price to earnings multiple currently sitting at 77 times trailing 12 months. Even if I look at the 1 year forward, it's 58.5 times with a lot of execution which needs to be done. And then you're looking at FY27, which is at 47 or rather 43 times. So what it's calling for at 43.2 times FY27 is plenty to do with execution to get there, and therefore we're a little bit cautious on this one. As a pure play retail pharma business, you would want this to be valued slightly in a more reasonable fashion, given that some of the other retailers are also available maybe at a slightly lower valuation when it comes to FMCG core. So maybe some more to be desired from a valuation perspective, of course not in the company's hands in terms of stock price action, but that's something that's part of our analysis. But what we'll do is let's shift focus to the management. Before that, let's look at the ratings very, very quickly. In terms of how they stack up: income statement, balance sheet, cash flow, return ratios. That's how it stacks up. Remember, return ratios on increasing trend just about reached double digit. The only concern here is with regard to valuation. All of the other metrics are okay. And therefore, we give this a 5.5 on 8. Let's quickly go across to the management. Varsha earlier spoke to the Managing Director and CEO, Madhukar Reddy, who talked about the company's growth trajectory going forward. Listen in to a slice of that.
Mr. Reddy, private label, which is the highlighting factor when it comes to MedPlus and which is actually the interesting point. What is the target that you have set, say, for next 3 years? Because you've done a lot of, I would say you've done a big transition in terms of product mix, but how are you thinking when it comes to next 3 years? Because I believe currently it contributes almost roughly 14% to the top line. So where you want to take this private label contribution?
Sure. So let me actually put that in the right perspective. Our private label, we sell on a MRP of 100 rupees. We sell it at around 85, we sell it around 45 to 50 rupees versus a brand which we sell at 80. So when a brand is substituted, you will see a top line dip out there. So the right way to look at it is, match the MRP sales to MRP sales so that you actually get the volume sales out there. If you look at it that way, 20% or 21% by MRP was, contributed from the private label side in the last month of last quarter, actually. So if you look at it, from zero in June 23, we have now come to almost 20-21%. And this is, mind you, 20% of the 80 which we sell in medicines. So if you look at it, 25% of all the medicines which we sell today come from the MedPlus brand. So pretty steep, growth curve, I would say, on that side. But now that the early adopters have come in and all, I expect that the growth will be slightly slower. We expect that we'll grow only at around 1% every quarter kind of stuff. Q1 could be slightly weaker on that side because I think we've probably taken in some extra sales in Q4 of last year. So 1% every quarter is the number we are guiding towards on the growth of private label. That's one. But that is for the next 6 to 8 quarters. At some point, I believe, as, let us say, more and more customers understand that all the medicines which are made in India are more or less generic, and all you need to do is pick the right manufacturer and get the right price. I think people will start switching towards the generics more and more. And we could actually see, I would say some kind of a tipping point at some point of time. That will be aided by what the government is doing on educating people about generics. What I believe my competition will also, sooner or later come around and basically start selling this stuff. So when everyone starts talking about this along with us over a period of time, I expect that the entire country will, at least this medicines will get completely genericized. So I don't see any, I would say, cap on the amount of sales. But in the near term, I would expect that, we'll probably grow at the rate of around 1% every quarter.
Got that point. Also, on the store expansion, so last year you opened around 305 stores, and if I'm not wrong, this year you're targeting 600 stores for FY26. And I believe you have around 400 crores of cash, so you won't be requiring any external funds, right? So how will your margin shape up considering the store additions that you have for FY26?
So the 600 stores will have a small lag, let's say, on the drag down on the margin, but not very significant because now it is going to be on a base of nearly 4,700 stores. So I don't really expect it to be a huge drag, I would think, but there will be some. As you rightly said, we have the money in the bank. We don't have any debt at all. So we could basically borrow if necessary. But I don't think it'll be necessary given that we are adding only around 600 stores this year. That should not take us more than 170, 180 crores to actually open, and that includes the inventory and all. So cash-wise, we are, good. Growth-wise, we should, come back once our warehouses and all are in position and we start doing things the right way on the back end. And once we align our front-end staff also more towards a top-line growth rather than just only towards a private label growth. And And on setting up the store itself, I think, we're more than capable of doing that. Although we did only 300 stores last year, that is kind of a small, I would say a dip for us. And we were just, kind of going slow to make sure that the back end was all in place for future growth. So I think we're good on both capability as well as money side. And I don't think that effect on margin will be too big. The drag will be too big, yeah.
Understood. Also, sir, so in last 3 years, if I were to see about your, revenue CAGR, you have grown at like 18% CAGR in last 3 years. Now, I believe that the increase in private label will actually, drag your top line. So just wanted to have your view. What is the target that you have set when it comes to sales growth, for FY26?
So I would say high single digits is what we're thinking at the least. right? I don't think it's going to be less than that. But profit-wise, I think we'll actually become much more profitable as we go forward. So it's not going to be only about, top line growth for the existing stores. It's also going to be about adding new stores. It's also going to be making each of the stores more profitable for us. So I think, I would be comfortable in saying high single-digit growth on our stores, at least that much.
Got that. So, okay, so not concentrating on the revenue growth, I understand that point, sir. But then what is your estimates when it comes to EBITDA growth and profit growth? Because I believe that because of the increase in the private label, you might grow over 20-25% of percent. So am I right on that track?
Pretty possible. Yes, I would think so. Given that private label continues to grow, I think our growth in profit should be higher than the growth in top line.
Got that. Also, you also talked about your same store sales growth, sir. Now, what is the plan when it comes to your same store sales growth? How much are you targeting? Because I believe in the last few quarters you have grown like in 4 to 5% kind of same store sales growth you have seen. So what is the outlook there?
Similar, I would say, given that our focus will continue, while we will, start targeting a top line growth slightly more than what we have done in the last 1 year. I think, the bottom line though we'd still be focused on private label. So I would think our growth will probably be around the same number. As I said, the 600 new stores, I said, we'll grow by around high single digits or slightly, maybe in the low double digits kind of thing for the entire company. But a lot of it will come from existing stores only. I don't expect that the 600 new stores are going to add significantly because they'll be spread, their opening will be spread right through the year. And they do tend to go slow when they actually start off. So most of the growth, whatever you see, will come from the existing stores. So you could take that as SSG, I would say, for the entire company.
Understood. Now, Mr. Reddy, talking about competition, let's say a competition from quick commerce. You have this sort of trend going wherein, all the medicines are being delivered at home in 2 hours. Now, if you were to start, I believe you have started the services in few of the cities, but if you were to start these services, considering no delivery fees, what is the kind of drag in margins you can expect from this kind of trend going on, and what is the competitive scenario that you are seeing when it comes to quick commerce?
So quick commerce or medicines may be slightly tougher, mainly because the number of SKUs are so large and the SKUs which sell in each zip code completely vary from other zip code and all. So see, there's always going to be a trade-off between fill rate and speed. If you want the full fill rate, you cannot really get it in 10 minutes or 20 minutes. So we will watch the overall situation as it unfolds very carefully and see if the customer preference is for, let us say, a really, really quick delivery, in which case we can easily do it. Given that in each of the cities in which we are present, we have more than 450 odd stores, it is easy for us to convert a portion of them into delivery points for doing the quick commerce delivery. Customers, I believe, if they really want quick commerce delivery, I think they are more than willing to pay for the delivery cost. A lot of them do it right now. So we even today charge 20 rupees per delivery. So we'll probably increase it slightly if the speed has to be increased. But I don't see that as a big lag. If there is any benefit, it'll probably come from, some of the general goods which we'll also end up selling along with the medicines, and that will be additional sales when we actually do it. So I'm not really too worried about the actual lag which that kind of operation can entail. But we're still not quite sure if the trade-off between fill rate and speed is going to be favorable towards speed by the customers. If it is, then we will definitely do that.
All right, Varsha, there was one more question you spoke to him about recall.
Yeah, so I was actually speaking. I actually asked him if he can quantify, the number, because he has not quantified the number. So, but he said that definitely the bottom line will grow much more than top line, much faster than top line, and they're going to continue the growth trajectory that they've seen in the past, especially when it comes to profits.
Okay, so that's the outlook with regard to MedPlus. Hope you found this helpful. From Varsha, myself, everyone who puts the show together. Thanks so much for watching. Stay tuned to NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. The markets move fast. Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Now, today I'd like to talk to you about unlisted shares, and there's so much buzz recently about the shares of the National Stock Exchange. Apparently, the price in the unlisted space has gone up very quickly from 1,600 rupees per share to over 2,000, 2,100 rupees per share. And a lot of people are standing in line and trying to get in ahead of others to acquire these shares. Of course, there are several reasons why this has come to pass in the first place. Among them, the board of the National Stock Exchange stepped in and said that they would no longer have to vet new investors. That was one aspect. There was also a bonus share, a 4:1 that came through that resulted in the in making the NSE shares much more affordable for people to buy. And so the number of shareholders in NSE spiked from 33,000 to over 1 lakh in just about a couple of months. Now, should you be going out and buying unlisted shares? It sounds like a great opportunity, but just like every other great opportunity, there are significant risks for you to bear in mind as well. Joining me to talk about all of this and more, I've got Kshitij Mahajan, the Managing Partner and Chief Executive Officer of Complete Circle Wealth Solutions. Kshitij, thanks so much for taking the time. Let me start by asking you what the primary differences are between unlisted and listed shares. We know a few companies are selling like hotcakes right now, and they are heading towards IPO, but it's not necessary that all unlisted shares will eventually go to IPO, right?
Right. Good afternoon, Alex. And I know talk of the town right now is unlisted. So every time we interact something new, which is the flavor of the month. So investing is actually not like that, but just to make it simple, unlisted shares are the shares of a company which is not listed onto any exchange. So to make it further simple, they are not tradable on any BSE or NSE or any other exchange. So these are the shares which are called unlisted shares. which are by virtue of some of the employees who have offloaded their shares, or let's say some of the small stakeholders who have offloaded their shares to some other people through off-market transaction. Now, off-market transaction means you don't transact these shares to any exchange. You do it one-to-one. That's how these transactions have been done. And there is no exchange, or there is no settler involved in this. So this is how you do this transaction, and that's how these shares gets offloaded in the market, and that's how there is no price discovery as far as transparency and price discovery which is there on these shares. So you find a name, let's say there's a listed name like Reliance or HDFC Bank, where you have some price given on BSE or NSE. There's hardly few bips here and there difference which is there, but that's the price which is there. But when you go to unlisted, any exchange, or let's say any platform who are doing this business, you open any Google sheet which you open, there's a different price you see on all these, on all these shares. So that's one part where there is a settlement as well as transparency issue with regard to unlisted shares. And yes, you're right. Not that every unlisted share you'll see will go for IPO. Many companies, we've been watching, the biggest example what you have quoted is NSE only. Since 2021-22, we've been hearing that IPO is coming. So I'm saying there's nothing against any unlisted company share, but all I'm saying is not necessarily every company will go for IPO. But yes, you can find a buyer, but not like a normal exchange where you have a ready buyer always available and there is a clearing operation which will settle the trade.
The other aspect is also regulatory oversight, right? Because the SEBI themselves have come out and said you should not, as a retail investor, be trading in unlisted securities because we don't oversee that trade. We don't oversee that market. It's not a regulated market. Is that right?
100% it's right. Because as I said, there is no fair price discovery. And yes, because till the time the company is not listed, it is not under prerogative of SEBI. So yes, SEBI always works in the best interest of retail investors. I know it looks very tempting. It gives a feeling of FOMO. But what is important for everyone to understand who are watching us, that yes, this can be a 3 to 5% participation in your portfolio. That too on a high risk basis participation in your portfolio, because it's not very liquid. If you ask me, and if you want to liquidate also, maybe you not get the fair price at what you want to liquidate. So 100% right, Alex. I'm nothing against unlisted. It has a good market which in its place, but yes, we need to understand the nuances of how it works and how the regulatory framework is.
So let me get into a little bit of history here, Kshitij. You've been in the wealth management space for a long time, so you are the perfect person to ask this. In maybe 10 years back, these deals were still taking place. But this has been the prerogative of very large investors, of HNIs that have access to a large amount of capital. And first of all, these lots that are sold in the unlisted space, or the shares that are sold, they're sold in large quantity, or the cost involved is very significant. So you're talking about deals that are in the crores rather than in the thousands. So how has that changed from then to what it is right now, where you have a lot of platforms that are offering this as well?
Well, it's 100%. I can vouch for that. 8-9 years back, when we used to, hear about any unlisted deal, it used to be in crores. There are private equity funds who are buying some stakes in the company, or let's say there are super HNI or family offices who are getting into these type of deals, which has to be in crores only. Now you hear there are deals going on about 150, 200 NSE shares. Just an example, which means around 10-15 days back, around 1.6 lakh rupees, trade also happening. Maybe less than a lakh trade also happening. So yes, the entire landscape has changed as far as the share unlisted market is concerned. Because earlier, all the family offices which have that level of getting into some risky bets, they used to trade in this unlisted market. But now everybody, as we have seen over the last 3-4 years, people are looking at that. Yes, mutual fund is there. You'll make some amount of money, but I'll make a much bigger kicker in direct stocks and unlisted. So that's a myth which I want to break here. That try and understand. Had it been so easy to make money, everybody will start buying shares in unlisted market only. So I'm saying that if you have time in your side, you understand business, well and good. If you don't have, follow a managed portfolio route. So I think that's one thing which has changed over a period of time, and which we have seen is now going back on track as far as the risky asset class on managed portfolios are concerned. We are seeing some sort of redemption, SIP stop on the smaller mid-cap side. Similarly, you'll see this FOMO which is building it. People need to understand. They want to play. Yeah, you can play. Nothing against it. But yes, please understand. Don't go overboard while getting into it, because it has a lot of risk involved, which maybe HNI, a family office, evaluate in a better way, and they take a smaller bet on their bigger portfolios, which can be a couple of crores or maybe much more than that. But for your portfolio, you have to look at it, how much risk you want to take.
Yeah, because just because you're getting in early on in the cycle and maybe before the IPO and the pre-IPO phase as well, it does not mean that you're going to get a pop. We've seen so many shares in the recent past, over the past year in particular, Kshitij, that have hit IPO and the issue price, it has fallen after that. It has traded much below the issue price, and there are several examples we can talk about. But let's talk about some popular companies where unlisted shares are changing hands very quickly. Of course, NSE is one of them.
Yes, I think largest exchange, 80% equity volume, 85% equity derivative volumes. I still remember 2018, it used to trade around 900, and then it reached 8,000, then 4:1 bonus came, split off 1:5, and prices again came back to 1,500, 1,600 levels. And it was hovering around that level only, going down to 1,500, something 1,600. And then suddenly, the news came that there is no vetting of NSE board required for any client to buy, and you can buy in small quantity also. And delivery is available at 1 to 2 days notice also. Suddenly you start getting smaller lots, and suddenly we have seen there is miscommitment from many of the players, and people not honoring what they have said on a given price, because they realize that IPO might hit the market soon and you might see that prices going up. So
let's talk about that, Kshitij. Before we get on with this is a very important point that you've raised, not honoring the contract. And this is ultimately, this is a letter of intent. It's not really a hard-coded or codified by law kind of a contract. And I think it's important to talk about this because the risk of that settlement in the listed space is taken on by the exchange. It's a counterparty risk that is taken on by the exchange. So you as a buyer of shares, you can be sure that when you place an order for 1 lakh of ABC company, say an HDFC Bank or a State Bank of India, you know for a fact that either you will get the shares, or if you don't get the shares, you will get your money back. And that's the counterparty risk. But in this case, there is no such thing.
100%, Alex. That's what I'm saying. It's a live example of what has happened in the past, because there was a news around the corner that IPO will hit the market, and many places it's just a letter of intent. People refuse to, and I have not seen any such news where you've not got your money, but people have not got their shares back. They've got their refunds after 7 days, 8 days, 10 days. They might have gone somewhere else and bought at little higher price, but now the prices, as you rightly said in the beginning, has moved from 1,600 to 21, 2,200, maybe more than that. Day before yesterday, I was hearing somebody was doing some deal at 24, 2,500. All I'm saying is that's the biggest risk with unlisted part. So, as there is no counterparty security which is there, as you are dealing with someone who you don't know. So please deal with your trusted partners, trusted brokers, and people who know. Otherwise, you might be in a position where either you're not going to share, or sometime you might have to get into a legal course also to get your money back also. So I think clearing cooperation ensures that you are getting your shares for whatever company on a listed exchange you're buying, but here there is no clearing cooperation. Here it's a deal between two individuals or you and some broker, and that's why it's very important for you while doing this trade to trust the right broker. So don't get lured by some price on some website that yes, we are doing unlisted shares and we'll give you a small quantity at a better price. Don't do that. Just look at a trusted broker and participate with that. So NSE, same thing happened. So I think it's a good company, nothing against. There is no recommendation for anyone. I'm just saying that the business will do well, grow well, but you have to buy that company at a fair price. Let's say if you buy some company at X price and it will open at a X minus 10% price, then you have to hold that company for another 6 months, and there's a locking for people who are already a participant in the company. After the IPO, they have to wait for 6 months more. So I think we have to understand that at what price point we want to buy.
Yeah, it's an important point that you make, because let's talk about a few examples. Swiggy, for example, is a company where a lot of people, I heard of a lot of people trying to pile into the pre-IPO phase, and they were locked in, the stock crashed, and it only opened up for sale just a short while back. And it saw further selling. So, Kshitij, can you talk of a few examples here where, there is a considerable amount of risk, and unfortunately, because of the relative illiquidity of it, right now everyone wants a piece of NSE, but if things are not going well, you're not necessarily going to find it easy to find a buyer for the share that you're holding.
Yeah, so let's talk about two scenarios, Alex. Here, one is you're buying something pre-IPO and you're buying at a higher valuation. Then the gestation will increase for you to generate returns. Then you can't expect after 6 months of locking is over, you can sell. What we have seen in Swiggy, 350, it opened at 500 again after the market corrected because of, it can be XYZ reason. I'm not saying there's a problem with the company. It can be XYZ reason. Initially it was US tariff, then India-Pakistan escalation. So it can be XYZ reasons. And suddenly we have seen share price valuations around the same price at what people have bought during pre-IPO times. But yes, then you have to wait for the right time. You can't just exit after the IPO is open. Second is that you already have a pre-IPO shares and you want to sell and exit from the market. So when you're buying, you bought, but when you're trying to exit, you're not getting the right price. Sometimes you're not getting the buyer only. So right now NSE has a volume in the market, but there are many such shares where there is no buyer. You want to sell, but there is no buyer. But on exchange, you might sell at 1-2% discount because but you'll get your exit. But here it is, sometimes you unlocked it and you're not getting exit. Sometimes in some companies which you buy as a pre-IPO, there is a defined locking for 5-7 years also. So, and after 5-7 years, who's guaranteeing it that they'll come out with the IPO? So look for a right guy, right management, right franchise. There's a lot of work which you have to do while buying a pre-IPO or unlisted shares. But on a lighter note, Alex, it's difficult. Sometimes it becomes so difficult to manage the unlisted part. So imagine the unlisted part where there's hardly any declaration, hardly any information available. Yeah. So I think keep it very simple. Don't put a larger chunk. Keep it 3 to 5% if you really want to try. Otherwise, do it a listed way. Managed portfolio is the right way to invest.
And also the taxation is different, right? Isn't it?
Yes.
How does it work?
It's not like a normal equity. If you sell, it's let's say if you sell on a short notice, it just get added into your income only, the profit which you are making. If it's 2 years, then it becomes a long-term capital gain for you.
At 12.5%.
Yes. But taxation exit is something which you have to look at it, because NSE is a great company. Again, I'm saying, but it's not about NSE. There are a lot of shares in the market which gets traded, and they're good names, they are bad names. But then again, I'm saying if you don't have the right information and you don't have that type of disclosure in unlisted space, so I'm saying that keep your participation little low on overall portfolio.
And there's also possibility of fraud in this case, right? I haven't heard of any, but then I was speaking to somebody in the newsroom. They were saying it's so easy for somebody, a relatively unknown person, to say, hey, do you want NSE shares, and then take the money and not turn up with the shares, right?
Bro, if you see, good names, good partners, you don't see that happening. You might see happening that they are returning money back. If the element is there that the share price is moving, although one should honor their word, that's what I feel. But yes, on small places where you don't know the other party and you have just met that party because of this NSE deal only, there are chances, or let's say some other stock whiches, there are chances where we have seen, that couple of places that, people are not honoring what they have told initially. Sometimes you make the payment earlier, stocks are not coming. Sometimes you have transferred the stocks, payment is not coming. So then you have to go through a legal course. But yes, I'm saying number of fraud what used to happen earlier, it has reduced a lot. But yes, to reduce it further or to make it almost negligible, go through a trusted partners only.
Just to round up, I know that you said 5% of allocation, but then now, unfortunately, people are unable to understand even risk when it comes to equity, right? So here we're talking about going even further beyond that, and you're talking about unlisted securities. How do you explain the risk involved? And we've spoken about several points here. We're not talking about capital loss, we're talking about inability to sell. So liquidity risk is there. We're talking about valuation risk, where because there are not enough buyers and sellers in an unlisted space, there is no true discovery of price. There can be huge fluctuations. So who should go into this? It's not all retail investors as well.
100%. We are not even talking about mark-to-market equity risk. We are talking about counterparty risk. We are talking about regulator oversight risk. We are talking about liquidity risk. We are talking about locking risk. We are talking about payment default risk. We are talking about shares not coming risk. So I'm saying it has its own plus and minuses. But my sense is that 5% on a higher side, I said, Alex. My sense is that people who can write off this 5% part in a way that was okay, fine, I can wait. Or maybe I have that other part which is less risky, which on a portfolio side I'm taking. They can buy this. And people who understand that, yes, I'm doing it through a right set of partner or right set of people whom I trust, I can do this. I think this is something very important, where you do these deals, but through a right channel. Because here, the trust part becomes much more important. Clearing operation is not there. Counterparty risk is there. So then the party which you are engaging with, you should know that party very well. And that's just something, the core of when you get into a unlisted space. Second, don't buy anything or everything. Because it's unlisted, you know the party, there is no counterparty risk. Try and understand whether that company will do well or not. The business scope or growth is there or not.
Examples of this. There are a few examples of this, right, Kshitij? Because even while they're currently in the unlisted space, we're talking about IPL, businesses, franchises. CSK has done well, and a lot of investors I know have gotten into this and have held for a while. But equally, there are others that have not done well, right?
Yes. So CSK, one example. I 2014 when it get demerged from India Cement. Initially the price was around 20, and then it started moving up. And then the news came about RPG Goenka Group buying Lucknow Supergiant at 1 billion valuation. Suddenly in 3 days' time, the prices moved from 180 to 250. And again, it came back to 170. So I'm saying, so people who have been holding and maybe they have exited at that price, maybe they have made money. Think about the people who have bought between 200 to 240 to 50. So sometimes, I think, allow dust to settle. Sometimes there is an immediate knee-jerk reaction in a price. What happened? But CSK is a good franchise. Any good global football franchise also you see a 3 to 4 billion valuation. So CSK right now has 650 million valuation. So I think it will do well. And that's my personal view. Again, there's no recommendation. But I'm saying there are many such franchises. There are many such football franchises, many such hockey franchises which have not been doing well. There's an unlisted part which is going on. So I'm saying I don't want to quote anyone. All I'm saying is that please look at it, that what is the revenue stream of a company which you are buying. CSK might not be, it's the last in the pool table in IPL right now. But it's much part of the revenue doesn't come from IPL, it comes from the ad which they get. So I'm saying please understand the revenue stream, from where they make money, how the money growth looks like, where they're investing their surplus. And that's how, what type of management you are looking into. If management wants you to make money, only then you make money.
Yeah, so very true. Very true. Yeah, and in the listed space as well, the focus has now returned after a brief space of people saying, okay, cash burn is normal. Again, we're talking about profits being very important to look at. And I think that's evident across the board. So, Kshitij, thanks so much for joining me and for putting light on this very important issue. It's not for everyone, very clearly.
Right, Alex. Thank you.
Thank you so much. All right, so we've talked about this, right? And if you are contemplating and you've got a feeling of FOMO, then do realize that there are so many shares that are listed right now, so many mutual funds that invest in listed entities. The avenues to invest and make money and grow your capital in the Indian equity markets is not less by any scope of the imagination. So that's one aspect. The second aspect that I want to speak to you about today has to do with your return filing for income tax for this assessment year. What has happened is that the CBDT, which is the Central Board of Direct Taxes, has extended the due date for filing of income tax returns early on. Usually in the past it's happened as we near the deadline of end of July, when they've said, okay, you have a little more time. Now they've actually said it even before the real filing season takes off. They've said that they've extended it from the 31st of July to the 15th of September this year. And why they've said that is that they say that the forms have undergone structural and content revisions aimed at simplifying compliance, enhancing transparency, and enabling accurate reporting. This is a release that came through a couple of days back, and it's an important one for you to bear in mind. Of course, a lot of you will be getting your Form 16s and your 26AS forms and your annual income statement. So study all of this, look at the forms, see how they've changed, consult your chartered accountants, and take your decision accordingly. You have a little more time than you did last year. Now, speaking of tax, there's a high probability, if you are holding equity shares, that you are going to start getting or have already received dividends in the form of final dividends. A lot of companies are giving them out. ITC, for example, it traded X dividend just a short while back, and you will have received, or you will soon receive, those dividends in your bank accounts. How do you account for that when you're paying your tax? Because remember, dividends that you receive from these companies are taxed at the slab rate in your hands. There used to be a time when they used to be deducted at source. There used to be a dividend distribution tax. That no longer applies, and you have to pay a slab rate for everything that you receive in this form. When you account for it, do you pay advance tax on it? All of that is covered in this report by my colleague Mahima.
Right, so there are two ways in which you can locate all your dividend in one place. The first way is to look up your AI statement, and the second way is brokers like Zerodha, Angel One, etc. have a feature to track your dividends separately. Now, the question arises as to how your dividends are taxed. As per the Finance Bill, Finance Act 2020, the taxability for dividends shifted from company which is paying the dividend to the individuals who are getting or receiving this dividend. Generally, a normal TDS of 10% on dividend income is paid in excess of 10,000 rupees. So, for instance, if Mr. X has received a dividend of 16,000 rupees from an Indian company, since he has received the dividend that is exceeding 10,000 rupees, a TDS of 10% will be deducted on the dividend income, that is around 1,600 rupees. Now, in terms of the overall money, the 1600 will be added to the total income of Mr. X and will be taxed at his particular slab rate. So, for example, if Mr. X slab rate is 30%, then dividend tax will be paid at 30% plus cess. Now, in terms of non-resident person, TDS is required to be deducted at the rate of 20%, and this is subject to the DTAA with respect to which country India has DTAA with. Now, in terms of people who have income which is below exemption limit, they can file form 15G or 15H in order to not pay taxes or not deduct any kind of dividend, any kind of TDS in this dividend income. Lastly, in terms of advance tax on dividend income, advance tax is applicable overall if your tax liability exceeds that 10,000. So yes, the advance tax is required to be paid on dividend income as well. Lastly, important considerations, dividends are generally credited to your demat account after 45 days of the record date. So this is the overall view as to how taxation takes place for dividend.
Here's another interesting story. There are a few changes that have been announced by the Reserve Bank of India that relate to your KYC at the banks that you work with or that you use. My colleague Yukta has this report.
If you've ever had your bank account blocked or payments delayed because your KYC details weren't updated, you're not alone. Now, many customers find the Know Your Customer process frustrating. Now, the Reserve Bank of India is proposing new draft rules to simplify KYC and make banking more inclusive. Here's what you need to know. The RBI has extended the deadline to complete pending KYC updates all the way to June 30th of 2026. So, no more last-minute panic if your bank asks for details. Additionally, minor changes like updating your phone number or address won't require you to submit fresh documents. And if you live in rural or remote areas or just want convenience, you can now update your KYC through video calls or get help from business correspondents who will come to your doorstep. But that's not all. The RBI is also trying to help people access dormant bank accounts. These are accounts that haven't been active for years and currently hold over 78,000 crore rupees in unclaimed deposits. Now, the draft rules make it simpler to claim money from these dormant accounts by easing the KYC requirements, again allowing video verification and support from business correspondents. These moves are part of the RBI's broader goal to make banking more accessible, less bureaucratic, and less painful for everyone, whether you're in a big city or a small village.
And that brings us to the end of this edition of Your Money Matters. Thanks so much for watching, and do stay tuned. Lots more coming up on NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should
or
I hold
CDSL
for the long term? Buy, sell or hold.
The answer.
We're joined in by Shweta Arya, the Managing Director at Granules India. First of all, welcome Shweta to the show. My first question to you is on the fourth quarter performance of the company. Now, you know, EBITDA and the margins were clearly a beat this quarter. There were some one-offs that had taken place last year. Want to get your sense on overall the margin picture that is expected to continue in FY26, and where can we see the revenue number heading towards? Because if we see the fourth quarter, revenue was a slight miss on this in this quarter.
Thank you for the question. So from a full year perspective going forward, we do see, and if I will draw your attention first even to the last year, that overall our margin performance for the last year has improved. So as you rightly said, there were some one-offs. And from an overall demand perspective, for our power gen business, for our industrial business, for our aftermarket business, we continue to see domestic demand in the market. Exports have performed well for us in the last year, and we continue our efforts in the direction to grow the exports. So from an overall financial year perspective going forward, we are holding on to double-digit guidance from a revenue growth perspective.
Right, Shweta, this double-digit revenue growth guidance that we are looking at, can you give us a more detailed outlook in terms of where this double-digit revenue growth is, from which areas are we seeing more of this growth coming from, and are we seeing a mid-teen to like a late-teen kind of a growth? If you can emphasize more on that point as well.
So let me first go to the domestic business. From a domestic business perspective, power generation business across different segments
is showing demand. So be it the data centers, infrastructure related segments, residential realty, commercial realty. So we are seeing demand, broad-based demand in the power generation segment, domestic business. We are also seeing good acceptance of our CPCB 4 Plus products and customers seeing the value of the product. From an industrial business perspective, rail is showing good demand, and construction business is holding on to demand that we saw in the last few quarters. Aftermarket business has done well in the last year and continues to grow. Our service contracts and rebuilding the engines in the market, we are seeing some good orders come in, and all of those will contribute to the growth in the next financial year. And then exports, like I said, we are continuing our efforts to grow the exports. You have seen exports growing in the last few quarters. Definitely there is uncertainty from an exports perspective on how the trade deals will work out, how tariffs will settle in. So that's what I can say from an export perspective. With domestic business, we are seeing demand come in from power generation, from some segments in the industrial business and our aftermarket business.
Now you've talked about the power gen segment. Like last year, there was a pre-buying effect which took place, because of which we are seeing this dip in terms of where the revenue is concerned. Now, going forward in FY26, just want to understand your outlook in terms of where the power gen segment is, considering these new emission norms which are there. What's the kind of volume picture that we are building up going forward in the next few quarters?
So as of today, as we speak, CPCB 4 Plus volumes have still not caught up completely to the CPCB 2 volumes that we had seen before the emission changes. Given how our economy is growing, our country's GDP is still predicted to grow at 6.5%. Our government's spending on infrastructure related segments continuing. And our business in the power gen segment is quite related to that economic activity in the country and government expenditure. So from that perspective, we believe that power gen business will continue to see demand.
And what's the kind of pricing environment are we looking at in terms of where the CPCB 4 Plus emission norms are concerned? Because there has been increase in competition as well. So just want to understand the dynamics in terms of where the pricing is concerned.
So pricing, definitely competitive intensity in the last quarter did increase, and pricing, we believe, will take another quarter or two to settle down. And we have been able to hold on to our pricing till now. But like I said, competitive intensity has increased, and we will be watching how this plays out in the next few quarters. It will take a quarter or two at least to settle down.
1 to 2 quarters is what we are looking at. Shweta, just on that note, I want to get an overall sense of the order book which is there. If you can quantify, what is the current order book that we are looking at, and what are the kind of inflows that we saw in FY25?
So going forward, we do see a healthy order board in power gen and in industrial business. Industrial business, as you will appreciate, is tender-based business. So the order book keeps getting built through the year. What has already been built, we see a healthy order board. Aftermarket also continues to build throughout the year. So we do see velocity in terms of inquiries and orders, not completely across all industrial business segments. We do see it in power generation, we do see it in railways and construction business holding its order board.
Good afternoon, this is Hiral on this side. If you could help us quantify in terms of what is that number that Cummins is sitting on in terms of the total order book currently, and what are the kind of inflows that are expected over the year?
Hiral, I won't be able to quantify exactly the order board that we are sitting on at this point in time. It continues building through the year.
No, correct. But any reason why we can't quantify it? Reason being is just helps us understand in terms of what the revenue trajectory will look like, because 100% order book is not going to convert into revenues in FY26 itself, right? But taking the trajectory into consideration, the number becomes important from an investor perspective.
Yeah, like I said, I can't give you an exact number. I can tell you that our order board is pretty healthy across power gen, and industrial and aftermarket is still building. That is what I can share with you. It is already, we are in the season for power generation, and even now the order book is building. So the number I give you today will change tomorrow. So it's very difficult to quantify it and give it to you today.
So Shweta, I mean, this change in terms of the company not giving out an order book has happened in the last couple of quarters. Any reason why that shift that has come in?
Here, the only thing is that we're being very cautious because from a domestic business perspective, we see inquiry and order board building every day. There's a lot of velocity, and especially this is season time for power generation. So it's difficult to pin a number on it. And from an export perspective, different markets are not showing us clear trends. Our efforts continue, but even the orders, given the current geopolitical situation, changing lead times, changing trade agreements, keeps changing. So this volatility in orders has definitely come in the last year or so, which is why it makes it difficult for us to pin a number on it.
Shweta, would it be right to say that, probably orders which do come in, but a lot of times they do get cancelled right now, and that's the kind of uncertainty that the industry is looking at, and that's the reason why you're not really sitting on a fixed order book number so far, because that's the worry. And on top of that, the management guidance that was given by Cummins Inc., they have withdrawn it as well for 2025, right? Anything that you would want to add from an India perspective as to what the guidance can be?
So here, just from an order book perspective, closing out on that question, it is right shifting of orders that we see, and sometimes preponement of orders, right? Which is why it's not order cancellation as much, but right shifting of orders that happens. So it does come in, but when it comes in, becomes a challenge. Then from our parent perspective, yes, they withdrew the guidance, mostly because by the time they went to the market, notifications were still coming in, and it needs careful evaluation and deep evaluation to say how that situation will impact the demand and hence the outlook. For that reason, they did not give the guidance. From our perspective, the segments that we operate in India, the domestic business, we are seeing the demand. And for that reason, we continue to hold double-digit revenue growth guidance for the India business.
So I think lots what we'll have to watch out for as well. But thank you, Shweta, so much for joining us on the show.
Let me welcome on board Commodore P.R. Hari. He's the CMD of Garden Reach. Commodore Hari, thank you so much for speaking with us and joining us today on the show. Let's first go through your numbers, which have been very, very robust for the full year and for the quarter as well. Now, this is before all of the events of the last couple of months that we have seen from a defense perspective. Do you see you building on the kind of revenues that we've seen post-Operation Sindoor?
Thank you, Tamanna. And yes, our numbers have been very strong during the financial year 25 and also specifically quarter ending 31st March 25. Yes, we are riding on a very, very strong order book and with more orders on the anvil. As it was just mentioned that we have been declared L1 for a very high value order for the Indian Navy for the next generation corvettes. So considering the existing order book and also the orders on the anvil, we are in a strong position and we are very confident that the growth trajectory is going to be even steeper in the coming quarters and years.
That you can give us for revenues and for margins, because revenues have jumped up now to 13.5% versus 8.9%. Is that the trajectory that you're seeing going ahead for FY26 and revenues at this pace as well?
Revenue, definitely, because the major project that we are executing, almost 50% of our order book is from the P7 Alpha frigate project, and with the first ship expected to be delivered in a couple of months. So we intend delivering the ship in July, and with the second and the third ship at a project maturity stage where maximum revenue accrual is expected, our revenue is expected to maintain a similar momentum in the coming years. Definitely the margins would be steady, considering we have interacted before also, shipbuilding, we are well beyond the conservative profit margins, and we intend maintaining similar margins in the future too.
Margins, so you're saying margins will continue in the 13% bracket or so, 13 to 14%. Just want to get your perspective, sir, on news recently of Bangladesh cancelling a $21 million order. And is that sort of a fallout of what you would expect as the geopolitical situation and the regional situation evolves? What is the kind of hit you see from this, if at all?
Interesting question. Bangladesh, I'll give a broader perspective. We have executed 2 projects successfully for Bangladesh over the last 2 years. One is from one of our other business verticals, that is the portable steel bridges, that is against LOC, and also a project for the Inland Water Transport Corporation, 6 petrol vessels. These have already been completed. Currently, 2 projects in hand, rather 1 project in hand, a dredger project, for the Inland Water Transport Corporation. The project is moving on fine. We do not envisage any issues with that. Coming specifically to the project which the contract has been mutually cancelled very recently, the order value is minuscule. It is just 177 crores. Forget about the next generation corvette order which we will get. The contract is expected to be signed a few months from now. Keep that apart. In our existing order book, this constitutes just 0.8%. The impact is nil. And to re-clarify and reiterate, the cancellation is the culmination of a mutual divorce. It is a graceful exit for both the parties. It is a very small project with nil impact on the overall financial performance of the company.
Important point. I just want to reiterate on the mutual bit. Can you give us any reasoning or rationale behind why this was exited mutually by both parties? Or what was your perspective on this, at least?
Our perspective is this project was again to be undertaken through a line of credit under the line of credit scheme that did not take forward, and therefore the cancellation.
Yeah, so they have to pay for it, and that payment has to be clear. That brings me to the next question about how you see revenue recognition in this space for shipbuilding, because these are of course long-term orders. It's bulky in the way revenues flow in. So how do we understand this?
See, we got an order book of 22,680 crores as of now. As per the current build strategy, which is in line with the contractual timelines, all these projects are expected to complete by FY 29. The major project, the P17 Alpha, will get completed by FY 27. That means by mid of calendar year 2027. And the balance projects, the anti-submarine shallow water craft by end of the next calendar year, and the next generation offshore patrol vessels by FY 28. And the non-defense projects, we are executing a project for a German client, multipurpose vessels, 8 multipurpose vessels. This project will get completed by FY 29. Perhaps that is the last of the projects that will get completed from the existing order book. So we will be accruing revenue in a very steady manner. Now, after the P17 Alpha is completed and the other naval platforms reach a mature stage, to mitigate the dip, we already have the next generation corvette project. We have been declared L1. It's a very high value project. We expect our share of the project to be plus 25,000 crores. The revenue accrual from this project will start 2 years from the time the contract is signed. So what, in a nutshell, the revenue growth is likely to be steady over the next 5 to 10 years. That's what I can expect.
So, just to get a sense, Commodore Hari, on this L1 declaration, 25,000 crore order for 5 NGCs. Order size, of course, is 40,000 crores. What are the details that you can share with us? When will this contract be signed? Is there a further process that we need to wait for? What's the execution timeline? Anything that you can add on this?
At this juncture, all I can say is that taking a conservative timeline, I expect the contract to be signed by end of the calendar year. That is 2025 itself. Then starts the pre-production activities as per the project RFP. A 2-year period has been provided for pre-production activities, and the project, as said, mentioned, so the total project is for 8 ships, 5 by us and 3 by the L2 shipyard. The project completion would be by 2034-35.
When would the revenue recognition begin, or the revenue flows begin for this?
2 years from signing of the contract. So again, putting a conservative timeline, that would be from FY27 onwards.
Okay, so this flows onto the balance sheet from FY27 onwards.
27.
Okay. Yes. You spoke, sir, about your non-defense segment. Can you give us a sense what is that size of the segment and how much of a focus is there on the non-defense segment right now?
Yes, non-defense segment constitute about 12% of our order book. This comprises of export projects, 2 export projects, one for a German client, it's a 8 multi-purpose vessel project, and 2 very interesting 2 projects that we are executing for construction of specialized research vessels. One for the Ministry of Defense and one for the Ministry of Earth Sciences, and one more contract we will be signing in another couple of weeks for 2 coastal research vessels. The order value could be to the tune of around 500 crores. So since you asked what is the visibility with respect to non-defense segment, I expect a similar percentage, that means around 10 to 12% of our overall order book coming from the non-defense segment. This is purely because of the fact that the defense orders are high-value orders. The one single order from a corporate project is to the tune of 25,000 crores.
Sure.
So the proportion we would like to maintain similar, that means 10 to 12%.
Okay, and just getting a sense of the export kind of space. I mean, the broad idea is, of course, Make in India, now Make in India for the world. Do you see that as a growth driver?
Absolutely, absolutely. And most of the European nations are now looking at India as a shipbuilding destination, and we see opportunities there. Actually, we are getting market leads, almost a lead per week. We are taking a calibrated decision, and it is with this intent that we have enhanced our shipbuilding capacity. I see huge opportunity not only for GRSE, for the entire Indian shipbuilding industry towards export of commercial vessels.
Fantastic. Thank you so much, Commodore Hari, for joining us. Prasad Chigurupati, Chairman and MD of Granules India, joins us this morning. Thank you so much, sir, for your time to us. Let's just first get your take on the numbers. Slight impact on EBITDA margins, nothing too great, but is what we're seeing this quarter the last of the pain on the whole Gagillapur facility?
Thank you. Gagillapur facility, the remediation is ongoing, and it will continue for a few more quarters, maybe Q1 and Q2. We expect to go back to the FDA in about August, and then invite them for a reinspection. So it will definitely continue for a little while. However, we had some good launches in the US, and also the GLS facility at Genome Valley, which we have commercialized recently, will contribute to some production. Slowly, some in this quarter and again in next quarter. So we should be able to make up, but once the Gagillapur facility is back on full stream, I think things should be much better.
Penciling that in possibly for Q3, Q4 of this financial year?
It will be a steady improvement as the remediations are being done. The production will slowly ramp up, and I think Q2, Q3 we expect to be normal. You're right.
Mr. Chigurupati, good morning. Neeraj here. The price erosion in API, PFI essentially kind of paid to upticks in the quarter because of finished dosage, right? How long does this continue, sir? Possible to predict that?
It's mainly paracetamol that we've been hit, and also the reduction in percentage is not only to price erosion and lesser sales, but it also due to using more of the API for in-house production of tablets. So both have contributed. And on the price erosion, I think the price increases may not happen as we have seen in the past. And we have to live with this. But sales revenue will increase. Margins will be a little less on APIs, but we expect to compensate it more from converting the APIs into FDs.
Okay, well noted. The other thing is this entry into with is it Sean or Sen? But Sean Chemicals acquisition, right? Please do pronounce it correctly for me as well, sir. But it's interesting. I mean, are you adding a different vertical via this entry into CDMO? Is this a long-term strategy of trying to make CDMO a fairly large piece as well? Because a lot of your peer sets are talking very highly about the growth prospects for CDMO operations for the next 3 to 5 to 7 years.
First of all, Neeraj, let me correct you. It is Sen Chemicals, not Sean
Sen.
Chemicals.
Okay, fine. Thank you.
Number one. And we got into this acquisition. It all started with us wanting to get into the peptide space, especially GLP-1s. And we were getting a project where the product was being developed by Sen Chemicals. So as we saw the capabilities they had, the skills, we thought this will give us a jump start into this peptide business. So the idea is they develop the product there, and we put up facilities in India and start the manufacturing of GLPs and get into formulations of GLPs by contract manufacturing, which we are already in the process of working out the contracts. So when that's why we thought it's a good idea to acquire the company and grow more. It so happened that they were a CDMO company. The target for us was not CDMO. However, since they are in CDMO, we would like to build on that platform. But the basic platform we are interested in is in peptides. And not only GLP-1s, there are many other options. And GLP-1s, I don't have to mention, the growth is going to be tremendous. It's about $50 billion today, likely to go to $150 billion by 2030. So that's a platform we cannot afford to miss. And now we believe we have a jump start.
Okay. So, sorry, did I hear you say, sir, that what you would do is while Sen continues, because it's Switzerland based, you would set up operations in India. And does that give you a cost advantage to the existing Sen Chemicals clients as well? And if the market size is so large, how much do you, let's say, aim to reach within, let's say, the first 5 years of this acquisition?
We do not expect to do CDMO manufacturing in India. It will continue in Switzerland. However, the GLP-1 APIs, we will set up manufacturing facilities in India.
I wanted to follow up with you on that, Mr. Chigurupati, the enthusiasm on GLP-1. The question is that there are so many players already there, many who are coming in. The moat is not high. Everyone wants to be in it, and I understand it's a huge space. It's the hottest thing right now, right? Anti-diabetic, anti-obesity. I'm just wondering if you're seeing that kind of an upside with increasing competition.
When you say 150 billion and all, that's not going to translate into actual revenue for generic companies. It'll be far less. Still, there is a great opportunity still. And our target is just not GLP-1s. GLP-1s is a start. There's so many other peptides and so many areas you can go with these capabilities. From peptides, again, you could go to oligonucleotides. There's so much that is happening in the world today, and we just cannot afford not to be there.
Fair enough. You don't afford not to be there. How much of a driver of growth do you see the peptide space?
Well, the next big genericization is going to happen into 2031, and we want to be there. Meanwhile, we would be getting into ROW markets with obviously semaglutide, liraglutide. We are not greatly interested, and of course work on the future things. It is definitely going to contribute quite substantially to our profit margins and revenues. From this base, I'm not saying after a certain while it may not be great. Maybe 4 years from now, 5 years from now, starting from next year.
When you talk about region-wise growth, and let me come to this part, because North America growth has been good for the last financial year and the last quarter, but with all of the uncertainty on tariffs, lack of clarity there, what is the conversation you are having on ground and your sense of where the whole situation is moving when it comes to one of your largest markets in North America?
The situation, we have been having talks not only internally, we have been talking to customers for a long time. And I see the concern coming down with customers and many other people. And we believe that even if tariffs are going to be imposed, we would have to pass on the cost to the consumer to the distributors, and they in turn will try to pass it on to the consumer. There's no other way. And we are already in our type of products, we are already at the bottom. There's no more scope for absorption of this. And our customers are not reluctant. They're quite okay with this. The feeling we get is it should not really impact us. But let us see where these tariffs go.
Sir, I'm inclined to ask this and press this a little because both me and Tamanna asked you. The market size is very great, because of which you've gone in. You obviously will have a small portion of that overall market size, but is there some estimate that you can give about what is it that in terms of market size will you have? Would it be X $1 million in 5 years? Anything at all?
Once the product is genericized in the US, definitely we see upward of about $100 million at least going forward.
Okay, and then that takes what, sir, about an X number of quarters or years for that to happen?
It's 5 years at least,
5 years. It's a bit of a long game, but the rewards at the end are pretty good. Okay.
And meanwhile, we'll be developing a lot of other capabilities, and we'll also be building up the CDMO business.
Got it. Okay. Well, wishing you all the best for that and more. Thanks so much for joining in, and all the best for FY26.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit. The markets move fast.
And so should your portfolio. Expert insights, real-time stock.
Welcome. You're watching The Big Question. I'm Tamanna Inamdar. The question that we're asking today is one that perhaps has not even crossed your mind. It's a surreptitious method of stealing from you while you use some of your most favorite apps. For example, how many times while browsing has your grocery delivery app seen a pop-up flash saying only 2 left in stock and you rush to add it to your cart. Or when you're booking flights for your next trip, at checkout, you notice a different and usually a much higher price that you originally saw. Or spotted a donation in an add-on feature you never selected in the first place. Well, it's not a one-off technical glitch, but rather a more calculated tactic, what we now know as dark patterns. Simply put, a dark pattern is a deceptive design element in a user interface that pushes users towards decisions they may not have made with full information or intention. And now the government has cracked down on this manipulative tactic in an effort to protect consumers. In a meeting held by the Consumer Affairs Ministry with top representatives of major e-commerce platforms, the government has identified 13 such dark patterns. It has also issued formal notices to 11 companies, and reportedly this includes major players like Zepto, Rapido, Uber and Ola for deploying these deceptive practices. Consumer Affairs Minister Prahlad Joshi has asked these companies to conduct internal audits and has proposed setting up a joint working group to look into the issue. On top of that, the government has launched 3 apps aimed at detecting and preventing these dark patterns. Just to give you a sense of how big this problem is, in 2024, a report by the Advertising Standard Council of India found that 52 of the top 53 most downloaded apps in India use at least one form of dark patterns. Local Circles also did a comprehensive survey spanning over the course of 18 months and found that 54% of platforms use forced action. That means forcing users to do something undesirable to achieve what they want them to do. So think of things like accepting cookies on a website or giving your email ID to proceed to the website. And the second most common is called drip pricing. This is where extra fees are only revealed at the final checkout step. This was used by 48% companies. And it's not a problem limited to one sector, but rather spans across edtech, travel, e-commerce, quick commerce, banking, ride-hailing. So basically almost all the apps that you use in your daily life. So the big question really is, are companies using dark patterns to take you for a ride, and what do we need to do to stop them? Now, before we get into the details of that conversation, take a look at this special report where we actually demonstrate for you how dark patterns are used in your daily life.
Well, differential pricing on Android and iOS devices are not the only dark patterns that you need to be worried about. In fact, this is one of the dark pattern trends that seems to have gone out of fashion lately. But the government of India has identified 13 different types of dark patterns and has sat with all industry stakeholders to make sure that these are curbed. So let us take you through some of these dark patterns which you may or may not be aware are pinching your wallets. The first one is false urgency. We found this on Swiggy, for instance. This timer on the homepage shows you a very short time frame for a good deal, creating a sense of urgency for you, the consumer. But click on the timer and it takes you to the restaurants which are being promoted. The next dark pattern is basket sneaking. We found this happening on Ixigo, where your simple train ticket automatically comes with an added fee for free cancellation and travel insurance. Did you ask for it? Doesn't matter. Confirm shaming is something you might find on Ixigo as well. This message, for instance, looks a lot like a guilt trip, right? Next, we take a look at something very widespread as a dark pattern: nagging. X, for instance, is filled with subscription and verification nudges. No page goes without asking you for that extra buck. Subscription traps are something that you have probably seen on platforms like YouTube. You can easily subscribe to YouTube Premium, but do you know how to unsubscribe? Well, neither does YouTube. Zepto, like many other quick commerce apps, adds on hidden costs in the form of handling and delivery and partner fees, which ends up ballooning your final order value. Well, the government taking note of these dark patterns is ultimately good news for us. These companies have been asked to do audits themselves and have been asked to comply with a certain set of guidelines. But how soon will you and I get to see the benefits of these rules is anybody's guess.
All right, to speak more on this, I'm joined by Akash Anand. He's founder of Bella Vita, CEO of Wolfpack Labs. Sachin Taparia, chairman and founder of Local Circles, joins us on the show. He has done this survey which shows the extent of use of dark patterns. Madhav Kasturia, founder and CEO of Zippy, joining us on the show today. And I'm also speaking with Dr. Anand Sharma, national chairman, Consumer Confederation of India. Welcome to all of you, and thank you so much for speaking with us. Madhav, I'm actually going to start with you. Just try to explain to us how these dark patterns are being ingrained. And clearly, companies today cannot come and say these are technical glitches or mistake. It's part of the design, isn't it?
It's part of the design. It's very much part of the design. And, think of it from the lens of an e-commerce platform, right? They have to make the slope very, very slippery. So right from when the discovery happens on the platform, all the way to when the SKU or the article is added to the cart, all the way to when it's when the cart is viewed and when it's checked out, right? There are at least 6 or 7 layers of dark patterns throughout the user journey in order to make the entire user journey slippery. Whether that means drip pricing, which you mentioned, right? While users may not understand drip pricing, it's essentially maybe clubbing all of those charges, putting it into one category, a view all button, which users generally don't press, right? Or maybe suggesting a cheaper alternative where margin profile is higher at the cart level, which I think recently a large quick commerce platform did a swap and save mechanism, right? Where you're essentially pushing the user to select another SKU in the same category, which may be cheaper, but where margins may be higher. So a bunch of these things throughout the user journey are are very discreet and subtle in nature for users. But when you actually understand the user journey, you understand that this slope is actually being, it's slippery for users to just keep moving forward in the flow and creating larger baskets.
Let me just go across to Sachin Taparia to go through some details and findings of Local Circles, and we talked about drip pricing. What are the key ways, Sachin, in which dark patterns are used, and to what extent? I mean, the purpose is it's almost like a termite, right, eating into your pocket and robbing you a few rupees at a time.
No, absolutely, Tamanna. We've been on this subject for 18 months now, and we have analyzed 228 platforms in India, ranging from banking to taxi apps and from insurance apps to quick commerce and e-commerce apps. And it's prevalent, everywhere. The good thing is that, now the government is aware. I think individuals like us on the show, we are aware. And the common consumer, at least the one who's on social media, is slowly becoming aware. And very simple examples, the classic example being, when you're booking a taxi, you open an app, it says nearest cab is 1 minute away. You go to the next step, right? And when you say that, look, this is where I want to go from point A to point B, it says your cab will take 16 minutes. So it's a classic bait and switch for you to go to the next step.
I have to comment on this, Sachin. I always thought this was some kind of a technical glitch. I always thought this was a problem because, maybe signals are not as fast. You're not showing me in terms of satellite where exactly the cab is. You're saying this is on purpose to keep me engaged onto the site.
Absolutely, 100%. So that way you go to the next step. And, this is something that you see across the board, right? You see that, all the fruits and veggies this morning are for ₹9, right? You go on the next step and it's only 4 of them that are for ₹9. The rest is all at regular price. Again, another bait and switch. So some of these dark patterns are fairly common, Tamanna. So bait and switch is very, very common. Like you said, our survey data, forced action is extremely common, where you get a consumer to download an app, forcefully saying to go to the next step, you need the app, or to give their email address or mobile number, or, in some cases, PAN card and even Aadhaar card in the cases of some of the, banking and other apps. So, forced action again is common. Drip pricing is extremely common. You go to a travel website or an airline website, you see a 5,000 rupee fare. When you get to checkout, right, the fare is 9,000 because you've added 4 more charges to it. A queued fee, a user fee, a convenience charge, and a seat charge, and everything else in between. So this is where people people are dealing with these dark patterns on a day-to-day basis. They just don't know that this is actually a dark pattern. They feel manipulated, they feel cheated, right? But they didn't know that there is this term or this umbrella called dark pattern. And the government, has come up with these 13 dark patterns. They have defined them, but there are more, right, which they have to add in the process of this, dark pattern implementation. And I'll touch on one of them and kind of, give you an idea. So one of the patterns that we have found, it's called privacy zookering, which is essentially you download an app, you look for an airfare or a hotel room, and it says that the airfare is 10,000 rupees, right? Now, based on what you are doing and how you are interacting with that itinerary and, checking different options, checking different flights, fares, connections, over a short period of time, they will increase that fare from 10,000 to 13,000 to get you to book it fast. Now, if you go on a different, device or in a different browser, you'll find that the fare is still 10,000. So this is something that is another, big manipulative dark pattern that has yet to be added to the government's list, essentially. So I think it's a good start. And more needs to be done here to really address all the issues that.
We'll come to the start and how it will work and how effective it will be in just a bit. I just want to understand this in a little more detail, because dark pattern is something that people are now figuring out that the term is there. They're now figuring out how to protect yourself. That's another question. How do you protect yourself from this? But Akash, Anand, I want to understand from you the why part of it. Why are companies doing it? Some of these are huge platforms, they're huge brands. Why this, there's a term called chindi. Why this little bit of, let's line our pockets with a few extra rupees here and there? Does it really add up that much eventually?
I'll answer this in a very simple way for you, Tamanna. We've all grown up and we've all visited mom and pop stores. We've all visited local shops, right? Now let's understand, we're all humans here. The apps we are talking about, who is running them? It's humans, right? Let's take an example. Let's say I own a sari shop and you've come to my shop today. I tell you, Tamanna ji, आइए, अरे मैम सिर्फ 2 साड़ियां बची हैं और ये 2 साड़ियां खत्म हो जाएंगी और स्पेशली आपके लिए मैंने इन साड़ियों पे 10% डिस्काउंट लगाया क्योंकि आप मेरे फेवरेट कस्टमर हो. You say, okay भैया दे दो. While going out, then I say, तमन्ना मैम रुकिए, एक कल ही एक और पीस आया है, इसमें ये डिस्काउंट चल रहा है, इसमें ऐसे आप ये ले लोगे तो मैं आपको दोनों का कंबाइंड बिल 5,000 रुपए कर दूंगा 4,000 रुपए की जगह. You say दे दो. Now, what do you call this?
No. It's not the same thing. Are you justifying it, Akash? Are you justifying,
I'm not justifying it?
Because one is a salesperson who works on a commission. One is a systemic app who is designed to loot you.
Everything, no, that's what I'm saying. Everything today that we see on our marketplaces, on tech, is obviously a derivation or an innovation on ancient practices, old practices. All I want to say is that this, what the term we're calling dark practices, should obviously come under certain laws, come under certain, parameters, just like how it's been done with general trade, modern trade, and every single other point of sale. The customers, as customers, we are smart, we are identifying these, and laws obviously should be made to curb practices that are unethical, that lead the customer towards a confusion or towards making a false decision. But there are certain practices that a lot of apps and marketplaces do to boost their own sales without hurting the consumers, which I feel should somehow be consumers be okay with.
Okay. Let me just get a counter. How is it not hurting the consumer if the consumer is not aware of it? Something which is being done with me that forces me or pushes me to make a decision that I am not party to is hurting me. It's taking me for a ride.
The consumer obviously should not be fooled. And just to give an example, continuing the example of the gentleman who was giving it before, so many times I have not checked out on Make My Trip. When I've seen a certain convenience fee, I have gone to an Ease My Trip where I figured out that the convenience fee does not apply. So yes, there are certain practices that are done by marketplaces to increase their revenue, but the consumers are also smart. The consumers are also deal seekers. It's a constant battle between a business or a tech app trying to get the most out of the consumer and a battle between the consumer looking for different options to get the best deal. So it works both ways. I'm not saying it's good. I'm not saying it's bad either. I'm just saying these Taxes should be done within certain frameworks and certain parameters.
I don't know what framework and parameters would be okay with this. Dr. Anand Sharma, would like your input on this conversation that we've been having. One, the government is now stepping in and recognizing this as a problem. They've issued notices to 11 companies. Clearly, there is no leeway there. The notices will say, please stop. Whose responsibility is it to protect people?
As per the Consumer Protection Act, the dark patterns are the unfair trade practices and the tricks to misguide or mislead to the consumers. In a common business, the tactics for the business public or businessmen are using are not covered in the dark pattern. Dark pattern is only when they try to misguide or trying to use unethical practices that's come under the purview of the dark pattern. As per the Consumer Protection Act, if any tactics or any misleading advertising or unfair trade practices made by any businessman, it's covered under the unfair trade and consumer can get benefit and compensation through Consumer Protection Act. So without the issuing the guideline regarding dark patterns, it's already covered under the Consumer Protection Act. But consumer was not aware that businesses are using this kind of practices. So government come and they prepare a draft guideline, and then after the discussion with all the public, they issue certain guidelines in which 13 dark patterns they identify. But these are not the limit. In these guidelines also mention that additional practices can also cover in the dark patterns if they mislead the consumers.
What, Dr. Sharma, so please can you explain to us what will the government do about this? Are you going to go in and tell companies stop doing this? Is there going to be a penalty? How is this going to be implemented?
And presently, already provisions are there and consumer go to the Consumer Commission to relief and compensation. But government is trying to identify such things and providing to companies that these are the dark patterns and you should avoid these practices in your day-to-day business. So presently, they are doing work for the awareness, and they are also taking action, and some penalties already imposed on some companies. Central Consumer Protection Authority already taking the action on these issues.
Okay, thank you for that perspective, Dr. Anand Sharma, there from the consumer activist point of view. But Madhav Kasturia, I want to come to you on, is it feasible to actually stop this? And the why question, which I asked Akash as well. Why are companies indulging in this? Does it really make a huge difference eventually to the number of users on your platform?
Madam, I want they are
that question is to Madhav, yes.
Yes, I think while I totally agree that consumers have to be treated fairly, but in all transparency, right, and in all fairness, Tamanna, think of it, the same Maggi packet that you were running to the nearest store and getting it, say, 5 or 6 years ago, that same Maggi packet is riding to you home in 7 minutes, right? It comes at a cost, it comes at a premium. Eventually, these quick commerce companies, a bunch of these super fast platforms have to charge the customers for this extra bit of convenience. In a value-conscious economy like India, customers are not willing to pay for service, not willing to pay for convenience. While that does not justify the fact that a lot of this drip pricing is happening, all of these charges are being accumulated into one hidden line item, transparency has to kick in. But ultimately, these charges have to sort of be passed on to users in some form and factor. If you cannot increase the MRP in India, basis the Indian consumer laws, you have to charge extra line items to the customers. Of course, transparency has to kick in, but the cost of the convenience needs to be passed on to the end customer.
Okay, so why can't you just say that this is the delivery fee, which is also there? No one is giving that packet of Maggi for free. It's costing more. There is a delivery charge, there is a service tax. You order one packet of Maggi, you're probably going to pay $100 just to get it there. One sec, Sachin Tapari, I want you to respond to this. Is it okay to charge more because, consumer conscious customers and, you're giving this service?
Yeah, absolutely, Tamanna. So I'm going to respond to each one of the co-panelists here. They've all made a point where I have a comment to add. So the first thing is that, what we ask for is be transparent, right? So if my Maggie packet is going to cost 50 rupees for delivery and 7 rupees for the packet, my total can be 57 with those 50 and 7 as the breakdown, not 4 different charges that I cannot understand. So I think that's the first thing, which is be transparent and then let me decide whether the economics work for me or they don't work for me. So I think that is missing today for especially a lot of the, quick commerce and some of these, other platforms, and that needs to change. The second thing, and this is an issue, Tamanna, that you and I have discussed multiple times, which was happening earlier with some of the quick commerce platforms where people were receiving products close to expiry date, right? So product that should go to the dumpster was actually reaching people with just 10%, 15% shelf life available. It's still reaching, by the way. The enforcement by Consumer Affairs, Legal Metrology, and FSSAI has been extremely poor. But here, the reason I'm mentioning this is because one of the panelists, they mentioned about the fact that, you can compare offline to online. So this is where the difference is. In an offline scenario, in a physical retail scenario, you actually get to hold the packet and see that you only have, 1 day left on that packet of bread versus 5 days of shelf life. And you can look at the shopkeeper and see whether, it's genuine or it's something looks fishy or whatever and make a decision. This is missing in the online world. And hence you need all these controls and all these regulations.
Akash made that point. I want Akash to respond to it. You are working on trust. When you are willing to pay for something, you think of it this way, Akash. You go to your cart on any app, you pay the money and then you wait with the belief that it will come, as opposed to when you go to a store and you pick it up in your hand and then you pay. It's a huge difference.
Sachin is absolutely right, and in nowhere my point is around the quality or the expiry of the product. I was only talking about the sales tactics, the pricing tactics. No, as I said, in no way should the consumer be charged for a product that is inferior or that is close to expiry. The consumer has to be protected with the quality of the products. My only point was around sales tactics or pricing tactics in order to get more revenue from the consumer by the platform. So I will not even challenge the fact that it's okay to give a consumer a misleading product or an inferior product or a product close to expiry. Absolutely not acceptable. My point was only limited to the fact that pricing as a strategy or FOMO creation as a strategy is a sales tactic to get more sales, to get more clients, to get more revenue out of the consumer's pocket.
No, so Sachin, your response to that it's a tactic. It's a tactic and everyone does it.
So again, my point is that, the expiry date or the product quality example, it also applies to these tactics. If you are with a shopkeeper or a retail store owner, you'll look at the bill. You'll ensure that, everything that has been put on that bill is justifiable, right? The bill is right in front of you, whether it's a handwritten bill or whether it's a GST generated computer bill. Here in this case, that bill, has unknown, charges or unknown heads. Sometimes, even that information is missing and you really have to drill down to find that information, which you have the benefit. You'll ask the shopkeeper that, what is this 20 rupees for, right? So again, that human interaction, that physical touch and feel is missing in one transaction and it's there in the other transaction. So here, a lot of it is happening on the trust that the consumer places on the platform to do things right.
And that's the trust which is being taken for a ride. I mean, I'm surprised that there is an argument for dark patterns. I'm surprised there is. Madhav, are you making an argument for dark patterns?
Against dark patterns. In fact, I was just adding to a point. Yesterday evening, my dad took 5 minutes to find the cancel button on his Uber app. He was trying to cancel his Uber ride back home. It took him 5 minutes to find the cancel button on the app. And 2 people had to help him find that button. That's, one of the larger dark patterns that have come over in the last 5-6 years, sort of to increase friction in the user journey against cancellations.
Talking about that, another, I don't know if it's in the list of 13 dark patterns or not. You take a subscription. It's very easy to take a subscription. You give your credit card details. Try and cancel that subscription. And unfortunately, a lot of media outlets also end up doing that. That's, why do you want to be so desperate to hold on to consumers? Does that mean what you're selling is not that good at the end of the day? Akash, Anand, I want you to come in on this. There is going to be a crackdown, and as more and more people realize,
I would say
you're just going to lose people's faith.
That is just pure greed, and that comes from the human nature of being greedy for revenue, of being greedy for consumers. And as I said, any practice that puts consumers in inconvenience or fools a consumer should absolutely be controlled and curbed. No doubt about that at all.
So now, as we wrap up the show, let's leave our viewers with something that's useful to them. And Sachin, let me come to you on this first. So how do I, as a user, identify a dark pattern and protect myself from it?
So the 5 or 6, common dark patterns are in our survey, Tamanna, which are prevalent in India. This is, over 200,000 consumers across 392 districts. So that list is there for everybody to see, right? And whether it's forced action, subscription trap, bait and switch, trip pricing, interface interference, all of these are fairly common. So I think as a consumer, one must understand that these are, what the dark patterns are, what they mean. So next time when they see it, the least that they can do is take a screenshot of it if they feel that something is wrong. Share it on social media. If they don't want to go through some of the government apps, which, I must admit that they are quite cumbersome to use. So at least put it on social media. Social media is being heavily monitored by platforms like us as well as the government. So put it out on social media, let the public comment, let other consumers comment basically. So that's one thing. And if it does get noticed, what I think you were asking Mr. Sharma earlier, there is an unfair trade practice notice for 10 lakh rupees which goes out to a company, right? Once a lot of notices are going out to a company, what we are recommending to the government is to activate the Consumer Protection Act 2019 and file a class action against such platforms. So if you have, let's say, 50 different complaints of a particular quick commerce platform, go for a class action. And there you can then look at all the transactions that they've done and then go and have a huge compounding effect on the penalties and really, get them, or rather the whole industry, to stop, using such practices. So I think 1 or 2 of such cases will have to go to that level.
Make an example of a couple of people. The fact is that it's worldwide. It's a global practice. It's a global practice, and that'll probably be the counter argument. Everyone in the world is doing it. As a consumer, as a user of some of these sites, you're going to have to find hacks sooner or later. At least identify what is there. Look at your cart carefully, because more often than not, perhaps that platform is trying to sneak in a few extra rupees out of your pocket. Well, thank you so much to all of you for joining us on the conversation today. That's all the time we have on The Big Question. But thank you to all of you for watching. Tell us what you think of the show. Tell us what you want us to cover next.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The markets move fast.
And so should your portfolio.
Harvard is facing one of the toughest challenges in its history as the US administration turns up the heat. In an exclusive ground report, we bring you voices from Harvard as they debate hard, stand firm, and defend their ground. Out of Harvard Yard, we're joined by Amir Dudley, who is going to be graduating from Harvard tomorrow, actually. But you are here at Harvard Yard watching all these students, have their commencement and graduate. What does it feel like to be a student at Harvard at this time?
It's surreal. I mean, there's a lot going on in the news, a lot of headlines. So it's a little bit of a tense time, but at the same time, it's definitely like we're celebrating. We're celebrating, putting in a lot of hard work, and we deserve to celebrate that. So yeah.
One of the things that's been huge for American education is its leadership across the world, and one of the aspects has been being welcoming to international students. And I don't know if you heard, but international student visas, interviews for those have been halted. Just recently, that means there's less chance of international students showing up at Harvard. How does that make you feel as an American citizen? Do you think that has an impact, and if so, what kind of impact?
It has an impact because the people make the place. If you're coming to a place and everyone's from the same place, it's not as eccentric, it's not as diverse. It's a lot of the same. So I feel like at a place like this, like no matter where you are, the people do make the place. Having different places and having different people to make that place is extremely important. I feel like it's something that should be reviewed and something that people should definitely 100% take a step back and beside yourself and where you're at, think about all the different opportunities that are being held from others and so on and so forth.
Yeah. Now, you've studied psychology, right? When it comes to sciences and education, research is so important, and a lot of funding has been cut for Harvard, including a new recent one of another $100 million US. How do you feel when federal funding is cut on research for you as a student and also your future in psychology and science? What impact can that have?
Yeah.
And does that worry you?
It definitely does worry me. I mean, at the end of the day, I'm first generation Ivy League student, so I didn't come in with the money that some of the other kids here had that, and I can't complain. I mean, I was funded very, very generously, so I'm thankful for that. But I feel like for the future generations, it's doing more harm than good, and I feel like they should have that opportunity. And it's a bit disappointing to say the least. And I hope that they change their mind on that and it's reviewed for sure.
So far, Harvard, the institution of Harvard is standing up to some of what President Donald Trump is trying to do to them, and there's so many cases now in court. So how do you feel about Harvard's overall response in terms of trying to maintain its independence and how they choose their student body?
Yeah, integrity is a huge part of what we're taught. Harvard is supposed to be a place for great people, and at the end of the day, integrity is one of the greatest characteristics that a single person can have. So I feel like having that integrity and standing by your students and not necessarily just giving into the tyranny, taking a step forward and kind of standing up for your students is something that's huge, and I feel like Harvard's doing a good job of that, and I hope they continue to do so.
We now have a computer science student with us, Amulya Garamelia, who will be graduating also from Harvard this year, tomorrow actually. How are you feeling?
I feel incredibly grateful, not only to all my professors and teachers and my friends, but also my family members who made immense sacrifices for me to even be here. Like my dad's from a rural village, my mom is also from India, so they both immigrated here and they left their home that they knew to come here, so I could be born here and go to Harvard, and they also sacrificed a lot of fun and a lot of years of their life and a lot of other things like raising me. So for that all, I'm really grateful. It's only thanks to them and my family that I could be here.
But it also must have been an incredible amount of hard work for you. It's not easy to get into a university like Harvard, right? So how does that feel for you personally as well?
Yeah, I mean, it definitely feels like an accomplishment, but this is just like one step on the road moving forward. I feel again like I'm just grateful to everyone who enabled. Like I don't know, I think you can work hard on a lot of different things. I'm really grateful that my family enabled me to work hard on things that I really care about, instead of anything else that that I could spend my time on.
Now, I'm guessing you were born here, and you said your parents are from India, right? A lot of international students at Harvard, but now there's so much question around their future at Harvard because there's a chance that international students are no longer allowed. That's what the Trump administration is trying to do. How does that make you feel, even though you're not international yourself? How does that make you feel as a person of color?
Yeah, well, I have a lot of international friends, including like international students from India who I'm very close with. I think that they've obviously been such a big part of my college experience, and they really deserve to be here. I just see how hard they work, how they, and a lot of times support their family as well. So yeah, I think that international students are part of what makes Harvard Harvard. They also, I mean, I'm going to be a researcher. They do so much research work to, help cure diseases and do all sorts of other amazing things. So yeah, I mean, I think that they're definitely a big part of this school, and they're also immigrants in general are a huge part of America. Like that is kind of what we're built on, the fact that anyone can come here, work hard, and like build a good life and be part of the US, right?
Yeah, you brought up two things there, important things. One is research, and America is the leader when it comes to research, and funding for research now though is under question. Donald Trump, the president right now, wants to cut funding, has already cut funding on research for Harvard. As someone who's graduating from Harvard now, does that make you feel concerned? Do you think it'll bounce back? How do you feel about it?
Yeah, I don't know enough to, opine about whether it'll bounce back or kind of the bigger factors there, but I definitely feel concerned. I think that, I hear about certain clinical trials getting canceled or certain research that, is supposed to be like life-saving, like for example, like research on antibiotic resistance is getting canceled. I mean, these things are just really important to know more about, and they're important to, like, for example, like antibiotic resistance is really important to try to find antibiotics that can target antibiotic resistant bacteria. And so if that research is canceled, then like more people might die in the hospital in months or years, right? Which is really unfortunate. So of course I think it's really important and I feel concerned about it.
Yeah. And how are you feeling about your own future and in terms of what you want to do also with computer science?
Yeah, so I'm hopefully going to be doing some work in computational biology. I think computer science has obviously a lot of promise to transform like how we ask questions, but yeah, I'm really looking forward to researching some interesting questions about aging and hopefully using computation in an interesting way there.
Here at Harvard University, the center of a growing crisis in American academia, but also a very exciting time for many of the students here who are graduating from all the various different schools. And to talk to us about being at Harvard and what Harvard is undergoing and their personal reactions to everything are three young women from different schools who will be talking to us with their reactions and what it means for them to be a Harvard student at this time. We'll start with Uzma Farheen, who is graduating from the School of Public Health, and she is an international student. Now, international student visas have now been stalled, put on pause for at the moment in terms of interviews, new interviews. That was a recent announcement by the Trump administration. I'm just curious to ask Uzma, you're here, you finished your 1 year here as an international student. What has your experience been like?
Well, I think as an international student, and I'm from India, it's been really transformative. Harvard is a place where you just feel so welcomed. It is the diversity and how you just, your perspective, interacting with the, students coming from different countries. We are represented by more than 100 countries here.
Sharifa Shahai, sorry about that. Sharifa Shahai to my right, who was going to be graduating from GSAS as a graduate school of arts and sciences in quantitative biology. When it comes to freedom of speech, you are an American student here. Do you think that Harvard has been able to protect that freedom of speech?
I think Harvard in general is a place that you can express your opinions pretty freely. There's people from a wide variety of walks of life, countries, regions. So I think there's people here from every spectrum, and they're all welcome to voice their opinion. I think some opinions definitely have been more difficult to voice here, but I don't think that it's unwelcoming to any